Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Wednesday morning, what are we looking at? This is the trade from yesterday into today. Europe went out here. There's a little to price in, therefore, maybe 0.5% on the upside in terms of where the US markets closed yesterday. Yesterday was, actually the breadth was okay yesterday. It was a tech trade that was back on. It was a Fed rate cut story that was back on. Feels like we've kind of reversed some of the negativity that we saw last week. How much further do we still have to go, Chrissy? I think is an open question. But yesterday, certainly felt all right.
Catch-up trade. I think that's the easiest way to explain this. Your Stoxx 50 futures higher by about 0.8%, but your underperformers right.
For patients in Medicare, so we'll certainly keep an eye on whether that has an impact on Novo, or is some of that in the price. Engie is also in focus as well. The French utility, it said it's set to lose its bid for a multi-billion euro contract to continue operating Paris's urban heating network. That sounds like it could be a negative guy.
Okay, here we go. Time for the market open this Wednesday morning. Budget day here in the UK. What else is going to be a factor in terms of the trade that we are watching? Let's find out. Let's see how these individual markets are going to open and what it tells us about the story. FTSE 100, a bunch of factors that are going to affect this market today. Clearly the budget, maybe a more 250 story, but the pound affects what happens with the FTSE 100. We've obviously got kind of how business is going to react to this story as well. That will come later. I think you've also got the defence story again feeding through there, but we'll see maybe more of that in Germany. Stock 600 up 0.2%. FTSE 100 up 0.2%. Do we get outperformance in the CAC current? We do, up 0.6%. The IBEX is up by 0.3%. There's a little to price in from the States. Does that continue? At the moment, US futures look fairly positive. Critty, what are you seeing on the States story?
Well, it looks like it's a little bit of a mixed picture here in terms of a sector narrative, but it is the heavyweights that are driving this market higher. So you're seeing your ASMLs, your Novo Nordisks, your LVMH all moving here. And you can see that. It's kind of red on the screen in terms of the sector story. I think what's really fascinating is, of course, you do have a technology catch-up trade here. So the Schneider Electric, for example, the ASML, that's going to be a key piece of this. To the downside, though, and I am looking at, again, not to use a budget term here, but a smorgasbord of stocks. Your biggest index weights this morning are Nestle, Shell, Unilever, Diageo. I can make a kind of a defensive stock trade on that. I'm not really sure what Diageo is doing in there.
Right, yeah. I mean, it does have a risk-on feel, doesn't it, with technology and basic resources as the best-performing sectors this morning. But I think industrial goods is, and it does feel as if this maybe then is a pickup on the Fed narrative, an expectation about lower interest rates, and that fed through from the US into Asia and now here into Europe. And it isn't so much about expectations of any possibility of peace in Ukraine, because as Guy pointed out earlier, the expectation had been that we'd see defense stocks go higher this morning, and we are continuing to see that. So Dassault, Leonardo, Saab, Thales, BAE, all of those moving higher by more than 1.5%.
Are we just waiting? Are we waiting for the budget? Are we waiting for something concrete to trade on? As you said earlier, Chris, it feels like a catch-up trade a little bit in terms of what we are seeing, maybe a little bit of an unwind, the positions we saw last week.
Yeah. It's Thanksgiving week.
Yeah,
I was trying to say, is that kind
Where's
of,
our turkey?
Where's kind of, is there an obvious trade on at the moment, or is this just a holding action of a market that we're watching kind of develop here? Wednesday into Thursday into Friday. Thursday, Friday are going to be quiet.
Very excited to be anchoring those days.
Yeah, unless, of course, the UK budget delivers something that is a surprise, and then you get light liquidity, and then things could get fun.
And speaking of the UK budget, the FTSE 250, which I know you had pointed out earlier, is actually outperforming. Higher by 0.3%, so I wouldn't call it major outperformance, but relatively to the FTSE 100. And we are also seeing a move in gilt, rising at the open, climbing 4 basis points. We're looking at 4.5% on the 10-year yield when it comes to that UK asset. Compare that to what you're seeing in the rest of the world, not as big of a move. So something to keep an eye on. It looks like it's pared back that initial 4 basis point jump, but now only higher by 2 basis points. But again, you can see people are watching the UK budget with as much excitement as we are. Let's get a little bit more analysis this morning. Freddie Late, Managing Partner, Latitude Investment Management, joins us around the table. Freddie, pleasure to have you. Happy Budget Day to you. Happy early Thanksgiving Day to you as well. Let's start with the UK budget then. What is the blind spot here? How do we approach 3 o'clock today, 12:30 today? So 12:30 today.
Who knows? Look, I think the biggest issue here is common across a lot of countries. There's too much debt at the government level, and one country or some countries are going to struggle under that burden of that at some stage. And the interesting thing today will be to see how well Rachel Reeves has managed to manage the expectations. There's been a lot of leaking in advance of this budget. A lot must be in the price, but borrowing is going to go up, spending's probably going to go up, taxes may go up, but a lot of people are trying to leave, so we're not sure how the tax receipts will actually come through on that. And I'm a bit fearful for the pound and for gilts over the medium term. I don't know on today because, a lot could be in the price, but I think the sustainability of the trajectory we and other countries are undergoing is quite hard to see.
When it comes to, let's just broaden this lens out here. I was asking some guests earlier in terms of kind of the contagion effect. I think when it comes to UK assets, we're really looking at kind of the domestic story, the domestic read-through as well. But when we start to look at the gilt side, the kind of bond market, the BOE reaction function, how much of what happens in the next 24 hours here in London is going to end up showing up in European assets and arguably in the US assets as well, given this week is Thanksgiving?
So if I was another central banker, I'd be watching pretty acutely what happens here. We had the Liz Truss moment 3 years ago. I'm not suggesting we necessarily have another one of those, but yields are already at that sort of level. How do you react to this? And at some point, central banks can't continue to keep bailing out governments without a risk of a currency crisis or a risk of major inflation. And so watching first how the markets react and seeing how those bond yields move will be very telling, I think. And the contagion could be very real. If you see big moves, most bond markets tend to move in a pretty synchronous way around the world. And it isn't like Japan or the US or Europe don't have their own levels of indebtedness and issues with slower productivity, maybe outside the US.
So thinking about UK exposure, good morning to you, Freddie. I feel like I've talked to you about your holding in Tesco many times in the past, and you still have it, I think. So is that a confidence in the UK consumer despite everything, or is it just that this is the retailer that will make the most of a challenging situation?
So we've owned it for 10 years, so it's not sort of a call on the budget. But I think it's much more down to Tesco's competitive position and their execution within that industry, and also the major weakness from Asda and Morrison's since their LBOs. So I think it's more that whatever happens to UK grocery, I believe Tesco will be a winner. There's definitely things that could come through this budget that could affect them negatively. It could affect the UK consumer full stop. But actually, there's an argument that Tesco's and the main grocery channel could be beneficiaries when you look at how much is being spent on restaurants, on takeout, things like that, that could move back to the grocery channel.
Yeah, and thinking about your portfolio, I was looking at how it breaks down. You've got that bit of UK consumer in there, but you've got French construction, you've got auto parts in the United States, you've got health supplies in the United States as well. Obviously, a very international picture. How do you think about US tech at the moment? That doesn't scream out from your portfolio, and yet that's where a lot of the conversation has been over the last year. So how do you think about what we've seen and what we're about to see on US tech?
So technically in the technology sector, we've had nothing for the last 2 or 3 years. We do have Google, which is obviously a tech stock in reality, and that's the only one we've really been exposed to. It's had a great run recently. But in general, what we look at when we look at the technology stocks is a much less certain future. AI could be fantastic, but the capital expenditure is coming in up front and the payoff's uncertain. So the sort of range of outcomes for tech, in our opinion, has widened, and the confidence that you can have in their future is just harder to call. And yet the valuations are at highs, not lows, to compensate for that. And on the flip side, a lot of the rest of the world, stocks that are great and have great histories, like some of the ones you mentioned, I think are trading at real discounts to their history, to their fair value. And I think, what we're seeing this year actually is this is a great market because markets have been broadening a lot this year. Tech still dominates the story because they're so big, but there's lots of other large cap stocks that are up 30, 40, 50%, still inexpensive, delivering, growing, not going to be threatened by AI, probably not a beneficiary either, but just carving their own path. And we're focusing on those.
Why do you own Google?
So I've owned Google since 2013.
Yep.
So large number of reasons since then. Our view here has basically been, and my view on this hasn't really changed this year. If AI becomes a big story, which it clearly has, yes. Tick. Yeah,
Did you say that in 2013? That was good.
Yeah, exactly. I believe through their DeepMind business, they actually have the wherewithal to compete on any of the kind of technology advancements, which is what they're proving out. Once you have the tech and the models, what do you really need to succeed? You need data, compute, and distribution. And they have the 3 best assets in that. They have obviously the data, huge amount of compute through GCP, and we're seeing now through their tensor processing units that they're now selling to Meta, they actually have even better compute than most, and they obviously have all of their distribution through Gmail and Google. And so I've always felt that they would compete. They can absorb the capex that they're spending back into their cloud business should it be overspend, which it probably will be, and that search therefore won't be threatened.
Is it a hardware business or a software business, and does it matter?
I still think it's a software business, backed up obviously by this infrastructure behind it. I mean, they sell some hardware, but I still believe it's more of a software business. I don't know where Waymo will go.
Do you think it's recently being but the TPUs, the ability to compete with NVIDIA, does that make it a hardware business, and is that a more valuable commodity looking at what NVIDIA does than maybe you originally perceived it to be?
Yeah, I mean, I think that's a wonderful proof point for that underlying decision to have developed their own chips and built their own chips out. And, I'm a big believer, I don't mind if a business wins through being capital intensive or capital light. They can both be very successful models, as long as the capital expenditure is well spent. And I think what we're seeing with the TPUs is it has been, and we wait and see slightly on the AI data center capex, full stop.
Right. When it comes to some of their technology build-out, though, Alphabet is still number 3 in terms of cloud distribution and cloud adoption. They've tried to break into and capture more market share, and they haven't been able to get there. Why are you confident they can do it in the AI space when they haven't proven they can do it to the same extent in the cloud space?
So it's third in terms of size, but in terms of attractiveness and the current growth rates, it is kind of outgrowing the peers. And when you think about the 2 main peers, which is Amazon's AWS and Microsoft's Azure, Amazon still runs a very basic product. It's still a lot of hard disk drives versus, major fast chips. It doesn't have the same kind of application layer. And obviously they basically built it to sell to themselves and use for their own system and then have outsourced it. So that's kind of the workhorse as we see it. Azure is mostly captive Office. We use Office at work, so of course our cloud is Azure and it just ties in. And then I think when you talk to people about running, really kind of cutting edge software and application layer systems on these clouds, GCP, Google's product, seems to be the more attractive. So it came from a lag. They started building it way after AWS and then even after Azure. Azure and AWS both had a huge amount of their own business to push through to get scale. But I would question some of the Microsoft numbers in particular recently in terms of, they're giving away compute to all of these businesses in which they're doing this sort of slightly circular financing arrangement like OpenAI, etc. So we think their growth rate is actually probably going to be stronger and more genuine over the next 5 years.
Well, what I love about some of these tech companies is even though they are software or hardware companies, as Guy mentioned, they're leaning into AI. Some of them, including Alphabet, is still very dependent on ad spend and the consumer and the real economy. So from your perspective, how's the real economy doing through the lens of how much money they're spending through Alphabet?
So it's slightly tricky when you're looking at the ad spend through Meta and Google, because for the last 10 years, pretty much since I bought it, it's been deflationary, as in it was cheaper to advertise through Google. And what you've seen in the last couple of years is a major inflation, a sort of exploitation of this market position, and actually we're seeing quite substantial price increases per click, if you like, going through the system. So the ads growth is very, very strong. But that's not really a volume point to your kind of demand question. But it is a spend point. People still have to spend that much money. I think the issue we would have is that some of the more speculative advertisers may get washed out in a kind of down cycle. So there's a lot of crypto, a lot of small Chinese, sort of
Are we there? Are we in a down cycle?
No.
Are we headed to a down cycle?
Who knows? But if we do, Google may be more cyclical than it has been in the past, is what I'm saying, because I think it could be.
Freddie, great to see you. Thanks for stopping by to see us. Always a pleasure. Freddie Lates, Managing Partner at Latitude Investment Management. Thank you very much indeed. Call 6 looks a little like this Wednesday morning. We have generally a strong bid across the markets. The more defensive end of the spectrum, let's call it Nestlé this morning, is a little softer, but you certainly see the defence names coming back quite strongly. Tech is also catching a decent bid. What has Chloe Melly got her eye on? Let's find out. Let's start with that defence story, Chloe.
Good morning, guys. So, yeah, defense is quite positive across the board this morning, with Rheinmetall in particular up 2.4%. This follows what was also another good day yesterday. It seems that those companies are reacting to those developments, or perhaps lack of developments happening in the Ukraine-Russia situations, with maybe those peace talks not progressing as well as smoothly as was expected. And we can see that reflected in those shares moving higher for that defense sector. Moving on to some names in consumer staples. So Pernod Ricard, which makes spirits, and Henkel, which makes consumer goods like soaps and detergents. They are both down. Well, Henkel was down. It is now unchanged, but Pernod Ricard is down after a note from JP Morgan, which placed Henkel as an underweight rating and placed Pernod Ricard on a negative catalyst watch. So those analysts said that in the staples sector, they prefer things like beer, tobacco, and beauty. And unfortunately for those two companies, they are not part of either of those categories, and so they are down this morning. Moving on to WPP, which is said to be excluded from the FTSE 100, and it is down this morning. On the back of that, we are down 1.2% for WPP. It follows a series of setbacks for the company, including guidance downgrades and big account losses, and it is set to be replaced in the FTSE 100 by British Land, but it seems that that is not moving the shares very much for that company this morning. And finally, Neste, which is the oil refining company out of Helsinki, is up this morning after being upgraded by UBS analysts, and we are up 2.7% for that company.
Thank you very much, Chloe. Chloe Melly from our equities team, of course. Coming up on the programme, we'll check in on Novo Nordisk, the share price of that drugs maker, after Medicare negotiates a discount on Wegovy and also Ozempic. That is next. The stock is up by 1.1%, though. So where is the news on this one still to come from? This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. 18 minutes into the session, I want to bring you live images of Ursula von der Leyen speaking in Strasbourg at the European Parliament. She's holding a plenary session at the EU response to airspace violations and sabotage of EU critical infrastructure. Of course, something that's very top of mind as we talk about some of the peace plans potentially being negotiated for the war in Ukraine. Some of the comments include that she won't accept limitations on Ukraine's armed forces. They need long-term security guarantees. They're also talking about having a starting point after the talks in Geneva. Nevertheless, we're going to continue to monitor the headlines coming out of that. In the meantime, though, you are seeing a market reaction when it comes to some of these defense stocks. Remember, defense stocks have technically moved higher when we have seen snags in the peace plan. It feels like maybe that might be part of the narrative that's driving the sector higher. Rheinmetall, for example, higher by 3% this morning, Guy.
Let's shift from defense to what is happening in the pharma space. Take a look at what is happening with Novo Nordisk this morning. This is what the share price looks like. We're up by, let's call it circa 1%. Last night, the US government said that it had negotiated a 71% discount on Novo's blockbuster Ozempic and Wegovy drugs for patients in the Medicare scheme, the federal health insurance program, remember, which is targeted at the elderly. The opposite of elderly. Joining us now, Sam Fazeli, Bloomberg Intelligence Director for Research and Global Industries, senior pharmaceutical analyst as well. Good morning.
Am I early?
Just on time.
Just on time. Always on time. Perfect. How much of this is new?
Well, so this is part of the Inflation Reduction Act. Every year...
Sorry, wasn't that Biden's plan?
It was indeed. Every year, and that's why there was no press release, no razzmatazz or anything last night, right? It came out on a Tuesday. I think it was Tuesday, right?
Yeah.
The thing is that we have this stuff starting about 9 months, 12 months ago, negotiating for next year's list. So a lot of these prices that you've just seen on their reductions have been in negotiations for months, and they probably fixed a few months ago. Then, of course, on top of this, the president had a negotiating story with the Lilly and Novo specifically asking for lower prices. And those prices that were negotiated, $245 if I'm not wrong, are actually lower than this price because this was negotiated before. So this, as you can see from share prices, is not making any difference to any because GSK is on that list, Pfizer is on that list. to any of the pharma companies because they would have built it into their guidance already.
Okay, so
knowing it.
So this kind of number was largely known then,
Yeah,
Sam?
this is where these drugs prices are going for these two drugs.
But it does seem as if within this sector there is downward pressure on prices coming, in this case, from the US government, but maybe from others as well. And what do we know about the impact that's going to have on profitability at somewhere like Novo? How much can volumes offset that?
So my wonderful colleague Mikey Shah, who runs our obesity all singing, all dancing model, has done the numbers with our analyst who covers the epidemiology side of things and has come back thinking that it could hit 2026 sales, this negotiation that they did with the president 2 weeks ago, by in the region of $2 to $3 billion top line. However, that all depends on what you assume in these models for the prices come down, how much gain you get on the volume. Not very difficult to push his volume up in that model and get back to where we were, or even above where we were. So, you know, we have this scenario building model that that clients can work with. The point is, for the other pharma companies, as I said, I think they would have been cognizant of the other drugs, not Wegovy, not Zepbound, of the prices negotiated, would have been in their guidance already. And some of these drugs are going off patent already. Ibrance is going off patent already. Bringing this price in for 2027 or whenever it hits is going to make a small amount of difference. It's great. Prices are slightly on the way down, but I think pharma companies can generally manage this pressure without too much trouble.
Sam, thank you very much. Bloomberg's Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, and of course often speaks to us on the pharmaceutical beat, so we appreciate his time. Let us talk about tech, though. Google has released new AI software and struck deals, such as a chip tie-up with Anthropic, that have reassured investors the company isn't giving up on its battle with OpenAI. Let's get more with our Bloomberg Intelligence analyst, Matt Bloxham, who joins us on set this morning. So we're at the beginning of a real shake-up then in global AI hardware duopoly. Is that what we're seeing here, Matt?
To some degree, yes. I mean, yeah, so there's two axes to what's happening with Google. I think what people are really excited about is the launch of Gemini 3, which is their large language model, which seems to be a massive step up in the capability of Gemini and definitely ahead of OpenAI. And, you know, lots of my colleagues here who, I mean, we use this every day and, you know, definitely seeing noticeable improvements in Gemini versus ChatGPT, which if you'd asked us last week, we'd have probably said we were preferring to use ChatGPT rather than Gemini.
Wow, that's changed very recently.
It is a big significant change. And then in the background, Google's was gone with what they call this kind of full stack model. So they do everything from the chips through to the software, and they have the cloud platforms. And now what we're seeing is that there's an outside demand and a business model to sell their chips to other players. And the most interesting deal they've done so far is with Anthropic. So I think that clearly, you know, if the AI bubble doesn't burst and this market continues to grow, there's plenty of space for both NVIDIA and Google with their chips and others like AMD. But I think customers are welcoming this additional competitive tension that Google's bringing to the market. It kind of pushes NVIDIA, to be honest, on pricing, and it also kind of alleviates some of this short-term supply constraints. You know, everybody wants more chips. If they can't get them from NVIDIA, in certain cases they can get them from Google. Now, the Google chips are much more specific in what they can do compared to what the NVIDIA chips are. NVIDIA's kind of like the kind of general purpose kind of AI chip, if you like, and the Google chips much more kind of application specific.
So that is the hyperscalers, the fancy new tech. Let's talk about the old guard of tech, if we can, for a second. We have HP and Dell coming out last night. One did well, one didn't do so well. Yeah. One didn't talk about AI, one did.
Yes. So Dell talking about AI and lifting its outlook for AI-related server demand to $25 billion from $20 billion, lifting their full-year revenue expectations. So, you know, both Dell and HP are kind of growing a lot through servers, and Dell's got a very important tie-up with NVIDIA on selling a kind of overall AI server system. So, you know, their momentum is incredibly strong. HP, I guess, you know, a bit more tied still to the kind of classic PC hardware, but also big in servers, struggling and kind of downgrading their earnings outlook, blaming rising input costs for chips as a big part of that, but also kind of giving an outlook of having to cut headcount by about 10%, so kind of 5,000 or 6,000 roles over the next few years to kind of compensate for those rising costs, protect margins. The computing hardware market has always been brutally competitive, and they're having to kind of increase those kind of cost-cutting measures to account for that. And they're going to lean into AI tools to allow them to kind of make those job cuts. So kind of an interesting dynamic there.
All right, Matt Bloxham from Bloomberg Intelligence covering a swath of tech companies for us. We thank you so much. It's really fascinating that he's talking there about just kind of and we've had this conversation for a while, the Alphabet kind of taking over in terms of share price. But we had this conversation with Freddie Late earlier as well. There's still a massive gap where Alphabet has to kind of meet some of the Azures, the AWSs of the world.
Sure, so it's got to close that gap.
Yeah.
Do we, though, see faster AI adoption as a result of this? If you've got more competition in the market, does it allow actually this to be a good news story for customers and therefore by extension the economy, if you kind of park the labour market side of the story? If you start to get more sort of competition, prices come down, maybe margins get eroded a little bit, but is the net actually better for the economy? Does it come faster?
Yeah, if there's more access to chips, whoever is making them, and if they are cheaper, driven by competition, then just maybe. And making it make economic sense for companies is a big question.
Absolutely. We're going to continue to monitor the conversation in the technology coming out of the States. We are also going to talk about what's going on right here in Europe. U.S. President Donald Trump dispatched negotiators on those peace talks in Ukraine. We dive into the details next. This is Bloomberg.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalise on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board, but some of the momentum has already kind of come out of these markets. You're seeing fades across the board. Your outperformer this morning is the CAC 40. Your underperformer continues to be the UK market, though. Caution ahead of the UK budget guy.
What's more important, budgets or turkeys? And if you take a look at the volume story today, I suspect it's turkeys. Turkeys are having the biggest impact. There's the volume trade. As you can see, we're down by around a quarter. Is the budget going to change that here in the UK? I don't think so. Higher, lower, you've got 387 up, you've got 187 down. It's the volume story that I would maybe focus on what we're seeing here in Europe this morning. Gainers look like this. Tech is up, defense is up, luxury is also higher. There's a story that maybe we haven't talked about enough yet this morning, and that is what is happening on the China story and this boost to consumption potentially coming through from the Chinese government. Is that lifting LVMH this morning? Maybe a little bit. Rheinmetall's up by 2%. ASML, though, is the standout trade, up by nearly 3%. That's the heavyweight in Europe. Defensives are on the back foot. It's not turkeys, but it is chocolates. Chocolates down, soaps down, beers down. That seems to be the trade this morning. Nestle, Unilever, AB InBev, all giving back ground as the market looks maybe towards that maybe higher risk, higher kind of beta defense trade and tech trade to lift things around here this morning. Anna, what else do we need to know?
Let's get an update on some of the other big stories we're tracking. The UK Chancellor Rachel Reeves unveils her budget today at 12:30 p.m. London time. A raft of tax hikes are expected as Reeves tries to plug an estimated £20 billion black hole in Britain's public finances. The Chancellor has backed away from raising income tax, instead opting for a slew of levies across the economy. Bloomberg has learned that the White House National Economic Council Director Kevin Hassett is seen by advisors and allies of President Donald Trump as the front-runner to be the next Federal Reserve Chair. Sources say that Hassett is seen as someone who would bring the president's approach to interest rate cutting to the Fed. Treasuries rallied on the news, pushing the US 10-year yield below 4% for the first time in months. Pretty.
You know, it's a really fascinating one to see whether or not Kevin Hassett is actually going to be a market-moving narrative when it comes to some of those conversations. There's lots going on in terms of that market move. When you're looking at the kind of direction of travel anyway, Guy, when it comes to the 10-year yield, 401, we've kind of been bouncing around that 355 to 410 range. Things are moving lower, though, ahead of potential December rate cut.
Yeah, is it the Hassett trade or is it the December rate cut trade that we're watching more carefully right now? Are we going to get steeper curves? Like this, the Hassett trade feels more like a front-end story than a back-end story. And it's going to be interesting to see how steep the curve could get were he to be confirmed and were he been seen to be having significant influence when it comes to being sort of his ability to sort of corral the committee to deliver on those rate cuts.
Yeah, it's a really fascinating one. And there's this also broader question, I should say, of what's going on between the bond market and the currency market as well, because they've been going in two completely different directions. Yep. How many people have we had on this program that has said dollar weakness is still going to be a 2026 story just as much as it was a 2025 story? Some of that might have to do not just with domestic policy, but with international policy as well. And that's where we go next. U.S. President Donald Trump has dispatched top negotiators for additional high-level meetings with both Russia and Ukraine. Now, Trump said he would only be willing to meet the leaders of those countries if talks yielded a so far elusive pact to end the war. He added that Special Envoy Steve Witkoff would meet with Russian President Vladimir Putin in Moscow, likely as soon as next week. Let's get a little bit more context on this story. Bloomberg's Brussels Bureau Chief Suzanne Lynch joins us now. Suzanne, just walk us through the latest here. We know there's a meeting coming up here in Europe at about 11:30 a.m. Brussels time between Kaja Kallas and several other ministers. How much does the European lens change the dial?
Yes, a lot of activity here in Europe today as the Europeans try to get this peace deal back on track. They feel that they did make progress in the discussions in Geneva and elsewhere with moving the dial somewhat on this peace plan, that original 28-point peace plan. We've in fact just heard from the European Commission President Ursula von der Leyen, who's had been central on the European side to these discussions. She's just been speaking in the European Parliament, and she gave her first response to the talks. She said she welcomed the effort by Donald Trump, saying that after months of discussion, it was good to have a text to work with, but she said this is just a starting point. She also gave some indication of some of the red lines the Europeans have. She said in her address to the Parliament just now that there should be no limitations on Ukraine's armed forces. She also said that a sovereign nation should not be carved up, borders should just not be changed, and that was also a red line. And she also spoke about meeting the financial needs of Ukraine, in particular that plan to use immobilized Russian assets to help Ukraine. She said that the European Commission is preparing a legal text on this. And as we know, there was a lot of panic in European circles when it seemed that in the original draft of the peace plan that the US would in some way be involved with using these the profits from the assets in the reconstruction of Ukraine. So now it seems that the Europeans are saying they're moving forward with this plan. They want to get it over the line. And Ursula von der Leyen saying just in the last few minutes there that the European Commission is preparing a legal text on this and does want to move forward with that plan.
Suzanne, you have obviously got your ear to the ground in Brussels and listened to all that goes on there. How quickly could Brussels, Europe, pivot from war in Ukraine to peace in Ukraine?
Look, I mean, I think this war in Ukraine, which has shaken Europe to the core, has seen quite a quick response from the EU in some way. We saw all those sanctions packages happening in relatively quick succession after the Russian full-scale invasion in 2022. We saw, for example, the discussion about using Russian assets. Initially, the Europeans said, no, we don't want to do this. The ECB in particular was very wary of this. And now Germany and other countries have come round, even though Belgium still has some questions. So we've seen Europe pivot again and again on this. So I think what we've seen is all hands on deck, really, since this shock peace plan leak last week. There is no doubt about it. The Europeans confirmed they weren't consulted. They did not have any heads up that this peace plan was coming. But what you're seeing now is the statement now by von der Leyen in the last few minutes. We've got EU foreign ministers convening today for an emergency meeting, and we also have the EU ambassadors representing the 27 member states meeting all day for meetings here in Brussels. So it does seem that things are moving here, but in particular the focus now for Europe is this frozen assets plan and meeting the financial needs of Ukraine, which, as we know, are huge, particularly as we come into the beginning of next year.
Suzanne, thank you very much indeed. Suzanne Lynch, Bloomberg's Brussels Bureau Chief. Up next, we'll be back to the budget. We'll talk about what Rachel Reeves is going to deliver and how the market's going to react. That's next. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Novo Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade. We are 41 minutes into a session that has some modest gains so far. The Fed rate cut expectations perhaps delivering some of that, but we are in wait-and-see mode when it comes to the UK budget. So let's check in on what's going on with gilts. At the start of trade this morning, 41 minutes ago, we saw the gilt yields jumped a little bit and jumped more than we were seeing in other parts of Europe. That seems to have ebbed a little bit now. We're pretty flat on the gilt story, but that's what we'll be watching as we wait for budget day to get underway. The UK Chancellor Rachel Reeves is widely expected to announce a range of tax hiking measures targeting the wealthy to fill a £20 billion budget hole to avoid breaking her fiscal rules.
Markets know my commitment to the fiscal rules is ironclad. Some people say that we should just sidestep those rules, that we can borrow more without consequence by simply reclassifying areas like defence or education. But no accounting trick can change the basic fact that government debt is sold on financial markets. There are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. And we are competing constantly with other countries also selling debt.
November 4th feels like an epoch ago. For more on the markets and the political impact of today's budget, we're joined now by Sam Unstead, co-editor of Bloomberg's Markets Today blog, and Rosa Prince from Bloomberg Opinion, who writes often on UK political matters. Sam, let's come to you. The whole team will be gearing up then to blog away through this. I mean, is there a chance that you spend a lot of time reporting on the things she says that she's going to do, but they don't necessarily raise much money, and actually we're back to a story of fiscal drag, and that's what's going to do the heavy lifting when it comes to filling holes?
Yeah, I think so. So this is the word that's being used constantly now is smorgasbord. You know, this a huge number of different tweaks and tinkering over here, and you know, sort of freezing thresholds here, and you know, nothing in there that's sort of this one big narrative for people to grab onto. So yeah, I think the likelihood is you're going to get a huge amount of news. So lots and lots and lots of different things. Many things we haven't even touched on, you know, on the blog, for example, like different duties, what they're going to do around those sorts of things, stamp duty, property, you know, all sorts of things like that. Get to the end of it and actually working out whether it's met what the market wants to see in terms of the headroom. And understanding really what the implications are of it going forward is going to be very difficult to do.
Rosa, good morning. Do you think the Chancellor's more interested in the market reaction or the reaction of the backbenchers?
Good question. I definitely think it's those two things rather than what she will be claiming today, which is this is about helping working people. Because it seems to me that they are being clobbered from what we hear about this budget. Both of those things are weak positions. Politically, she is weak. Her backbenchers were very unhappy about that direction of travel. They were not happy about that interest rate hike that she planned to put up, income tax by 1%. They weren't having that. And the markets, as you say, the markets have been so upset by the destabilising effect of all this speculation. We marched up to the top of the hill.
Can she satisfy both of those two constituencies at the same time, do you think?
Well, I think she'll try to. I think she will say this is a redistributive budget, which also is sound financially. As we say, it will depend whether the headroom is there, sufficient headroom is there, and also whether that smorgasbord can deliver. I think that's hard. And I think, as I say, the one thing that may destabilise all of this is that if ordinary people are finding they're dragged into those higher rates of tax and Labour's opinion polls continue to go south, then that will be still a problem for the party.
Rachel Reeves has talked very often about saying this is a business-friendly government. Does this sound like a business-friendly government to you?
It doesn't, to be honest. I mean, yesterday we heard about the increase in the minimum wage, particularly for young people. That's tough on small businesses who last year were clobbered in the budget, if you remember, by that big NI hike. Now, they have said we don't want anything more to affect our bottom line. Also, growth. What happened to growth? That was meant to be the primary mission of this government. Doesn't seem to me, in anything I've seen briefed out so far, that there's much to drive it. In fact, the opposite. The OBR is going to downgrade growth forecasts for the rest of the parliament.
So, I mean, Sam, we've talked about a lot of the ways she's going to raise tax. She has also talked a lot about wanting to tackle inflation. It's not only her job, of course. Other people are supposed to tackle inflation as well. But she does have some measures there. I mean, she could mechanically bring down the costs of some things. She's been talking about levies on certain types of on electricity bills, for example, and stamp duty holidays on IPOs. I mean, there are some things that we could look to sort of gifts, I guess. And there's always a rabbit. There's usually a rabbit of some kind. Anything caught your eye?
I think, well, I think in terms of the rabbit, I mean, if there is going to be a rabbit, it will be, I don't know, a very small rabbit or one you may not even notice coming out of the hat. But I think, you know, for markets, you know, if we're looking specifically for markets on the inflation standpoint, again, it's lots of small things. And really, ultimately, there's only very small things she can do to impact inflation. Yeah. So, yes, there may be some things that will help on that front. Likelihood is there'll also be some things that don't and sort of offset a lot of that. So the ultimate, you know, outcome is probably fairly neutral. I think I was actually just saying to Rosa before we came on the air that the likelihood is, I think, that with lots of tinkering around the edges, very similar to last year's budget, that effectively you end up with another year-long wait for the next budget and lots of questions constantly about what the headroom is, what gilt markets are doing on a day-to-day basis, gilt markets that are already under quite a febrile atmosphere and moving quite a lot. So I think we're probably in for kind of another 360 days.
Can I take an early lunch today? And
no.
Well, do I need to watch the budget, or is it the OBR? When is the market moment?
Yeah.
Where everybody kind of clicks together and we've got a picture of kind of what this actually looks like and how therefore gilts are likely to react, how sterling's going to react.
Yeah, I think. So I think the DMO and the OBR coming at the same time, 1:30 after Rachel Reeves finishes. Measuring those things together, so how bad is the OBR versus how much money do they want to borrow, that will provide part of that picture. Then there will just be a lot of digesting of what was going on in there. And actually, just to go back to something Rosa was just mentioning as well, I think possibly the political story will be one of the things that moves the market. You know, what happens, for example, on the two-child benefit cap, very fraught topic, a really key one for how she's going to balance markets versus the party. And so that might end up being the kind of thing that's picked out, but it will be small things, I think.
Is it, if she doesn't do well today, are they done?
Yeah, I think they're in a bit of trouble, and I think it's, when you say well, let's define what that means. I think that they need to start creating a narrative about what they want to do with this government. You know, why are they in office? And we really still don't know the shape of what this Labour government is. You know, is it a very left-wing government?
Not yet.
Kind of, because they're being forced in that direction, but they don't sort of seem to be. You know, they're not standing there saying, right, we're going to tax the rich, and there are measures that do tax the rich, but they don't seem to be creating any kind of real.
Is the absence of a narrative because they would have one, but it's not something that they can do?
No, I think that there wasn't enough thinking before they got into government about what they wanted to achieve once they're here, and that's just left them at the mercy of events. So they constantly seem to be kind of reacting and sidetracking. I mean, talking about the two-child benefit cap, they said that they were going to be cutting welfare. That was a big part of their mission, and that just they haven't been able to do that because of what's happened with their backbenchers politically.
And that has undermined the credibility with the markets as well. We've got a lot going on. Do you take a lunch? Do you not take a lunch today? Do you eat sandwiches? Do you watch the budget and then basically pay attention to what those two briefings are going to look like afterwards? Are you going to form a full picture by the end of it all? We'll wait and see. I know you guys will be paying attention. Sam Unstead, co-editor of our Bloomberg Markets Today blog, and Rosa Prince from Bloomberg Opinion. You're going to hear a lot from them, I suspect, over the next 24 hours. You're also going to hear a lot from Lizzie Burden, who's down in Westminster analysing all of this. She's got sandwiches packed. She's ready to go. Lizzie, over to you.
Well, of course, Guy, our lunch is going to be a buffet today, and I want to continue your conversation and bring in Meg Hillier, who is chair of the Treasury Select Committee and a Labour MP here in the UK. Great to have you with me, Meg. Thank you so much for making time. They've just been discussing in the studio the many, many leaks that have come out over the past few weeks, and I wanted to start by asking you, this is market-moving stuff. Does it worry you? Is that the sort of thing you want to rein in?
Look, I do think that the leaks have been very unfortunate and that needs to be got a grip of. But let's also be clear, there's been a lot of speculation too, and speculation's fuelled by media, by businesses, lobbying. So, and it's very challenging for a chancellor to reject every bit of speculation because effectively she'd be writing her budget in public. But I do think, I agree, that the leaks that have come, some of them clearly from the Treasury, need to be dealt with.
OK, well, a lot of those leaks have been about tax rises. Does it matter that the Chancellor told us after her last budget she wouldn't be coming back with more tax rises, and yet that's exactly what it seems we'll be getting today?
Well, look, I think if I'm on doorsteps in my constituency all the time, people know that the NHS is on its knees and there's a real drive to drive down waiting lists. They know what's going on in their children's schools, so they do understand that there's a challenge while also worrying about the cost of living that they are facing. And so actually, if they know that that money is being spent well, they need to see. And look, let's be clear, you know, the world is in a very difficult place. The Chancellor inherited one of the worst hands that any Chancellor's inherited since the Second World War, so there are going to be very tough decisions.
But if she freezes personal tax thresholds, would that amount to a manifesto breach, breaking the promise to those voters?
No, she said she wouldn't raise income tax, VAT or national insurance, and I think people are not, you know, they understand what would happen if thresholds are frozen.
A stealth tax rise?
Well, it's not a stealth tax because everyone's talking about it, so it's hardly as... I don't think anyone in the country doesn't understand what that would mean for them, but we do need to make sure that those of us with the broadest shoulders are helping to support others. You know, and I've got 1 in 2 children in my constituency living in poverty, and we need to be investing in them, we need to be helping people into work, we need to be helping people support themselves, and so we need to make sure that that investment is there.
So officials have rolled the pitch for a smorgasbord of tax rises, some of which you've been lobbying for on the Treasury Select Committee. Is that a credible approach? Some have warned that it could turn out like the omnishambles budget of 2012.
Well, there's always a challenge, but I mean, the manifesto pledge was clear. I don't think anyone wants to break a manifesto pledge, and clearly, well, what we're hearing is that's not going to happen. We obviously don't know the finally from the budget at this point, but there's always a challenge when you're looking at lots of different taxes. But we looked at at gambling, and we felt that as a committee cross-party, that certain forms of online gaming, which cause a lot more harm, are not taxed as highly as other things like horse racing and going into a casino where it's less harmful. So we thought there should be an opportunity to raise taxes there. We also looked at cash ISAs and we looked at child poverty. We've looked at a number of the issues that were being discussed around the budget.
So what would success look like today? Is £15 billion headroom against her fiscal rules enough? Is that the bar for success?
Well, I wouldn't want to put a precise figure on it. She will be looking at all of the numbers and the projections, and she'll have had access to that, which I have not. But clearly the 10 billion was always quite tight, and was about, you had to be quite optimistic to really think that was really going to be enough in the long term. It's usually been between 20 and 30 billion at the lower end in normal times. We're not really in normal times now, so she will obviously be looking at that. But then I think there's a lot of discussion about what's happening with child poverty. We need to invest in the young people we've got, with the birth rate very low in the country, so I think that's important. And we've raised these issues about gambling tax and also about the cash ISA, because we were worried about the amount that could be saved in that being reduced, and we're hearing mixed messages on that, so I'll be interested to see what she's got to say this afternoon.
You mentioned about poverty, and of course we're hearing that there'll be a big effort to ease the cost of living, but do you worry that some of those measures will actually raise inflation and perhaps harm employment?
Well, I'm not sure. I mean, if you help people, ease their costs. For instance, energy bills has been mooted. I mean, we're talking about speculation. We don't know if it's true. But if people have got any spare money, then they will be spending that locally. And what's interesting about the poorest families, that they really spend in their very tight local community. They're not buying online so much, and so that actually can boost money going into the economy, albeit small scale, but actually every little bit helps.
But concerns have been raised that with the minimum wage going up, people could lose their jobs.
Well, I think that if you look at the minimum wage, though, it's been an extraordinary situation in this country. We thank goodness we have a minimum wage, because even on the minimum wage, it's very hard to make ends meet, and we do need to be looking at that balance about people being paid enough so they can actually make ends meet, and that work really does pay. So having the minimum wage at the right level, I think, is very important.
Meg, just on the spending cut side, if the revenue raising is delayed to the end of the decade, is that credible?
Well, I think there are reasonable questions to ask about that, but look, I think there's got to be some discussion about also what will happen in between. So last year, the Chancellor announced investment in infrastructure, for example. That takes a while to trickle through into the real world. We're a year in now. We'll be seeing, I'm talking to constituency MPs, we're seeing things happening in their constituency. So I think there is an issue about how far away you push that, but there are other things that will happen in the shorter term.
Meg, just finally, we started by talking about the flip-flopping between appeasing the bond vigilantes, appeasing the left wing of the party. Who's the Chancellor more in hock to use the Mayor of Manchester's words?
No, I think that the Chancellor is very focused on making sure that she keeps the country's finances stable. I think that's really at the core of her. She has a job. She's not, I think she would agree, the job of being Chancellor is not about being popular, it's about doing the right thing. I think that's what she's trying to do, so we'll see what she's got to unveil later.
We will indeed. Meg Hillier, thank you so much. That's Meg Hillier, Chair of the Treasury Select Committee, who I'm sure will be passing through all of the many pages of the budget and the OBR forecasts as well. But back to you in the studio, Guy, Anna and Chrissy.
Lizzie, thank you very much. Lizzie Burden, of course, in the cold for us. Thank you, Lizzie. In Westminster, the UK Chancellor Rachel Reeves is expected to deliver her budget at 12:30 p.m. in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. And it doesn't stop there, of course. The opening trade will break down the numbers with key business and political voices in our budget special. That is tomorrow morning. So don't miss that, where we will all be in the cold. But we're looking forward to it. It'll be good to get another chance to digest the news flow. Meanwhile, European stocks going higher with other things in mind. A gift from the Fed in December, perhaps, is what's in the market's mind. Modest gains.
It's very hard to tell because Powell, nothing from Powell. I think the blackout period starts Friday.
Yeah.
And I don't know. Can I read Williams as a proxy? Is that the right way of looking at it? Is Mary Daly the proxy for Powell? Is that what the message has been over the last few days? The Journal obviously publishing its piece. All of that kind of taking the market towards the idea that actually a rate cut is going to be delivered. And we're at a pricing level now that will be consistent with the idea that the Fed kind of has got the green light.
Well, something we haven't talked about yet is we have initial jobless claims at 1:30 p.m. today, UK time. And then we have the beige book at 7 p.m. UK time. So if all the reporting around some of the kind of divisions are real, we're going to see how deep those divisions are and what they're actually trying to target. Is it still the labor market, or is it the kind of echoes of, okay, well, inflation hasn't come yet, it's coming come 2026?
And the day before Thanksgiving, futures in the United States still going higher, so it looks as if we have a bit more of this narrative to run. E-minis up by 0.3%, NASDAQ futures 0.4% higher. That is it for the opening trade. I'll be back with the budget show a little bit later. The Pulse, though, is up next here in London. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Alim, only on Bloomberg.
Right,
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The wait is over. The UK Chancellor, Rachel Reeves, set to announce her budget this lunchtime. She faces the delicate balancing act of placating both the gilt market and her Labour Party. In the US, Kevin Hassett emerges as the favorite to become the next Fed chair, his view seen as aligning with President Trump's rate-cutting agenda. Plus, Russia confirms the U.S. Special Envoy, Steve Witkoff, will visit Moscow next week as President Trump hails tremendous progress towards peace in Ukraine. Now, there's quite a lot going on in the markets. Of course, it is budget day, so keep an eye on everything that's UK, not only gilts, but also sterling. For the moment, the UK 10-year yield at 4.509. You can see sterling at 13173. There have been so much, actually, expectations in terms of tax rises, in terms of minimum wage. That'll be finally the right time to just listen to what the Chancellor has to say and make sense of what the markets would have wanted to see, or actually whether they're pretty pleased with what she announces. S&P futures getting some 0.2%. Look, there are rising expectations for U.S. interest rate cuts, and that's sustaining a little bit of optimism into the Thanksgiving holidays. Remember, tomorrow a lot of the equity markets in the U.S. will be closed. Traders, of course, focusing on this high-stakes second budget where the Chancellor will face this dual challenge of reassuring MPs, but also convincing gilt investors. Look, the picture across the board for European markets, I think, is one of divergence. So again, we're not in earnings season. We did have a big divergence in terms of the industry groups of where you're faced. And for the moment, the FTSE and the CAC are actually gaining some 0.1%. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the UK Chancellor, Rachel Reeves, due to deliver her second budget in the House of Commons later today. Now, the much-anticipated budget will need to placate both MPs who've put the Prime Minister, Keir Starmer, on notice, and the gilt holders who've been demanding a premium on UK debt.
Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act.
Well, for bond traders, a key focus will, of course, be how much of a fiscal buffer Reeves creates. Let's bring in our Lizzie Burden, who's outside, of course, the House of Parliament in Westminster. How much, Lizzie, of a bind is Chancellor Rachel Reeves in?
A massive one, Francine, and you framed it perfectly. She's caught between the bond vigilantes on the one hand and the left wing of her party on the other. This is the biggest test of Rachel Reeves's political career, and we've had months of speculation, weeks of leaks leading up to this moment. I was just speaking to the chair of the Treasury Select Committee saying that she's concerned about all the leaks that have been happening and the speculation as well. But the big question, as you say, is how much headroom is the Chancellor going to be able to leave against her fiscal rules? £15 billion is the amount that is expected, but the market would like to see more than that. That's barely any more than the £9.9 billion she left the last couple of times, and we know just how much uncertainty that allowed in markets about what tax rises would be coming at the next fiscal event. But this is a difficult moment for Rachel Reeves. We shall see which levers she pulls in this budget, because at first it seemed like it was going to be a manifesto-breaking income tax rise. Now officials have been laying the pitch for a smorgasbord of tax rises.
So Lizzie, if you break it down, what individual measures could we be expecting?
Well, the biggest one on the tax-raising side, Francine, looks to be a freeze of personal tax thresholds, so a stealth tax rise. She could also levy a mansion tax on homes worth over £2 million. That would be a political appeal to the left wing of her party, but it's not expected to raise as much as hoped. And then on the spending cuts side, we'll have to see how far the Chancellor is willing to go, how much she'll actually leave it to tax rises to raise revenue. We are perhaps expecting her to lift the two-child cap on benefits, which would cost £3 billion. And we know already that the left of her party have stood in the way of many of the welfare reforms that she would like to make. If she is to backload spending cuts to the end of the decade, that could raise credibility concerns about debt sustainability. So as you say, we really are focused on the market reaction as ever after this budget. We're not likely to see the full extent of it the moment the Chancellor sits down after her speech at the dispatch box. But we've seen so much volatility in the pound-euro trade heading up to this moment. We've seen traders piling into bets that the pound will be weaker against the dollar. If the Chancellor manages to balance the books here, you could see a relief rally for sterling. But as ever, we are watching for the bond vigilantes, and the spectre of Liz Truss hangs over Rachel Reeves.
Lizzie, thanks so much. Lizzie Burton there from Westminster. Now, for more on the budget, we're joined by Michael Strawbeck, a Global Chief Investment Officer at Lombard Odier, and Phil Aldrich, Bloomberg's UK economy reporter. So thank you both for joining us. Phil, finally, November 26th, we're here because there has been so much news. And I wonder whether, first, how do you think she gets this right? Is there really a balancing where she kind of pleases enough people that it's not a disaster zone? And because of the various leaks or the various news that we've broken, is enough damage already been done?
Yeah, so the I think 15 billion headroom, as Lizzie was saying, is kind of the bare minimum. I think she's going to have to, if she really wants to resolve some of the concerns in markets, something like 20 billion will show that there's a willingness in government to actually take a bit of pain. There's also concern that too much of this will be backloaded, so there'll be too much of the threshold freezes in 28, 29, and not enough on spending. We're going to see 10 billion increase in welfare probably compared with March because of the U-turns that were done. Of course, they were costed in the March Spring Statement, plus the 3 billion child benefit cap. So there's which is being is going to be lifted. But there are a bunch of measures which are quite important for markets to believe that this is going to be a credible event.
Yeah, I mean the concern, Michael, is that the government, the markets want one thing, and then the Labour Party may want another. So we'll get to that in a second. Yeah. But what do you want to see in the budget? Like, are you invested in the UK?
Yeah, sure. We're actually overweight UK gilts.
Wow.
Because we think rates are going to come down here.
Okay.
It's very clear the market wants to see a package that doesn't hurt growth too much, doesn't knock too heavily on inflation, and establishes fiscal consolidation and stability. I mean, the single biggest challenge that the UK has is it is on a very tight path to being questioned by the market about its fiscal sustainability. And the Labour Party, of course, is in this situation with its voter base actually to act as if they have to be much more strong and conservative, and that's not easy.
But, Michael, I mean, like butter, everything is better with a bit of growth. How does the UK grow?
Well, first of all, we need the fiscal situation to be stable so that innovation, capital stays in the country, right? UK has gone through, you and I have been discussing this for 10 years, one situation after the other, starting with Brexit, come with Russians leaving London, come with arrest non dom and people leaving the country, and now many are questioning, is this a place for us to stay and invest? Can we trust the tax regime so that we can look forward? And with that, the UK has many strengths, but right now it's sort of going through a tunnel with a lot of fog, and hopefully the light at the end of the tunnel is not another train, but the end of it.
Yeah, let's hope. The concern, again, I mean, do you worry about inflation, Phil, which this could, it could put it up? Well, or do you actually worry about just wealth leaving and therefore lack of investment for the country?
There is a concern about inflation. Obviously, the Chancellor is expected to gerrymander prices down today by taking some of the levies that are on energy bills off those bills. She's already frozen prescription charges and rail fares, and these things will just automatically lower the rate of inflation. So that will help release the bank to cut rates. The bigger concern is the longer-term picture. Is this going to be fiscally stimulative, actually? We've got a lot of, the minimum wage increases were quite substantial, particularly among the 18 to 20-year-olds. Had an 8.5% increase in the minimum wage. So, are these pressures going to counteract the short-term efforts to dampen the headline rate of inflation so that we can actually see some prospect of long-term inflation coming down? So that is a measure that I think is important. The other thing on growth is that obviously the headline growth rate is going to be lower this time for all 5 years coming because of the OBR downgrade. Now, in a way, that should be sort of set aside because the judgment that we need to worry about with the OBR is whether her measures that she takes in the budget will be growth stimulative or growth negative. Now, because they're going to be 20 billion or so of tax rises, you would automatically expect them to be growth negative. But the other elements in the budget may make it growth neutral. There's no way overall that she's going to be growth positive in this budget, but growth neutral is probably about the best she could probably hope for from a judgment from the OBR.
And the gilt market would be fine with that.
Yeah, I mean, the key thing is that we get interest rates down in this process as well in this country, which we think we will see. That's why we overweight and like gilts. And the Bank of England needs room to maneuver if this knocks or doesn't really sort of keep inflation sort of stable or coming down and growth is not coming through. You're in a catch-22, and the Bank of England will have to sit tight. We don't think they will. We think they will materially lower or have to lower interest rates, and that makes bonds or gilts here attractive.
And Michael, is this also relative to other countries?
Yes, this is on a global basis. UK gilts are actually quite attractive from a yield perspective.
Because the others are a mess.
They're lower.
That's my technical CFA level 6.
They're lower, that's for sure. I mean, we're in a low interest rate environment again, maybe not so much in the US, but certainly in Europe. Switzerland, we're at 0. In the Eurozone, they've been coming down for 2 years and so. And therefore, UK gilts are still quite attractive, but it doesn't reflect the picture of course, the sort of difficult situation the UK is in right now.
That's the big reward that Rachel Reeves could get from this budget. If there is a belief that inflation is coming down, if they have been credible with their fiscal parameters, they could get an extra 5 billion or so from just lower borrowing costs as the market, as rates come down, as the bank starts cutting it, and this kind of slim premium on gilts just disappears. So there is a positive reward if she gets the package right. I mean, as you were talking about, she needs to bring her politicians, her sort of the left wing of the party on side, and it's that tension. How has she been able to do that? That'll be interesting.
Because Phil, her job is at risk, and also the one of the Prime Minister, right? Are we overestimating or underestimating this danger?
I don't think we're overestimating the danger. I mean, it's been chaotic for the last year, we've got May elections where the Labour is expected to suffer badly, there isn't as much as the Chancellor does talk about, we have established economic stability. There hasn't been economic stability, and we don't have the growth plan as it's delivered by government is to invest, is capital investment, public state spending on capital projects is the core to the growth plan, and then they're hoping to crowd in private sector money with that. But beyond that, doesn't seem to be a vision for the country or strategy for which people can get behind. So just getting the markets on side, releasing an extra 5 to 10 billion of headroom because of lower borrowing costs, that would help. That would be definitely a positive thing.
I mean, you could have, look, we're not going to go to elections because of the fixed-term parliament, but you could see a new Prime Minister if you believe some of the rumors from Westminster. Does that make a difference from an investment point of view?
No, I don't think so. I think the plan is what matters,
right.
Less than the personalities right here now. It's the plan and the credibility about a solid plan.
Michael, I mean, the markets, one day they're happy about AI valuations, the other they think it's like the end of the world. Mm-hmm. And then in this mix, you also have a lot more talk about a Fed cut because of the potential replacement for Jay Powell.
Yep.
Like, what happens to AI valuations?
Well, they're going up. We're moving into sort of bubbly territory. But the good thing about bubbles is they create handsome returns, at least when they sort of blow up or start getting bigger.
Until a point.
Until a point. That's the point where you, of course, want to run. But
how do you call that point?
That is incredibly hard, but it will probably start with a miss of expectations and sort of the feel, oh, we actually went too far looking into the abyss now. There's a lot of optimism, but it's solid. It's not TMT and dot-com bubble all over again, in our view. It is productivity anchored, new instrument, artificial intelligence, Gen I, et cetera, is here to stay. It has enormous money backing from the big tech companies that are loading up, the hyperscalers, everybody's rushing into the space in a situation where the geopolitics actually drive it, because everybody wants to lead the AI arms race, if you will. So it has an enormous backing of investments, and therefore this can go on for quite a while until then the music stops. But certainly the music is playing.
Yeah, it certainly is for now. You're expecting a Fed cut in December.
Yes.
Again, it could be, the cycle with the high AI valuations and into, a cut, but still quite elevated interest rates could be tricky overall for the markets.
Yeah. I mean, we've expected 3 cuts and this year, and we think we're going to get the December one, and then they'll have to pause and take stock of the labor market, take stock of inflation, take stock of the damage, honestly, the tariffs are doing, because there's nothing good about those. And then the Fed will probably wait all the way into mid-next year to do anything.
Okay, what a day. Thank you both for joining us. Michael Strobeck, Global Chief Investment Officer at Bloomberg OJ, and Philip Aldrich, Bloomberg's UK economy reporter. Now, coming up, how private credit is reshaping wealth portfolios. We'll discuss that with Ruben Stines from Oliver Wyman. We'll also get his views on the UK budget. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Today, Chancellor of the Exchequer, Rachel Reeves, delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's Statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg, context changes everything.
When I
speak to my customers, they say, you know, we've had Brexit, we've had COVID, we've had the cost of living. They've built the resilience into their businesses.
The UK historically has had a great reputation for stability. At least you've known what you were dealing with. Even if you didn't like it, you knew what you were dealing with, and we tend to, you know, create this stable environment.
I hope there's some consistency in the budget. The government have been very pro-aviation and pro-growth. They really recognise the valuable role that aviation plays, especially to an island economy.
We're the largest airline in the UK. We'll switch about 10% of our capacity, about 5 million seats, out of the UK into those countries, Sweden, Italy, reward those countries who are abolishing environmental taxes.
The average small business we support, they're about 10 employees. The person who's running that business is doing the sales, the marketing, the finance. They want that certainty to enable them to continue to run their business.
There is a lot of capital. To deploy capital, you need to be confident that you can invest something and the rules aren't going to change.
Even a dumb Labour government will work out that for an island on the periphery of Europe, the way to grow and the way to increase tax revenue is to get tourists onto the island first.
Well, business leaders, they're weighing recently on what they want to see from the UK budget a little bit later. Now, for a different take on the budget, check out Maren Talks Money podcast. Bloomberg UK Wealth's editor-at-large, Maren Somerset Webb, gives her take on your money and the world of investments every week. Now, let's also talk a little bit more about the budget with Hugh Van Steen as partner and vice chair of Oliver Wyman. So good to speak to you, Hugh. I mean, if you look at private market, I mean, first of all, what are you expecting from the budget overall? I know that a lot of the focus, and you've been focused on private credit and how it changes wealth portfolios, but what kind of role does private credit and private markets in general have in the UK?
Oh, thanks for having me on, Francine. So I think the key role for private markets here will be to try and fund the increasing spend on infrastructure. Yeah. So if I think about the digital infrastructure, the energy infrastructure, quite frankly, the utilities which need money, the more the government is hamstrung by borrowing, the more it will need to turn to the private sector. And so I think the development, and part of private credit, the story is really about evolution, is how it's moving from being just mid-market, small company lending and acquisition finance to actually investment grade. And I think that's the area where the budget matters most for them.
I mean, do you worry about private credit in general because of I mean, we've had, you know, the two blowouts in the US. There was a couple of days, James Dunn talked about cockroaches. I know he's then recently, like, walked back those comments. But if it goes ugly, where does it go ugly first?
Look, I think this is a great question. I've just spent also 2 weeks in North America. I think we need to reframe this as really a discussion about credit rather than just private credit. You know, you've spoken a lot about the K-shaped economy. Yeah. There are clearly some people who are suffering from stubborn inflation, from the changes. And if you think about the companies which are starting to go bust or need restructuring, actually a lot of them are more impacted by the K-shaped economy. Some clearly are in private credit, some are not. So I think one is it's really about credit overall. And there's some behaviour which looks a little bit late cycle. You know, underwriting standards have fallen a bit. And I think
the underwriting standards, that's the biggest concern, isn't it?
I think that's one concern. There's just a lot of money being put to work here. And the more that the M&A market was weak, the more that people turned to other sectors. So there's been a bit of a chase for growth. But I think the second thing, Francine, is that we've always seen, in most sectors, there's differentiation. What's been bizarre about private credit is actually the leaders and the difference between a first quartile and fourth quartile has been unbelievably tight. And I think what we're now starting to see is a bit of a shakeout, like, did you actually make good decisions? Did you size your bets correctly? I mean, some of the surprises here are actually, quite often when you find is when you make a mistake, you go back and say, was it a new mistake or was it an old mistake in a new format? One or two of these managers had 35% of their fund on a single credit. Well, that's not very prudent investing. So
what does that mean? Just, I mean, how much does diversification actually change the risk in your portfolios? And how much of it is just because you can't really value it properly because it's private?
Oh, I think so. The larger private credit becomes, the more that the standards will evolve. So you can already see there's an interesting announcement by MSCI that they've now can do NAVs on 18,000 funds. You can see that there's certainly some a progression in terms of more invigilation of what's going on. No, look, I think that the challenge here is now it's almost a $3 trillion asset class. There's going to be the good, bad, and the ugly. There's just no way when you're making $3 trillion of decisions. And the key point in life in investing is not that you don't make mistakes, it's when you make a mistake, it doesn't hit your portfolio too much. And I think what we're starting to see here is a story of if like the leaders and the tail, and actually the tail has started to become a bit straggly.
Hugh, a lot of the big companies will try and package it up also for retail investors.
Yeah.
I mean, if you look at some of the pitfalls, is that you don't really know what's in it. Again, you don't have regulation, but then at the same time, it means that they could take advantage of an asset class that will just keep on growing. What are the pros and cons, and where do you think the UK falls?
So I think first of all, I think there is regulation. I think that obviously, in terms of if you sell a product to true retail, the SEC will have to oversee it, and so there will be invigilation. So at the moment, something like about 12% of private credit is sold to the wealthy.
Yeah.
Let's be honest, it's to the extraordinarily wealthy for the moment, and they've got caveat emptor, but obviously they want standards. But that is broadening. This year, something like 16% of inflows have come from the wealthy, and it's broadening out. And you've seen a flurry of new products looking to try and access wealth mandates. I think as you broaden it out, I think one of the themes for me is there is a blurring of lines between public and private credit. Now, we've spoken about this in the past. I think for an insurer, it's definitively happening. You know, you're now saying, I just want to think very smartly about where I put my bets in the credit curve. I think that's starting to leak its way into the retail market too, but it's mostly a high net worth issue. And that's still an area where there's reasonable oversight. So I think this isn't a Wild West. This is very much one where there's some experimentation. Yeah. And like with all experimentation, not every experiment will work.
You speak to clients every day. Are you expecting a resurgence actually in M&A? How do the animal spirits feel out there?
Oh, it's fascinating. So I just think that we're almost in Christmas and we're sold out into Christmas. There's a lot of work being around. What if I do this? What if I do that? And what's fascinating is it's both strategics who are looking to do, think through big M&A. There's obviously a discussion in the US around, is the next year the year to go for before midterms? Is there a real window of opportunity? And certainly in finance, almost one of the surprises is that we haven't seen more mid-cap US bank M&A. That's an area which I think is going to be very interesting.
Do you think that's coming?
Look, you never say never. So one never knows, but I think my bet would be that it's more likely than not.
Right. In Europe, how does it feel in the UK?
Yeah, so the UK's like as you've been discussing all morning, I think the budget has definitely put an extra risk factor on the UK.
What held back investments?
Yeah, held back investments. So I think what we're seeing is there have been a series of deals. Look, just go back to private credit. We've seen two North American players buy insurers. So there has been M&A, but it's just that stubborn mix of low growth and high tax has created a slightly extra risk premium. You see that in gilts, you see that in investor behavior. Look, I was with one CEO yesterday who was hoping that we may have seen peak pessimism on the UK. Let's see after this afternoon.
Hugh, thank you so much. As good as ever. Hugh Van Steenis, Oliver Wyman, Vice Chairman. Coming up, we'll be discussing Vanguard's investment approach ahead of the UK budget with their chief European economist. That's coming up next, and this is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The wait is over. The UK Chancellor, Rachel Reeves, set to announce her budget this lunchtime. She faces the delicate balancing act of placating both the gilt market and her Labour Party. In the U.S., Kevin Hassett emerges as the favorite to become the next Fed chair, his views seen as aligning with President Trump's rate-cutting agenda. Plus, Russia confirms that U.S. Special Envoy Steve Witkoff will visit Moscow next week as President Trump hails tremendous progress towards peace in Ukraine. So Bloomberg has learned that White House National Economic Council Director Kevin Hassett is being seen as a front-runner to be the next Fed chair. Now that's as the search for Jay Powell's successor heads into its final weeks. Well, Hassett spoke to Fox News channel Hannity about this.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Now, for more, our managing editor, Jill Deesis, joins us now from Hong Kong. Jill, so how aligned, good morning, first of all, or good afternoon, how aligned is Hassett with Trump?
Well, Francine, I'd say he's very aligned. I think, in addition to that interview we were just quoting on Fox News, Kevin Hassett has appeared on television several times implying that he would be more in favor of more aggressively cutting interest rates. He actually just had an appearance on Fox not too long ago where he was talking about how he would be, if he was chair of the Fed, he would be cutting rates right now based on the data available to him. Francine, we know that over the course of the last year and beyond, Trump has obviously been enormously frustrated with Jerome Powell. Remember his own pick for the Fed chair position back during his first term in office, and he's been really, really upset about the pace at which the Fed is cutting rates, cutting twice this year, but holding prior to that. So it does seem like if the choice ends up being Kevin Hassett, which remember, nothing's really official in Trump world until it's actually official. So we'll see if this ends up being the pick. But if it is Kevin Hassett, I think Trump would ultimately find somebody that he probably perceives as being a much stronger ally, actually, as the chairman of the Federal Reserve.
Jill, thank you so much. Jill Deesis there with the very latest, of course, on Kevin Hassett. Now, with just 3 hours until the UK budget, the chair of the House of Commons Treasury Committee spoke to Bloomberg about the UK budget a short while ago.
There's always a challenge when you're looking at lots of different taxes, but we looked at gambling, and we felt that as a committee cross-party that certain forms of online gaming, which cause a lot more harm, are not taxed as highly as other things like horse racing and going into a casino where it's less harmful. So we thought there should be an opportunity to raise taxes there. We also looked at cash ISAs, and we looked at child poverty. We've looked at a number of the issues that were being discussed around the budget.
Well, also plenty of attention on the UK bond market. Today, fund managers at Amundi, Ned Group Investments and Vanguard have already trimmed their exposure to gilts. Well, Jumana Salihin, Chief European Economist at Vanguard, now joins us. Thank you, Jumana, for being with us on what is probably one of the most awaited, it just feels like a long time we've been talking about this UK budget. What exactly rides on it? Are the markets nervous?
So it's definitely, I would describe it as it is a significant fiscal event.
Yeah.
Will be watching. We're looking for that headroom to be increased from the 10 billion that we've seen in recent years to something more like 15. And there's obviously a shortfall of 20 to 30 billion. How are we going to fill that? Our estimate is mainly it's going to be tax rises, the thresholds being extended a further 2 years, and smaller spending cuts. But overall, that's the minimum that markets are going to be looking for. But the real point, Francine, is the delivery of the budget by the Chancellor. It has to be good. There has to be good follow-through. So markets will be watching not just today, but also in the coming days to see that broad political backing.
Yeah, who do you think the Chancellor is going to speak to? Because she needs to, again, within her own party, they're not one on the same, hymn sheet. There could be a challenge also to her Prime Minister, to the Prime Minister, and there's been talk about her losing her job. So she has to keep that faction, especially on the left, happy. But she also had to keep you guys, the gilt investors happy.
Yeah, so she's actually got a number of different audiences, and she'll have to communicate effectively with them. She's got to convince markets, the bond market, that she's, dedicated to her fiscal rules, which she has been. I think the mix of the tax cuts and the spending cuts that she does today, whatever she announces, people will also be watching that. So in terms of markets, is she going to have some front-loaded? Is it all going to be back-loaded? What is the mix? What is the sustainability? That's the bond market. You're absolutely right. She's got other people she's got to convince. Her own party. She's also got the public, and she's got businesses as well. So 4 different audiences.
I know we don't know exactly what's in the budget, but given what has been leaked or what we've heard so far, what do you think the impact will be on inflation and growth for next year?
So on inflation and growth, we are seeing a fiscal drag. In other words, because there will be rises in taxes, we expect that to be negative for 2026 by about 0.2, shaving off growth. But there could be also some positives in terms of inflation with respect to if she does do some measures to cut the tax that you pay on your energy bills. We know in the UK, the inflation is high. 70% of that is actually due to these regulated prices such as energy and water. So if she can tackle some of that, there could be some positive news on inflation, which would allow the Bank of England to cut potentially earlier and give rise to that positive fiscal environment, that virtuous circle.
Do you think the Bank of England cuts in December, or is it too soon?
It may be too soon. Our base case view is that we're expecting a couple more cuts, but next year. Yeah. But obviously that could be brought forward depending on, what happens to the economy and what we see today.
Joanna, how does the UK compare to other countries around the world, right? Because it's always something of relative value.
Yeah, that's absolutely right. So I think in terms of, if you're talking in terms of markets, we're seeing in terms of the gilt market on the 10-year and the 30-year, there is a risk premium that's priced in with the UK bond yields at the 10 and 30-year above the US. So at the long end of the curve at the 30-year, there's a 70 basis point spread. That term premium, if this budget goes well, if the further sort of sentiment about fiscal stability goes well, there is actually quite a lot of room for that spread to narrow. So there's a lot of potential when you say relative to other economies for the UK to do better. The gilt yield is high.
Joanna, how does this country grow? So not 2026, but 2027 and beyond.
Yes, so absolutely. So, the growth reforms, how do we see productivity rising? That's one of the big challenges, and that's one of the things that we're looking at today from the OBR, is that we actually expect them to be downgrading their long-term growth forecast from what was quite optimistic at 1.8 to something more like 1.5, which is also a little bit higher than what we at Vanguard expect that trend growth rate to be. So in order to get the economy to grow, Francine, it's the classic things. It's investment in the economy, whether that's public investment, private investment, incentivizing that investment. And, we know in the US, they're seeing a lot of investment in AI, in technology, but also technological adoption. That's really important as well. If you can't innovate, can you actually take that technology, use it really well, and innovate on the back of that? So there's 2 forms of that. At the moment, we haven't seen that yet, but that is obviously productivity growth, what drives that? It's people, it's technology, and how the two are used together.
Jumana, I mean, anecdotally, there are a lot of, I guess, maybe wealthy foreigners that have either gone back to where they were from or actually just moved to, tax havens, even like Milan. I mean, does that make a difference to investment in the country, or is it just at a moment where people are a little bit unhappy if you've been here 15 years and feel like it's time to go?
So I think when the numbers have actually been looked at properly, as my understanding is it's not actually big numbers, so it's actually small beer. I mean, in the long run, people are looking at other things about their earnings potential in the UK is probably higher as well.
I mean, there are some other, things that have been discussed, for example, stamp duty on equity buys and things like that. Does that change the nature of the financial markets in the UK?
So
if she goes through with it?
I mean, obviously, there's quite a lot of potential to think about property tax and how that's something that's very politically charged. But there are a lot of, great analysis out there on how improving property taxation and making it more fair could lead to improvements in the economy, could also lead to that productivity gain that we've been talking about as well. If you see sort of infrastructure connecting the cities, making Britain more equal across the piece, that could also be good news.
Jumana, thank you so much. Jumana Salihin there, Chief European Economist and Europe Head of Investment Strategy Group at Vanguard. Now, Bloomberg exclusively reporting that the U.S. presidential envoy, Steve Witkoff, advised Russia on how to pitch the Ukraine peace plan to President Trump, just days after Trump announced a peace deal in Gaza. In a phone call on October 14th, that lasted a little over 5 minutes, Witkoff spoke with Putin's top foreign policy aide, Yuri Ushakov, to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump. His guidance, including suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. Now, President Trump was asked about the Bloomberg reporting while speaking to reporters on Air Force One.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Well, Russia confirms U.S. envoy Steve Witkoff will travel to Moscow next week with several U.S. officials for talks to end the war in Ukraine. Well, let's bring in Bloomberg's Russia government editor, Greg Sullivan. Greg, good morning. Where do negotiations stand right now, and what does the president, Donald Trump, hope comes out of these meetings with Russians and Ukrainians?
That's right. So, as you said, the Kremlin has just confirmed that Witkoff is expected to visit Moscow next week and will likely meet with President Putin. Trump dispatched him amid optimism and his latest push to try and secure a deal. Obviously, there were talks between the U.S. and Russians happening in Abu Dhabi recently, and Trump also said that he would dispatch Secretary of the Army Dan Driscoll to Ukraine to continue those negotiations. He's largely expressed optimism that the gap between the U.S. and Ukrainian positions has been narrowing. However, sticking points still remain, and it's hard to see how certain changes that could potentially satisfy Ukrainians wouldn't be a deal breaker for Russians, and vice versa. Nonetheless, the negotiations are ongoing. The Russians also confirmed that they have seen the plan but haven't had time to discuss it. Yesterday, we heard from the foreign minister that any deviation away from agreements reached in Anchorage, Alaska, also could dampen Russian enthusiasm for the deal. So there's still a lot up in the air, but clearly a flurry of diplomacy happening right now around all of this.
Okay, Greg, thanks so much. Bloomberg's Russia government editor, Greg Sullivan, on that diplomacy. And, of course, we'll see in the next couple of days and weeks if we do have an agreement. Coming up, what can British businesses expect from today's budget? We'll be speaking with the Confederation of British Industry. That's next, and this is Bloomberg. to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Britain's most prominent business group has urged Chancellor Rachel Reeves not to put the country on a, quote, road to a certain decline. The head of the Confederation of British Industry says Reeves needs to make bold choices when she stands up in the House of Commons today. Well, Bloomberg's Lizzie Burden is in Westminster with the group's chief economist. Hi, Lizzie.
Hi, Francine. Yes, Louise Hallam joins me now in Westminster. We're outside the UK Parliament, where, of course, the Chancellor is going to be standing up at 12:30 and delivering her budget. Welcome, Louise. Thank you so much for making time. Francine was just referring to the comments from your boss, Ray Newton-Smith, that if Reeves only tinkers with tax rises, the UK will be on a road to near certain decline. I wonder, if we get this smorgasbord of tax rises that we've been told to expect, what will the hit to growth be?
So I think what we really wanted to see from the Chancellor was a budget that was focused on growth. And I think that did mean that she needs to make those big, bold decisions. I think, as you say, the expectation today is that we're going to have that kind of smorgasbord approach. And I think the danger there is that we continue to just be in this low growth cycle without tackling some of the fundamental issues we know we have in the UK.
But to be clear, would it have been better if she went for a big tax rise like income tax, or were you advocating spending cuts over tax rises?
So I think obviously nobody wants to see taxes rise, but we understand that there is a kind of a fiscal black hole at the moment, and that actually that property taxes did need to rise. But I think our message was, think about something that is broad-based, which would create less distortions, and that's where I think income tax probably is that better choice. Right. Otherwise, I think, you know, we need to see what the Chancellor comes out today, but the issue with the smorgasbord approach is that we're hitting businesses here, we're hitting individuals here, and it just creates distortions and overcomplicates the tax system, and that again can be a further drag on growth.
And there's been so much speculation about what's going to be in this budget. How much has that in itself damaged business sentiment?
Yeah, I mean, we're here nearly at the end of November. Businesses, and I think everybody has been waiting and kind of holding their breath over the last couple of months.
Of it we've been
I know, when I say we're here, you know, in the cold, frosty morning, that, you know, it almost feels like it's getting into Christmas. So, you know, businesses have been really holding their breath, you know, waiting and pausing on investment decisions. And I think that means that we have had really weaker growth this half of the year. So I think, you know, hopefully after today, businesses will be able to exhale. I think that the big question, though, is will they feel confident enough to push that investment button?
They also want to know, of course, when and whether the Bank of England can cut rates. How inflationary, if at all, do you expect this budget to be? And will it derail the Bank of England's cutting path?
Well, I think, again, it really depends on what those measures are. One of the ones that we expect is to see that increase in the national living wage. I think, you know, that will come on the back of several very large increases, lots of cost pressures on businesses in terms of employment, particularly on the back of the decision last year to increase national insurance contributions. And so the question there is, will businesses have to pass some of those costs on to higher prices? And if they do, then obviously that will have inflationary impacts.
Well, do you think that businesses will have to let employees employees go because they can't afford that new higher national minimum wage?
I mean, unfortunately, what we have seen is businesses really holding back, at least on backfilling. We have had some businesses who have reduced their workforce. At the moment, we're not seeing widespread kind of redundancies, but there is definitely a weakening in the labour market at the moment. And, all those decisions are making it harder. We've obviously got the Employment Rights Bill as well, which is looming large for businesses and creating additional risk, particularly if they take on some of those people who maybe are further from the labour market, who have been inactive for a while. And those are just the types of people that government wants to see back into work as well.
Just going back to the spending cuts, as an economist, if those spending cuts are backloaded to the end of the decade, is that credible?
So I think whenever we talk about spending cuts, you need to understand where those are going to come and have a credible plan to deliver those. Obviously, in the past, when we've seen those being backloaded, there's been lots of questions as to whether they are credible. And I think whilst, like we say, today we expect to be largely focused on that tax side, we do need to see more efficiency in public spending, thinking about actually how we can increase productivity there. And that is one of those important elements if we are eventually going to bring the debt down in the UK.
Just in terms of the big picture here, I do wonder what the bar for success is. If Reeves can just survive today and at least partly please the gilt market, the left of her party, and not break the manifesto, is that enough for business that she should just survive and not have a change of leader?
So I think at the point that we're at now, I think whilst that might mean she will survive today, like I say, businesses can maybe have that sigh of relief. It's not going to get us to where we need to be in the longer term. We need to see some of those more positive policies, some of that more ambition for growth, and that's ultimately what we need to see.
But of course, part of the reason we suspect that there was this U-turn on income tax was because of all of the speculation around a leadership challenge, perhaps from Wes Streeting. He denied it, the Health Secretary, of course. Have you been looking at what an economy would look like under a Prime Minister Wes Streeting versus Prime Minister Keir Starmer?
That's not something that I've looked at. I mean, I think one of the dangers that we have here is that we go back into this kind of circus of the politics rather than actually, like I say, focusing on the fundamentals of what we need in the UK economy, and that is the stronger growth. And I think that, that would be the big danger if we went through that cycle again. We want to see the growth mission kind of succeed in the UK. That is ultimately how we're going to get high living standards, and that is what we need to focus on for whoever wants to be in power come the election, to say that they are making a difference to people's lives in the UK and they're improving their wages and their livelihoods.
Because, of course, the argument from the Prime Minister has been if you have a change of leader, the markets won't wear it. Is that a weak argument?
Well, I think, again, it comes back to that danger of being sucked into the cycle of politics, and that provides, that creates this kind of ongoing theme of uncertainty. And I think, this government came into power pledging that they would have more certainty, that there'd be a boring government, if we remember that. And actually, that's not where we are at the moment. So actually, we want to see long-term decisions that are credible, that gives businesses that certainty and predictability to invest. And that's ultimately what we want to see.
Indeed, it's been far from boring. Louise, great to talk to you. Thank you for your analysis. That's Louise Hallam, Chief Economist at the CBI, the voice of British business, of course. And Francine, we've had many, many months of speculation. We'll be finding out exactly what's in this budget at 12:30 p.m. London time.
Lizzie, thank you so much. Lizzie speaking there with the Chief Economist at the Confederation of British Industry. Now, Bloomberg MLife strategist Ven Ram says the pound will remain under pressure regardless of the UK budget outcome. Well, Ven joins us now. Ven, always great to speak to you, especially on budget day that we've been waiting, I feel like, for over 7 weeks. What are the broad brush implications on both gilts and pound?
Morning, Francine. It's an honor to be on your show, as always. I think that, the pound has had an interesting quarter. At the end of September, it was trading exactly at fair value, indicated on modeled terms. But since then, it is now trading at a discount of 2.6% to its fair value, meaning that investors have embedded a risk premium, significant risk premium, into the pound because of the fiscal lack of fiscal discipline in the UK. And I think that, with debt to GDP ratio already hovering around 95%, the markets expect Rachel Reeves to restore some fiscal credibility, and that's the big question for markets today. And even beyond then, there's the question of the unsettled question of where do we go on inflation in the UK? Because if you look at the UK's real effective exchange rate, it is at the highest since the Brexit referendum. So meaning that UK is getting uncompetitive for trade, and therefore that risk premium is also showing in the pound. So the pound faces a sticky wicket here, Francine.
Ven, what could that mean for the Bank of England and, of course, for the Governor, Andrew Bailey?
Well, a lot of it will come down to whether or not Chancellor Rachel Reeves is going to front-load the fiscal consolidation or not, and what, if any, will be the implications of measures on inflation. We have already had the announcement that the minimum wage is going to go up by 4.1%. That has the power to not only stoke unemployment, but also uncork further inflation. So we will see what measures she outlines on VAT and other inflationary measures. So depending on that, the markets are pricing in an 80% chance of a rate cut in December. I think that may be a bit too premature, but we'll see what measures she outlines. But, you know, for gilts to rally from here, I think there needs to be a credible path of fiscal consolidation from Rachel Reeves today.
Yeah, and a couple of, the questions that you beautifully laid out is basically, are these tax hikes inflationary, and also are the tax hikes going to drag on growth? And what is a single, she's trying to do a lot for a lot of people, right? She's trying to keep the gilt market on side of, some of the most fractious, left-wing party people in the Labour Party on side. If there's one thing that she needs to get right today, what do you think that is?
I think the overarching theme will be the fiscal headroom. I think that if she outlines anything less than, say, 15 billion, I think that won't be credible for the markets, simply because she will have to come back again, perhaps in the spring budget, spring statement, and make some tweaks to fiscal plans, which is not what the market wants to hear. What the market wants to hear is a credible fiscal plan that puts debt on a consolidation path for the UK.
Ven, as always, thank you so much. MLive strategist Ven Ram. Now, the UK Chancellor, Rachel Reeves, will deliver her budget at 12:30 p.m. today in London. Of course, viewers in the UK and in Europe can join us for full coverage and analysis as it happens. Then the opening trade tomorrow will also break down the numbers with key business and political voices in the budget special tomorrow morning. Now, again, a lot of the outcome today will probably depend on this combination of the amount that Reeves's fiscal headroom, the front-loading nature of fiscal tightening, viability of revenue raises measures, but also how that's expecting to hit growth and inflation via OBR forecasts. This is a picture for AI. Don't forget AI. It's not only about the budget, but NVIDIA down 1.3%. Up next, Bloomberg Brief.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home. make sure that people don't interact socially, and that was catastrophic for happiness.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The Thanksgiving Everything rally is set to continue. Futures and treasuries rise as Kevin Hassett emerges as top Fed chair contender. More Ukraine talks. President Trump dispatches top negotiators for Ukraine talks and says he'll meet with Zelensky and Putin when a deal is in its final stages. And Budget Day in the UK. Chancellor Rachel Reeves about to deliver much-awaited controversial tax and spending plans. So let's take a look at where we are headed this pre-Thanksgiving session in the United States. Of course, we rose yesterday, both the S&P 500 and the NASDAQ 100 with a nice rally, and it looks like futures are pointed higher once again today. Tech didn't contribute too much yesterday, thanks in particular to NVIDIA. Retail obviously had a bit of impact on the session, but let's take a look at the bond universe, because this market is definitely looking forward to a potentially Hassett-led Fed next year. We have the 10-year yield flirting with 4%. It was below 4% earlier in the session. The 2-year yield just a little lower than where it was yesterday. Same for the 30-year, down about 2 basis points from this time yesterday. Let's take a look at gold and silver as well, because after a blistering rally this year, 60% for gold, 80% for silver, we seem to be continuing with our positive sentiment, let's say. Those precious metals also looking forward to potentially a more dovish, Trump-aligned Hassett as Fed chair. All right, let's get a look at some individual movers on this pre-holiday session. We'll get over to London now and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with HP, which is down today after the printer maker provided guidance that really disappointed investors, and a lot of that had to do with much higher costs for memory chips. It's a company that also announced job cuts of about 6,000 employees and replacing a lot of those with AI. And on the back of those announcements, we are down more than 5% in pre-market trading for HP. Moving on to Dell, which is up this morning after boosting its projections for shipments of AI servers. This really confirms that Dell is a major beneficiary of the data center boom. This is also a company, another win for a company that boosted its growth estimates, doubled those growth estimates just last month for the next couple of years, thanks to that really strong AI demand. And we are up almost 5% for Dow this morning. And finally, let's end with fashion, and Urban Outfitters is also up very strongly after reporting strong, very solid sales in the third quarter. This follows a strong result as well from Abercrombie and Gap, and this really boosts the sentiment around that consumer sentiment in the US, and we're up almost 19% for Urban Outfitters.
Yeah, it seems to be retail to the rescue at the end of this earnings season. Chloe, thank you so much. Chloe Melly there in London. And coming up this hour, Jordan Rochester of Mizuho Bank on how a new Fed chair could impact this market. Well, it is in the broader market today, that percolation of rising expectations for Fed cuts and a potential new Fed chair in the form of Kevin Hassett, sustaining optimism heading into the holiday. Joining us now is Bloomberg's Ven Ram. Ven, how do we go to around 30% or even below of odds for a December cut to now 90% that the market is pricing in?
Well, it looks like, the markets are thinking that with Kevin Hassett being the prominent frontrunner for the Fed post, the markets are thinking that, there will be front-loaded rate cuts, even though he is not going to take the chair before May, if his nomination is confirmed. Now, in terms of the market reaction, I think that the markets are getting ahead of themselves in the kind of rate cut narrative because you've got inflation core PCE holding around 2.8% in the US, and you've got the Fed rate at 4%. So, there's not that much of a wiggle room for the Fed to keep cutting rates, especially when the economy is growing as resiliently as it has been, and also considering the neutral rate. The neutral rate is supposed to be 1%, if not higher. So if you tack on the neutral rate and the implied GDP growth in the U.S. economy, I think that a rate below 350 looks very hard to come by, even though the markets are factoring in a terminal rate of 3%. So let's see how it plays out.
Could Kevin Hassett look to a neutral rate that's lower than that potentially, Ven?
Yeah, potentially. I think we have heard from Stephen Mirren that, 2.5 is possible. We have had some indications to the dot plot to the effect. So I think that, a rate below 3% would be a kind of foolhardy, because you can have the Fed rate that you want. You could lower the Fed rate sufficiently if you've got sufficient consensus within the committee. But what is important for the markets is what the front-end Treasury yields do. If you look at the 2-year yield, Vonnie, we haven't done below levels meaningfully before 3.5% for a while now, and there the markets are sending out a message that, look, you can have the Fed rate that you want, but not the market rate that you want.
Fascinating. Let's look to the UK, because obviously in just 2 hours and 25 minutes we're going to get the budget. Gilts are dropping now as traders are bracing for that. What's the worst possible outcome, then?
The worst possible outcome would be an entrenchment of the risk premium, the fiscal risk premium that investors have embedded into UK assets. Whether you look at the pound is trading about 2.5% below its fair value. If you look at gilts, if you look at gilt yields, it's a bit of a frightening story, because it costs about 200 basis points more for the UK exchequer to raise funds at the 30-year point of the curve than Germany does. And if you look at the 10-year point as well, there's a considerable gap between how much Germany pays for its debt and how much the UK pays for its debt. UK's debt levels are elevated, 95% of GDP, but it's not standing out in line. If you think about Japan, if you think about the US, it's not out of line. So I think that the markets have been reluctant to wind down the risk premium they incorporated back in the Liz Truss regime. That still lingers, and Chancellor Rachel Reeves needs to come up with a credible fiscal plan to make sure that the risk premium is unwound.
All right, Ven, thank you so much. That is Bloomberg's Ven Ram of our MLive team. And sticking with the UK and the budget, Chancellor Rachel Reeves due to deliver her second budget in the House of Commons a little later. The much-anticipated budget will need to placate both the MPs who've put Keir Starmer on notice and gilt holders who've been demanding a premium on UK debt, as we just heard from Ven Ram. Bloomberg's Lizzie Burden joins us now from Westminster. So, Lizzie, she seems to be in a bind. What's she going to do about it?
A huge bind, Vonnie. You've got the Chancellor trapped between her own manifesto, the bond vigilantes, and the left wing of her party. We've had months of speculation, weeks of leaks heading up to this budget, and it looks like she's going to have to restore the public finances. We thought she was going to do it by raising income tax, breaking the manifesto. She rolled the pitch for that, but then she had this U-turn, and now officials are briefing that we'll have a smorgasbord of smaller tax rises. That's what's on the front page of the newspapers today. She's readying a tax-heavy budget that is going to hit, this is the Times, workers, savers and pensioners. But the question is, how much headroom will she be able to leave against her fiscal rules? Previously, it was £9.9 billion the past 2 times. Expectations are for £15 billion, so not much more this time. But even that, Vonnie, will be politically painful. Remember the words of George Bush Sr. when he said, "Read my lips, no new taxes." Well, he was punished in the polls, of course, when he broke that pledge. And Reeves, after last year's autumn budget, said that there'd be no more borrowing, no more tax rises, and here she is about to come back for more. Labour polling worse than it ever has at the moment. You asked Ven what the worst case scenario would be. Well, the bar is incredibly low here. If she doesn't have a gilt sell-off, if she stays in a job, perhaps that's success for Reeves today.
Exactly. I want to quote Paul Donovan here, Lizzie, because it's very pertinent. He says it's really just the legacy of the Liz Truss moment that left faith in fiscal competence in a fragile state, because we're actually dealing with the UK, which is the fastest growing major economy in the first half of this year. His point being that if it wasn't for the Liz Truss moment, she might be in a very different position, Rachel Reeves. So what individual measures can we expect today?
Yeah, of course, she has emphasised plenty of times how difficult that inheritance from the Conservatives has been. It leaves her these difficult decisions. It looks like the big tax rise will be a stealth tax rise, freezing personal tax thresholds. It looks like she's going to levy a mansion tax on homes worth over £2 million, although even if that appeals to the left wing of the party, it might not raise as much money as they're hoping. And then on the spending side, she could lift the two-child cap on benefits at a cost of £3 billion. Already, her party has got in the way of many of the welfare reforms that the government would like to make. And so there comes the question of how backloaded spending cuts will be in the decade, and therefore questions about debt sustainability and market credibility. You talked about the potential market reaction there with Ven. Of course, Liz Truss is the spectre that hangs over every budget of Rachel Reeves, but we also watch the currency market. You've had huge volatility when it comes to the pound-euro trade. Traders piling into bets that the pound's going to be weaker against the dollar as a result of this budget. If Reeves can balance the books here and pull off a budget here, it could be that you see a bit of a relief rally for sterling.
Absolutely. Well, we will be watching, Lizzie. Thank you so much. Bloomberg's Lizzie Burden there from Abingdon Green. And UK Chancellor Rachel Reeves will deliver her budget at 12:30 p.m. London time. That's 7:30 a.m. New York time, so just 2 hours, 20 minutes from now. Viewers in the UK and Europe can join us for full coverage and analysis. And the opening trade will break down the numbers with top business and political voices in a budget special tomorrow morning. Meanwhile, President Trump directed his envoy, Steve Witkoff, to meet with Russian President Vladimir Putin in Moscow next week. Russia has confirmed the visit. Bloomberg Russia economics and government editor Greg Sullivan joins us now. Greg, there's plenty of movement, but is there any progress towards an actual peace deal with specific points laid out that both sides agree to, including, the US, I guess, through three sides?
Right. There is a lot of diplomatic activity happening right now. As you mentioned, Steve Witkoff is scheduled to go to Moscow next week, and the Kremlin just said that he would likely meet with President Putin there. We also know that Trump has dispatched U.S. Secretary of the Army Dan Driscoll to talk to the Ukrainians. Driscoll was recently in Abu Dhabi meeting with the Russians to discuss the relations between the two countries as well, so there is a lot of moving pieces. But in terms of what is actually being achieved here, that's still hard to say. Obviously, the White House released this 28-point plan last week that caused some concern among Kyiv and its European allies. There have been since then negotiations, including in Geneva with the Ukrainians, to try to narrow the differences on that. It's a shorter plan at this point. The Russians have confirmed that they've seen it, but have not said what they think about it yet. So there's a lot still going on. At this point, it is really hard to see that what would satisfy Ukraine would not be a deal breaker for Russia and vice versa. There are some major issues that stand between the two, issues of territory, security guarantees. Those have been very difficult to overcome in the past and are likely still to be difficult to overcome. And so while we know issues remain, we don't know quite how close they are on some of those particularly tricky issues.
Right, and we're seeing reports that Ukraine, in fact, has agreed to a potential peace plan with some minor details to be sorted, but the idea of, no accession to NATO ever and ceding of territory, they don't seem to be minor points, do they, Greg?
So there was that report that Ukraine had supported it. Ukraine has voiced some optimism on the peace process and the U.S. involvement in it, but Zelensky seemed to rebut that yesterday. The Ukrainian president did say that talks are ongoing. And as you said, these are major issues, and they have been major issues. There's the issue of land. Moscow wants territory that it does not control, has not been able to capture militarily, that is still under Ukrainian control, and Ukraine does not want to cede that territory. And then there are the issue of the security guarantees. Ukraine does not want Moscow to just restart hostilities at some point down the road. But to assure that, they're going to need some kind of guarantee, whether that's accession into NATO, troops within the country. Moscow is seeking a curb on Ukrainians' armed forces. These are major sticking points, and still it's hard to see how those bridges are crossed at this point in the negotiations.
All right, Greg, thank you so much for that context. That is Greg Sullivan in Dubai. Now to other top stories trending on the terminal this morning. White House National Economic Council Director Kevin Hassett emerging as the front runner to be the next Fed chair. According to sources, Hassett is seen as someone who would bring President Trump's approach to interest rate cutting to the Fed.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
The U.S. government has negotiated a 71% discount off the list price of Novo Nordisk's drugs Ozempic and Wegovy for patients in Medicare. These newly announced rates are the result of a Biden-era law and will be effective in 2027. Other blockbuster drugs, such as Pfizer's breast cancer drug Ibrance, will see a 50% price cut compared with its 2024 list price. And McKinsey cutting about 200 global tech jobs as the consulting firm joins rivals in using AI to automate some positions. The company isn't ruling out additional job cuts across different functions over the next 2 years as it ramps up the use of AI. Coming up, more job cuts in tech. This time it's from HP as its profit outlook falls. More on that next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Brief. I'm Vonnie Quinn in New York. HP shares tumbling in the pre-market. This after the PC and printer maker gave a profit outlook for the current year that fell short of estimates. The company also announced it will cut 4,000 to 6,000 employees through fiscal 2028 by using more AI tools. Bloomberg Tech Europe anchor Tom McKenzie joins us now. Tom, give us some more details. What exactly did HP say?
Yeah, so as you say, a miss in terms of the forecast for this year, and then the job cuts, 4,000 to 6,000 through 2028, and part of that will be down to some of the AI tools they're looking to embed across the business. So everything from manufacturing through to sales, through to product and research is where they are going to be putting in AI systems to help replace some of those workers, is what we're hearing from executives at HP. They think it's going to lead to savings of about $1 billion by 2028. This is a company that was hoping to benefit from the upgrade from customers, individuals and enterprise as well, around AI-infused laptops and desktops. there is that, and they are seeing some evidence of that, but they're also being hit by higher chip costs, particularly in the memory space. So higher than expected chip costs in memory, that is a challenge for them. They're also negotiating, continue to have to navigate the tariff situation as well. They're moving some of their manufacturing out of China, for example, to ensure that the laptops and desktops they sell into the US market are being produced elsewhere to avoid some of that tariff hit. So those are the challenges for this company as they look, again, to reduce that headcount down to about probably around 54,000, currently at 58,000, so you're looking at a little below 54,000 into 2028 with those potentially $1 billion worth of savings.
And it's interesting because that stock is already down about 14% this year, and even with announcing some job cuts, it's plummeting again today. Let's move to Dell, because that's another stock that surprised. It raised its annual outlook for shipments of AI servers, but margins seem to have been a problem.
Yeah, margins are a challenge. They're around 11%. If you think about the margins for NVIDIA, for example, closer to 75%. A different space, but they do operate in the same ecosystem because Dell, of course, packages up those NVIDIA chips and those of AMD and those memory chips into servers and racks and ships those into data centers. They are still seeing sustained demand. That's what executives at Dell are saying. Their AI unit for the data center servers doing particularly well. They have a backlog of more than $18 billion. And for that unit, they raised their forecast from $20 billion worth of shipments expected this year to $25 billion worth of shipments. So they're really benefiting from the hyperscaler spend around data centers as they get their servers and racks into those infrastructure pieces, and they expect that to continue. They are also, though, facing higher costs, and that comes back to your margin point because, again, memory chips rising more than typically expected, and that's something they are looking to work on to create more efficiency and greater profit, particularly at that AI server unit within the Dell business.
All right, well, that stock up in the pre-market today. Tom, thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. Coming up, White House defending Special Envoy Steve Witkoff after a leak, reportedly, of a conversation with a Russian official. That and a look at what else is making headlines in your front page news. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, on the New York Times, Republicans are fighting with President Trump's team over the Ukraine peace talks. Senator Mitch McConnell and several other lawmakers have accused the team of appeasing the Kremlin, warning that doing so will not lead to lasting peace. The pushback comes in response to a long social media post by Vice President Vance in which he accused McConnell of making a, quote, ridiculous attack on the peace plan. The Wall Street Journal, leading with the White House defending Special Envoy Steve Witkoff over a reportedly leaked conversation with a Russian official. According to reports, Witkoff says praising Trump would help smooth over a call with his Russian counterpart regarding the war in Ukraine. Witkoff reportedly also suggested Putin call Trump ahead of a White House visit by Ukrainian President Volodymyr Zelensky. And on the front page of the Washington Post, the FBI has requested interviews with 6 Democratic lawmakers whom the president called traitors. The Trump administration has aggressively sought to punish lawmakers who encouraged service members to disobey unlawful orders. In response, the lawmakers have accused the administration of abusing its authority and threatening their personal safety. Those are your front page news stories today. Let's look at markets now as we approach our conversation with Jordan Rochester. We do have futures pointed higher once again today. This Thanksgiving rally seems to be continuing. And then in terms of the 10-year yield, we are flirting with 4%. In fact, we were below that. This, of course, as more and more talk about Kevin Hassett being the front runner to lead the Fed next year emerges and percolates through markets. Also, as markets raise their odds for a December Fed cut right up to 90% now. We do see a little bit of weight to the Bloomberg US dollar index. In currencies, though, it's really sterling we're going to be watching today as that budget from Rachel Reeves is coming up in just more than 2 hours. We'll be speaking to Jordan Rochester about that budget and, of course, everything related to the Federal Reserve, including data coming out later today. That's all next. This is Bloomberg.
Nobusan, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. he support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So example, Nobu Hotels idea come from him. He said, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The Thanksgiving Everything rally, futures and treasuries rise as markets look to a December Fed rate cut. And Kevin Hassett emerging as the front runner to succeed Fed Chair Jerome Powell. A Moscow trip. Russia confirms U.S. presidential envoy Steve Witkoff will lead a delegation for talks in Russia next week. So let's take a look at that rally then. As you can see, futures pointed firmly higher. This after an up day yesterday as well. The S&P was up 0.9%, in fact. The Nasdaq 100 up 0.6%. We're getting the market pricing in 90% odds now of a December Fed rate cut, which is vastly different from just last Friday when they were only around 30%. Let's look at the bond universe because we have the 10-year looking to go below 4%. It did, in fact, earlier today. The 2-year yield is at 3.46, and the 30-year yield right down now to 4.65. We also have JP Morgan strategists out today expecting the S&P to trade around 11% higher by the end of next year. And what's notable is that team had been seeing the S&P ending this year at just 6,000. Gold and silver as well seem to be warming to the potential of a Hassett-led Fed. Gold back above $4,100 an ounce. That precious metal has rallied 60% this year. Silver, for its part, up 80%. Bitcoin as well bouncing off its recent lows, although our MLive team points out that there's no real bid behind it, be it retail or institutional buying, without any clear market narrative. So let's get to some individual stocks to watch now. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. HP is down this morning more than 5% after providing a forecast that really disappointed investors. And this was really driven by much higher costs for memory chips. The company also announced it was cut as much as 6,000 jobs over the next few years and replaced a lot of those with AI. And so we are seeing that weakness on the back of those announcements. Moving on to Dell, which is up this morning after boosting its projections for shipments of AI servers. And so that is really confirming Dell's positioning as one of the major beneficiaries of the data center boom. It's another big win for a company that just last month had doubled its growth estimates for the next couple of years, thanks in large part to this really strong AI demand. And we are up more than 3% in pre-market trading for Dell. And finally, let's end with retail, and Urban Outfitters is up very strongly as well this morning, 18% after reporting very solid sales. That follows positive results from Gap and Abercrombie. And it seems to show that the U.S. consumer is actually in quite good shape and really boosting that optimism around consumer sentiment in the U.S.
All right, Chloe, thank you so much. Once again, retail to the rescue at the end of this earnings season. Well, despite a shortened trading week, there's plenty of economic data coming out today. Is it any use, though? Joining us now is Stuart Paul of Bloomberg Economics. So, Stuart, we do get another raft of economic data. We have durable goods orders. Most of this, though, is for September. We also get the Beige Book. What can we look to today for any kind of signal?
I think most important is going to be jobless claims. Jobless claims have been floating in a range of about 220,000 initial claims per week to about 235,000 initial claims per week. We're expecting about 225,000, but at least it's November data when we look at initial claims. That comes right after the ADP weekly private payrolls report. It's a new series, but it showed material weakness in the labor market heading into November. If we see the same thing with an upside surprise in initial unemployment insurance claims today, I think that's something that the Fed's going to take note of. Again, they're looking for something that's contemporaneous. They're trying to get away from some of the really really stale September data that we saw even just yesterday with retail sales, for example.
Well, speaking of the Fed, as John Author says today, we need to talk about Kevin. Kevin Hassett, that is, right? He seems to be emerging as the leading contender, and I do want to let you hear some of what Kevin Hassett had to say. Obviously, he's currently National Economic Council Director.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Would he be the most dovish, most Trump-aligned of any of the candidates we've seen so far?
I think out of the 5 people who are really floated, including Kevin Warsh, the other Kevin, Chris Waller, Michelle Bowman, both of whom are on the Board of Governors right now, Kevin Hassett probably is the most dovish. I think that's why we did see a bit of a repricing of 2-year rates yesterday, a bit of a steepening of the yield curve. All things considered, though, markets digested the floating of his name as the front runner in the White House relatively well. We didn't see a sell-off in the 10-year, and folks were concerned a little bit about the potential for higher inflation expectations if there were to be more politicization of the Fed and somebody who's quite a bit more dovish leading the Board of Governors and leading the FOMC. The fact that we did not see the 10-year move very much on this rollout of Kevin Hassett is probably favorable news for his eventual nomination. Also, I think that it helps to solidify this December cut, because if you know that we're going to be moving towards a more dovish committee in 2026, it might as well be the case that the current committee creates just a smooth transition to that point. Creating a lot of stop-start and choppy monetary policy is not something that anybody wants to do, even if they are a hawkish member of the committee right now.
For sure. I have so many questions about what you just said, but we do have to leave it there. Stuart, thank you so much. Stuart Paul of Bloomberg Economics. But we are going to continue this conversation with Jordan Rochester now of Mizuho Bank, because he asks whether a new Fed chair takes us to a 2% terminal rate, writing this: it's more likely the outgoing Fed chair will keep rates on hold in Q1 off the back of better than expected growth figures, allowing for the new Fed chair to make their mark in 2026. Jordan Rochester is head of FICC macro strategy, and he joins us now. So Jordan, you say we're on hold, but does that also include December? Because that's not what Stuart Paul just told us. He thought maybe making for, a smooth transition to the next Fed chair would call for maybe a cut.
Absolutely, and good morning. No, high conviction here that they go ahead in December. I thought the whole hawkish narrative from the Fed a week or two ago was a little bit silly, given the situation that we're witnessing in the labor market figures. Whilst they argue that they're kind of flying blind without enough official government data, what we've been seeing is private level data such as the ADP figures and a few other surveys suggest that the weakness in the employment situation for the US continues. And whilst the Federal Reserve has an inflation target, and we're still too uncomfortably near 3% rather than 2%, the labor market always trumps the inflation data, and I can see the problem getting worse. And from the NFP that we saw last week, the unemployment rate rising, even though it's stale data, confirms the trend that was already in place. So for us, it's a high conviction December goes ahead. It's just that in Q1 and Q2, we do expect the growth figures to come in pretty strong for the US. You've got fiscal stimulus helping that with the One Big Beautiful Bill, but also globally you're seeing credit expansion and fiscal stimulus in Europe, for example, and now Japan. And then you've had the monetary easing from the Fed and other central banks. So it's really hard to say we've got a recession in Q1 and Q2 next year, and it might be the case that we see less Fed cuts than what's priced. But once the new Fed chair comes in, Bonnie, it is open season for the new Fed chair. If they really want to push us pointing towards the weakness in the labor market for the direction of rates, there's an argument that they can go further.
But Jordan, so we know that this is a strange labor market. The Fed chair himself has said that it's a curious dynamic that we're seeing because supply is down as well as demand. So do we read the unemployment rate the same way as we would have done, say, last year or the year before? And does that continue into next year? So do we have to sort of, make adjustments to our view of the labor market because of all of that?
I think it's a cycle like no other. We're talking, as you say, about the lower immigration figures making non-farm payrolls numbers harder to digest, because we're used to seeing the growth rates, 100,000 each month being the sort of break-even point for unemployment. But now that's much lower thanks to lower immigration, and estimates vary between 35,000 to 50,000. Anything above that, the unemployment rate might not go up. But we're seeing as well the implementation of AI. Constantly every morning I look at my Bloomberg and there's another story about another firm laying off workers or reducing hiring, and there's always quoting AI. in those stories. And I think that this could be a cycle like no other. What we have seen is the youth unemployment rate in the US has spiked significantly higher, and we've never had a cycle where unemployment rates go up for the youth faster than the rest of the economy. It's something that's quite different for this cycle. So I do worry that we do have this immigration story, but we also have an AI sort of angle to it that we might not have seen before. So I think the Fed will worry about that more than inflation, where I'm not too worried about inflation either. The pass-through of tariffs hasn't been that strong as expected, and the housing sector's slowing down. I actually think Stephen Myron's got a good point.
Okay. So how much lower can rates go then without igniting troublesome inflation again?
Well, the market has typically bounced off 3%. If you look at the US one-year pricing for where the Federal Reserve could get to in a year's time, usually when we get to 3%, that's the sort of anchor point for when the US economy starts to rebound. And that's why US rates have been so range-bound for about 2 to 3 years now, because every time we've got a very dovish market and we've got down to 3%, then all the data surprises accelerate, because that's usually the level where the US consumer comes back in and industries rehire. But consider the situation that we're in now. We've been around 3% for some time now, and still the labor market is weakening. So we might start to see that push to 275, 250. We're expressing that with Z5, Z6 flatteners in the SOFR curve. We do think that the market will toy this new Fed chair, teasing with the idea of lowering the dots for the neutral rate assumption for the Fed, which is currently at 3, which is why it's been that anchor.
Lowering them to 2.5, 275?
It will happen in stages. So in 2024, the neutral rate wasn't at 3% in the dots as it is today. It was slightly lower, around 2.6, 2.7, and they raised it up by 10 to 20 basis points sequentially at each update of the dot plot. So I think we could see something like that play out in the second half of next year.
I have to ask you about Chancellor Rachel Reeves. She is going to be taking the podium in less than 2 hours now with her budget. Of course, Liz Truss is always in the background here, and that's what Van Ram pointed out to us earlier, that she has to make sure that this entrenchment of the risk premium in the gilt market, goes away, that it stops being entrenched. Can she do that today, Jordan?
Indeed, today is the only time an MP is allowed to have a glass of alcohol in the House of Commons. I think it's been a while since a Chancellor has taken the opportunity to have a whiskey, and I don't think Rachel Reeves is going to be reaching for the champagne. When it comes to today, I think a lot of the sort of budget sort of big movers have been leaked already, such as the VAT cut on energy not happening, the income tax hike on everybody not happening. So it's going to be a smorgasbord of lots of various different measures of raising taxes on capital and hopefully less mobile forms of income, so-called wealth taxes. So raising property taxes by council tax is one way they aim to do this. I think the market's looking for a fiscal headroom number of 15 to 20 billion. That's nearly double what it was at the last budget, because what's been happening is she's been giving herself such little leeway on the fiscal headroom. This is the amount of money she has to play with before she breaks her fiscal rules. And that leeway has been historically very small. So you just get small sell-offs in the gilt market or big moves elsewhere, and that leads to her having to come back in 6 months' time and raise taxes again. So if the number's smaller than 15 to 20, expect a gilt sell-off, because that means that she'll have to probably come back to the market in 6 months' time. But I think she's very much aware of that. She's learned her lessons from it, and her aim today will be to try to get positive headlines, either politically or via the financial markets. It feels very consensus, though. I do feel like the market's going into this long gilts, but that's the way we'd like to position it as well.
Well, we will be keeping our eye on that gilt market like hawks. Jordan, thank you so much. Jordan Rochester there of Mizuho Bank. Now to other top stories trending on the terminal this morning. UK Chancellor of the Exchequer, as we've been saying, Rachel Reeves, set to announce her second budget. She'll present a package of tax hikes and other measures, including a possible mansion tax and higher alcohol and dividend taxes. Bloomberg viewers in the UK and in Europe can join us for full coverage and analysis starting at 12:30 p.m. London time. HP shares falling after its profit outlook for the current year fell short of estimates. Rising costs from memory chips that go into computers weighing on profits. The PC and printer maker also announced it will cut 4,000 to 6,000 employees through fiscal 2028 by using more AI tools. The US government has negotiated a 71% discount off the list price of Novo Nordisk's drugs Ozempic and Wegovy for patients in Medicare. These newly announced rates are the result of a Biden-era law and will be effective in 2027. Other blockbuster drugs, such as Pfizer's breast cancer drug, Ibrance, will see a 50% price cut compared with its 2024 list price. Coming up, U.S. presidential envoy Steve Witkoff headed to Moscow for talks to end the fighting in Ukraine. Details next. This is Bloomberg.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
People are starting to realize it's a good deal for both parties if they got to stop the war. They're losing a lot of people, a lot of soldiers, mostly soldiers.
In that 28-point plan, there was originally there were some portions of that that said they could bring.
Well, that was an original proposal, and then from there we went back and.
So when it comes to ceding land to Russia, is that still on the table, or has that changed?
Well, they're talking about going land both ways and trying to clean up a border. You know, you can't go through the middle of a house, you can't go through the middle of a highway. So they're trying to work something. It's a complicated process. Doesn't go that quickly.
That was President Trump speaking last night on Air Force One. Russia has confirmed now that U.S. envoy Steve Witkoff will visit Moscow next week to meet with Russian President Vladimir Putin as part of efforts to finalize a Ukraine peace plan. Bloomberg Brussels Bureau Chief Suzanne Lynch joins us now. So, Suzanne, a lot of positive talk, a lot of progress apparently being made, at least according to President Donald Trump. But these are very, very difficult things to resolve, particularly the land issue and the non-NATO membership issue. You know, are we getting any closer, do you think?
Look, what we're hearing is that there are still a lot of outstanding issues on the table here, and these negotiations are only really starting. Although we had that original 28-point peace plan, this has now been whittled back. And the Europeans in particular, there is a sense of relief that changes have been made, and they feel like they've had some influence in trying to get the Ukrainian and European perspectives on the table. Now, the big question is what happens with this meeting in Russia. Will the Russians adhere or accept any of these new proposals that are in there? Because this morning here in Brussels, we've been hearing from the European Commission chief, Ursula von der Leyen, who said she welcomes Donald Trump's interventions here, saying it's good to have a text, but that this is just a starting point. And she set out some of the red lines as Europe sees it, that the Ukrainian army cannot be curtailed, and also this whole issue of moving the frontiers, the borders of established countries, that really is out of the question too. So we're seeing some commentary now from the European sides about what they want to see in this plan.
Yeah, and, you know, we're hearing that Steve Witkoff is obviously going to Moscow next week again. There's a lot of visits to Moscow, a lot of visits with the, you know, Russian delegation. But is Russia changing its demands at all?
Well, the big question is what it will say to some of these changes that are now in this document. For example, as I say there, you know, a reduction of Ukrainian soldiers that the Russians had wanted, that seems to be off the table. The issue of land in the east of Ukraine, will Russia, which it wanted to do, get access to land it's not already controlling in Donetsk, for example, and then the issue of prohibition of Ukraine joining NATO. I mean, these are all questions that Ukraine and the Europeans in particular don't want to be in this peace deal. I mean, they have ruled those out. But at the same time, Russia knows that Ukraine is under its own kind of pressure to agree to something. For example, its finance needs are very, very big now, particularly as we go into early next year. So what we're seeing is simultaneously, the Europeans are trying to race to get over the line this idea of tapping immobilized Russian assets. That conversation is happening too. So let's see what the Russian side says. What we're hearing is that the Europeans today are having an emergency meeting of foreign ministers, which is starting around now, and we may get some readout from that about what the Europeans who've been party to a lot of these meetings, including that key meeting in Geneva on Sunday, what they're hearing and what they're expecting to happen next.
Well, it is good that there is movement at least. Suzanne, thank you so much. Bloomberg's Suzanne Lynch. Meantime, U.S. airlines are preparing for the busiest Thanksgiving travel period on record. Bloomberg Managing Editor for Space and Aviation, Benedict Kamel, joins us now. So, Benny, it'll be the first real test of the systems, the airspace systems, and I guess, you know, the shortage of air traffic controllers and whether there is still a shortage since the shutdown. How are we looking?
So it will be a big test really for everyone involved, from politicians to the traveling public and their patients, and also the system itself. The US aviation system has been under considerable strain, particularly in the last couple of weeks. We had the government shutdown. That meant that they dialed back the number of movements, and that really put a lot of stress on the system. That is now resolved, but at the same time, sort of getting everything back up to speed has taken time. So this will be a real test to, are things back to normal? Are all the movements sort of coordinated again? How are we looking on the air traffic control side? That's one of the choke points, always has been, and we are expecting more than 30 million people on the road, in the air, in the next couple of days. So that's going to be a real test to how the system responds. And don't forget, we are entering a phase of really bad weather in some parts of the country, so that's potentially turning into a toxic cocktail, and it'll be interesting to see how that exactly turns out.
Yeah, and I'm also reading of fuel supply constraints. Is that air fuel, and how did that happen, Benny?
Yeah, there were some issues, particularly in the Seattle area, where we had some fuel constraints, and that is sort of one additional thing. If you take it all together, we've had the air traffic control shortage, we've had the lingering issues from the shutdown, the fuel constraints, the weather. We have a new check-in system that's being introduced and rolled out across the country, sort of a faster sort of check-in system. All those things combined, it could go well, but given the number of people, sort of the mass migration of people that we will see, there will be areas where things will go wrong. Look at places like Atlanta, Chicago, LA, New York, JFK in particular. Those are the big gateways, and that's where you will probably see the biggest crunch points.
All right, Benedict Kamel, we will be watching. We're staying here, though, so tune in to us on Friday morning. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Now, a look at what is ahead for your Wednesday trading session. Deere reporting earnings before the bell. We're at the very, very tail end of earnings season. We, of course, have UK Chancellor of the Exchequer, Rachel Reeves, delivering that budget statement at 7:30 a.m. Eastern, so look for gilts to potentially move. And then the Fed releases its beige book at 2 p.m. Eastern. Of course, backward-looking, it always is, but we will be looking at those anecdotes. Let's take a look at some of the pre-market movers. High memory chip costs weighing on HP today. It also said it's going to cut lots of job cuts, in fact, in the next couple of years. That didn't help the stock, down about 5%. Dell Technologies up 2.8%. It raised its annual outlook for shipments of AI servers, although margins are a little bit of a problem there. And Urban Outfitters, well, it's just like some of the other retailers that we saw yesterday, surging after net sales beat. Here is your macro picture as we head into the pre-Thanksgiving session. Futures pointed higher.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
I think we're going through this breather.
From a broad-based standpoint, I'd be careful to be short.
We are optimistic about the overall technology cycle here.
Next year, we should see a broadening of this AI theme.
Going into 26, our call is for a continued expansion of breadth in the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. It's Thanksgiving Eve, and it's an open interest anchor takeover of surveillance. I'm Danny Berger alongside Matt Miller this morning, and it's a market in recovery mode. 3 straight days of gains for the S&P 500, nearing a fourth, just 2% away from all-time highs. As NVIDIA congratulates Alphabet on its success in the horse race for AI chip dominance. Meanwhile, in Washington, D.C., there's a different kind of race. Bloomberg reporting that NEC Director Kevin Hassett is the president's frontrunner for Fed chair. Matt, that sent 10-year yields to 4% and helped this overall risk rally.
Yeah, you know, it's interesting. I have spoken to Paul Tudor Jones about this a couple of times, and he said he expects President Trump to put the yesest yes man there is in the chair at the Fed. And I guess that is Kevin Hassett right now. So investors are betting he has a pretty easy time of lowering rates to, right now, we show 3% as the terminal rate.
I think it's probably important that that's the interpretation, right? Like, oh, great, we're going to get a bunch of cuts, not loss of independence at the Fed. If that's what the market was expecting, you probably would have had a bigger reaction, right? So if this was a trial balloon, I guess trial success. Cool, stocks rallied.
I mean,
bonds a little lower.
I think that's a pretty big assumption. You could easily make the argument that there is going to be a loss of independence at the Fed. Not that it's binary, right? Either 0 or 1, but there's going to be far less independence with Hassett, with Myron, with Waller, and whoever else that the president decides to install. So the market just doesn't really seem to care that much.
Okay, can I play devil's advocate for
Yes.
you? Getting spicy at 6 a.m.
Yeah.
They weren't able to oust Cook, right? That's kind of fallen by the wayside.
That's true, but she's a dove.
What maybe Kevin Hassett comes in and needs to prove to the market that he is independent, or else it's a market that will react in a way that President Trump won't want. So maybe in that way, independence is safe and we can all go to sleep soundly at night.
Yeah, we'll see if Kevin Hassett decides to say no to the president.
Meanwhile, it's a market that is feeling confident, at least for now. Again, we are on our track for our 4th day of gains after the biggest 3-day gain for the S&P 500 since May. Euro going a whole lot of nowhere. Your 10-year yield, as we were just talking about, hovering right around 4%. First, it was the weak consumer data yesterday, and then the Kevin Hassett hat tip that helped us rally. We are ever about 1 basis point higher for that. And NYMEX crude, that's at $57.90 as hopes for a Ukraine peace deal send oil to its lowest in about a month. Coming up on the show, Amy Wu Silverman of RBC Capital Markets with stocks looking for that 4th day of gains. Dan Ives of Wedbush Securities on shifting tides in AI. And Nadia Martin-Wiggin of Svelin Capital on what Russia-Ukraine peace talks would mean for energy. And we begin this hour with stocks rising as risk appetite returns after a stretch of volatility. Amy Wu Silverman of RBC Capital Markets writing, there's actually a lot more hedging. There's a lot more demand for hedging than is currently priced into the market. The risk of missing out is almost worse than the risk of a drawdown. And I'm pleased to say that Amy joins us now. And Amy, Matt and I were talking to you about a week ago in the midst of some of this downturn in the market. And you were talking about the shadow hedges, the desire for hedges, and the places people were turning to get them. How has that evolved over the past week as markets have recovered?
Video was still up, and then it turned for the rest of the day, Danny. You know, look, I think part of the problem that I had described was this idea that there is actually a lot of concern about the fragility of a lot of the trades because they're not only related to AI, they're related to the concentration risk that you see in the Mag 7. But obviously this year, it's been much more about that up crash being something that investors have to be concerned about, that fear of missing out. And so when you do get the down days, you get a little bit more pile on, and you do see that in the skew in the market, meaning that downside demand remains quite sticky. Even when you reverse the market moves and you have more up days, that skew hasn't quite changed as much because, again, that fragility is at top of investors' minds.
What about the treatment of tech, Amy? Because before it was a market that was pricing in all the AI winners would all be that they would all be winners. Things have started to change. We're looking at another day of NVIDIA losing in the pre-market and Alphabet gaining. Has the treatment of these stocks shifted? Has that narrative and the way we price it in started to move?
Yeah, and I think to some degree that actually might be a good thing. So one thing we look at isn't just inter-stock market dispersion, but obviously inter-Mag 7 dispersion. And so, you know, on a day where you have NVIDIA going down, but Google going up, and obviously that story is tied to each other, then it becomes maybe something that's also more diversified, because one of the biggest concerns has been if correlation rises because it's all one big trade, it's quite incestuous, that fragility is not good for the market, even in a time when things are going up. So if it is the case that one is more of a diversifier for the other, and you don't get that spike in correlation, I know for our investor base, when they're thinking about volatility and hedging, that is a big component in the market structure that, you know, is very key for how they diversify the portfolio.
Don't we necessarily have less correlation now among the Mag 7, right? They were all working together, investing in each other. It was a very incestuous, circular economy. And now you've got one against the other. It seems like it would reduce correlation and maybe even reduce concentration risk.
Yeah, exactly, Matt. So it's that diversifier aspect that is important. I mean, I think the thing is there's still that incestuousness hasn't fully gone away, you know, and that's not just in terms of what CapEx investments are, but obviously there's issues on the credit side as well that investors are watching for. So I don't think, you know, this alleviates the whole picture, but I actually think even though it's like Google is going up, NVIDIA is going down, the way that investors are thinking about it is, well, at least my implied correlation on the Mag 7 is something that could be a diversifier so that this whole market isn't all reaching at once.
Amy, how strong does the retail bid look to you right now? Because we finally had a more than 5% drawdown, just barely, but it happened from peak to trough last week. Are retailers going to continue to be buying the dip? Is that still a huge presence in this market?
So it has waned, and you've seen that in some of the sentiment markers, Matt, but it is something that, you know, we're watching very closely, because I think one thing we've talked about is the reason that institutional investors, just to be clear, have been afraid of, you know, really piling in on hedges. That's why we call it shadow hedging, is that retail bid has continued to stay in the market. Now, there are these extraneous forces. So for instance, how cryptocurrency is doing, how other factors are doing, that are actually quite correlated to that retail bid. So we are watching those extraneous factors closely as well, because it is interesting to see when you know, like crypto is always supposed to be this hedge asset, but in reality it is a risk asset. And then it's also very correlated to that bid that you see in NASDAQ. So I think those things, even though they're not directly tied into the stock market, are very important as factors for sentiment.
Amy, in terms of finding other places to hedge, there was a Goldman Sachs report about what hedge funds are shorting. And one of them that's at historic levels, albeit at a relatively low level, is utilities, 2.3% of free float. Again, that doesn't sound terribly exciting, but that is the most in history. I wonder if that could be interpreted as a hedge for AI, given the close proximity and the correlations we've been talking about. And if it is a hedge, does that make sense as one?
Yeah, I think it does. You know, when you think about what everything comes down to and what could be the bottleneck for large parts of the AI trade, it's just getting enough compute, right? And that has implications not just for the United States, but if you think kind of bigger, it's also geopolitically the race that is going on right now between China and the United States. Again, it's that ability to do compute and what bottlenecks happen. The only issue I see when you think about doing it through utilities is one, there's just not that much market cap relative to other sectors, and two, that liquidity is traditionally not as, I guess, free-flowing as other sectors. So if that, you think about that as your hedge, I don't know if that is the cleanest that you could have versus, outright owning something as a hedge in AI underliers.
Amy, great to see you this morning. Thank you for joining us bright and early before the Thanksgiving Day holiday. Amy Wu Silverman of RBC Capital Markets. Matt, I want to bring some breaking earnings just coming across from Deere. It's not looking great. Their 2026 net income at the high end is $4.75 billion. The estimate was above $5 billion. Also, I'm looking at a lot of their sales, what they see for next year, production and precision ag net sales down as much as 10%. For the agricultural giant, these are not good figures.
They're bad. If you're forecasting net income between $4 and $4.75 billion, and the street was looking for $5.31 billion, that's a gaping hole that's approaches the level of the UK deficit. So it's a real problem. I'm being facetious. Obviously, the UK deficit, the hole we're worried about there is $20 billion. But this is a pretty big miss for Deere. And I think it's interesting because Deere is increasingly being seen as an AI play, not in the same way that Caterpillar is building data centers, but they're using so much more AI in their product. The problem is that farmers right now are taking such a hard hit due to the trade war that they can't afford to buy or invest in this new equipment.
I would say how much of this is just a direct read into how much the tariffs are hurting the sector, something that the president obviously has been focused on with the call with President Xi, talking about the purchasing of soybeans. Okay, let's get you an update on stories happening elsewhere this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Good morning, Danny. Well, White House National Economic Council Director Kevin Hassett emerging as the front-runner to be the next Fed chair. Sources telling us here at Bloomberg, the economist is seen as someone who would bring the president's approach to interest rate cutting to the Fed. Hassett would accept the job if asked, saying, quote, "I want to serve my country and I want to serve my president." U.S. presidential envoy Steve Witkoff is set to visit Russia to discuss a deal to end the war in Ukraine. President Donald Trump shared he's sending Witkoff to meet Vladimir Putin in Moscow next week. Trump also shared he will not meet with the leaders of Russia nor Ukraine until a deal is in its final stages. Hewlett Packard shares trading lower in the pre-market. The company announcing it's going to cut up to 6,000 jobs through 2028 by using more AI tools. The cuts will result in about $650 million in restructuring charges. HP also giving a profit outlook for the current year that fell short of Wall Street estimates. And that is your Bloomberg Brief. Danny.
Bonnie, thank you so much. Up next on the show, a day of reckoning in the UK.
We have the highest borrowing costs of any G7 country. There are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. The more that we try to sell, the more it will cost us.
More snark from Matt Miller on the UK coming up next alongside Bloomberg's Skylar Montgomery and Koenig. You're watching Bloomberg Surveillance.
politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Three days of gains, the best since May. Can we make it a fourth? Futures this morning pushing higher, being led again by tech after tech led us to the downside despite the participation of NVIDIA. Nasdaq 100 futures up nearly 0.5%, S&P up 1/3%, while Russell 2000 participates in the rally up 0.2%. Under surveillance this morning, a day of reckoning in the UK.
Our borrowing costs were in the middle of the pack compared to other advanced economies. But now, we have the highest borrowing costs of any G7 country. At the budget last year, I changed the fiscal rules to strike a careful balance. To invest more in capital alongside a credible plan to grow our economy and bring debt down, there are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. The more that we try to sell, the more it will cost us.
Here's the latest. UK Chancellor Rachel Reeves set to announce her second budget, facing a tall order of stabilizing the country's debt and appeasing members of her party. Bloomberg's Lizzie Burden joins us now live from London. Lizzie, just how much of a bind is the Chancellor in today?
A massive bind, Danny. In just about an hour and 15 minutes, Chancellor Rachel Reeves will stand up in there in the UK Parliament, caught between the bond vigilantes on the one hand and the left of her Labour Party on the other. Now, she had rolled the pitch to break Labour's manifesto and raise income tax, but then she's U-turned on that more recently, and her Treasury officials have been briefing us that we can expect a smorgasbord of smaller tax rises in order to fill the fiscal hole. Now, will that be credible with markets, and how much is it going to give headroom against her fiscal rules? The expectation, Danny, is £15 billion of headroom, only a tiny bit more than the £9.9 billion that she left last time, and that isn't really what the market was hoping for. Markets would like to see more, but even then, 15 billion is going to be politically painful for this Chancellor. You remember the words of George Bush Sr. saying, read my lips, no new taxes. Well, a year ago, after her last budget, Rachel Reeves said she wasn't going to come back for more borrowing and more taxes, and here she is expected to come with some more. Already Labour is languishing in the polls. It's never done so badly in the polls. So when it comes to the bar for success, it is very low for Reeves today. If she can avoid a gilt market sell-off and even just stay in the job, perhaps that'll be a mark of success for Reeves.
What does the actual policy pronouncement then look like, Lizzie? If she can't unveil huge, giant measures, what sort of piecemeal type fundraising might we expect?
So here's what the smorgasbord's set to look like, Danny. We've got the front page of the newspapers talking about this tax-heavy budget today. It looks like it's going to be pensioners, savers, workers who are hit by this. The biggest tax-raising measure likely to be a stealth tax rise, where she freezes personal tax thresholds for another 2 years instead of increasing them with inflation. And then we're told to expect a mansion tax on homes worth more than £2 million. Yes, that might be politically popular with the left of her party, but it's not expected to raise as much as some would hope. Then on the spending side of the ledger, it may be that she lifts the 2-child cap on benefits, but that would cost £3 billion, and already we know that her party has stood in the way of many of the welfare reforms that the government would like to make. If she back includes the spending cuts to the end of the decade, again, credibility questions come up about debt sustainability. So, of course, we are laser focused on the gilt market reaction to this budget. Yes, you have jitters in the likes of France and Japan as well, but in the UK, as ever, Liz Truss looms over the gilt market. Then you have the currency market. You've seen huge volatility in the pound against the euro, and you've seen traders piling into bets that the pound's going to be weaker against the dollar as a result of this budget. If Reeves can pull this off, it may be that you see a relief rally for sterling. But I would say, Danny, don't judge the market reaction straight away when she sits down. Give it some time to breathe. Give it until tomorrow as well, because of course with Thanksgiving we'll have low liquidity and the UK incredibly exposed to international movements.
Lizzie, thank you very much. Looking forward to your continued coverage of this. Bloomberg's Lizzie Burden. Joining us now is Bloomberg's Skylar Montgomery-Koning. Skylar, first let me say, so thrilled that you're on the Bloomberg team with us now. And look, people are concerned about volatility, but this is a very different environment from the Liz Truss blow-up. We don't have double-digit inflation. We're not about to get a huge package, probably, of unfunded tax cuts. So what is the risk of volatility in today's budget unveiling?
Yeah, I mean, I think it's something people are watching very closely because there are quite a lot of things that can go wrong. I mean, for me in particular, there's three things that worry me from a market impact and volatility perspective. That's how much headroom do you get? Is it a credible budget? As well as what are the economic implications? So in terms of headroom, as we've just talked about, or as you just showed, the last budget, the only headroom was around 10 billion. So very simply, the market wants more than that. Something around 15 to 20 billion would be quite positive. And for gilts in the pound, I think if we get that, it's quite positive. On the other side, if you don't, it's negative. In terms of fiscal credibility, I think this is really the volatility risk in terms of, yes, we're looking at how credible are those forecasts, but we're more concerned with how does the labor market as a whole, or Labor Party rather, as a whole react to this. So if there's revolt within the party and there's more of a risk of a change in leadership, any new leadership is like to be more fiscal loosening, and so that would certainly be negative for the pound and for gilts. And then finally, on the economic outlook, very simply, worse growth inflation mix, as in both being negative, is positive for gilts and negative for the pound, although I would say there's more nuance there in terms of what's already priced, as in there is room for the pound, there's not as much room for the pound to sell off as there is for gilts to rally.
Skylar, why are we always so breathless about the UK economy when you know, the debt level is tiny in comparison to the U.S., smaller than the EU, certainly, and, for example, comparison to France and Italy, they have higher deficits. I know that they don't really have a lot of growth in the UK, but inflation isn't off the charts, and they're not in a recession. If I look at the pound, it's not incredibly weak or incredibly strong. The same is true if I look at rates. I mean, 450 is like middle of the pack if you look over the last few years. What's the big deal about what we say like a yawning $20 billion fiscal hole? That's like a Tuesday afternoon in Washington.
Yeah, I think it's largely just the scarring we had from the Liz Truss crisis, because you had this trigger within the bond market where you had a move that became very volatile very quickly. It was non-linear. We're still looking back to that. I think, too, there's more of a reaction function where you get higher yields. That means higher debt servicing costs, and it kind of goes out of control. But as you say right now, we're not in a particularly bad situation relative to the rest of G10. Debt to GDP is kind of middling in the pact, and we do have a yield advantage in the UK now. So that would point to relative positivity. And if you can have the economic support you in terms of, in September, we got a clear sign that inflation had peaked. Since then, economic surprises have been to the downside. That's a further indication that inflation will come down from here. That will allow the Bank of England to ease, and so you can get this virtuous cycle rather than the kind of negative cycle that we had previously where you have lower inflation, lower yields, lower debt servicing costs, and that's more supportive for the general outlook in the UK.
It does seem, you know, like the French are much more in catastrophe stage, right? Nothing works there, and yet they only pay 3.4% to borrow money for 10 years. And they don't have the kind of fluctuations that gilts have. There's not as much of a worry about a trust moment. Why is the UK so reliant on the whims of external investors? Is it all down to the sort of self-inflicted wound of Brexit?
I think that's absolutely part of the story, and it's quite interesting because the French also has a large amount of their debt that's owned by foreign investors. So you'd think that looks risky as well, but I think the main difference perhaps is that there's this ECB backdrop, or the rest of Europe can come in and save the French if there was a big issue. And I think particularly for me, my view is that, you know, that's not as strong as a stop on French spreads, but you don't get the same kind of worries as you do in the UK because we've made such big mistakes in the past, like Brexit, like the Liz Truss crisis, and definitely there's some scarring that means you get a bigger reaction here than elsewhere.
Skylar, isn't the flip side of that just if there is a bond market rally, the government, like all of a sudden, yay, much lower costs, it kind of helps fund itself?
Yeah, I mean, absolutely. And I do think that's the trend, unless we get something particularly bad from this budget. I say the biggest risk is that it's actually politics rather than the policy itself. I think the government has actually prioritized fiscal prudence. You've also had a test of the market before this, as in because we've had budget headlines come through, yields have already risen on the idea that we weren't going to get the income tax hikes that we were expecting. So the government knows what the yield market reaction is, and they can respond to that, or they can take a signal from that ahead of the budget. And so hopefully policy is much better, and we just have to worry about the politics side, which is admittedly a bigger risk.
Skylar, thank you so much. That's Bloomberg's Skylar Montgomery Koning. Now, don't you think some of the excitement around it is just the fact that we had a former prime minister and a head of lettuce going head to head?
Yes.
And there's so much pomp and excitement around it versus the actual numbers themselves?
Absolutely. I mean, it's the whole thing, right? The fact that they have a monarchy, the fact that the City of London is, for financial markets, so sacred and so important still,
yes,
makes us pay much closer attention to what's going on in Great Britain than we do, for example, in Germany, which is a far more important economy, and yet no one knows what's going on there.
I promise 7:30, the budget release will still be exciting, even if it's not as big of an economy as Germany. Coming up on the show, Dan Ives of Wedbush on why big tech has room to rally into year-end. Plus, Vonnie Quinn has your morning movers. Deere taking a dive on an earnings miss. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
A rally greeting this holiday-shortened week. Good morning. We're on track for a 4th consecutive day of gains, led this time by tech, whereas this time last week it was losses led by tech. NASDAQ 100 futures up nearly 0.5%, the S&P up 0.33%. Russell 2000 futures also participate in the rally. Helping things out was a rally in this bond market yesterday. It started with weaker consumer confidence data and other weak data that sent yields lower. This morning, they're ever so slightly higher, but they remain around the level that they were before. You add to that a Trump top pick of Kevin Hassett for the Fed nomination. That's solidifying a 4% on your 10-year yield, your 30-year yield this morning at 465.50. 3 hours away from the cash open. Let's get a check on your morning movers. With that is Vonnie Quinn. Hey, Vonnie.
Hey, Danny, well, you just broke Deere's earnings a few minutes ago, and it's true, there's no visibility for a farm economy recovery just yet, and you can see that in Deere's earnings. Now, the stock is up year to date about 17%, down, though, in the pre-market after its forecast disappointed. It gave a range for net income of between $4 and $4.75 billion, but the Bloomberg estimate for the full year was $5.3 billion. So that'll tell you there's a yawning gap between the estimate and what Deere is coming in with, and even Deere isn't sure. Obviously, you know, crop prices have been down. The president's tariff policies haven't been helping, and this recent deal with China to export more crops, well, there's no knowing how much that will actually help. So you can see all of that in Deere's results. Let's move now to the story from yesterday, TPUs versus GPUs. It is continuing today, maybe not as frantic of an investor reaction, but we are still seeing Alphabet shares move higher again, more higher, if you like, 1.8%, and NVIDIA suffering just a little bit more. That's more than $700 billion now of NVIDIA's market cap just in the last several sessions alone, not just thanks to this story. It was also AI bubble talk and so on. But don't forget, NVIDIA has given a forecast of revenue rising 63% this year. Not bad for any company. And finally, we want to take a look at HP because it's talking about job cuts, and even that is not cheering investors this morning. Often job cuts do, right? It says it's going to use AI tools and things like customer service, product development, and so on, and that will lead to job cuts of about 4,000 to 6,000 over the next 3 years. There will be restructuring costs associated with that, but basically the forecast also disappointed, and that stock suffering in the pre-market. That stock, by the way, this year is also lower, so it is down 14% this year.
Bonnie, thank you very much for that, your morning movers. Now, on our radar this morning, U.S. presidential envoy Steve Witkoff heading to Moscow next week, accompanying other American officials. This comes after Witkoff spoke with Vladimir Putin's top foreign policy aide in the latest push to end the war in Ukraine. Elsewhere, UK Chancellor Rachel Reeves preparing to announce the long-awaited autumn budget today. Reeves will be presenting a package of tax hikes and other measures she says was designed with bond market investors in mind. Back here in the U.S., White House National Economic Council Director Kevin Hassett has emerged as the frontrunner to be the next Federal Reserve chair. Hassett says that he would accept the role as the search for a new central bank leader enters its final weeks. And Matt, here's someone that would agree with you that it's bad, or at least Paul Tudor Jones, that it's bad for independence. Joe Kalish of Ned Davis Research. As a member of the Trump cabinet, Hassett would be the worst choice for Fed independence. I also find him to be a subpar communicator, but Trump would want to fill the role with a loyalist.
Wow. Yeah. I mean, I don't think that PTJ would go that negative, right? And I don't think that, at least in my conversation with him, he wasn't saying this lack of Fed independence was a huge loss for the market. He was just saying that Trump would likely pick someone who gets rates down. And you heard that last week. Was it last week or was it? Yeah, last week. He said he would fire Scott Bessent if he didn't get rates down at the Fed. Now, he was joking, right? But he's pretty serious about this. And I think the market sees that and realizes that he has so much power, not only with these installations, but also could potentially suspend all of the regional Fed governors and put his own people in there as well. So it could be a real Fed takeover.
By the way, Neil Dutta makes the point, if you think it's hard to cobble together a consensus right now, it's going to be 3 times as hard with Kevin Hassett at the head. And what does that mean for, I mean, it is a policy tool, right? Like Fed communication, saying what they're going to do. It moves markets, it moves bond markets. What happens if they lose that tool and you can't get any consensus because you have a loyalist at the top of the Fed?
Right. I mean, I feel like there are already enough non-Trump appointed doves on the Fed as well, right? You mentioned Lisa Cook, for example. And when she or others see the labor market weakening, their knee-jerk reaction is going to be to loosen rates. And they're less concerned about inflation. Let's be honest. No one really believes in a 2% target or reaching that target. Clearly, for the Fed, 50% above that is a fairly comfortable place to be. So I'm not sure they're going to get super hawkish.
Yeah, what is it, 4 years above target now, and we're haven't done anything about it.
And we're still cool. No one seems to care, right? Everyone's like, 3% is fine.
Yeah, we're okay. It's the labor market we're concerned about. Let's turn to tech.
Yeah, because unemployment is 4.4%.
Yes.
Freakishly high.
Almost rounded up to 4.5, I'll have you know. All right, let's now turn to tech. Competition heating up among AI leaders. NVIDIA saying that its chips remain a generation ahead of the industry, following reports that Google's AI chips could pose a threat. Bloomberg's Matt Bloxham joins us now for more. Matt, where do we stand on this competition of who will reign supreme? Is it really a winner takes all?
In the chip space, I don't think it is. I mean, clearly, NVIDIA's almost taking all of it right now, and I think everybody expects over time for competition to emerge, and we've been seeing that for a while, not just with Google's TPUs, but rivalry from the likes of AMD and Broadcom too. So I think if the AI bubble doesn't burst and continues to get bigger, then there's plenty of space for NVIDIA to compete alongside the likes of Google and others, and for them all to kind of do pretty well out of it. And I think there is quite a big difference between how customers perceive an NVIDIA chip versus a Google chip. The NVIDIA chips have got a much kind of broader range of applications, whereas the Google chips are quite specific in terms of the kind of use cases they're put against. And obviously, it's only just started to make those chips available to external customers with one of the big, and with Anthropic, one of the big large language model platforms being the kind of big win that they announced last week.
Matt, can we also talk about NVIDIA's response? I kind of teased at it in the intro to you, but posting yesterday, we're delighted by Google's success. They've made great advancements in AI, and we continue to supply Google, and then goes on to say, basically, we are better than them. When in your career, have you ever seen a tech company congratulate one of its rivals on its successes?
Yeah, it's a good question. I probably could think of some, but off the top of my head, I can't. I think it makes sense for NVIDIA. They are really want to be the primary provider to everybody that's involved in AI. And Google is a massive customer as well as competitor to them. It's rivaling OpenAI, and NVIDIA wants to have bets on all the players in the game right now. So I think it makes sense for them to kind of maintain that kind of cordial and positive relationship with Google, and the same way too, because although Google can increasingly shift technology to its own chips, there's still an important need for them to have NVIDIA in the short term, for these kind of wider applications, but also from a supply perspective too. So it kind of makes complete sense that things are very friendly and cordial between the two of them.
Matt, thank you very much. That's Matt Bloxham of Bloomberg Intelligence. Dan Ives of Wedbush, remaining bullish on NVIDIA, writing, NVIDIA is the indisputable Rocky Balboa champion of the AI revolution, and that is not changing anytime soon on the chip front. Pleased to say that Dan joins us now. Dan, great to see you.
Great to be here.
Okay, I want to ask about the post, because you had that post of them saying, like, congrats, Google, but we're better. They also responded to Michael Burry's takedown of the depreciation thing. It kind of gives a feeling that, like, NVIDIA cares about the fact that their share price is falling, and they're trying to fight back against it. What do you make of this sort of PR push they're doing?
Yeah, so I view it a little differently. Look, I mean, at the end of the day, like, there's one godfather of AI, and that's Jensen. I think Jensen, right now, it's the recognition that they're transparent. In other words, like, NVIDIA is not trying to hide anything. They're ultimately saying, like, hey, we are out there front and center, and it just comes down to demand and supply is 12-1 for their chips. I mean, I saw that being in Asia for the last 3 weeks. So them congratulating Google, AMD, and others that are going to be successful, it continues to be NVIDIA's world, and everyone else is paying rent. But the reality is that they are not going to sit there and hide behind some PR when it comes to, you know, whether it's Burry or anyone else calling it a bubble. I mean, Jensen's going to be out there front and center because, in my opinion, it continues to only be 10:30 p.m. in that AI party that goes to 4 a.m.
But, you know, this makes me think a lot of Intel. Back in the day when we were all rushing out to get the 386 and then the 486 and maybe the Pentium, right? But then Apple was like, why are we giving them these margins? Let's make our own chips. And so did everyone else. And now Intel obviously needs a sort of government bailout in the form of a stake purchase. Why isn't NVIDIA vulnerable to the same kind of, you know, vertical integration at these, if Meta, if Google, if Amazon all make their own chips, as they are doing?
It's a great point, and I get the comparison. They're 4 years ahead, in my opinion, of really anyone else in the world, including Huawei, right? So it comes down to, like, now, will there be a gap narrow? Big tech's going to continue. They're going to go and make their chip. You'll see that they'll vertically have that ecosystem, and that's a great thing, because the reality right now is like 12-1, demand and supply. In other words, NVIDIA doesn't have enough chips to ultimately meet demand, right, relative to what we see. But it speaks to my point. It's about the second, third, fourth derivatives of AI playing out. You have $3 to $4 trillion that's going to be spent in the next few years. To call this a bubble, it's wrong. It's something like myself that covered tech stocks in the late 90s. It's a 1996 moment, not a 1999 tech bubble moment. That continues to be our view.
How does that $3 to $4 trillion of spending get funded? Famously, Sam Altman was asked on stage a couple of weeks ago how he's going to fund his $1.4 trillion in CapEx plans with only $13 billion in revenue, and he just got so angry that he declined to answer the question, right? I see that, you know, ChatGPT has, right now, I think, they have a $20 charge, right, for the account that I pay double because I have a work and a personal account, but they're not making massive amounts of revenue. 35 million people are signed on, and it could turn out to be like the Friendster or even maybe the MySpace of AI. Where does this revenue come from?
Yeah, well, see, look, today it's still enterprise. You know, like when we think about the enterprise, only 3% of companies have gone down the AI path. So when you look and that's just in the US. Globally, that's just actually starting with sovereigns, what we're seeing in Asia. So when I look at OpenAI, I view it as, it's not just going to be at ChatGPT. It's about what that's going to be on the enterprise, consumer. The consumer applications haven't even started relative to
But it has to come quick, right? I mean, remember when the dot-com bubble burst, it took years and years to make up the revenue that we needed to pay for the fiber outlay in the beginning.
Yeah, and I think for OpenAI, for every dollar that they're spending in terms of the stakes that they're taking, they're just like NVIDIA, they'll get $12, $15, $20 back in terms of revenue.
If we're, though, talking about who wins the enterprise race, I mean, wouldn't that be Google, though? They already have relationships with 40,000 companies. And then when it comes to consumers, They know that name so much better. I mean, increasingly, obviously, they know about OpenAI and Sam Altman and ChatGPT, but especially with that enterprise relationship, who's to say that OpenAI wins out on that horse race?
Look, I think there's going to be many winners, right? I mean, from NVIDIA on the chip side, when you talk about Microsoft, where they stay on the hyperscale, Oracle, and I think that stock's been, way oversold here. But look, the reality is, you go back earlier this year, the New York City cab driver was bearish on Google. Now look at it, because it's my view, it's not just on enterprise with GCP, with Google Cloud, with what's happening on chips along with Broadcom, but also, you look out, they're going to ultimately have that Apple deal. I mean, Apple is going to have to bet on Gemini as their AI partnership, which is another benefit here. So I think it just speaks to our view is that, it's not just about NVIDIA. And I believe NVIDIA ultimately is a stock that goes much higher here, 225, 250. But it's about the second, third, fourth derivatives playing out across, I think the world. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
So NVIDIA at the lowest in the month, is this just like the most incredible buying opportunity that we're going to see for this company?
Every time this sells off, you own it, because it's my view, it's $5 trillion and ultimately it's $6 trillion. Because look, there's only one godfather, right? And that's Jensen. And there's one chip in the world fueling the AI revolution. And that continues to be NVIDIA. There will be other, like anytime if there's a DeepSeek moment, you'll have Google TPU. There's going to be other things that happen, but nothing is going to get what I view as really this Rocky Balboa of the AI revolution, which is, Jensen and NVIDIA.
You must have the most fun Thanksgiving Day conversation around the dinner table. I'm trying to get invited over to the Ives household. That sounds like a good time.
Look, and again, the goal is a lot of food, a lot of sports, and maybe some AI talk here and there.
What more could you want?
Does Penn State playing this weekend?
And we play Rutgers, and then we'll have our new coach by early next week, and then we start the upward climb, which I'm very optimistic.
Things are looking good. Dan, thank you so much for joining us. Dan Ives of Wedbush. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Danny, thank you. UK Chancellor Rachel Reeves getting ready to announce her second budget. She's expected to present a package of tax hikes as well as a possible mansion tax and higher alcohol and dividend taxes in an effort to close a fiscal hole and tackle the country's cost of living crisis. Warner Brothers Discovery is asking potential buyers to submit new sweetened offers after getting an initial round of bids. Sources telling us here at Bloomberg, the parent company of HBO and CNN wants the new offers by December 1st. Paramount, Skydance, Comcast and Netflix are looking to buy some or all of the company. U.S. airlines are preparing for the busiest Thanksgiving travel time period on record. Airlines for America predicting a record 31 million passengers will travel from November 21st through December 1st. A cold snap and forecasted thunderstorms are raising the threat of delays. Fuel supply constraints and tech outages could also add disruptions. And that is your Bloomberg Brief. Danny.
Bonnie, thank you very much. Up next, making progress towards a peace deal.
25,000 soldiers, Ukraine, Russia. In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out.
Nadia Martin-Wiggin of Swellin Capital joins us next as oil falls to a one-month low. You're watching Bloomberg Surveillance.
The key issue right now for us in the diamond space
is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Counting down until Thanksgiving, and we are rallying on a likely lighter volume market, as we have been all this week, getting a lift yet again this morning from Google. Dell's earnings yesterday adds to the outperformance for the NASDAQ. Meanwhile, your S&P 500 up about 1/3% in this future session, while your Russell 2000 up just over 1/10. Under surveillance this morning, making progress towards a peace deal.
I've also ended 8 wars in 9 months, and we're working on that final war. It's not easy, but I don't know. I think we're gonna get there. 25,000 soldiers, Ukraine, Russia. In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out. I thought that one would have been gone quicker. We did 8. I thought that would have been an easier one, but I think we're making progress.
Here's the latest. U.S. envoy Steve Witkoff is set to meet with Russian President Vladimir Putin in Moscow next week to push towards a peace deal with Ukraine. Bloomberg's Greg Sullivan joins us now from Dubai. Greg, how close are we to any sort of deal?
Well, it's unclear. There is definitely a flurry of diplomatic action happening. As you said, President Trump has dispatched his U.S. envoy, Steve Witkoff, to Moscow. The Kremlin has confirmed that he is expected next week and will likely meet with President Putin. But the Kremlin also pushed back on the idea that a deal was imminent, saying it's too early to talk about that right now. The Kremlin, or the Russian officials, have confirmed that they've seen the peace proposal, but haven't had a chance to review it quite yet. And even yesterday, when there was a report that Ukraine had signed on to the peace proposal, aside from a few minor issues, we then saw Ukrainian President Volodymyr Zelensky seemingly rebut that, saying that conversations were ongoing. We know that there has been some progress made. President Trump has signaled a note of optimism, getting closer to a deal, and even Ukraine has seemingly backed up that there has been some progress towards that. But huge issues remain, and it's unclear how those will be breached at this point. Issues like the land territory issue, as well as security guarantees.
Greg, thank you very much. Bloomberg's Greg Sullivan in Dubai. Turning to oil now, with crude prices edging lower after hitting 1-month lows. Nadia Martin-Wiggin of Svelin Capital says the removal of sanctions of top producers Rosneft and Lukoil would be key to supporting the market, writing a potential reintegration of Russian oil into global markets would have the biggest effect on shipping markets. Nadia, I'm pleased to say, joins us now. Nadia, it's already an oversaturated market. So what happens if we do get those additional barrels of oil?
Well, exactly as you say, right now, in the last 3 months, if we look at September, October, November, we've built up 200 million barrels of crude on the water, meaning it's loaded and it is not delivered. A proportion of that is sanctioned oil, that is coming from Iran, coming from Venezuela, and most importantly, Russia. And those Rosneft Lukoil barrels are what have really been pulling up markets in the last month. You know, we were heading towards the 50s on the price side, and then we suddenly had the sanctions announced on Rosneft and Lukoil, and we had, of course, pressure being put militarily on the outskirts of Venezuela. Now, if we start to pull back on those sanctions because Trump feels he's getting a deal or something like that, and he doesn't have to go as hard on Russia, then that would really change the marketplace. But so far, the market is still waiting for real evidence. We had a bit of a sell down, but now things have calmed down.
How dangerous or how severe is the risk that we actually do put harsher sanctions on Russia, that this doesn't go well and President Trump reacts very negatively towards Vladimir Putin in terms of, you know, the oil industry?
Yeah, I mean, Trump has specifically sanctioned now Rosneft and Lukoil, which have been a very big deal. We're talking about 2.7 million barrels per day of crude, 900,000 barrels per day of refined products. There are still other producers out there, and of course he could sanction the whole of Russia if he were to get fed up. Now, it is safer for him to do that when we have this looming oversupply of oil that is starting to be visible. Analysts have been predicting this for half a year, if not a year, but now we're actually starting to see it on the water. So it is a safer time for him to do that, especially when China right now is not able to import more Russian oil, sanctioned oil, because of sanctions specifically on their ports as well.
If we do get a peace deal, Nadia, and those barrels come off the water and go into gas tanks, whose production gets displaced? Does U.S. shale eat that up? Does OPEC eat that up? How does that work out?
Well, it would be a mixture. Initially, of course, we already would expect to see some slowing down in shale production, especially the smaller independent producers. The Exxons and so forth, they are more protected. OPEC so far has been indicating they're going to keep the market supplied. They're going to not increase oil production in the first quarter. But we think that if we do have this oversupply coming, then definitely in the second quarter, they will be cutting. Russia, of course, is a member of OPEC. They are under-delivering in terms of into the market around 150,000 barrels per day this quarter versus their target production. Historically, they have not abided by the rules particularly well in recent years during this war. So the question is it really about exports that are keeping Russian oil away, which is what we think it is, or is it a production problem? And that's where, you know, it could be even Russia needing to ramp up on that side and not just shale and the rest of OPEC.
Hey, Nadia, we're going to have to leave it there. Thank you so much for joining us this morning. That is Nadia Martin-Wiggin, Asfelin Capital, as oil prices steady this morning after dropping to their lowest price in a month, currently at $57.92 for WTI. Coming up next in the second hour, Bloomberg Surveillance, Debbie Cunningham of Federated Hermes, Wendy Schiller of Brown University, Jayati Bharadwaj of TD Securities, and Bloomberg's Lizzie Burden from London on the UK budget announcement. You're watching Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're optimistic. I think we see the economy running, particularly here in the U.S., at a reasonable clip.
The data that we've been getting paints a picture of a slight tension between the two mandates of the Fed.
The Fed needs to do more. The Fed needs to cut rates.
The market's really telling you that December we're not likely to see a cut.
The key thing with cuts is, even if they do come, I don't think they change the tone of the market meaningfully.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
You are just 24 hours away from your Thanksgiving Day turkey. Probably a little bit more than that, but no rest for the United Kingdom, with 30 minutes for them until the annual budget statement. Meanwhile, back in the U.S., the rally rolls on, clocking the biggest three-day gain since May for the S&P 500. That happening despite an NVIDIA that's trading at its lowest level in a month. Matt, it keeps losing out to Alphabet. It's happening yet again in the pre-market. Alphabet up, NVIDIA down.
Yeah, I think it's absolutely fascinating. I have yet to spend significant time with Gemini 3.
You're switching though, right?
I am in the process of switching. Okay. I've downloaded the app, but I'm still so reliant on ChatGPT because, as I say, I subscribe to it in 2 different ways, and I use it as an hourly part of my life. It helps me cook my meals. It helps me deal with my healthcare issues. It helps me work on my Harley. Like, it does a lot for me.
Now I'm so worried about what happens if it ever gets taken away from you, given that. But you know what I think one of the more amusing turns of this has been? Was the fact that NVIDIA responded to it. The fact that their post on X basically said, congratulations on your huge success, but we're better. And then they also responded to
we're better and we're bitter.
And they're bitter too, a Freudian slip. They also responded to Michael Burry. Honestly, I said this to Dan Ives and I believe it. It feels like Jensen Huang cares about the share price. It feels like a little bit petty, if anything. Can you imagine BlackBerry being like, congrats, Apple, on your great iPhone?
No, and I was trying to think of another instance in which one big modern tech company has congratulated another on its success. I can't really think of one. If you have one, write in. But I just think it's fascinating that we go from, Hopper to Blackwell to, what's the next one called? Rubin, right? It reminds me of 286 to 386 to 486 to Pentium, and now no one knows what those things are.
And you can throw TPUs into that.
Yes,
Google
exactly.
saying, we have something much more specific, something more energy efficient. and something that people will want to use. The question is will we start to see that switch over?
TPUs, Trainium, MTIA, I mean, a lot of these companies are going to want to vertically integrate and make their own chips, which may be more efficient and use less energy, cheaper, and even produce better chatbots.
I think your point about Intel going the same way was a great one. Who's to say that that doesn't happen again?
Jensen Huang is the Andy Grove of AI.
I think he would hate that comparison, and I think Dan Ives would say he's not. He is the Godfather. He is the Rocky Balboa. All right, a check on your markets this morning. As I said, NVIDIA is down, and maybe it's a good thing that we have been able to post gains without the help of NVIDIA. By the way, because of that decline, Apple is getting closer yet again to taking over as the biggest company. S&P 500 futures on the lows of the morning, up just 0.1%. Your U.S. 10-year yield still around 4% after that poor consumer confidence data yesterday. NYMEX crude that trades at the lowest in a month at 57.89. Coming up, Debbie Cunningham of Hermes as a frontrunner emerges to be the next Fed chair. Wendy Schiller of Brown University as President Trump pushes China to buy more U.S. farm products. And Jayati Bharadwaj of TD Securities as UK Chancellor Reeves lays out her autumn budget. We begin this hour with stocks rising on rate cut bets and the news of a potential frontrunner to replace Fed Chair Powell.
If the president asks me to be Fed chair, then I'll do it. But if I'm not Fed chair, don't be disappointed for me because I love the job that I have right now. If he were to ask me to be Fed chair, then of course I would have to say yes because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Here's the latest. White House National Economic Council Director Kevin Hassett as emerging as the favorite to be the next Fed Reserve Chair. Debbie Cunningham of Hermes joins us for more now. Debbie, what difference would it make to have a Kevin Hassett atop of the Fed versus the other candidates like Rick Reeder, like Waller, like, again, Michelle Bowman? How much of a difference would it make to have Hassett instead?
Well, I think with Hassett, you get the the economic aspects of it that obviously are very key to any kind of Fed guidance and Fed decision making. Whereas with somebody like a Rick Reeder, you've got a little bit more of a hands-on market experience, and get a better idea of what both the fixed income and the equity markets will do pending certain decisions of the Federal Open Market Committee. So I think it's two different types of qualifications, but I think the qualifications are equally good. And we've had both types of Fed chair equally successful from a historic perspective. So if Kevin Hassett is the choice and is trusted by the president and allows the Federal Reserve to go on in a less hassled way than what has been the case so far in this presidency, I think it's a good thing.
So, Debbie, you're almost arguing that it would give the Fed, the FOMC, shelter. But what does it mean for communication of the Fed? Previously, the markets cared the most when they heard from Chair Powell. Just over the past month since the last Fed decision, it's been, what does his top lieutenant, Williams, say? It's, what does Mary Daly say? Because she often sides with Powell. It's become a lot of reading tea leaves to decide the direction of this bond market. Do you expect that to continue to be the trade from here on out?
Well, I do think Fed speak is inherently important, and certainly the Fed speak that comes from the chair is most important of all, as well as the voting members, as well as the president of the New York Fed, Williams. So I think there's a huge place for that type of informational content, in addition to the economic information that we receive on a now regular basis since the government shutdown is completed. I do think, though, based on some of the comments that Treasury Secretary Bessent has made just in recent days, that there may be some attempt to make this Fed a little bit simpler, which I'm not in 100% agreement with. I mean, I like the clarity of the Fed. I like the information that they provide to us. I like the daily commentary, outside of, the silent times ahead of meeting votes. So I think it's important, and the market has become accustomed to it. I also think the various measures, IORB, the Fed funds, the bottom of the range, the Fed funds target range being the RRP rate, the securities lending rate being the top. All of those things are important aspects of Fed policy, and I think help transmit the Fed's intentions from a market perspective. And I think if there's any thought process of removing those, that is something that the market will definitely balk at.
Kevin Hassett doesn't necessarily have to agree with Scott Bessent, but he does seem to have to agree with President Trump. Are you not worried that he would contort his own economic views to fit the narrative of the president, that independence would be diminished under a Hassett Fed?
Well, certainly there is a concern about that, but I think what we've learned during this presidency's, or this term from a presidency standpoint versus President Trump's first term, is that he is nominating viable candidates. If you go back to his first term, several of his candidates that were nominated were not accepted, and that's because they really didn't have the pedigree, they didn't have the market experience, they didn't have the background that was necessary, and they were looked at very much more as tools of the president. I think any of the 5 supposed final candidates that are involved in this search for a chair all have credible statistics, credible backgrounds, credible informational content that will help them guide the Fed in an independent way, and maybe biased towards what the president is looking to achieve just simply because of their party lines, but without taking the job of independence of the Fed in anything other than a very serious manner.
Debbie, what do you expect in terms of the terminal rate? I look at the WERP function on the Bloomberg terminal, and I see that the market's pricing in just below 3%. Is that not a little bit too dovish for the current level of inflation and unemployment?
I do think it is. I think we're looking at a terminal rate that's more like 3.25, maybe, somewhere in the 3 to 3.5%. Certainly not south of 3% is what we're expecting at this point. And that really hasn't changed. Maybe the speed at which we get there is a little bit faster today than it would have been, say, 6 or 12 months ago. But we're still looking at a terminal rate that is north of 3%.
But you do have what presumably is Governor Myron's vote on the dot plot for 2027 below 2.5%, Debbie. And then you add in Kevin Hassett, presumably his dots will look like that too. If it does have the impact of shifting everything lower, are steepeners back on? What's the trade?
I mean, it could be. Certainly, you can get a steepener in various ways. You can get a steepener by the front end going lower. You can get a steepener by the back end getting higher. So I do believe, that is a possible trade for the future, but I don't think that's what we have today.
So you don't have that today. How do you handle this? Because it's a bond market that continued to rally yesterday, first in the weak consumer confidence data, and then with the appointment, or at least the reported preference for Kevin Hassett, Debbie.
I think at this point, what we're looking at is a bond market that has earnings that are north of 4% in most instances. The short end is getting close to 3%, but you're talking about 4 to 5% from an investment grade bond market return standpoint, just clipping the coupon. And although there is volatility, there's price action, 30, 40 basis points on a clip at different points in time, depending upon data that's released or news items that come forth. But if you look at sort of the steady earnings rates that we've been seeing from companies, if you look at, yes, we saw a little bit of a dip from a retail perspective, in the September data, but I think to some degree that's a reflection of the government shutdown, and people were a little bit nervous about what that meant going forward. We certainly saw a strong back to school season. We think we'll see a strong Christmas and holiday season, and the consumer remains the bus driver in this case. So we're looking at a bond market that we think is looking at clip the coupon, experience a little bit of volatility, and bets not very far away from neutral are probably the correct the correct process at this point.
Hey, Debbie, thank you so much for joining us this morning. Enjoy the holiday. Debbie Cunningham of Hermes. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, Danny, thank you. European Central Bank Vice President Luis de Guindos arguing that the risk that inflation in Europe will undershoot is limited.
On inflation evolution is positive, both headline and core inflation. Services inflation is that it was, one of the main preoccupations that we had in the near past is also evolving positively. And wage dynamics are also evolving positively.
De Guindos also saying the current interest rate level is the right one. President Trump has shut down a report that he was considering removing FBI Director Kash Patel, telling reporters Patel is doing a great job. Trump's praise comes as Patel faces scrutiny over social media posts during high-profile investigations and his use of a government jet to visit his girlfriend. Deere shares falling in the pre-market after the farm machinery maker's net income forecast missed estimates. Uncertainty remaining over the timing for a recovery in the industry as farmers face low crop prices and the impact of President Trump's tariffs. The company's CEO said he believes 2026 will be the bottom of the large ag cycle. And that is your Bloomberg Brief. Danny.
Vonnie, thank you so much. Crossing the terminal, details of the UK's autumn budget coming sooner than expected. UK Prime Minister Keir Starmer currently facing questions in Parliament ahead of that autumn budget. You're watching Bloomberg Surveillance.
After 8 years of traffic chaos and increasingly creative traffic diversions, residents of Parkside and Marston Grange in my constituency are beginning to wonder whether the A513 at Beaconside is a permanent monument to the traffic cone. In the time that Staffordshire County Council and Taylor Wimpey have taken to complete one stretch of road, we've had 6 Prime Ministers, not to mention Notre Dame burned down and was rebuilt using medieval building techniques. So what can be done to hold developers and local authorities properly to account so that essential infrastructure is delivered on time with minimum disruption?
Well, it's staggering that an important upgrade for drivers to improve their journeys has been delayed for 8 long years. And I understand the scheme is currently being held up by the reform-led council, Kel Sabri, who are proving as hopeless in local government as everybody anticipated. Mr. Speaker, we've invested £24 billion in our roads, and I'd call on Staffordshire Council to end the delay, get on with the job, and get this scheme started for her constituents. Alison Bennett.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The rally running out of steam, but still on track for a 4th consecutive day of gains. S&P 500 futures up 0.1%. Something though different is happening in the UK with a new budget, the autumn budget, those headlines coming sooner than expected. At first, it was good news. It was a gilt market rally. It was a sterling rally. Look at what's happening now. 10-year yields in the UK up 3 basis points. 30-year yields up 5 basis points. Sure, they have more fiscal headroom, or they're trying to put more than they had expected, Matt, but they have lowered their forecast for GDP, reversing some of the good news for this market.
Yeah, they really need yields not to do this, right? Or Rachel Reeves, at least, in order to stay in her job, needs a lid to stay on yields because their financing costs, their interest costs are already over 100 billion pounds a year, which may seem trivial in comparison to our $1 trillion a year in interest costs. But for the UK, that's a lot of money, and it has forced out prime ministers in the past.
We'll see whether she can turn it around, the Chancellor of the Exchequer, in about 10 minutes' time. But first, under surveillance this morning, China surprises to the upside.
I spoke to President Xi about a lot of things, but trade and buying our farm products, and he said, he agreed with me. I think he's going to very much surprise you on the upside. I think he's going to, I asked him, I'd like you to buy it a little faster. I'd like you to buy more, and he's more or less agreed to do that. I think we will be pleasantly surprised by the actions of President Xi.
Here's the latest. President Trump touting his phone call with Chinese President Xi, saying Beijing agreed to speed up purchases of U.S. goods. Joining us now is Bloomberg's Mika Solner. And Mika, maybe this is underscored by John Deere having very poor earnings on the back of farmers struggling because of tariffs. Where do we stand between talks with Presidents Trump and Xi?
Yeah, well, right now it looks like it's the start of a potential trade reset when it comes to U.S. and China and how that is working right now. We saw that the president is extremely optimistic to try and get China to buy more agricultural goods and speed up that process potentially before Christmas. He's been under pressure by the U.S. agricultural community, and so we're going to see this. This comes after a very positive phone call on Monday, according to the president.
There's a lot for the two to cover, Mika, and among them as well are the negotiations currently unfolding in Ukraine. Do we get any hint from the president of China's willingness to push Russia to agree to something?
Yeah, this is something that the White House has been really tight-lipped about. I know that this topic of the Russia-Ukraine war was brought up in the phone call between President Trump and President Xi on Monday, but they said that the primary focus was trade and trade negotiations. So, you know, I think to that extent, we don't know what role China might play, but this is also a huge priority, of course, for the administration to try and strike a peace deal as soon as possible.
Mika, thank you very much. That's Bloomberg's Mika Solner. Joining us now is Wendy Schiller, Directman of the Taubman Institute for American Politics and Policy at Brown University. Wendy, these negotiations, as they're happening in the background, we're getting Deere earnings that look really poor because of farmers suffering, consumer confidence that plunging, elections that affordability was at the forefront. How is this coloring the administration's approach as it talks to President Xi, as it negotiates with Europe in trade deals?
Hello, Donnie. I think that the president's got to balance his international clout in delivering for the domestic U.S. political market economically and politically. And he's getting so much pressure on all fronts. And it's now reflected in his poll numbers on the economy. Republicans typically have an advantage managing the economy. They still have an advantage over the Democrats on managing the economy. But the poll numbers for President Trump's managing of the economy have flipped. They were more confident. Now he's underwater. In particular, there's also some dynamics of the midterms in 26. Iowa, for example, big farm state, relies on exports. They have a Senate race. And that Senate race looked, you know, maybe Iowa's gone red, but now it looks like Iowa, the winds are changing a little bit there. They've got a strong contender on the Democratic side, and we'll see who emerges on the Republican side. And that's something that's concerning the Senate. John Thune, in particular, has really been in the president's ear on agriculture, exports, and China. And understanding that this doesn't just affect President Trump now, it could affect the standing of the Republicans in the Senate in 26.
Yeah, for sure. I mean, we see that farmers don't have enough money to order more John Deere equipment. They lowered their profit forecast for next year. We have seen already automakers that have had to put production on hold because they're not getting enough rare earths. And then President Trump has this call with Xi in which the Chinese call out Taiwan as a major sticking point. It's not even in the U.S. president's readout, making it look like we're downplaying the important Taiwan issue in order to appease the Chinese. Are we losing this trade war?
Well, Matt, I mean, at the moment, the American people, as evidenced by a number of different polls across different polling companies that sort of tilt one way or the other politically, that the American public thinks we are. That the tariffs are now being blamed for affordability, high prices, layoffs. And this is something I think the Trump administration did not anticipate when he forged this sort of mantra that he was going to stick up for America, get a better deal, negotiate a better deal, and bring manufacturing home.
But every economist with a pulse warned the president about this.
Well, Donald Trump marches to his own tune, his own drummer, and he will emerge claiming credit for deals. China did agree to buy more soybeans about a month ago after John Thune pleaded with the president on this, but it still looks like we're going to have to pay out subsidies to the farmers from the U.S. Treasury to make up for these losses. And the president pivots, as we know, all the time. The question is, how will the Republicans in Congress treat this going into the midterms in 26? Because American public is starting to blame the Republican Party, and that's bad for them. So how effective are they in persuading Donald Trump to maybe renegotiate deals? But right now, it looks like China's still driving the bus on this and affecting, because of our geopolitics in the United States, how we elect people, which states are important. You know, they understand that in China. They understand which markets are where and how that affects our politics. And 26 looms really large.
Is the president too focused on international relations when, you know, we need someone to deal with the problem of skyrocketing health costs here? Apparently, they're going to lay out another 2-year extension to these really inefficient ACA subsidies, which the Republicans really wanted to avoid, but now it looks like we're just going to keep, you know, paying these bills.
Well, Matt, I mean, every president does this. You know, when things are going a little bit south domestically, every president turns the page towards foreign relations. It's not a partisan thing. It's not a Trump thing. But this is what I'm watching. I'm watching, will the Republicans, particularly in the House, come with the president? He clearly wants to sign an extension of these tax subsidies. He doesn't want to have millions of people who can't afford health insurance on his watch next year. That's what he wants to avoid. But the House is making noises that they don't want to do it, that they are uncomfortable doing it. Does he still have the same sway with the House GOP that he has appeared to have all year long? That's what I'm watching over the next couple of weeks and into January.
Hey, Wendy, thank you so much for joining us this morning. Wendy Schiller of Brown University. Matt, at least this is a dynamic that the U.S. doesn't have to deal with. The OBR in the UK, the Office of Budget Responsibility, issuing an apology for releasing their fiscal report early. They were supposed to wait until we got the autumn budget from the Chancellor of the UK, and their autumn budget had a greater borrowing forecast, and that sent sterling and it sent UK bonds lower this morning.
Yeah, and that's really what Rachel Reeves needs to turn around when she gives this speech. Everyone's looking to see how she's going to deliver some of the details that we're already seeing, right? She's going to raise taxes by almost 30 billion pounds by the 2030 to 2031 budget. She's freezing thresholds. She's charging a mansion tax. She's raising the minimum wage. So she's trying to strike a balance between getting enough revenue and still helping society as much as she can. Remember, this is labor.
Will she be able to strike that balance? Coming up, we're going to take you to London, where UK Chancellor Rachel Reeves is expected to present the autumn budget soon as UK budget watchdog apologizes for that early release.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Will it be a fourth trading day of gains? We're moving higher in the futures session, though on the lows of what we've seen, up about 0.1% for the S&P. NASDAQ outperforms as Russell 2000 futures turn negative. A very different story of volatility in the U.S. Look at what's happened with 10-year gilt yields just over the past 30 minutes. At first, you saw a rally after an early release of an OBR of the UK budget watchdog on what we might get from this autumn statement. And that confusion giving way to losses. 10-year gilt yields up by 2 basis points, 30-year gilt yields up by 4 basis points, with an expectation, Matt, that this is a BOE that will not be able to cut, given that they revised up what they see as inflation. This is a problem for the Chancellor of the Exchequer, given she needs those funding costs to go down.
Yeah, absolutely. I mean, look, we were already at 451. So if it holds here, or if this turns around after her speech, if Rachel Reeves can convince the country that she's able to maintain a balance between raising revenue, closing a shortfall, and still supporting her constituency, then I think it'll be okay. It's not going to be likely right now a Liz Truss moment. Right. You don't see yields jumping up to 5%.
Well, it's a completely different environment, right? You don't have double-digit inflation. You don't have the dynamics of politics that were quickly changing. You do have a Labour government now. So can she appease the Labour government and appease bond markets? We'll find that out in just a moment's time when we hear from the Chancellor of the Exchequer. First, though, we are 2 hours away from your cash open. Let's look at your morning movers. With that is Vonnie Quinn. Hey, Vonnie.
Hey, Danny. Well, we know the AI trade is skittish these days, right? NVIDIA down 14% since the beginning of the month. And we saw another instance of that yesterday when we had one report that one company was in talks with one other company to buy billions of dollars worth of chips. That sent NVIDIA down, and that trade continues today. It seems like anything that might be a red flag for the AI trade is really having a big impact. You can see the opposite effect then on Google's parent company Alphabet, up another 0.9%. So that 0.8 adds to yesterday's 2.6% drop for NVIDIA, and AMD also having that halo effect. Bear in mind, the companies are having at it. NVIDIA, as you pointed out, Danny, tweeting out that, you know, let's bring it on. A lot of analysts are saying, look, this is bound to happen. There's bound to be some competition for NVIDIA at some point, and we always knew this was coming. But we'll have to see how the TPUs and the GPUs stack up against one another. Dell Technologies, meanwhile, up 3.25%, just off its pre-market highs at the moment. Now, Dell did raise its annual projections for the key AI server market. So here's some good news about the AI server market, right? But the 1.2, remember, for Dell is that its margins are getting compressed because it has to win this business and it has to get out those machines faster. There is demand for them, but its margins are under a little bit of pressure. That said, shares are up 9% year to date, up another 3+% here in the pre-market. And then I want to point to Deere, because this is a whole other sector entirely, down 4.8%. It didn't meet its forecast. It's not going to meet its forecast for the full year. In fact, it's not going to meet it by a long shot. And the CEO said, look, we might see the trough in big ag next year at the earliest. Certainly not this year, as some people were hoping for. Tariffs definitely taking a bit of a toll. And of course, the spat with China, which may be resolving just a little bit. One bright spot, though, in the Deere earnings, and that's small ag beat estimates. So sales there were up 10%. Smaller purchases of equipment and also turf, Matt and Danny.
All right, good to know. Vonnie, thank you very much. Those shares almost down 5% in the pre-market trade. On our radar this morning, National Economic Council Director Kevin Hassett has emerged as the front runner to be the next Fed Reserve Chair. Sources telling us here at Bloomberg that Hassett is seen as the most aligned with President Trump's approach to cutting. And Matt, say what you will about Fed independence. One of the takeaways is this was a bond market and an equity market that rallied off the back of this announcement. So if this was a trial balloon that was shot up, he's passed so far.
Yeah, no, absolutely. I think the market wants lower rates. I mean, you can see that, for example, on Friday last week when we were mired in this AI doubt, you had Williams say that he's in favor of a cut and he's very aligned with Jerome Powell. And as a result, the market rallied into the close on that day, even after turning around every day previous for the week. So this market really wants cuts in December. It really wants cuts next week, and it's pricing in less than 3%.
I say for all that we're losing our minds over AI, this has been the thing that's moving markets, right? Having a Fed that seemed more hawkish is what sent us lower, and then we worried about AI. And then a Fed that seemingly was willing to cut rallied, and then we're like, cool, Google is doing well. That's just been the added beneficiary, but you're so right. We're laser focused just on this one point.
Yeah, absolutely. I mean, it still is important, obviously, if NVIDIA moves a few percent in one direction or the other, because it's almost a $5 trillion company, but it's worth far less than $5 trillion now. And Google is, did we surpass the $4 trillion mark on Google yesterday?
That I am actually not sure. But one of the things I was looking at is Apple is super close to overtaking NVIDIA because Apple has done well. The iPhone 17 sales have been good too. So it's getting a lot closer to overtaking that. As far as Alphabet, we'll have to look back and see what
Alphabet is trading at $3.9 trillion. So it did not surpass $4 trillion. Apple is worth more than $4 trillion. And one of the questions I was asking Caroline Hyde yesterday, and she'll be on with us on Open Interest this morning, I'm sure, and on Bloomberg Tech later on, is Apple also working on chips that could emerge as these tensor processing units no one had ever heard of yesterday? Maybe Apple has something similar up its sleeve, although, you know, Siri might be a little bit smarter if they were doing well on that.
Yeah, but Apple has kind of decided that maybe it makes more sense for them not to spend all that money on AI and instead adopt others. Elsewhere, speaking of AI, HP has announced plans to cut up to 6,000 jobs through 2028 by using more AI tools. HP expecting a gross savings of $1 billion a year from the cuts. Okay, two thoughts on this. One, 2028 is a long time away. Who knows what even the world will look like by then. And two, it all just feels like an excuse.
Yes.
All these companies saying we're cutting jobs because of AI, that sounds a lot better than like, hey, things aren't great, so we're going to cut jobs and announce it right before you head off to Thanksgiving.
You know, absolutely. I mean, here's what it seems like is happening. There are new tariffs on imports that are eating into margins at companies like HP, and they need to figure out a way to deal with that without passing all of the tariffs through to consumers. So it falls on labor. And now they have a fantastic excuse to cut those jobs. It's because AI productivity, you know?
Elsewhere, Matt, I know this one is on your radar. Automakers imitating Tesla's electric door handle design are creating a safety hazard for some drivers. The National Highway Traffic Safety Administration seeing an increase in complaints across all models, with several alleging pets and kids got trapped inside after a loss of power. I mean, is everyone just going to be issuing out recalls now, Matt?
Well, I don't know if they'll be issuing recalls. It depends on what NHTSA orders them to do. But I've had my own trials and tribulations with this. I was stuck inside a C8 Corvette E-Ray a couple of months ago before I realized that they had a latch on the floor that helped me override the electric door handle that wasn't working. There are a lot of cars that have, in fact, Corvette was the first one, electric door handles rather than a mechanical latch. So that could be something that automakers turn around, just like they're going to turn around and add buttons back to cars rather than have everything work through your infotainment.
By the way, you and Hannah doing great work on this on Hot Pursuit. So a plug for everyone to go listen to it. All right, Matt, elsewhere, we are now hearing from the the UK Chancellor Rachel Reeves. She is announcing her long-awaited update to the UK budget. Let's listen in.
Debt and borrowing. No doubt we will face opposition again, but I have yet to see a credible or a fairer alternative plan for working people. These are my choices, the right choices for a fairer, a stronger and more secure Britain.
Order. Far too much noise, and I expected so much better from you, Dr. Luke Evans. You're meant to be a leader in your community. Simmer down, Chancellor.
I'm happy for them to shout as much as they like, Madam Deputy Speaker, as long as they do it from the opposition benches where they can't cause any more damage. I said there would be no return to austerity, and I meant it. This budget will maintain investment in our economy and in our National Health Service. I said I would cut the cost of living, and I meant it. This budget will bring down inflation and provide immediate relief for families. I said I would cut debt and borrowing, and I meant it. Because of this budget, borrowing will fall as a share of GDP in every year of this forecast. Our net financial debt will be lower at the end of the forecast than it is today, and I will more than double the headroom against our stability rule to £21.7 billion, meeting our stability rule and meeting it a year early. These are my choices, not austerity, not borrowing, not turning a blind eye to unfairness. My choices are a budget for fair taxes, strong public services, and a stable economy. That is the Labour choice. Growth is the engine that carries every one of our ambitions forward, through stability, investment, and reform. The platform from which British ambition can finally get moving again. Because growth doesn't just appear out of thin air. It is built patiently and stubbornly by people who take risks, by founders who bet their savings on an idea, by firms breaking into new markets, developing new technologies and creating new jobs and new opportunities, by the men and the women who work hard every day in all parts of our country. Our job is not to watch from the sidelines, but to partner with them, backing them every step of the way, to match private enterprise with public ambition. I would like to thank my team of officials at the Treasury for their hard work in preparing this budget. In the spring, the Office of Budget Responsibility forecast that our economy would grow by 1% this year. I said then that Britain would defy the forecasts, and defy them we have. The OBR have upgraded Britain's growth for this year from 1% to 1.5%, reaching the same conclusions as the IMF, the OECD and the Bank of England, who have already upgraded their forecasts. Today, the OBR have published the result of their review of the supply side of the economy. They are clear that this is not about the last 14 months. It is about the previous 14 years. The legacy of Brexit and the pandemic, and the damaging decisions by the party opposite. Cutting public spending, leaving communities and entire regions behind, starving our economy of investment and weakening our public services. As a result of their review, the OBR are reducing their expectations for productivity growth by 0.3 percentage points to 1% by the end of the forecast. They say today, and I quote, real GDP is forecast to grow by 1.5% on average over the forecast due to lower underlying productivity growth. There is an impact on our public finances too. The OBR say that their productivity forecast will mean £16 billion less in tax receipts by 2030. These forecasts are the Tories' legacy, not Britain's destiny.
Order. It is very hard to hear the Chancellor over all the shouting. And Mr. Holmes, you promised me yesterday you were going to be on top behaviour in the first few minutes. Chancellor.
We beat the forecasts this year and we will beat them again. By boosting trade, not blocking it. By increasing investment, not cutting it. By championing innovation, not stifling it. By backing working people, not making them poorer. Brick by brick, we've been building our economy. Building roads, building homes, getting spades in the ground and cranes in the sky. Growth begins with a spark of an entrepreneur. Half of new jobs in Britain are created by scale-up businesses. And we want those jobs created here, not somewhere else. Our job is to make Britain the best place in the world to start up, to scale up, and to stay. So we're widening eligibility for our enterprise incentives, so scale-ups can attract the talent and the capital that they need. Expanding the enterprise management incentive so more companies can offer tax-relieved share options. Re-engineering our enterprise investment and venture capital trust schemes so they don't just back early-stage ideas, but stay with companies as they grow. Introducing UK listings relief, a 3-year exemption from stamp duty reserve tax for companies who choose to list here in Britain. And to continue this work, I am launching a call for evidence on how our tax system can better back entrepreneurs and a targeted review with founders and investors at the heart to make the UK an even more attractive place to grow your business. We are sending a simple message to the world. If you build here, Britain will back you. And our retail investment system should do the same. The UK has some of the lowest levels of retail investment in the G7. And that is not only bad for business, who need that investment to grow, it's bad for savers too. Someone who has invested £1,000 a year in an average stocks and shares ISA every year since 1999 would be £50,000 better off today if they'd put that same money into a cash ISA. And so from April 2027, I will reform our ISA system, keeping the full £20,000 allowance while designating 8,000 of it exclusively for investment, with over 65s retaining the full cash allowance. And thanks to our changes to financial advice and guidance, banks will be able to guide savers to better choices for their...
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air, and they want clean water, and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Under surveillance this morning, defending the UK budget. Here's the latest. Sterling losing steam as UK Chancellor Rachel Reeves defends her autumn budget package. Jayati Bharadwaj of TD Securities joins us now as gilt yields move back to little change. We'll get into the budget itself, Jayati, but can we just start with the way that this unfolded? The fact you had an early release by the Office of Budget Responsibility, the fact they had to apologize about it, that markets sold off because of it, and it put Rachel Reeves in a position just to get on the defense immediately.
Yeah, it's a very unfortunate error to start something so big with. You know, there's been a lot of focus on this for the past month. You know, gilts have been underperforming, so have, you know, pound shorts have been going through for the last few weeks. So there was a lot of focus on this. Unfortunately for her, you know, it was released 30 minutes earlier, which spooked markets that maybe something's wrong, maybe someone's trying to leak it, and, you know, gilts sold off, pound sold off. Thankfully, things don't seem as dire as markets had feared.
One of the things I took from last year's autumn budget, looking back this morning in preparation for this all-important moment, is that it takes a few days for the market sometimes to digest these things, right? I mean, gilt yields last time stayed initially low and then floated higher and higher until we were at the highest level since the great financial crisis 3 days later. Right now, I'm looking at 448, 449 on gilts, so it's not a concern, but could it get worse?
From what the initial headlines have come out, hopefully it's not going to be one of those concerning cases, because it does seem that they will have more fiscal headroom than expected. They are obviously going to be borrowing, but borrowing less than what markets were expecting, which is ultimately good for the gilts market. So the unfortunate problem for UK has been that it's a very tight problem to solve. There's like 10 different complex moving parts. Everything hinges on what the OBR will forecast, where can the tax increases come, and their fiscal headroom has been extremely tight. But this is one of the better outcomes that could have been expected. And the hope is that now markets can go back to macro fundamentals, go back to the BOE. Will the BOE be able to cut in December or not, and go back to macro? I think that's the hope from this, that this was not as bad as expected, so let's move on.
It's not boring when you have everybody, you know, screaming at each other, this amazing theater, the headmistress of Hogwarts telling people to quiet down. But I wonder if Britain isn't still experiencing pain from the historic mistake that Brexit looks like in the rearview mirror, right? I mean, why is the gilt market so reliant on external investors when you don't have the same thing for French debt or Italian debt or German debt?
The thing is that the UK is one single economy. The euro area as a whole, on the contrary, is shielded because it's a block of many nations. Even for the majority of this year, like you check, like even though Germany was weaker, the peripheral economies actually shielded the euro area bloc as a whole. So that helps the EU region, given it's a bloc of many nations. The UK, when it chose Brexit over, you know, staying a part of the EU, you know, did put itself out there as a single market, which is dominated by its own fiscal concerns. at a time when it's now starting to lag behind other countries on the productivity gap. It's not been able to provide any strong growth impetus that you can close the productivity gap with the rest of the world, which has become a pain point for the UK, unfortunately, and worse since Brexit, because a lot of your access to capital markets was also hindered after that.
But to be fair, the issue of limited fiscal headroom isn't just a UK problem. It's also a French problem. It's a Japanese problem. So to what degree do we look at today as kind of a test case in government's ability to try to rein that in and to try to calm bond markets and still have foreigners willing to buy it?
It's definitely a very interesting landscape. We've all talked about fiscal for so long, but this was the first year when, fiscal headlines did start dominated. We saw that in the Japanese yen in the summer. We've been seeing that in the pound for the last few months. Also around the one big beautiful bill, in Q2, people started getting concerned about the US Treasury market as well. It's just a landscape we're headed towards where the developed markets landscape is becoming a lot more dependent on fiscal easing, which is where governments need to be a bigger part of, supporting economic growth. And not every country has the power that US has to keep driving the AI boom and, keep driving productivity higher. Most of the other G10 economies are so far behind. In fact, China is the only country which can compete with the US on that. Unfortunately, not much of the
Yeah,
G10.
it's this idea of fiscal dominance being the theme for 2026. On the point of the US, if you have Kevin Hassett at the top of a Fed, do you assume fiscal dominance? Do you assume that it's a Fed and a government led by President Trump that just tries to run it hot?
That was definitely the interesting headline yesterday where, markets were waiting for the Federal announcement before the end of the year. Till yesterday, markets had actually been increasing the poly market odds of Waller, who's seen as the, the economic sound framework for the Fed. But the headlines yesterday that Kevin Hassett might be the front runner spooked markets a little bit, brought that idea that Fed independence, the challenge is still not out of the way. That's still a thing which will be a big deal for markets. And Kevin Hassett is seen as a little bit more of a Trump loyalist and someone who is more just purely going to act on economic rationale. That, if it comes out to be true, and more importantly, if the Lisa Cook hearing goes in Trump's favor, I think that will lead to a big risk premium shock in markets. Rates sell off massively, the dollar sells off massively. That's the start of the major repricing of the Fed independence being challenged.
And what a change that would make. We have yet to see that. Jayati, thank you so much for joining us this morning. That is Jayati Bharadwaj of TD Securities. And Matt, it is both a sterling and a gilt market that has started to calm down. We're basically unchanged at this point. So it does just feel, to Jayati's point, it was just the early release of the OBR statement that spooked markets. But there is this issue of credibility. If that's enough to spook markets, how fragile are gilts?
Yeah, I mean, the interesting thing to me is that they have a lower debt to GDP ratio in Britain than the French, much lower than the US, and far lower than the Japanese, and yet they pay more in interest than any of those national competitors.
We'll continue to monitor the market action coming up in the next hour. It's Barbara Doran of BD8 Capital, Dana Telsey of the Telsey Advisory Group, and Lydia Bassor of EY, and Venu Krishna of Barclays.
So I know from owning a sports team that only one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I think we're going through this breather.
From a broad-based standpoint, I'd be careful to be short.
We are optimistic about the overall technology cycle here.
Next year, we should see a broadening of this AI theme.
Going into 26, our call is for a continued expansion of breadth in the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It's the 30-minute countdown for the next test for this market. Good morning. I'm Danny Berger alongside Matt Miller, taking over your surveillance airwaves this morning. Weekly jobless claims arrive into a fuzzy economic picture. But stocks head for their fourth day of gains regardless, with a more clear view into December. And that is rate cut odds surging as yesterday, gloomy consumer confidence data overshadowing, Matt, the Black Friday shopping season. That data hit when we were on air yesterday, and a bond market rally ensued.
Yeah, absolutely. I mean, we had the gloomy consumer confidence data, but it doesn't always jibe with what consumers are actually doing in terms of spending, right? We had some stock movers that were huge. Kohl's was up like 30%, right? Abercrombie & Fitch, apparently, it's brought back one of those brands from the 90s that was very Hollister. So consumers are out there spending. They're just a little bit depressed about it.
I think that Kohl's and Abercrombie are instructive because those are kind of like middle-income companies, right? And that's why Macy's did really well off the back of it. So it wasn't a Walmart that's saying, hey, we're dragging people down to come purchase with us. It's companies that already had that cohort and they're spending. And that's good news.
Yeah, although we did have that delayed data, retail spending in September was only a gain of 0.2%. We were looking for 0.4, and the previous month was 0.6. So it doesn't necessarily look fantastic.
Yeah, but that's September.
Yeah,
we can
that's
ignore
true.
it and move on to
Old
greater
data.
things. Meanwhile, in this market, again, we are attempting to put on a fourth day of gains. Some of the rally pre-market running out of steam, despite an S&P that is moving just a little bit higher, 0.2%. Your 10-year yield, that is little change, up almost a basis points to 4%. Again, after that consumer confidence data yesterday, and Kevin Hassett is the front runner. NYMEX crude, that falls 0.1%, trading at the lowest in a month. Coming up on this hour, Barbara Duran of BD8 Capital Partners with stocks eyeing that 4-day winning streak. Dana Telsey of Telsey Advisory Group as retailers face that clouded outlook heading into the holiday shopping season. And Lydia Bassour of EY as we break down the latest jobs data. We begin this hour with stocks rising as Wall Street looks in to keep rallying for Thanksgiving. Barbara Duran of BD8 Capital Partners writing, for now, the AI play is still the place to be. Avoid small caps, staples, stick to quality, large caps, secular growers over cyclical. And Barbara, I'm pleased to say, joins us now. Really wonderful to see you this morning.
Nice to see you, Danny.
I'm interested by the fact you're not looking at cyclicals right now or small caps, especially since there's this hope that we're going to get Fed cuts. Maybe you add in fiscal stimulus and there's this reignition. Why are you still ignoring those sectors?
Well, I think the Fed cut, we may have one more now, but the economy has been doing fine, without aggressive Fed cuts, although we've had about, 1.5 percentage points in the last 14 months. But we've seen a number of false starts in terms of cyclicals and the small caps. And I see the small caps really as a trade because even with rates coming down a little bit, you still have 40% of the Russell 2000 don't make money. They have much higher cost of capital than return on investment typically. And unless rates come down significantly on the long end, I don't see them being helped. So I see that that's continuing as a trade. And in cyclicals, I think you have to be very selective. In industrials, for instance, I mean, you want to be, I think, doing industrials that are play on the AI build out in infrastructure, automation, robotics, that sort of thing. But it's hard to see a big reignition here of the economy. I think we're in for good growth, decent growth, and certainly we've seen that with the forward earnings guidance from the companies who just reported a great quarter. And certainly do have the big, beautiful tax bill, the incentives coming there for CapEx and also bank deregulation, which should free up more capital to lend and spend. So next year is setting up nicely.
I'm kind of confused why that's kind of like a muddling along versus a growth reignition, because all of those do seem like powerful forces, Barbara.
Yeah, well, I think it is muddling along. I mean, you've seen this, this year, even with supposedly high interest rates that are, quote, restrictive, you've seen the economy do okay. And the earnings, we just had the 9th quarter in a row where earnings were up. And in fact, they were better than expected, some 13+% versus 8% expected. But it's still, we talked about AI, that is still the driver. I mean, if you look at what the Mag 7 did in earnings, ex-Meta, I take Meta out of the mix because they had a $16 billion one-time charge, right? But looking at that, the overall Mag 7 were up 30%. In aggregate earnings. And that's versus a 28+% for the last 4 quarters. So that's still the driver here.
I wonder about the massive CapEx plans that these companies have. You mentioned Meta, right? They want to spend, I think, $100 billion next year. Is that depreciation scary, as Michael Burry warns us about, the fact that they're going to buy all these chips, which may be worth, 20% less the moment they drive them off the lot?
Yeah, I mean, the depreciation, what I really keep my eye on is the demand, and if you're looking at very credible sources, see this market, data center infrastructure growing 5 times what it is now. So that really speaks to the demand that's out there. So, I mean, he's arguing about what are the real earnings, this and that, but to me, it's really what's the demand, what's the revenue potential, and that is very real. I mean, you just saw an acceleration there. I think that continues. We are still in the early stages of this AI rollout, so the concern about, we're in a bubble, there's too much money being spent, I don't think at all. You're going to see increasing usage of AI as it gets developed.
When do we get that revenue? Because I, started this job covering tech companies as Cisco was, the darling of the market. And we were spending as much as we could to lay fiber for the internet in the late 90s, early 2000s. And lo and behold, the revenue didn't come quickly enough. Cisco fell, and only now, like last week, have you made money on Cisco if you bought it in 1999 or 2000.
No, that's true. And I think so much, though, is about the timing, because some of the great tech companies of the past, you had great long runs and made a lot of money, but all things do come to an end. There's innovation, there's markets mature. I think the AI play, this is so big. And what we're seeing, I always mention Meta as the poster child, for what's happening in AI. They have been very early on applying it to their own business, and you've seen the results very quickly. They've increased their user base, the engagement is up, They've really improved their ad targeting, so they've improved more dollars. And you've got very early penetration. AI is still, and you heard it from Palo Alto last week. They talked about in their AI security, it's still scaling up because their customers, the big enterprises, are still figuring out how they're going to, what AI they need and how they're going to apply it. So this is going to be, you're going to see these increases in productivity over the next year or two. Exact timing, hard to know, but it will just increase. I mean, look at ChatGPT. I don't know about you all, but I use it all the time, and I increase my usage as I discover more things, and they have 600 million users a week. And so this is really still, and I talked to most of my friends, they're like, yeah, I should try it. There's still so much more to come, both consumer and enterprise.
It definitely feels like something we're waiting for, right? Like, when do the other companies benefit from productivity? I was looking at a Brookings study that was published recently where only 19% of their respondents said that AI increased their productivity. Only 4% said it significantly increased productivity. Robert, to your point, we're still trying to figure this out. So as you're looking for who benefits from AI, who can use it, where does productivity come from, is it just too early to say?
I think it is. I think it is. I think we see different companies that are benefiting, but I think over the next 12 to 18 months, there's going to be some dramatic stories to be told about the improvements. And you look at, we're early on autonomous driving. We're early on the deployment of robotics. I mean, for instance, you've got Amazon, has 1 million robots out there. And so they're very early on that curve, but a lot of people are not. And so those are things that over the next year, and again, it's about competition. That's why you're seeing so much spending going into this, because people know, I've got to do that. When you see people like Meta or Amazon who are already early users of all this and the productivity gains they are seeing, as a company management, you go, we've got to do it too. And that requires spending up front.
Isn't there a chance, though, that they go too far with that spending, and at some point, it no longer gets rewarded by the market? You're already starting to see that in some of the hyperscalers.
Right.
Does that continue on?
There's always that concern, and I think it's a legitimate concern, because at some point you can, and this is the thing in a capitalist economy, you don't have central planning, so everybody's rushing, to go after the profitability, typical margins come down. But I think where we are, the demand is so explosive, it's not a 6 to 9 month phenomenon. So at some point, that will be a factor. Right now, as far as the eye can see, you've just got this demand, this virtuous circle that will just keep going and going. But it is something you always have to watch. We know that the lifespan of industries, what happens, you attract players, they all want to make money, and eventually you can overbuild. I don't think it's like fiber, though. Fiber was much more limited. That was a very specific application and very prone to being overbuilt. This is just so much more
but at the end of the day,
complex.
Data centers are just like empty boxes. Those can't really be used for anything else besides data centers. At least on the infrastructure side, there's a chance we overbuild, no?
You could mine Bitcoin, I guess.
True. Great point, Matt.
No, true.
But that is a place that it feels like we could go too far, and a lot of money has been put into that.
Yeah, no, it is, because it is real estate in the end, what's going on there. But at the moment, again, everybody's watching that. It's like we're watching private credit, in terms of possible systemic risk. It's not there yet. And so you should still make a lot of money. And that's what we're going to continue to have, these frights. Like, I remember the years when Amazon made no money, and they kept reinvesting, and at least once a year, investors would throw up their hands and say, they will never make money, and they'd sell the stock off. Well, we now know how that story has ended. And I think we're going to continue to see these concerns with AI, and they're legitimate concerns. I just think it's way early.
Barbara, where do you, an investor who already has exposure to the mega cap hyperscalers, an investor who already has exposure to energy, where do you put new money?
Yeah, it's a problem because, in terms of, because you will have new companies starting, new applications and all that sort of thing. So a lot of people, you can look at the food chain, it goes into energy. Like, you look at a company like GE Vernova, very expensive. They have great backlog, but they can only build so fast. So where do you put the money there? You can look at the suppliers and the components and all that sort of thing. But for now, it's not only the hyperscalers, it's the Broadcoms of the world. I mean, you saw what Broadcom did with the announcement that Alphabet, is going to be selling their TPUs, which are basically ASICs, custom chips to their customers. And so you still have a lot more to go there. And you're going to have these kinds of announcements, going on. And so that will change. Look at Alphabet. It has, outperformed. And just earlier this year, it was a laggard. They had the antitrust problems. People were like, oh, they're going to be left behind in the AI. And now look at it, it's like, oh, the darling, they're the star of the show.
Now we all know what ASICs are.
And what TPUs are, and it's been a week of education. Barbara, thank you so much for joining us. Barbara Doran of BD8 Capital Partners. Let's get you an update on stories elsewhere this morning. Here's your brief with Vonnie Quinn. Hey, Vonnie.
Hey, Danny, thank you. Britain's Office for Budget Responsibility unexpectedly published the autumn budget on its website ahead of the formal announcement by Chancellor Rachel Reeves. The document, which is usually published after the finance minister's speech, was uploaded to the OBR website and available to download on an unprotected link. At least 13 people were killed and 15 more were injured when a major fire broke out at an 8-tower high-rise complex in Hong Kong. The fire has been classified as a level 5, the most severe category. The U.S. is facing a potential electricity crisis due to the surging demand for energy to power AI. Schneider Electric estimates an energy shortfall that could have major impacts by 2033, including outages and blackouts. Power demand from data centers could double in the next decade and could account for almost 9% of all U.S. demand, according to estimates, pushing the grid closer to its limit. And that's your Bloomberg Brief. Danny.
Vonnie, thank you so much. Up next, the morning calls plus Dana Telsey of Telsey Advisory Group as retailers face a clouded outlook ahead of Black Friday. That's next. You're watching Bloomberg Surveillance.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for U.S. technology. It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It continues to be NVIDIA's world. In my opinion, it continues to only be 10:30 p.m. in that AI party that goes to 4 a.m. It's a 1996 moment, not a 1999 tech bubble moment. That continues to be our view.
That was Dan Ives of Wedbush, ever the bull on all of tech, but it's not being treated equally. NVIDIA still down in the pre-market while Alphabet is up, but that's helping to lift the overall market. NASDAQ 100 futures up 0.4%, S&P just over a quarter, while your Russell 2000 futures are flat. Time now for your morning calls. First up, Bank of America raising its price target on coals to $18, but keeping an underperform rating, saying it sees a long road to improved profitability. Next up, UBS raises its price target on Best Buy to $96. Analysts there see signs of an encouraging setup into next year. Finally, Wells Fargo raises its price target on Dick's to $225, highlighting strong earnings results. And let's stick with the retailers. Consumer confidence fell in November by the most in 7 months, signaling some caution heading into the holiday shopping season. Dana Telsey of Telsey Advisory Group writing, quote, businesses face a clouded outlook. The tariffs remain in focus, keeping import costs elevated across key sectors. Dana, I'm pleased to say, joins us now. Dana, how's the feeling of a choose your own adventure? What do you listen to? Consumer confidence dropping? Do you listen to Kohl's or Dick's Sporting Goods saying that earnings are strong? Where does the consumer stand right now?
Overall, and you're right, you have to listen to a whole tapestry of items and companies and what consumers are saying, what the macro looks like. But overall, I think consumers are engaged. I think there's a real bifurcation between the lower and middle income and the higher end. I think companies are more agile than they've ever been in figuring out ways to engage and convert the consumer. You're seeing it in the earnings with the haves and the have-nots. I mean, look at the strength yesterday. Urban Outfitters delivering a nearly 13% comp store sales increase with lower markdowns is impressive. At the same time, you also have Abercrombie & Fitch continuing to show mid-teens growth at Hollister and sequential improvement at the Abercrombie brand. So, and then you have nots. I mean, Bath & Body Works has work to do in reconfiguring their transformation plan.
I see you're saying have and have-nots in terms of the retailers, not in terms of consumers, because we always hear about the K-shaped economy. You know, the top 10% or the top quintile doing so well, the bottom 80% are struggling. Who is shopping at Kohl's? Who is shopping at Urban Outfitters? Who is shopping at Hollister?
Overall, you're seeing the lower to middle income consumers looking for value, and they're getting the shoppers. It's Walmart they're shopping at. It is Kohl's, the improvement that you've seen, but take a look at the off-pricers. At TJX, Ross Stores, and Burlington, they're capturing more consumers who are looking for value. Because even at the upper end, and we've heard it yesterday from Urban Outfitters, consumers are being more discerning, choiceful, and looking for value when they spend. The flags are out for promotions for Black Friday. 30 to 40% is what I saw as I walked the streets last night. We're going to see more tomorrow and Friday, and I do know a store that's open on Thursday because there's not a day I won't be in a store. Now I'm going to be in one tomorrow.
Will you be in a Target? What's going on with that
I'm going to be in Aritzia tomorrow because they're open. On the Target side, there's work to do at Target. Obviously, new CEO comes in, fixing store standards, enhancing product offering, because competition is big, and it's big from Walmart, and it's big from the off-pricers.
Target was supposed to be, or it had been, at least in my experience growing up going to Target, would it be kind of exciting? You'd go in wanting one thing and end up buying a bunch of other things. How does a company like that in this moment, when you have choosy consumers, do a turnaround? Others have been successful. You were pointing at Kohl's, but is it a difficult environment to engineer that right now?
There's no environment when it's not difficult to engineer a turnaround. What you have, though, is you have the playbook of what was successful in the past to help you capture consumers in the future. What drives demand? Newness and value. The other thing that they have, convenience because of their locations. So let's watch over the next year, year and a half to see exactly what newness means to Target.
One of the other remarkable things in these earnings from the retailers was that margins have been looking pretty healthy too. It was supposed to be a sector that was hurt by tariffs. You even had a president at the start of the week tweeting out or posting on X saying, those of you who have front-run tariffs and have been stockpiling, that's going to end and soon you're going to be having to pay tariffs. Just that on its very surface, Dana, do the good margins continue?
Overall, one of the things we've been seeing with the tariffs, yes, we have been seeing price increases. We've been tracking 80 items of prices every week since April when the tariffs began to be put in place. And overall, we're seeing a gradual move up, particularly on footwear, but everything else, it's up and down given promotional times. Now, goods that are there, they're all tariffed right now. Everyone's watching India, there's concerns. But what have they done to manage their margins? The marketing spend is leading to effective conversion. They're managing the inventory levels. And overall, consumers are engaged. You can't bet against the U.S. consumer.
I'd never heard of Aritzia.
You haven't?
I hadn't. I see that they have 20 to 50% off everything right now, but also that their stock is up 368% over the past 5 years. This year alone, they've doubled. is that?
Why haven't you heard of it? So what Aritzia is a Canadian apparel retailer with sub-brands. They're known for their Super Puff and their puffer jacket. They've just opened, they have 3 stores in Manhattan that are flagship stores. The newest one just opened in Flatiron on 19th and 5th. And they did a collaboration with Lucia Pizza and Aritzia. So if you want pizza, go to Aritzia, but they also have an A-OK cafe with the croissants too.
Matt, their thing is in the store, they have a giant version of their puffer. Like as if a giant were to come down to earth and wanted a jacket, they'd go to Aritzia and buy it. You can pose in it, get in one of the sleeves. It's very fun.
I'm collecting Christmas ideas for Tom Keene. I'll get him one of those. Hey, I wonder about the SCOTUS case on tariffs. If they strike down tariffs and refunds then have to go out, do retailers stand to benefit? Is that something investors are betting on?
There's a lot of things for next year that could be tailwinds. That is certainly one of them. And yes, investors definitely look at that for retail. But we have a lot of events, whether it's the World Cup, whether it's the Olympics that are coming up. We have sporting events that frankly help drive demand. The other thing, tax refunds are going to come also. And you're going to lap the tariffs beginning in the second and third quarter. So those are all things that investors are looking at to say, what can we see the retailers bounce off of? We saw the big bounce yesterday because the retail stocks were oversold. We're going to watch through the holiday season, and Black Friday is here. So I hope you'll join me in the stores.
Maybe online, Dana. I don't know about in the stores. I don't know if I can handle that.
You gotta feel it, and you feel it in the stores.
Well, you can let me know what the feeling was, and I can live it
problem.
vicariously. Along with the tax rebates, you also have the $2,000 promise checks coming out that Trump has said because of tariffs. Scott Bessent was talking to Fox News a couple days ago and basically said, we think Americans are going to save this money. Where do you think that money goes? Are Americans going to save this, or does that turn around, go right into the retailers?
I think they'll go into the retailers. You know what else? Look at experiences. Look at travel. You hear about all the travel for this weekend, people going to visit their families. Experiences create memories. And I think they're going to spend on that also.
There's that really negative note, I believe from Barclays, though, about Carnival, that they went and they talked to management, and they were really down. That seems like a problem, Dana, because cruises has been one of those things we pointed to being like the consumer is doing really well. They're still out there. They're still spending. They're still traveling.
Right. I would think that travel overall, we've definitely have seen some of the higher price travel. Luxury is where it's at. The main cabin is slower than what you have with luxury and premium, and you've heard that from the Deltas of the world also.
By the way, there's been a bifurcation in luxury as well. I've noticed that some for example, Ferrari scared investors a little bit on their capital markets day. On the other hand, you hear from others, Lamborghini, which still doesn't have any problem pushing tariff cost increases. How do you see that? And I obviously only focus on cars, but how do you see it otherwise in luxury?
One of the things that came out with the European luxury brands that reported, whether the LVMHs or the Kerings and all the others, is sequential improvement. China's not getting worse for them. North America's driven by locals. But it all depends on what do you have that's of interest that the consumer doesn't have already to buy. And these collaborations mean everything, whether it's TikTok, whether it's music, whether it's sport.
Or pizza and puffer jackets.
Exactly. And I saw with the F1, didn't Beyonce just was at the F1 also?
She was there with Lewis
wearing
Hamilton.
a Louis Vuitton outfit.
Yes.
Okay.
Danny was there too.
Okay.
Not at the one Beyonce was at.
Oh, that was in Vegas?
And I did not have a Louis Vuitton outfit, although I wish I did. Dana, first of all, I'm very excited to hear what you buy on Black Friday. So please come join us again soon. And thank you for joining us before your shopping excursion into Aritzia. That's Dana Telsey of Telsey Advisory Group. Coming up on the show, we're going to get the latest jobless claims that are set to cross as a drip feed of economic data comes in among the fog that Jay Powell and crew are driving through. We'll catch up with Lydia Vasseur of EY, who joins us next to react. You're watching Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Seconds away from the latest weekly jobless data, a market that is pushing higher for a fourth consecutive day after the biggest three-day gain since May. S&P 500 futures up 1/3%. NASDAQ outperforms despite the fact NVIDIA is falling. That is up 0.4% this morning. Thank you, Alphabet. Meanwhile, your Russell 2000 futures, those are little changed, just higher by 0.07%. Meanwhile, data coming in, the latest jobless claims. Let's go over to Bloomberg's Mike McKee, who has the numbers. Mike?
Well, no help for the we need to cut immediately crowd at the Federal Reserve. Jobless claims come in at 216,000 after a revised 222 the prior week, suggesting we're still in that low hire but very low fire environment. We're not seeing people being added to the unemployment rolls at a high rate at all. In fact, they're going down. On a continuing claims basis, 1,960,000. That's up slightly from 1,953,000, the revised number for the prior week. So jobless claims still showing a reasonably strong labor market, if not for getting jobs, at least for not losing them. Durable goods orders come in 0.5%. That is exactly as anticipated. These are September numbers. Capital goods shipments, orders, non-defense ex-air, the core group that we look at to simulate business spending, up 0.9%. That's 3 times as much as was expected and up from 0.4 in the month of August. So a strong business spending in a report for the month of September. We'll have to see exactly what categories those fell in. But at this point, we're still seeing some strength in the overall economy.
Mike, Danny and I have been talking about Fed independence, and it does seem like the president is just chipping away at that pretty consistently. However, maybe previous presidents have done so in their own way. Does the market care?
I don't think the market cares at this point because they still see the same cast of characters are at the Fed and nothing has really changed. They're concerned a little bit with the idea that the Fed is divided, but that's happened before. The real question is going to be when the president finally nominates a new chair, and whether the market thinks that person is going to do the bidding of the president or do the bidding of the economy. That'll be when we really start to see the questions about independence flare up, Matt.
Mike, thank you very much for that. That is Bloomberg's Michael McKee. And it's a market that is not changing much off the back of that. Stocks still higher and yields still higher too, coming back from a drop to 4% for your 10-year yield that moved to the lowest in a few weeks off the back of weaker economic data yesterday. Again, little changed this morning. Lydia Bassor of EY joins us now. Lydia, great to see you. It's the same kind of figures for jobless claims, low hiring, low firing, but it comes off the back of weak data yesterday when it comes to consumer sentiment, but really strong earnings. How are you currently interpreting the tea leaves?
Yeah, so we're finally starting to get some more visibility on how the economy fared heading into the government shutdown, but also how the labor market is evolving, looking at claims. And what I'm seeing is an economy that's holding up, but we are seeing some cracks beneath the surface. If you look at the labor market, there are no signs of broad-based layoffs. Claims are still fairly low. But then when you look at job growth and you look at how concentrated job growth has become, we are seeing, some fragility in this labor market. Companies have been using hiring and keeping a tight lid on hiring as a way to manage these higher costs that they're facing, and also all the elevated uncertainty that we are seeing. So it's, a labor market that's essentially holding up in this fragile balance, and this, low fire environment, as you put it.
If it is fragility, Lydia, why do you expect the Fed to pause in December?
Well, we actually are seeing increased likelihood of that rate cut happening. I think it's a really close call. If you look at where we were a few weeks ago, we were coming out of the Fed minutes showing that many participants thought that keeping interest rates unchanged throughout the end of the year would be the appropriate path. We had Fed Chair Powell on the back of the October press conference saying that it's not a done deal. Now, we've seen some soft data, as you mentioned. We're seeing a labor market that's still softening. We are seeing inflation still quite contained. There's no disorderly increase in inflation at the moment. And then we've heard those dovish comments from Fed officials. So I think, the odds of that rate cut have increased. Now, I think there is a lot of focus on the December cut. When you look at, the FOMC minutes, we saw that many participants and most participants thought that, a recalibration and more easing in policy is in the pipeline. So if it doesn't happen in December, it could happen in January.
So Lydia, your forecast then, you get one in January, 25 basis points, and you get one more for 50 basis points of total easing through the year. Does that forecast change if it is Fed Chair Kevin Hassett that we have in 2026?
I mean, for now, if you think about the path for interest rates over the next few months, I think it's really going to depend on how the labor market is evolving. On the inflation front, our view is that we're likely to see a peak around 3% on inflation. We still have a little bit of inflation pressure in the pipeline, but I don't think that's going to be enough to lead the Fed to pivot again towards that, inflation risk and focus on the inflation risk. So if you think about the labor market and what's going to happen in the next few months, we do expect to see more softness in the labor market and remaining in that sluggish job growth environment. And we think that, there's going to be a little bit more room for the Fed to continue that recalibration and ease policy, at least in the first quarter of the year.
Is that going to help, Lydia, the labor market? I mean, we had news from HP this morning saying they're going to cut 4,000 to 6,000 employees because they're using more AI tools. In that case, why does it matter if rates come down?
I think, what's been really happening in terms of hiring and business decision is really the elevated uncertainty we've been in over the past year, which has led companies to really hit the brakes on hiring, but also using wage compression as a way to manage cost. And that means that wage growth has continued to slow. We've seen wage growth slowing at the lower end of the income spectrum even more than for higher income households. And so if you think about next year, we've got a little bit more certainty on the policy front, or at least we're getting past that big uncertainty cloud that we had this year. And then there are a few tailwinds when you think about 2026, thinking about some fiscal spending, but also the economy essentially gradually picking up throughout 2026. So I think the labor market is going to remain in that soft environment, at least in the first half of the year, and then we expect to see a gradual pickup. And consumer demand, this labor market is really going to lead to slower income growth and lead the consumer to also slow down. So I think we got a great summer and an economy that was carrying a lot of momentum, but heading into the end of the year and into early 2026, we do expect to see a bit of a slowdown in the economy.
But Lydia, what if we get $2,000 checks? What if it's a Fed that starts to inject more liquidity? What if we get tax rebates? These seem to be big drivers of growth. What is the line between the slowdown that you see and potential for reacceleration?
Yeah, I mean, these would be, would provide some support, probably more on a one-off basis. So you would see, a boost to consumer spending from those checks. But, if you think about the environment we are in today and the environment we were in today, during the pandemic, for instance, when we got the checks back then, we still have an economy that is, a lot more into balance when it comes to labor supply, when it comes to, looking at goods supply as well. We had a lot of supply disruptions back then. So we might see a bit of a bump in demand in early 2026, but I don't think that would be a source of, sustained upward pressure in the economy and lead to the economy to essentially run hot. So I think when you think about 2026, we're looking at an economy that will be more operating around trend than an economy that's going to be overheating.
Lydia, wonderful to catch up with you this morning. That's Lydia Beausour of EY. Meanwhile, Bloomberg's Mike McKee has been standing by, digging through the details of the latest data release. Mike, what you looking at?
Well, as Lydia said, we had a pretty good summer, and it continued into the month of September in terms of business spending. Overall, as we mentioned, durable goods orders come up 0.5%, but the capital goods non-defense ex-air proxy for business spending is up 2.6%, and you can certainly parse out the possibility it was AI rather, and construction of factories or plants for that, because we see electrical equipment up 1.5% and computers and electronics up 0.5%. What durable goods was not was a Boeing affected data point this time. The non-defense aircraft orders were down 6.1%. Automobiles still a fairly strong 0.4%. So still good news on that front, and it's overall a good news story, even if that is September, adds to third quarter growth. But I think the thing that the markets are going to take away today is that 216,000 jobless claims. That's the most recent data we have. That is the lowest since April.
Mike, are we already seeing this incredible AI data center capex lead to an addition of jobs or an addition of growth in this economy?
No, we're not. I mean, we are seeing it add to growth. The business spending on goods to create these factories is showing up. What's not showing up is a lot of buying in other areas. Machinery orders this month were up just 0.1%. And we have seen a number of months in a row with manufacturing jobs contracting. So we're not there yet. Scott Bessent says it's coming. We'll wait and see.
What about the flip side of that, Mike? Matt was talking about it, the idea that you have HPs of the world announcing that they are laying off workers, yes, over the next 3 years, but because of AI.
Yeah, that's the question that nobody can answer, is how fast will AI affect the workforce? And actually, how will it affect the workforce? Will it mean the loss of a lot of jobs? We really don't know what jobs there are going to be coming out of AI yet, and we don't know how that is going to affect the labor force. That's something that everybody's trying to figure out. Nobody really has a good clue as to what it's going to be like 5 years down the line.
And yet, the companies are making the announcements. Mike, thank you so much. Bloomberg's Michael McKee. I think that's the point. Nobody knows what the world is going to be looking like. Nobody knows how productive AI will actually be. So our company's really laying off people because they're using more AI.
Right, well, but it could be drastically different than we expected. You know, I remember in the week of the DeepSeek announcement, reading a story in the New York Times about how in the future, countries that are turning away immigrants now are all going to be fighting for labor, right? But maybe that's not the case. Maybe we're going to be sitting on the beach collecting a universal basic income because AI does our jobs for us.
And every day is a Black Friday sale, eating turkey. I love this idea heading into Thanksgiving. All right, let's get an update on stories elsewhere this morning. Here with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, Danny. Well, just recapping the official data released. Initial jobless claims coming in at 216,000 for the week ended November 22nd. That's lower than the estimate, which called for 225,000. And it's a tick down from the prior week of 220,000 claims. Now, continuing claims for the prior week totaled 1,960,000, about 300,000 less than estimated. Volkswagen is bringing back its Scout line of SUVs and pickup trucks as a brand of hybrid vehicles. The Scout line was originally conceived to be made as EVs, but consumer deposits for the new models showed a strong preference for plug-in hybrid versions over EVs. Volkswagen plans to start production in 2027, the starting price of around $60,000. U.S. airlines are preparing for the busiest Thanksgiving travel time period on record. Airlines for America predicting 31 million passengers will travel from November 21st through December 1st. A cold snap and forecasted thunderstorms are raising the threat of delays. Fuel supply constraints and tech outages could also add disruptions. And that is your Bloomberg Brief. Danny.
Bonnie, thank you very much. Coming up next, Venu Krishna of Barclays, as he's raising his outlook for the new year. Plus, Vonnie Quinn returns with your morning movers. Deere shares losing traction after an outlook disappoints, down nearly 5% in the pre-market. This is Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
No doubt we will face opposition again, but I have yet to see a credible or a fairer alternative plan for working people. These are my choices, the right choices for a fairer, a stronger and more secure Britain.
UK Chancellor Rachel Reeves unveiling the autumn budget, getting now a good reception from markets. Originally, with an early release from the OBR, markets freaked out, sold gilts. Now gilts are rallying. So too is the pound, up 0.2%. For this equity market here in the U.S., it appears to be another day of a rally, up 0.3% for the S&P. NASDAQ outperforms even more as Russell 2000 futures are flat. We're just under 1 hour away from the cash open. Here with your morning movers is Vonnie Quinn. Hey, Vonnie.
Hey, Danny. Well, we still have some stragglers when it comes to earnings. Let's start with Workday. It's already had a pretty difficult year to date. It's down 13% and it's down another 6% pre-market. So it came out with results. Analysts have been a little bit worried about Workday because it's a cloud software company and they're wondering how generative AI tools are going to impact this company. Now, in terms of this quarter's results, it either met or very small beat on most of the metrics. However, the Q4 guidance was pretty conservative and it misses on its Q4 guidance in terms of margins. And this has a lot of analysts downgrading or price target downgrading the stock. Price targets lowered at UBS, RBC, Bernstein, but we did have Morgan Stanley raising its price target there to 280. Let's take a look at a different story. Autodesk. Flat this year, but it beat and raised, and it's up, as you can see, more than 7%, getting a big analyst reaction. Upgrades at Deutsche Bank, price target upgrades at Bank of America, Wells Fargo, UBS, BMO, Barclays, it goes on and on. The deal here is that one of its verticals, the design vertical that encompasses architecture, engineering, construction, operations, that saw a 23% increase. It also said, look, we've been using AI for the last 10 years with in-house products. The whole macro AI picture is not going to change. What we do and how we do it, one bit, and that's getting a very generous reaction. Deere. This is the farming community. We know they've had a tough time. Big Ag, it appears, has not seen the trough yet. According to Deere's CEO, that'll come next year. Now, so it missed in terms of margins. It also missed in terms of its forecast for net income by a big margin. So Bloomberg estimates were 5.3 billion. It's going to be between 4 and 4.75. So that's quite a big miss. One bright spot, as I mentioned earlier, is that for small ag, there was growth there, revenue growth of more than 10% on things like turf and smaller machinery.
Bonnie, thank you very much. Those shares down 4.6%. Looking ahead to the new year, Venu Krishna of Barclays is raising his 2026 S&P 500 price target to 7,400, writing, we see upside to tech EPS estimates as mega caps continue to execute and with the AI race showing no signs of slowing. I'm pleased to say that Venu joins us now. I got to say, you could even look at that as a very conservative forecast, given Deutsche Bank is somewhere around 8,000. So what gets us to 7,400 next year?
I think a good part is through earnings. So we are expecting earnings to increase double digits, around 11%. In our upside case, obviously, we expect that to be a little stronger than that. And we are being conservative on the multiple front, because if you've seen, especially the fulcrum of this market has been big tech. And there, multiples have been moderating as they earn into their multiples.
It is a year where it does feel like that bullish case is easier to make. But if you're to make the flip side argument, you could look at what happened over the past week. Maybe you get a disappointment that the Fed doesn't cut as much. And that really hurt the AI trade. And all of a sudden, questions were asked about whether they could keep spending and whether this would be a market that would keep funding them.
Yeah.
What happens if we get more of that next year? If leadership is in doubt, can you get to 7,400?
I think it'll be challenging because you do need tech to deliver. And we are very positive on the overall TMT space. And this is how we think about it. So you're talking about how to think about the downside scenario, right? In what ways can we? So I think a slowdown in the AI narrative driven by the capital spending is certainly one of the things. But when we dig into it deeper and recognize that the AI trade is far beyond the hyperscalers, and hyperscalers are in actually pretty good shape, what we think is the earnings risk is limited, but the valuation risk is higher. So in a scenario in which the AI narrative shifts away, then we can see a 10 to 15% correction in the equity market. However, a less probable but a more dangerous outcome is one in which you have an economic slowdown, which is triggered either by weakness in the labor market and or inflation moving the wrong way. That is likely to then be accompanied with a corresponding pullback in AI capex as well. That combination is going to be far worse and could result in a 20-30% correction. So that is, I think, a real tail event, but it is worth pondering that in an environment like this.
Well, that could come from, we had Schneider Electric say that by 2028, the amount of electric generation available at peak times will not be enough to match demand if we hold the same backup capacity. So, you know, the grids, it's no surprise to anybody, are old and decrepit and really need work in this country and may not get it. Could that have the same effect as the economic slowdown that you're concerned about?
Absolutely. In fact, if you think about the AI capex and think what can derail it, we actually discussed that in detail. Because right now, while on one hand, the demand for compute is far higher than supply is being constrained by power, right? And so that is a very real constraint. The second is in the technology itself. What if the models themselves start leveling off at a time where the rest of the software and the component technology improves? So in other words, it is the risk of the dark fiber moment for AI, where the amount of usage demand for the infrastructure is a lot less than what you've built, right? It's something harks back to 25 years ago, what happened.
By the way, for those who weren't there, dark fiber is what we called all the excess fiber that had been laid in 2000 and no one was using, right? And this is the concern, that we could be seeing history repeat itself.
Right, but I think more than that, one of the constraints we did point out was about financing. That has now come to the forefront. So right now, the two issues people are concerned about is the power constraint. I would still say that's number two, even though that's very real. In my mind, that's the number one constraint. The other one is financing. As the AI sort of capital spending is moving to credit markets, increasingly people are focusing on, can that market absorb that scale of issuance, and where is risk pricing and clearing in those markets?
And more focused on that than anyone else?
What's that?
You know who's more focused on that than anyone else?
He's talking about me,
Danny
for
Berger.
sure. But I think it's kind of analogous to the power thing. There's so much power needed. These are power-hungry projects. They're also capital-hungry projects that you need financing to come from every corner, be it private credit, be it from syndicate bond markets. So what does that mean if any one of those corners starts to back off? How fragile is it? Or do you think it is a funding market that will be willing in every aspect to throw money, even if OpenAI is just lighting it on fire and losing some money?
No, that funding market is going to be more disciplined, right? And one of the sources you didn't mention, we wrote a note yesterday, was that just in the AI infrastructure, $130 billion has been raised in the US convertible bond market, right? So that's a market which is humming right now because a lot of it, we are estimating, broadly speaking, about 60–70% of the market is now AI-based, right? And so even if you look at the credit markets, Amazon recently issued a much bigger credit transaction. Now, it was way oversubscribed. In the last I checked, it was trading a little tighter than where it was priced across 6 different tranches. So I think each market will determine the right pricing. And you need to pay attention, though, how that's being priced, because it will ultimately have implications for the equity markets as well.
Venu, not enough time with you. This has been so fascinating. Venu Krishna of Barclays, thank you so much. Fortunately for everyone else, if you're not sick of Matt Miller and me yet, we will continue on for the next 2 hours getting into your market open. In the meantime, coming up on this show on tomorrow, Ben Laidler of Bradesco, Jelena Sokolova of Morningstar, Ian Hartnett of Absolute Strategy. This was Bloomberg Surveillance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Now, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York, and beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing, because I never watched the movies. You know, I was traveling the business. But of course, after, people, hey, no good, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So example, Nobu Hotels idea come from him. He said, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Rally into Thanksgiving. We are 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Stocks gain momentum on this Thanksgiving Eve with bullish bets for 2026 starting to flood in.
Adding to that optimism is news that Trump ally Kevin Hassett has emerged as the frontrunner to be the next Fed chair.
And while the AI competition continues to play out, investors turn toward more defensive corners of the equity markets.
So viewers that have been watching Bloomberg TV all day would have seen us earlier and seen us break what I think may be the most interesting, well, it's the only earnings of today, but one of the more interesting earnings of this week, and it was Deere. They issued their first fiscal outlook for 2025, or their outlook for fiscal 2025, but that fell short of expectations. There's a lot of uncertainty about the timing of a recovery in the U.S. farming economy. Matt, those shares falling 4% in the pre-market.
Yeah, I think it's a really fascinating, multifaceted story. We're going to touch on that again in this hour. Checking on NVIDIA, which was down more than 14% this month as of the close yesterday, getting a little bit of a reprieve. That's from new competition from Google, concerns around AI valuations, continuing to weigh on investor sentiment. This is another meaty story that we're going to dig into throughout Open Interest today, Danny.
And we're going to start digging into it right now. Wedbush analyst Dan Ives said that he isn't deterred by the NVIDIA stock price slipping or talk of an AI bubble.
But NVIDIA doesn't have enough chips to ultimately meet demand, right, relative to what we see. But it speaks to my point. It's about the second, third, fourth derivatives of AI playing out. You have $3 to $4 trillion that's going to be spent in the next few years. To call this a bubble, it's wrong. It's something like myself that covered tech stocks in the late 90s. It's a 1996 moment, not a 1999 tech bubble moment.
Joining us now is Bloomberg tech reporter Ryan Vostelica. Ryan, it's not only Dan Ives defending NVIDIA. NVIDIA itself has gone on the defensive, trying to defend itself against the hype around Google.
Yes, good morning. Thanks for having me. So yeah, there's been a lot of discussion and analysis about what does NVIDIA's market share potential look like, especially given the increased attention and focus that's being put on Alphabet's TPU chips. Now, I'll say these aren't exactly a direct sort of comparison to NVIDIA's GPU chips. They're much more specific, but they are designed to work on AI cloud workloads, which is what a lot of these chips are being used for. So as Alphabet starts to get these orders, we saw Anthropic, there was a report of Meta earlier this week, people are starting to reassess how dominant is NVIDIA going to be. Now, most people do think it's going to be very dominant. It's going to continue to be a major player, but there are very different implications for the stock and the valuation if the market share stays around 80-90% or if it goes down a lot lower.
Ryan, I wonder if it makes a difference to the AI leadership of this market if someone else in the Mag 7 starts to take leadership of, you know, a certain part of the supply chain.
Yeah, what's been a very interesting trade to look at, especially recently, is all the companies that are sort of connected to the Alphabet side of the trade, meaning companies like Broadcom, those have been doing very well, whereas companies that are more tied to the OpenAI sort of things, which is NVIDIA, AMD, Microsoft, Oracle, those stocks have really been struggling this week. So it's been a very interesting sort of disparity amongst those two groups.
All right, Ryan, thanks so much for joining us. This is a story we're going to keep talking about, not only throughout the rest of the day, but probably the rest of the decade. Ryan Vlastelica there covers tech stocks for us out of Chicago. Now, on the earnings front, Deere falls after its 2026 outlook comes up well short of expectations. The weak outlook comes as American farmers continue to struggle. Joining us now is Chris Ciolino. He covers the industrials for Bloomberg Intelligence. And Chris, we were expecting a profit of $5.31 billion in 2026, and Deere said it's only going to be between 4 and 4 3/4. Why the big miss?
Yeah, I mean, we expected a conservative outlook heading into the print here. This was well below our expectations and even below, some of the most bearish estimates out there. And really suggests, a more severe and prolonged ag downturn here in North America. To your point, they expect net income to be down north of 10% next year, which would imply earnings somewhere in the, $16.50 a share range for 2026, which is, 18% below the street. That's the bad news. I think there is a silver lining here. One, this really solidifies that 2026 will be the trough. I think there's little doubt about that now. And two, there's probably some inherent conservatism baked into this outlook, just given the lingering uncertainty on the trade and tariff front.
Well, to that point, President Trump recently had a phone call with President Xi. Soybeans always on the agenda, and not to mention administration that wants to support farmers and might do so with stimulus to them. So, Chris, was this a kitchen sink moment with the government coming to rescue farmers and therefore Deere?
I don't think so. Historically, government aid and farmer aid specifically has not been used to go out and purchase new machinery. They'll use that money to, pay down debt, improve their working capital, cover their living expenses. It's not typically going to new equipment. I do think we are certainly moving in the right direction on the trade front in the agreement with China, but this is still very much going to be a show-me story. I think farmers need to see China in the market and delivering on their commitments, and they really need that stability and predictability before you start seeing farmers go out and invest and replace equipment.
Chris, appreciate it. That's Chris Ciolino of Bloomberg Intelligence as Deere continues to fall in the pre-market. Let's turn now to Washington, where White House National Economic Council Director Kevin Hassett is emerging as the front runner to be the next Fed chair, an opportunity he says he would not turn down.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Joining us is Bloomberg economist Stuart Paul. Stuart, just judging by the market reaction, bond yields continue to drop lower. There wasn't a crazy sell-off. Didn't seem to be any panic about Fed independence. Is this basically the trial balloon went up and gave the thumbs up for Kevin Hassett?
Look, if this was a trial balloon to see how markets would react to this potentially politically charged nominee heading to the Fed, he passed the test with a resounding A+ grade, with equities moving higher, with the 2-year falling on expectations that the terminal rate could be lower, something closer to 2.75 instead of 3%, and with a 10-year barely budging. You have to think that folks at the White House are very happy with the results that they've seen in the markets over the last 24 hours since they floated the idea that Kevin Hassett would be moving into the chairman spot of the Fed starting in May.
Does the market really care that much about Fed independence? Like, we talk about it all the time, but is it something like, you know, an inflation target that we know we're never going to hit? Like, we're just happy if it's close?
I think that the market does care, maybe not as much as they did over the summer. We actually built an index of how politically charged rhetoric around Fed independence is. And right now, our index indicates that the current rhetoric around the political independence of the Fed is about 10 times more destructive than it has ever been. And when we saw that index really spiking over the summer, we actually did see markets moving. Now that we've moved on a little bit, we're thinking more about deterioration in the labor market. We're thinking about the reshuffling of the Fed with a change in the voters and the board presidents who are going to be taking to the committee next year. I think that attention has turned away from political independence and more towards the business cycle overall. But it does look like it is something that markets do care about, especially when rhetoric gets really hot around the Fed.
There's another criticism of Hassett as Fed chair beyond just the politics of it. And this is a particularly harsh one, to be fair, from Ned Davis Research, Joe Kalish over there, saying that he finds him to be a subpar communicator, a critical skill needed for Fed chair. What would that mean if you have someone? I mean, Jay Powell was the great consensus builder, the one who communicated a very clear direction of where the Fed would be going. What happens when you don't have that anymore?
Well, I mean, we've even seen from Secretary Besson and from Kevin Hassett himself saying that communication policy needs to be dialed in a little bit. So the fact that he might not be the same steady communicator that we've, learned to become accustomed to from Chairman Powell might not be so much of a strike against him, especially if the objective is to roll back the extent to which they are providing any sort of forward guidance or any sort of messaging. I think they view that sort of transparency, the reliance on forward guidance, almost as a little bit of a policy mistake. And we've seen it a little bit just in recent weeks. We saw Fed branch presidents coming out very hawkish through October, and that really adjusted pricing for a December rate cut. And then again, we were just, we experienced a little bit of whiplash when New York Fed President John Williams came out last week, and now we have about a 90% probability of a rate cut in December priced in. That sort of a whiplash and an attempt to manipulate markets with forward guidance is the sort of thing the administration is looking to move away from. The fact that he doesn't have an A+ in terms of communication probably isn't that big of a strike against him.
All right, Stuart, thanks so much for joining us. Stuart Paul from Bloomberg Economics. We're going to check back in with you in about an hour's time. Let's check in right now on what's going on in the markets. We have futures rising ahead of the opening bell right now, looking at gains of 0.25% on S&P futures, a little bit more on NASDAQ futures. And it's interesting, even with the concern of NVIDIA losing out, at least in some sense, to Google, you still see those shares rebounding. That's obviously going to drive the trade today.
Yeah, and you saw yesterday being able to mark gains too, even though NVIDIA fell. But I guess you just need something else to take the mantle, like a Google that's done so well over the past few sessions. By the way, some of the other movers on our radar this morning, Dell has raised its shipment projections for the AI server market as it capitalizes on the data center boom, because everything tech is an AI trade.
HP's profit outlook, and by the way, this is an AI story as well.
Of course it is.
Missed estimates for the year as memory chip costs weigh on earnings, but it also, HP that is, announced 4,000 to 6,000 job cuts through fiscal 2028, which is, it's a long way away from.
I mean, we could have robot overlords by 2028. Who knows what AI will look like?
They're saying that they're cutting these people because they can produce, or replace them, I should say, with AI.
Yeah, and again, how would you even make that call right now? Elsewhere, Urban Outfitters posting strong sales last quarter as it leaned into college campaigns with campuses and student athletes, Matt.
Coming up, UK Chancellor Rachel Reeves boosts her fiscal buffer, but an error allowed it to be released early. We're talking about the autumn budget in Great Britain. We head to the big smoke next. This is Bloomberg Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's getting out of high interest. Look what's making headlines around the world. U.S. envoy Steve Witkoff is set to travel to Moscow next week for talks with senior Russian officials. This according to the Kremlin. And it's a visit that could include a meeting with Russia's Vladimir Putin if their schedules line up. The trip is part of President Trump's effort to deliver peace after nearly 4 years of Russia's full-scale invasion of Ukraine. Despite the White House's optimism around the negotiations, doubts remain in European capitals, with most of Ukraine's Western allies agreeing that Putin has no interest in an immediate ceasefire. The U.S. just negotiated major Medicare drug price cuts, including a 71% price drop for Ozempic and Wegovy starting in 2027. 15 top drugs will see discounts of up to 85%, saving Medicare an estimated $12 billion and affecting over 5 million patients. Novo Nordisk is still fighting the program as price setting, even as it cuts prices elsewhere to compete with Eli Lilly. Still, the president's goal of cutting drug costs by 1,500% remains elusive. The budget unveil from UK Chancellor Rachel Reeves landed with an unexpected twist today. The fiscal watchdog accidentally posted its analysis before she began speaking. The premature release showed her fiscal cushion jumping to about $29 billion, driven by nearly $38 billion in new taxes. It included higher levies on pricey homes, property income, and savings.
It is my understanding that the Office of Budget Responsibility's Economic and Financial Outlook was released on their website before this statement. This is deeply disappointing and a serious error on their part.
For more on the UK budget, we're joined by Bloomberg's Lizzie Burden, who is live from Westminster. Lizzie, what a messy kickoff to this budget unveiling.
Yeah, Rachel Reeves was not happy about that at all. As you heard her there saying it was a serious error. I do wonder whether the boss of the OBR is going to keep his job, Richard Hughes, because of course this was a market-moving, unprecedented move from the OBR. But as you say, the headline that really the market latched onto from that early release was that the headroom of the Chancellor against her fiscal rules has more than doubled to £22 billion. And if you look beyond that, beneath that figure, actually, Danny, the news isn't very good. You've had growth downgraded, the welfare bill still soaring, living standards expected to rise more slowly than expected, and crucially, the tax burden set to become its highest since World War II, when records began. So not a lot of good news apart from that big figure that's actually calmed the market.
It isn't horrible news, though, Lizzie. I mean, the UK economy isn't growing much, but inflation isn't terribly high. Yields are 4.5%, right? The pound is like in the middle range of where it's been over the last few years. Like, why all this incredible drama over the autumn budget?
Matt, was that you actually sort of complimenting the UK there, did I hear? Not the usual take from Matt Miller.
You don't have the debt to GDP of other countries, you know. It just doesn't seem to be as bad. A $20 billion hole, that's what we bet on Argentina.
Let me put to you the lines that are going to last in these markets, okay? The way that she has raised taxes predominantly is a stealth tax rise. She has frozen income tax thresholds, and that is going to drag millions of people into new tax bands. You'll have more higher rate taxpayers. This, according to a very influential economist in the UK, is going to fundamentally change the tax system. And many will be asking whether effectively that breaks her manifesto not to raise income tax. You've got a bit of good news for the left of the party in that she's removed the two-child benefit cap. That would potentially lift hundreds of thousands out of poverty. Crucially for markets, she says that it's going to reduce inflation, and that seems to be another thing that has calmed the gilt market and sterling as well. But I have to say, the big question is it credible to backload the fiscal tightening here? We've got a calm market reaction for now, but if you look at history, Matt, don't judge it by the market reaction right now. Give it a couple of days, and of course you've got Thanksgiving coming tomorrow. There'll be low liquidity in these bond markets. It could be that the UK is extra exposed to the cross currents across the Atlantic.
It's a very good point. We have a great story on the Bloomberg talking about last autumn's budget when we thought everything was calm after the speech. Then rates started to creep up until gilts hit levels we hadn't seen since the great financial crisis. Lizzie Burden there reporting from Westminster. There's always a guy screaming in the background, which makes it even more dramatic in the United Kingdom. For more on the UK budget, you can head to Live Go on your terminal. Also be sure to check out the T Live for market reaction. Now coming up, Edward Jones's Mona Mahajan joins to discuss her outlook for the markets and if AI can lead us for a fourth year in a row. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Both JP Morgan and SocGen increasingly bullish on stocks. Both the analysts at those firms have raised their 2026 year-end forecast. For the S&P 500, JP Morgan is at 7,500, SocGen at 73, and the strategist there at SocGen writing, the backdrop is positive for U.S. assets. It's too early to call the bull run over. Let's add another voice to the conversation. It's Mona Mahajan, head of investment strategy at Edward Jones. But I'm having a hard time finding anyone who's not bullish for next year. Deutsche Bank has 8,000 for their price target. Are you all bulled up too heading into the new year?
You know, look, when we think about 2026, it's a benign environment. We're looking at fiscal growth, economic growth that could continue in this 2.5% range. We're looking at moderate fiscal stimulus coming from the tax bill, a Fed that is likely moving interest rates towards neutral. And by the way, the earnings growth picture looks pretty good for next year as well. So hard to see any cracks in the story right now. We know markets can change, they're fluid. But for now, we feel good about where investors are standing.
The consumer is where I would look if I wanted to be dour about these markets. You know, we just found out that 42 million Americans are on food stamps. We know that the subprime auto loan defaults are at the highest level on records going back to the 90s. Consumer confidence yesterday came in at 88 from the conference board, far lower than our survey and also much lower than the previous month. So it seems like the consumer situation is worsening.
Yeah, you know, look, I think there is, and we talk about this often, it is a bifurcated consumer. And that lower income consumer is still hurting from years of elevated inflation. They're trying to catch up. Many are working multiple jobs just to keep pace with the bills that they have to pay. Now, all that being said, we have, of course, the middle and upper income consumer that has benefited from stock market growth, that has benefited from potentially home prices stabilizing and moving higher. What we see in the U.S. economy, and what's interesting is economic growth is actually 70 to 80% driven by that middle and upper income consumer. And so when we think about economic growth, it's really does come from those parts of the market, those consumers that are doing relatively okay.
Just given that, and quickly, less than a minute here, can you buy Staples? It's been so beaten up partly because of the story.
Yeah, you know, we actually are inclined to buy consumer discretionary because those consumers that do have a little bit of that discretionary income, perhaps they are in the middle and upper income parts of the market, they may start to buy a little bit more. They may start to spend. The bottom part of the market where Staples tends to play, they may still be a little bit under pressure. So we like that bifurcation.
All right, Mona, you're going to stick with us through the opening bell. Mona Mahajan from Edward Jones. As futures rise, we're looking at gains on S&P futures, gains on the NASDAQ as well. Gains for NVIDIA. The opening bell is up next. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We are moments away from this start of trading on Thanksgiving Eve, looking at gains on S&P and NASDAQ futures. You can see about 1/3% on the benchmark index. The tech index up about 0.5%. Small caps are moving down a little, which is interesting. I'm going to talk to Mona about this, because if we expect rate cuts, shouldn't they be benefiting the most? You've got, I think that's Santa Claus in the background.
And some hype elves. Really excited elves.
Ringing the bell with Macy's executives on the New York Stock Exchange. I would guess that 99 parades means that's how many they've had so far, with tomorrow being the 99th. So that is interesting, and they're happy because Macy's stock has done well. It's up 34% this year. It's up 134% over the past 5 years. So reason to celebrate for sure. These guys don't look as pumped, but they have much more reason to celebrate. Almonte stock, which is a tungsten company, is up 560% this year to date. It's almost 800% over the last 5 years. So they're crushing it.
There's reason enough to invite Santa over.
Yeah, exactly. He should go from the NYSE. You know, it's a quick train ride up to the NASDAQ market site.
I'm sure Almonte would appreciate a stop by Santa. Meanwhile, Matt, a reason not to celebrate if you own Deere today, issuing its first outlook for fiscal 2025, and that fell short of expectations. So much so shares are down just under 3.5%. It's that uncertainty around the timing of a recovery in the U.S. farm economy that's weighing on them, Matt.
Yeah, that was a shocking headline to see, such a huge miss in the 2026 profit forecasts. The story of the week, though, has been NVIDIA maybe losing a little bit of its luster to Google. TPUs taking over from GPUs. It's down 14% over the last month, except for it's bouncing back a little bit today. You can see it's up 2.5%, I guess for no other reason than the fact that it fell so much. Maybe it's because Jensen Huang said, congratulations to the people over at Google, but we're still better. And this kicks off really a fascinating fight. Mona Mahajan still with us, head of investment strategy at Edward Jones. Does it matter if, you know, some of the supply chain leadership changes as long as I'm just selling NVIDIA shares to buy Google?
Yeah, look, I think the AI story is going to be with us for several years. I heard Dan Ives on the station earlier saying we're in a 96 era, not the 99 era. We'd probably characterize it as 97, 98, but I think certainly what we're seeing is backlogs of these companies remain stellar. Earnings growth and revenue growth, by the way, still impressive but slowing, so that second derivative may start to matter more, we think, in the year ahead. And of course, what we're watching is these companies' business models are shifting a bit, a little bit more debt-heavy, a little bit more asset-heavy, going from asset-light to asset-heavy, and that could weigh on multiples valuations over time.
I was going to say, how much are you paying attention to some of the spreads? CoreWeave CDSs widened out yet again yesterday. Oracle maybe had a little bit of a better day. It was rallying in general after a Deutsche Bank note on some of the OpenAI benefit. But at what point do you say, maybe there's some stress in here that will impact the general AI economy that we're witnessing?
Yeah, and it's a good call out. Look, I think the market is smart and has sniffed out the players that could potentially feel that stress. So we know companies like CoreWeave and Oracle weren't part of that kind of Magnificent Seven cohort that were so cash rich and can actually fund a lot of this AI spending using cash on the balance sheets. Now, a lot of those companies, think about Meta, Amazon, et cetera, are starting to tap the debt markets as well. So I think that's where we want to be a little bit more mindful that, yes, they are very cash rich, but their capital structure is shifting a bit.
I promised I would ask you about the small caps because they're down a little bit today. And they just really haven't had the win everyone expects. Even as we see, well, we've had like 1.25% rate cuts already, and we're looking to go down to maybe even less than 3 if you believe the world interest rate probabilities function on the Bloomberg. Shouldn't the small caps be benefiting in this environment?
Yeah, look, this is a year where you would think the small cap story would work because we're not only seeing Fed rate cuts, the earnings story is going from negative to positive in 2026. So there's an inflection point in earnings for the small cap space as well. And keep in mind, the larger weightings in small caps are sectors like financials, industrials, not so much tech heavy. All that being said, we remain overweight large and mid. We're not as favorable on small cap only because they tend to have more negative earners. They tend to have more leverage on their books and some of those zombie companies as well. So we think the way to play kind of that Fed rate cutting cycle might be in that mid cap space.
By the way, when you had the sell-off that was, I guess, driven by some of the AI names, some of the worries, small caps were really hurt too. A lot of corners of the market were hurt that have been big momentum names. Maybe that had to do with crypto, but has that been instructive for you, that sell-off that we saw the other week? And potential events like that to come for next year?
Yeah, look, I think a lot of us were thinking 55% rally off those April lows in the NASDAQ. So were we due for a little bit of a pullback, a little bit of a correction? Probably. And then we started layering in some of those other factors. Bitcoin was having a down day. The CDS in some of those names we talked about were starting to widen as well. But all that being said, it was a pretty short-lived correction, and it seems like we're back to the races as we head to year end and that potential Santa Claus rally ahead. We do think in order for there to be a sustainable move lower, there has to be some sort of shift in the narrative, and we just have not gotten that yet.
So what are the things that you're worried about? I mean, the labor market blowing out, inflation continuing to rise.
Yeah, it's a great call out. Our team is actually thinking about key risks for 2026. Probably the top 2 to 3 are the AI story slowing down in a more meaningful way than is anticipated by the markets. So looking at that second derivative, but do we get even a bigger shock or slowdown next year? Number 2 is inflation. Could we see an acceleration? And, we've been pretty contained thus far in this 2.5% to 3% inflation environment.
I wish 2.
Yeah,
more like 3.
2.5 to 3 is fair. Yeah, and I think if we see an acceleration beyond that, the markets get worried. The Fed story comes into question. And the third one we'd highlight is in the credit space, and both public and private credit. Could something happen there that triggers volatility?
One of the more fascinating things is that, and I've heard a lot of these points be made before, everyone's skipping out on the politics. This time last year when Trump was elected, the thought was politics will drive the economy. Now the conversation is AI is driving the economy. Is that fair that we've kind of disregarded that of what's coming out of the White House as drivers for the market?
It's a good call out because earlier this year it was all about the policy and specifically tariff policy that was driving markets, driving volatility. As we head into 2026, it is a midterm election year, so we'll be watching that. It is a year where we'll have a Fed chair transition in May, and so we'll be watching that carefully as well. But more broadly, I think to your point, the AI story and really the economy and inflation story will probably be front and center for investors.
I mean, you did pick inflation as your number 2 concern, and that, to be clear, is tariffs.
Yeah. No,
right?
it's true.
But I think that the surprise has to be AI. I mean, who expected, even though we saw the promise of like ChatGPT, for people to be using it this much? I saw figures this morning that 35 million people are paying for it, and those figures are from July. So that's got to be increasing, exponentially, because it's not just for writing reviews or, doing research at work, but it's also for like finding recipes, and, rearing children. Like people are using it for relationship advice.
Yes. Absolutely. And, look, I think as we think about the AI story evolving, there will be potentially winners and losers. And you guys were alluding to the, NVIDIA versus other parts of the market, or we have the ChatGPT versus the Google platform. And so if there are a couple of winners that emerge, maybe there's pressure on the rest of the secondary and tertiary players in the market. The other part of the story is eventually investors are going to want to see productivity gains across sectors. And that is really the hope, and that is really the story, part of the story behind why you should be diversified in sectors like financial services or healthcare or industrials that can benefit from robotic manufacturing or efficiency from AI. And so I think we are hopeful that by the end of 2026, those gains start to emerge as well. And hopefully there's no surprises on that end.
I think we all hope that. Mona, thank you so much for joining us. Enjoy your Thanksgiving holiday. Mona Mahajan of Edward Jones. Let's get a check on the stock market right now, because Mona was mentioning the back and forth between NVIDIA and Alphabet. It would turn out that NVIDIA is winning today while Alphabet falls. Just looking in the plus column, maybe someone was listening to Dan Ives talk to Matt Miller and me about how he is still backing the company, and Jensen Huang fiercely defending it, defending against Michael Burry or putting out on X, congrats Google, but we are better. Those shares up 2%, that adds 10 points to the S&P 500. Meanwhile, a lot of the associated names, Microsoft, Oracle, they're doing better. Apple, that continuing to gain. On the downside, it's Alphabet that's the biggest detractor. Again, not because it's falling so much, only down 0.7, but just because of its weight. Deere is up there. Poor earnings, Workday also up there. Not so good earnings from the HR solution provider as well. Looking at the different sectors, again, this is going to be Alphabet down here, the communication services, the reason that's down by 1/3. But if you go all the way to the top, the tech index, that's NVIDIA retaining its crown to the upside, again, more than 2%. And some of the utility names, I mean, you could argue that that's also an AI play this morning, Matt.
Yeah, very interesting to see, Google down.
Yeah.
Google is that communication services, and NVIDIA is up there.
For sure.
And the story, the narrative, of course, has been the other way around. Alphabet, Google leading the pack as it takes on NVIDIA's chips, and OpenAI's chatbots, which with its Gemini 3 platform. We'll discuss the shifting hierarchy among the Mag 7, even if the stocks are going in the opposite direction. This is Bloomberg Open Interest.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders. We have parties. We have the Oman Sovereign Wealth Fund. We have others who are willing and ready.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The best 3 days of gains since May will today make it a 4. We are up 0.5% for this equity market 15 minutes into your trading day. Let's look at some of the top calls, the analyst action that we are focusing in on. First up, Autodesk, that gets raised to a buy at Deutsche Bank after the company hiked its full-year outlook. It topped the street estimates. The analysts there are calling it a very healthy quarter and, quote, one of the cleanest reports that we've seen in years. Next up, Deere shares, those are under pressure. The company's profit outlook came in a big miss, shares down 4%. Jeffrey says the results and forecasts line up with expectations for another year of American ag declines, and they're watching pricing and tariff mitigation closely. And finally, Oracle higher after Deutsche Bank said the stock still reflects little, if any, credit for its AI partnership. The analysts say that the math shows the market isn't valuing the business at all, even as demand tied to OpenAI grows, and those shares, Matt, up just under 5%.
Yeah, the AI hierarchy is seemingly getting reshuffled. NVIDIA shares are down on the month as peers like Alphabet and Meta rebound. It's a sign investors are fearful of an AI bubble with too much concentration in NVIDIA, as well as NVIDIA's circular investments in startups like OpenAI that are also customers. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us to have the same conversation that we have every morning. You know, the difference is now, like, Gemini 3 apparently is very good, and they are using their own chips to do that. Have you dabbled with these other platforms?
I have, and look, I applaud Anthropic for really keeping their focus on, you know, the coding agent use case, because to me, that's how you differentiate in this race where multiple LLMs are converging, OpenAI, Gemini, and Anthropic continues to show that, yes, for coding agent tasks, companies will be willing to pay a premium for their product because their product is better in terms of, you know, using the same task. So
now that's Anthropic. What about Gemini 3? What about Google's chatbot? What's it good at?
Well, so the thing about Google is, one, they've done very well with image generation and, you know, just kind of coming up with anything to do with visual search or visual content. And that's where ChatGPT still is the most used kind of chatbot, text-based chatbot. People use it for audio. But I think where Google has really differentiated themselves is that video and video and image generation use case. And that in itself is a very big market. I mean, think of all the things we do in terms of image and videos. And that's where I think Meta using Google makes sense, because a lot of the recommendation algorithms on Instagram are very similar to what Google is doing on YouTube. So their ad stacks are similar. So even though one of the criticism I've heard is TPUs are very specific to Google. Well, Meta and Google's business is very similar when you think about, the videos and the ad stack. So from that perspective, it does make sense that Meta should be able to make use of the chips that Google is using.
When we're talking about advancements here, it still feels kind of incremental. I know in the grand scheme of things, I mean, we've come so far, but it's better video, maybe better recipes. We're not talking about like this promise of super intelligence. It feels like we're a long ways away from that. What is the risk that that's not where we're headed, or at least we're not going to get there for a while and things do start to plateau off?
I mean, superintelligence at this point of time is an abstract concept because do you think superintelligence is constantly learning LLM that gets better at all these tasks? That's why I like to think in terms of tasks, that these models are very good in terms of bringing in an intelligence layer to a certain type of task, whether it's customer service or any other type of work that you're doing within an enterprise. But superintelligence to me is somebody who's good at everything. And that's where you can't be good at coding, you can't be good at customer service and image generation as a human being. So why would we be talking about superintelligence? I mean, maybe that's the end goal of OpenAI and all these models. But to me, that has to be a constantly learning thing, and maybe somebody is developing, an algorithm like that. But right now, it's driven by data and pattern recognition.
When are these things going to get truly agentic? Like, when can I say, I want to go on a trip to Southeast Asia in February for 7 days, find me the best plane tickets, and like, here's my credit card, go ahead. Or when can I say, I'm looking for a used Porsche, but I want it to be a manual transmission, not a PDK that pretends to be manual because they're paddles. You have to look through the pictures to verify the ad. Go ahead.
I mean, on the travel one, look at how many integrations you need to get all the right data to be able to, act as your travel agent. It's not that easy. You need to tie it to Booking, Expedia, the airlines.
It's not easy. That's why I want AI to do it for me.
But AI can't develop the connectors. It's the companies who have to agree that they are willing to give their data to OpenAI or Gemini, and then Gemini uses those integrations, feeds it to their LLM, and builds the product. There is no magic formula with AI in terms of building those connectors. The companies have to agree that they're willing to share their data, and that's how the connections get established.
By the way, on the other side of that, I'm assuming it's going to be Delta or United or whoever you're booking from, that you have your AI agent talking to their AI agent, being like, great. I wonder on the other side of things, on the corporate side, is that closer to realization?
I mean, think of how it changes your business completely. Right now, you have customers and clients who are coming directly to your brand. They associate your brand. Once you start giving your data to LLMs, your brand awareness is gone, your first-party interactions change completely. So that's why this stuff is hard. Even though the technology is there, I mean, you have to deal with existing systems, and a lot of them are critical systems that no one wants to change. And you have to build those connections.
This is getting really existential. Mandeep, thank you so much for joining. You can repeat this conversation on your Thanksgiving Day dinner. Mandeep Singh of Bloomberg Intelligence. Coming up on the show, Warner Brothers is asking for new sweetened offers for its assets by the end of the month. We're going to have the latest for you next on Bloomberg Open Interest.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Happy Thanksgiving Eve. We're looking at stocks that are, for the most part, gaining. So the S&P 500 up 0.5% right now, powered higher by NVIDIA in rebound mode. The NASDAQ as well, gaining 0.6%. Even the small caps now are up. 0.4%, the gain on the Russell, and the Dow Jones Industrial Average at 47,300. Take a look at what's going on in the individual movers. You've got NVIDIA right now up 1.25%, and Google actually down 0.4%. But if you look over the last week or the last month, they're a mirror image of that. Dell right now up 2.5%, and HP down 2.5% on earnings. HP also saying that it's going to cut jobs, I think 6,000 to 8,000, but through 2028, so for like the rest of eternity. Paramount Skydance right now up, and Warner Brothers up a little more at a gain of 3%. I'm not sure if that's motivated by their ask, but they do want more money, and that's what we're going to talk about right now.
We are, and let's bring in Bloomberg's Hannah Miller, who has been tracking the saga for more on Warner Brothers Discovery. And I guess because they have 3 bidders at this point, they can afford to ask for sweeteners, right, and push back on what they have.
Yeah, it's going to be a really busy Thanksgiving weekend for these bankers.
Oh, yeah, I feel bad for the bankers.
Oh, yeah.
Don't feel too bad.
But yeah, no, they have some flexibility here. They can ask for more money. Again, any bidder has to explain why there won't be antitrust concerns, or if there will be minimal antitrust concerns with their bid. So, you know, there's still some flexibility here. We are expecting a final decision towards the end of the year, maybe around Christmas time. So this is just one step closer to that.
What are the crown jewels of this company? Like, what do people really want, and what are they going to, you know, peel off and throw away?
Yeah, so streaming and studios, those are the crown jewels, and we have Netflix and Comcast going for that. The difference with Paramount is that they're going for the whole company. They're going for those cable channels as well. So that is what sets their bid apart from the other two.
Does it make a difference to Warner Brothers whether someone buys them outright or buys pieces?
You know, they are going through their own separation right now. At the end of the day, they're going to look at, you know, what brings the most value to shareholders. CEO David Zaslav is also very interested in what his role is going to be with whatever shakes out. So, you know, it could be anybody at this point.
And one, I would guess, has a better chance at clearing FTC hurdles or antitrust issues, right? Because Paramount Skydance, they're much closer to the Trump administration.
Yeah, you know, the David Ellison, who's the CEO of Paramount, he has spoken about the good relationship that he has with President Trump. And, you know, the big thing going for Netflix against their bid is the concern that their streaming services combined with HBO Max would be too much. It would trigger antitrust concerns.
All right, Hannah, thanks very much. Bloomberg's Hannah Miller. We're back with another hour of Open Interest.
game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Michael Wallace. Millions of people are hitting the road on this day before Thanksgiving, but in the upper Midwest, plows are out as whiteout conditions have closed some interstates. Meteorologist Craig Allen.
These wintry weather conditions are going to cause some of the most disruptive weather today in the northern plains, right through the upper Midwest, and then it's going to spread over towards the Great Lakes.
I'm Peter King along Florida's Turnpike in Orlando. This rest area has been busy with people who made early starts this morning.
Really tired, man.
Not to mention those with long drives ahead. Kim is from Indianapolis. He's headed north after a cruise and several days here in Orlando.
Now we're headed back to my sister's in Georgia for Thanksgiving.
Then it's back home to Indy. His message to other drivers?
Pay attention to what you're doing. I mean, the people that are on their phones not paying attention is the ones that's causing the accidents.
Getting into national parks will cost more for some people, but not all. CBS's Stacey Lynn explains.
Foreign visitors will pay a $100 entry fee at 11 U.S. national parks, including the Grand Canyon, Yellowstone, and Yosemite. Their annual park passes will also increase to $250. The move follows an executive order by President Trump in July to give U.S. residents preferential treatment over international travelers.
The new fees take effect January 1st. President Trump has dropped his Thanksgiving deadline for Ukraine to sign his peace deal with Russia. Ukrainian parliament member Helena Yanchenko tells CBS News the red line her country should not cross.
It is absolutely not acceptable to include any topics or any discussions about trading land.
Russia warns it is premature to say whether a deal is close. The FBI has launched an investigation into the 6 Democratic lawmakers who released a video last week urging service members to refuse illegal orders. President Trump called it seditious behavior. One of the Democrats, Arizona Senator Mark Kelly, discussed the accusations on Jimmy Kimmel Live.
What I'm worried about is the reaction and what this transmits to the military and the public, which is basically shut up and listen to that guy. And that's not the way our system works.
The Pentagon may recall Kelly, a former Navy captain and astronaut, to active duty so he can face a court-martial. They lit the Olympic torch in Greece today ahead of the Milan Cortina Winter Games. Bad weather moved the torch-lighting ceremony from Olympia's ancient stadium to a nearby museum. The Winter Olympics begin February 6th. Wall Street has begun the day with the Dow up 150 points. This is CBS News. Don't be surprised if you see some red eyes at your Thanksgiving dinner table tomorrow.
This is Green Wednesday, and many family members are rushing out to purchase pot.
The Cousins Walk is more than just a stroll.
With medicinal marijuana now legal in 40 states and recreational weed sanctioned in more than half of them, the Wall Street Journal points out getting high with cousins and others on the holiday has grown into a full-blown tradition. Also available to ease potential family friction, cannabis-infused wines and pot-laced rosemary oil for basting the turkey because, as the cannabis commercial suggests,
family is forever, which is why a little weed is nice.
Deborah Rodriguez, CBS News.
Just in time for the holidays, a new survey asked Americans how long they're happy to host house guests. The consensus was 6 days. For parents, it's 8 days. For in-laws, it's only 5. Michael Wallace, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live everywhere on that internet thing. So go to Bloomberg. Go to the podcast. You can go to anywhere on the internet, and you'll find us there. So Scarlett Fu out today. She's on assignment, so I've been told. Christina Aquino sitting in for Scarlett. So we are in great shape. There. Coming up, we're checking with Benedict Camel. He's a Bloomberg Global Aviation Editor. How bad is it out there with the air travel? People say this is the worst day of the year. We'll get the latest reporting. Grace Lee, Senior Portfolio Manager, Columbia Threadneedle, to get her markets call. And then it is the time of the year when research analysts, including the ones at Bloomberg Intelligence, they put out their 2026 outlooks about what they think their sector is going to do. We're going to kick it off today with Lee Klaskow, Bloomberg Intelligence, Senior Transport Logistics. He talks about the railroads, the trucks, the ships, the whole thing. If a piece of inventory moves, it's his companies that do it. So we'll get the latest there. So a lot coming up in the next couple hours with markets on the move higher. Let's go to Lisa Mateo for a Bloomberg Business Flash. Lisa.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. You can learn more at ibkr.com/RIA. Yeah, we do have stocks climbing higher. This is ahead of the Thanksgiving holiday. Rising expectations for interest rate cuts. Money markets now price a roughly 80% chance of a Fed quarter point cut next month and favor 3 more by the end of 2026. Let's start with the NASDAQ, up 0.3%. Same for the S&P 500. The Dow rising 0.4%, 194 points. Over to the yield space, we have the 2-year, 3.49%. That's up 3 basis points. The yield on the 10-year, 4.03%, and that's up 4 basis points. COMEX gold, little change at $4,176 an ounce. WTI crude, $57 a barrel. And the Bloomberg dollar spot index weakening by about 0.1%. Some uncertainty around the timing of this recovery in the U.S. farm economy. That has the first outlook for the year ahead for Deere falling short. Its shares are down 3%. To tech we go. Dell raised its annual projections for the artificial intelligence server market. Investors like the sound of that. Its shares are up about 4%. And shares of HP, well, they're down 2%. That's after a miss for its profit outlook for the current year. The company said it's going to cut as many as 6,000 employees through fiscal 2028 by using more AI tools. And speaking of cuts, consulting firm McKinsey says it has eliminated 200 global tech jobs in the past week. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Over to you.
All right, very good. Lisa Mateo. We got Christine Aquino sitting in for Scarlett Fu. So that is a good thing for the next couple hours. She'll take care of us. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We get green on screen here, as Lisa was just reporting. Let's take a look at where some of the stocks are moving today. We can do that with Bloomberg's Natalia Kenijevic. Natalia, what are you looking at today?
So let's start with DEAL. Lisa has already mentioned that the ticker is DE. The stock is down by 3.7%. The company posted disappointing profit outlook. It now expects net income for the fiscal year, which begins in November, to be between $4 to $475 billion. This is way below of average expectations from Bloomberg, which stood at $5.3 billion. CEO said that 2026 will potentially mark the bottom of this large agricultural sector. And Bloomberg Intelligence also said that this report suggests more severe and prolonged agricultural downturn that they had expected. Of course, we know that farmers have been hit hard by low crop prices and this uncertainty, tariffs, etc.
Yeah, well, tell us about what else are you looking at? Petco, I hear some news out this morning. What's going on with the pets?
That's right. So the ticker is WOOF. The stock is up by 14% today. The company boosted guidance. It now expects adjusted EBITDA to be slightly higher than it previously expected. To me, that increase in adjusted EBITDA was not that significant. So it looks like it's more about company's strategy. Now it expects to cut store count by as much as 30 locations this year after a drop of 25 last year. So everyone is just excited about the company's strategy and kind of boosting its profitability in the future.
Nice. All right. Urban Outfitters.
Yeah, so another kind of retail consumer segment. The stock is up by 12.7%. The ticker is URBN. So we know that the company reported net sales for the third quarter that beat expectations. And Bloomberg Intelligence is saying that the main reason for this strong beat is that the company is expanding its brand portfolio. It sees demand across all brands. This is also what's helping the company to keep strong margins and tariffs. In particular, they cited so-called campus activation. So this is a strategy when company goes into like universities or colleges, sets up locations and stores, so it helps them increase profitability. But more importantly, right, this report follows positive results from Abercrombie, Gap. It means that consumers are still in a good shape.
All right, very good. Natalia Kenijevic, we appreciate that. Natalia is the equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple, Podcasts, Spotify, or anywhere you listen. Are you traveling for the holiday?
Oh no, I'm staying local. I'm done with the traveling this year, Paul.
Yeah, I'm kind of with you there. I'm not doing that. If anybody wants to see me, they got to come to me. So that's how it's. But everybody else in the world, I think, is traveling. I saw something more than 3 million TSA things will be processed. You know, it's just like everybody's going nuts here, as they typically do this time of year. Benedict Camel, Bloomberg Global Aviation editor, joins us here on this Thanksgiving travel here. Benedict, I guess my question here, I'm just thinking the U.S. is, can the system handle it? It seems like just on an average day, there are challenges. Is the system ready?
Well, this is the big test case, isn't it? We really will see in the next couple of days. And there's a lot of things that are sort of working against the system, if you want. You have the recent shutdown, and the system has come back. We remember we had those the reduction in flights. So that's come back now. But again, like turning something back on is often harder than turning it off. We have that. We have bad weather coming to parts of the country, so that's going to put a bit of a damper on some of the travel. We have the perennial air traffic controller shortage. That's an issue. We have heard from the government and from the TSA and from the FAA that, yes, they are putting more people on the ground behind screens. They think they are ready, but really in the next couple of days we will see. You know, this is usually every year this is a big issue. You have the mass migration of people. We're expecting more than 30 million people to be on the road, in the air, at airports in the next couple of days. So huge crunch time. So far, no mass disasters, but we're looking at places like Atlanta, JFK, Chicago, LA. Those are the big hubs, and that's where you will probably see the biggest crunch.
Yeah, well, very interesting, Benny. As you mentioned, you know, it's weather and also kind of the restart post-shutdown really combining here to potentially make for an interesting travel time. But then on top of everything else, we also have the FAA saying that it will investigate airlines that may not have followed mandated flight reductions during the shutdown. I mean, so that's going to be on top of everything else. Is that really, you know, a key priority at the moment? And how is that going to translate into accountability for travelers this season?
Well, travelers probably won't feel it that much, but it raises an interesting point, sort of where airlines towing the line, where they're going along with what the government mandated. We did hear during the shutdown there was some pushback from carriers, gently, but still they said, look, is this really necessary? Do we have to reduce our flights to the degree that you are demanding? We seem to be coping just fine. So there seems to be some cases where airlines try to create a little bit of wiggle room, and that is something that the FAA is now investigating. So what comes out of that? Will it be a fine? Will it be something else? We don't know. It's early days. But it shows sort of the government on the one hand obviously taking this very seriously and also taking seriously whether their rules are being followed. And on the other hand, airlines feeling that they have a customer to serve, obviously safety above everything else, but they also feel, was this really necessary? And they might have tried to cut some corners. The investigation will show that, but at the very least, this is something that's come to the FAA's attention.
Department of Transportation Chief Sean Duffy wants to bring back the golden age of travel. I've been an active flyer for 40 years, call it. I don't ever remember a golden age of travel. I'm not sure what he's referring to here. What do you think he's referring to here? If I get from point A to point B in one piece, that's a good day.
Yeah, I think most people take a very sort of transactional view to traveling these days, as you say. Get me from A to B without much disruption, and ideally without a fight breaking out in the cabin. That's all I need. We all see these videos of people brawling on planes. We see, you know, people dressed in questionable sartorial outfits, and that's sort of where he's getting at. You know, we want to bring back civility. We want people to dress properly because the way you dress is an expression of how you sort of present yourself to the world. We want people to be kind to others. Those are all good points, but they're easily also attacked by the opposition, saying, well, hang on, do you really want to tell people how to dress and how to behave and that? You know, that's not really for the government, it's patronizing. But his point is, let's bring back a more civilized sort of nature to travel, which has really descended into, you know, bit of carnage for a lot of people. Everyone's trying to get the cheapest tickets, trying to get from A to B as quickly as they can, not really looking out for fellow travelers. That's something he's trying to address. He said, please don't wear pajamas at the airport. So that I thought was an interesting point.
I don't know about that. I need to wear pajamas or at least something comfortable while I'm traveling, Benny. But yeah, I mean, very interesting, right? It seems to me that this video is really putting the onus on the travelers to make this travel season, a busier travel season, more smooth. But I mean, obviously, there's a role that the government has to play in this as well. So what does this say about the administration's priorities when it comes to, you know, the role that they play when it comes to travel at the moment?
Well, the government can only do so much. What they can try and do is sort of create a framework within which the airlines can operate ideally. That means more air traffic controllers. That means a system that is functional. We have had sporadic but continuous outages across the country and frankly across the world. I mean, air traffic control systems are fiendishly complicated. They're sort of built on top of one another. There's a little bit of add-on happening here and there, and they break down. And when they break down, it can be catastrophic, not from a safety point of view, but in terms of sort of the delays that happen and the general outage. Planes are then out of position.
Yep.
People are frustrated. It takes a while to get everything back. So that is what the government is trying to address. But like everything, it's expensive, it's complicated, It takes time. So they've at least tried to do something about this.
All right, Benedict, thank you so much. Appreciate it. Benedict Kamel, Global Aviation Editor for Bloomberg News. He's based in Berlin. We appreciate getting a few minutes of his time. Again, this is going to be, as it always is, every single year, a big travel weekend. Hopefully everybody can be safe out there and get where you need to go. S&P up 26 points, 0.4%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got equities regaining some momentum after some early November jitters. JP Morgan Chase strategists, they dropped their cautious view on U.S. equities. They now see the S&P 500 index rising 11% from its current level to 7,500 points by the end of 2026. Let's go to the S&P 500, up 0.4%, 27 points. The Dow up about 0.4%, and the Nasdaq rising 0.3%. Over to the two-year yield, 3.49%. That's up 3 basis points. The yield on the 10-year, 4.02%, and that's up 2 basis points. The Bloomberg Dollar Spot Index is weakening by about 0.1%. Shares of Workday, they're falling this morning, down about 9%. Analysts had a mixed reaction to its third quarter results. And taking a look at retail, go to Urban Outfitters. That's the owner of Anthropologie, Free People Brands as well. Its shares rising 15%. That's after reporting a beat on net sales for the third quarter. And another stock on the move, it's Petco, up 18%, a beat on fourth quarter adjusted EBITDA guidance. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
All right, Lisa Mateo, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. S&P 500 year-to-date up 15%. NASDAQ year-to-date up about 20% here, so some solid moves here so far in 2025. What do we do going forward here? Grace Lee joins us. She's a senior portfolio manager at Columbia Threadneedle. Grace, again, it's been a bumpy year, but if you just look back at the indexes, a good year for equity investors. How are you positioning your portfolio for 2026?
Well, I think we're staying the course for 2026. I think it might be another good year in 26, possibly for different reasons. The AI trade can certainly continue from here, but additionally, we see a lot of catalysts that would cause the market to actually broaden out further. You know, firstly, you've got likely lower rates going into next year. We're lapping the tariff turmoil, which impacted a lot of the old economy companies that I think have room for a lot of bounce back next year. You're also going to see some benefits from the big, beautiful bill in terms of possibly boosting the lower end consumer who's really been hurting with things like no tax and tips actually kicking in. And frankly, I think there might even be other, this is my nickel bet on other wild card stimulus coming into next year, given that it is a midterm election year. So I think all of that sets up for some positive moves in the equity market again, and not just limited to AI companies.
Yeah, well, very interesting, Grace, because I know that you've highlighted some of the other landmark things that we've seen in the equity markets beyond, as you say, what's happening with tech and AI-focused companies. We have Walmart moving to the NASDAQ, Eli Lilly entering that $1 trillion club in terms of market cap. So what do you think is happening here? Is it really just a rotation as we head to the end of the year, or are we really seeing a true broadening of breadth here?
I think we've already seen some broadening. You know, whether I would call for a more sustainable rotation, I think we've seen a lot of head fakes on that side. But if you look at companies, I'll just point out some of the poster children for sleep at night, stable value stocks that have had very sneaky, strong performance this year. J&J is up over 40% this year. That's Johnson & Johnson. You know, your grandmother probably owns that stock. Philip Morris up over 30% this year. So already we've seen, you know, some of these complete non-AI participants doing quite well this year. And again, we think that could continue, especially if we see lower rates and a little bit more stimulus for the consumer, possibly even on the housing side.
So how do you view the consumer right here, Grace? It seems like, again, we're I think most of us are pretty understanding of the K-shaped economy here, but overall, how is the consumer doing from your perspective?
Well, I like to talk to a lot of the bank management teams where they see spending across all customer segments and spend categories, and they're all saying that it's been very stable. So I think the consumer, it's still more of the same, where the lower income is certainly hurting a little bit, but the higher income's doing great. And if anything, you're seeing some shifting between categories occasionally. Maybe people aren't buying Chipotle burritos as much, but maybe they're buying a Nintendo Switch over at Best Buy. So, I think that consumers are still spending. Frankly, I think even if there is some anxiety, there's always retail therapy to combat that. So, I still think they're fairly healthy, even if they're going to be a little bit cautious.
Now, Grace, we do have a market that is pretty much saying that we're going to get a rate cut from the Federal Reserve next month. Is that something that you think could help alleviate some of the pressures, especially for the lower income segment that you mentioned, and close that gap between the K-shaped economy that Paul has mentioned?
Well, I think lower rates will certainly help. Whether it really helps the low-end consumer, I think it's probably going to be more, there might be other things. I'd look more to no tax on tips and overtime. If they can get some of the tariff refunds back to consumers or other things like that, I think lower rates will certainly help as well, though.
Grace, thanks so much for joining us. Always appreciate getting a few minutes of your time. Grace Lee, Senior Portfolio Manager at Columbia Threadneedle, joining us from the Boston area via Zoom here. Let's zoom in on the all-important logistics transportation sector of this economy. I think all of us during the pandemic, Christine, we all became a lot smarter about the whole logistics thing, like where we get stuff and how we get stuff, and how does that toilet paper and paper towels get on the shelf at the store?
Yeah, absolutely, Paul. I mean, I was looking at, shipment websites, just kind of tracking, right? Like there are these like ship trackers that you can look at, and because I had nothing else to do during the pandemic, I'm like, you know what? Let's take a look at this. But yeah, it's very interesting, and it seems like we're 5 years out from that peak crunch period of supply. We're still dealing with a lot of the consequences of that today, aren't we?
Yep, and you can go to MapGo, M-A-P Go, and that's where tons of functionality about tracking boats and ships, and we all did that during the pandemic, and a lot of folks still do that now. Lee Klaskow does that stuff for a living. He's a senior transport, logistics, and shipping analyst. If it rolls on a rail or a truck or a boat, he's the person to talk to at Bloomberg Intelligence. Lee, talk to us about kind of your outlook for the railroads for 2026 here in the U.S.
Yeah, hi. Good morning, Paul. Really, we're thinking that next year is going to be a better year, but it's not going to be a great year. So earnings for the rails, broadly speaking, increased by mid-single digits. We expect that to accelerate to high single digits. I think investors would really like to see it get into the double digits and even mid-teens. But I think we might be a ways out for that for a while, and that's really being driven on the demand side. We're really expecting tepid demand across the board at low single-digit growth. Some rails might do slightly better than others, like CSX, which has easier comparisons versus this year, and Canadian Pacific, which has a lot of synergy opportunities following its merger with Kansas City a couple of years ago, and they're still working through some new business opportunities following that merger. So those two rails will probably outperform when it comes to volume growth, and you could see flat growth from a rail like Norfolk Southern, which is dealing with possibly some lost share on the intermodal side and some tougher comparisons when it comes to export coal.
Yeah, well, very interesting, Lee. Of course, still a challenging outlook, it seems like, for the rail sector next year. How do tariffs play into that outlook? Because we still don't have a lot of clarity on whether tariffs are going to stay, but if they do, how could that disrupt the outlook for rail in 2026?
Yeah, so it's impacting rails differently. It's impacting the Canadian rails, Canadian National and Canadian Pacific, Kansas City, or Kansas City Southern. They're impacting them, kind of on, if you think about it, forest products or metals or autos, that's being negatively impacted. And if you look at Union Pacific, if you have inconsistency with imports coming into Southern California, that's impacting them. So, it's really creating a level of uncertainty among shippers, and that's creating, what I would say, not allowing the rails to operate as fluid as they possibly can because of that stop-and-go demand.
Lee, one of the big topics in the railroad industry, and I think it'll be most of the year, is the proposed Union Pacific Norfolk Southern M&A transaction here, creating the first east-west, coast-to-coast railroad in the United States. Is this even going to get approved, do you think?
We're kind of cautious on that. I think we have like a 45% probability that the deal gets done, and we're well below consensus, we admit. We might be a little naive thinking that, the STB will remain, neutral when they take a look at this deal, because the parties have to prove that it's in the public interest and it's going to enhance competition. Some could argue that some of that enhanced competition is going on right now because you've seen Burlington Northern, which is a competitor in the West, teaming up with CSX to provide coast-to-coast services, not through an acquisition, but through more of a collaborative effort. And you are seeing, CSX winning some share from Norfolk Southern based on that.
Yeah, well, if that does not clear the regulators, Lee, what do you think that will say about the future of potential consolidation or strategic partnerships across the rail industry? Is it kind of, do you think people are going to see it as a one-off sort of situation, or is it kind of a harbinger of challenges to come when it comes to M&A in this space?
Well, the STB raised the bar for large Class 1 railroads to merge back in 2001, and that was really driven on some service issues from past mergers. And so, that's why the bar has been set so high. All the other railroads, obviously, they're talking their book, but, they think that they can create a better network through collaboration. We think that it can happen through a merger or through collaboration. But, like I mentioned earlier, Union Pacific and Norfolk Southern still have to, clear that high hurdle that it enhances competition, and it's also in the public interest, which is, again, it's really tough to prove. Also, we expect that, we probably get an answer about whether or not the STB, or the Surface Transportation Board, will approve this deal in early 2027. So we'll be talking about it all year, and I hope to talk to you guys about it all year.
Very good. I mean, that's just the gears of government grinding ever so slowly to approve this deal. It'll be, again, as Lee said, well more than a year to get this thing through approval, if it gets there at all. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey, via that Zoom thing. And again, that would be the first coast-to-coast railroad in the United States. That seems weird when I heard it phrased that way. It seemed odd. I was like, oh yeah, we don't have the coast.
We don't have one.
Why?
No.
And why don't we have it? I mean, it seems silly. I mean, why don't we have that? I don't know. But I guess
regulation.
Some competitive issue. Meanwhile, the trucks are out there and doing their thing as well. So we'll talk to Lee about maybe the trucking outlook as well going forward here. Markets holding on to their gains at or near intraday highs for the day. The S&P up 37 points, the NASDAQ up 120 points on the NASDAQ, and the Dow up 260 points. So there you go. Coming up, we're going to check in with Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. He's going to recap some earnings out of Dell and out of HP. Are they getting the AI tailwind? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, the S&P 500 set to extend a 3-day, 3.5% advance. Let's go to the S&P 500, up 0.5%, 39 points, the level 6,805. We have the Dow up 0.5%, 276 points, and the Nasdaq rising 0.6%, 143 points. The 2-year yield 3.48%, up 3 basis points. The yield on the 10-year 4.02%, and that's up 1 basis point. We have COMEX gold up about 0.4%, $4,195 an ounce. Brent crude $62 a barrel. WTI crude about $58 a barrel. The Bloomberg Dollar Spot Index, that's weakening by about 0.1%. Bitcoin up about 0.1%, just above 87,000. This morning, shares of software company Autodesk, they are climbing. They're up nearly 2%. The company boosted its adjusted earnings per share guidance for the full year, beating estimates. And security software company Zscaler sinking down 12% nearly after its forecast annual revenue. It was only slightly above estimates. And in company news, the U.S. government said it negotiated a 71% discount off the list price of Novo Nordisk obesity drugs, Ozempic and Wegovy. That's for patients in Medicare. Its ADRs up nearly 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Christine.
All right, Lisa Mateo, thank you so much. We appreciate that. Christina Aquino in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Earnings continue to come in. We had a couple of the tech companies, Dell and HP, report numbers. Let's break it down with Woo Jin Ho, Senior Technology Analyst, Bloomberg Intelligence, joining us from our Princeton HQ down in Jersey. All right, Woo Jin, let's start with Dell here. It looks like they're raising their annual projections for the AI server market. Is that still the heart of the story?
Hey, Paul. Yeah, so it's the leading part of the story for results. They raised their AI server guidance from $20 billion to $25 billion, a lot of that coming into the fiscal fourth quarter. And look, at the end of the day, we're starting to see some of these clustered Blackwell deals starting to come through. Think about the OpenAIs and the CoreWeaves and so on and so forth. That are billions of dollars for each of these deals. And that's probably going to carry through into fiscal 2027.
Now, Woo Jin, a lot of focus, of course, in that positive story. I suppose the less positive spin here is the fact that this is going to cost Dell a lot of money to deliver these orders, right? And I think some analysts are taking a look at the margins that they reported, which came slightly under estimates, depending on the measure that you're looking at. But, you know, what is it, where does kind of the lay of the land go when it comes to kind of cost versus return for Dell's ability to deliver these AI servers and get some profit off of that?
Yeah, hey, Christina. So there's actually a tale of there are two stories behind the margins. The gross margin expectations, you know, I was back into about 20.3%, 20.4% on gross margins for the company. Consensus was at 22%. And you're right, AI server margins are lower, but that's always consistently been the case. Now, the one thing I will say, the AI server margins have improved this quarter relative to the fiscal 2-quarter results as their supply chain has gotten better. Now, the bigger story is, and it actually applies to HP, is that the DRAM pricing has gone up, and these higher commodity costs is bringing a drag to potentially bringing a drag to not only their PC business, but their server business as well. So I think there's something else underlying that's driving the margins lower.
All right, so let's talk about HP. HPE is the ticker. I guess
HPQ.
they gave pardon?
HPQ. HPQ.
Exactly, okay. Talk to us about the current, I guess they gave an estimate that fell short on the profits. They're going to, and I also saw like they're going to cut 4,000 to 6,000 employees through fiscal 28 by using more AI tools. See, that goes to my thing. My thesis has been from the beginning that AI is going to be a net job destroyer here. Talk to us about HP. What did they tell us this quarter?
Yeah, so just as I was saying, Paul, the higher commodity cost is actually going to be pinching gross margins. The way I'm looking at it right now, they cut their EPS guidance. Well, they're saying that the high commodity cost is going to pinch about 30 cents in EPS in fiscal 26. And that's roughly about 8 to 10% of earnings that's being pulled away because of the higher commodity costs. It's going to be more back-end loaded, so what that tells me is that they stockpiled inventory at least into the first half of the year. But I think there's a bigger part of the story, too. You don't cut back on a headcount. It looks like about an 8% RIF or reduction in force because of AI if you're in a position of strength. So they've been in cost-cutting mode for the past 5-6 years now, and they've continued to be in cost-cutting mode. So, profits are going to be terrible, and they're going to try to preserve their cash flow to pay back their shareholders by cutting headcount.
Yeah, well, interesting, Rujan. As you mentioned, they've been in cost-cutting mode for years now. This is their second round of major workforce reductions in 3 years. The shares, though, not really liking what they saw from HP yesterday. How do you think investors are interpreting this? Are they wanting more cost cuts? Like, what do you think they're expecting from HP moving forward?
Yeah. So Christina, no one likes cost cuts. Shareholders may from a profits perspective, but you're not getting the profit gains, right? So consensus was at $3.35 in EPS, and if it's 30 cents of the EPS cuts were primarily from the supply chain headwinds, you're not getting the gains from the cost-cutting cuts, at least not in fiscal 2026, but hopefully a little bit better in 27 and 28. So it's more wait and see what those impacts are going to be. And again, like I said, you're not cutting costs from a position of strength. It's more of a position of weakness.
Hey, for Dell, going back to Dell, Silver Lake owns a big chunk of the stock here. What have they said about their intentions with the stock?
Well, look, I believe Michael Dell has a seat with Silver Lake. I think they're going to hang on to it for quite a bit. I mean, if you think about where Dell was when they came out of being a private company to a public company, the returns on that has been fairly good. So if the AI story continues to take hold, right, and they continue to take market share and they can drive margin expansion, I wouldn't be surprised if valuations continue to expand from here, because we're still coming off the peak, and the performance of the shares or could continue to drive returns for Silver Lake going forward.
Okay. Why don't you walk us through the Dell operating leverage standpoint here? What's your take on that? Because that's been kind of a point of, focus for markets recently, just the fact that are these companies that aim to deliver servers and other equipment related to AI demand, are they going to have to borrow a ton of money to be able to deliver that? For some companies like Oracle is not working out, but how's it working out for Dell?
Yeah, I mean, the one great thing about Dell is they have a very solid balance sheet. They don't have much debt coming out. They deliver a lot of cash flow. There are only a handful of hardware companies that can do that. Cisco is another one that has a strong enough balance sheet to support that. And also, going back to Paul's point on the Silver Lake relationship, Silver Lake actually has ties to some of these customers who are buying these larger deals. So funding really shouldn't be an issue with them. Now, to your point about margins and the margin leverage, having a diversified business is a very good thing for Dell. I know that the AI server margins are pretty weak and the PC margins are weak as well, but they have a fairly sizable traditional IT service business, traditional servers as well as storage, and that's going through an upgrade and modernization cycle, and that has higher margins, and that helps cushion the lower margin profiles of the AI servers for them. So diversity in the business model is actually a good thing, not only for Dell, but for Cisco and HPE.
Woo Jin Ho, thanks so much. Appreciate it. As always, Woo is a senior technology analyst for Bloomberg Intelligence. He's based down there in our Princeton, New Jersey headquarters. Part of the, what I consider to be the leading technology research team on the global Wall Street. We have them housed everywhere. They're in New York, they're in Princeton, they're in San Francisco, right in the heart of Silicon Valley. They're all through Asia, in London as well. So we've got a global team covering a global industry here. Coming up, we're going to check in with Chris Ciolino. He covers the machinery companies, including Deere. Deere reported some results here, disappointing. That kind of goes to the farmer, the U.S. farmer. When the farmer has money, he or she buys Deere stuff. And the flip side is true as well. We'll check in with Chris Ciolino. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
One of my favorite American companies is Deere, John Deere Company, because it just, to me, A, the products are just awesome, the big tractors and stuff like that, and B, they're such high quality, and they're just known around the world, great engineering, great technology, and they're just the backbone for the American farmer. It's the tool for the American farmer who feeds the world. So I just always followed this company really closely, and they came out with some numbers disappointing. It's a little tough out there in farm country, so we want to break it down with Chris Cialino. He covers all the big machinery companies for Bloomberg Intelligence, just one of our top analysts. He knows this story well. Chris, tell us what you heard from Deere with their most recent quarterly results.
Yeah, thanks, Paul. You know, we expected pretty conservative guidance coming into the print, but this was, well below our expectations, and I'd say even, below some of the most bearish estimates out there, and really just kind of points to a lower for longer ag cycle here in North America. Their 26 net income guide calls for another 10% decline in 2026. It implies roughly earnings per share in the $16.50 range, which is 18% below consensus. So
wow.
It's not great news. I would say there are a couple positive takeaways, though. One, we do finally now have, I think, visibility and line of sight on trough earnings this cycle. And two, I think there's probably some inherent conservatism built into this outlook, just given the lingering, trade and tariff uncertainty.
Yeah, well, Chris, I'm looking at that net income guidance, which is down sharply from last year's levels, right? So talk to us about that. Do you think that is more of a cyclical thing, or are we actually seeing something more structural that's playing out in this space?
No, it's the cycle. I think we always tend to kind of undershoot on the way down and overshoot on the way up. But this cycle is, playing out, I think, probably a little bit more severe than we had initially expected. Large ag retail sales here in North America are going to be down roughly 30% this year. Wow. That's the second year of the decline. And now Deere is expecting another 15 to 20% decline in 2026. That would put volumes at the lowest level in more than 4 decades. I don't think I have a model that goes back far enough that shows that trough level of volume. So I think we're pretty confident that this will be the bottom. It's just kind of a lower floor. On the flip side, I mean, the earnings per share are still, we think are structurally higher, just given some of the improvements they've made in the business model. But from a cycle and volume perspective, this is as bad as it gets.
Why do you think that is? What's different about this cycle versus past cycles here?
Yeah, it's a combination of a couple things. I mean, at the end of the day, farmers aren't going to buy equipment when you have crop prices that are down. We've seen a little bit of improvement in corn and soy over the last 3 months, but at the end of the day, we've had too much production, oversupply, so that's put a lid on where crop prices have been going. We also have high input costs. So while we're starting to see some of that inflation moderate, a lot of the input costs for farmers are still very elevated, even on the interest, rent, labor, fertilizer costs are still too high. And then on top of that, you have all the trade uncertainty. Who am I going to sell my crops to? China had essentially stopped buying our soybeans. That's our largest ag customer, in a particularly important market for Deere and row crop farmers. So the combination of those three, I think, has really kind of extended the duration of this downturn.
Yeah, well, we know, of course, that South American demand expected to be flat. So I suppose a lot of growth potentially coming from North American farm economy. But what are the signs that you would want to look out for to suggest that, look, the worst really is behind this company? There's a turn forthcoming on the horizon.
Yeah, I think firstly, you're going to look at crop prices, and I think we're starting to see a little bit of positive momentum there with China, getting back into the U.S. market and making a few soybean purchases. So some stability on the crop price front, that would be one. And then two is really having China back in the market more consistently, right? We need stability. We need predictability around their purchases. They kind of fell short on their phase 1 trade deal agreement during the first Trump administration. So we need to see them, consistently back in the market. And I think that will kind of give farmers confidence then to go out and start replacing some of this aged equipment.
Is there in fact concern that, again, the last Trump administration, the last time a deal was reached with China to buy more U.S. ag, China did not really follow through at the end of the day. Is there a belief that maybe this time could be different?
It's a good question, and I don't know. That's the million-dollar question, right? So I think ultimately this is why this is going to be a show-me story. And until China, delivers on some of their commitments and delivers consistently, farmers aren't going to go out and spend. So when we see that occur, I think that will lend more support to improvement in crop prices. And then I do think, you start to see farmers start to go out and replace some of those, aged equipment on their fields. But again, it's very much, I think we need to see it to believe it first.
On Sirius XM radio, I listen to the Ag channel. Yes, there is an Ag channel. It's like a farmer channel. And the farmers, I listen to these farmers, man, and they're saying exactly what Chris is saying, is their costs are high at the same time as crop prices are low, so they're just getting squeezed there. And it's really tough out there in farm country. So hopefully things turn around for our good friends, farmers out there. So that is tough. Chris Ciolino, Senior U.S. Machinery Analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research the next hour. Bloomberg Intelligence starts right now. The S&P 500 up 45 points at 0.6%. The NASDAQ up 160 points at 0.7%. So a solid move here today. Yields up slightly. 10-year Treasury yield up a couple of basis points, 4.01%. We did touch 3.99 earlier today, so maybe the mortgage rates can come down as well. That would be helpful to the real estate market. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube as well. Coming up, we're going to check in with Poonam Goyal. She's a senior U.S. retail analyst. She's going to give us a preview of kind of what we should expect from retail sales during this all-important holiday season. Again, she's a retail analyst, so that means Friday, while a lot of people are just chilling, she's going to malls and stores and checking traffic. That's what they do there. Coming up, we're also going to check in with Laura Martin. She is the bomb, one of the best media analysts on Wall Street. She's going to give us the latest on what's going to happen with Warner Brothers Discovery. Are they going to sell this thing? I mean, it's going to be a big deal when it does happen. It's got an enterprise value of $90 billion. So that's a big number, so we'll see when that trades. Jerry Kutzel, General Portfolio Manager at Fixed Income Group at TCW. Some of the smartest people on the street work at TCW out in LA. We'll get his thoughts on the fixed income market. So a lot of good stuff coming up in the next hour. Right now, let's kick it all off with Amy Morris and a Bloomberg Business Flash.
All right, thank you, Paul. Stocks are climbing as rising expectations for interest rate cuts are carrying traders' optimism right into the Thanksgiving break. We bring you markets. We check them for you all day long here at Bloomberg. The S&P 500 up 0.7%. NASDAQ up 0.75%. The Dow up 0.7%. Russell 2000 Index also up 0.75%. The 10-year Treasury yield at 4.01%. The 2-year yield at 3.48%. And looking at COMEX Gold now, it's up about 0.5%, hovering around 41.96. Applications for U.S. unemployment benefits fell last week to the lowest since mid-April, remaining relatively subdued amid economic uncertainty. Bloomberg's Mike McKee.
Well, no help for the we need to cut immediately crowd at the Federal Reserve. Jobless claims come in at 216,000 after a revised 222 the prior week, suggesting we're still in that low hire but very low fire environment. We're not seeing people being added to the unemployment rolls. In fact, they're going down.
Bloomberg's Mike McKee there, but continuing claims are edging up, and that's indication that the labor market stress isn't over yet. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Paul Sweeney and Christina Aquino.
All right, Amy Mars, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Amy was just reporting, we got a lot of green on the screen here, folks, with the markets up. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Tatiana Darie. Tatiana, what are you looking at?
I'm looking at a trio of tech stocks today, and we'll kick it off with NVIDIA, which is up about 2%, recovering, or 1.5 rather, recovering nicely from that sell-off yesterday. But the important news that crossed earlier today was that Chinese regulators have blocked ByteDance from using NVIDIA chips in new data centers in recent months. And that's important because this company bought more NVIDIA chips than any other Chinese company in 2025, the information reports. And it signals a tougher stance for China at the time when officials are still discussing whether to ease those restrictions that the CEO has really lobbied for. So this is not bothering the market today and now because we know NVIDIA has more demand than supply at this point, but it remains a lingering question for this stock longer term. What do we do when the world's most valuable company cannot access one of the largest markets out there?
Yeah, well, it seems like though the green on screen shows that market's not bothered by this today, right? Let's talk about green on screen. Speaking of, talk to us about Dell. What's going on there?
Dell Technology, the stock is up 5%. Your ticker is DELL, and they bring more positive news for the AI story. The company boosted its full year forecast for shipments of its AI servers. These servers are needed to support the current data center boom in the country. So it's a strong signal of demand for the AI story, particularly as this comes after just last month, Dell roughly doubled its growth estimates in sales and profit for the next 2 years. So very strong fundamentals there. On the cost side, they also bring good news in their operating margin, which has come at 12.4 period above estimates of 11.2. And the company certainly could use some good news at this point as it has suffered quite the blow in the latest tech rout. Its year-to-date gain now has been trimmed to about 14%. In October, it was as high as nearly 50.
Rich Go. All the wealthy people in the world, Bloomberg calculates their wealth. Nobody has a better analysis of personal wealth than Rich Go on Bloomberg. Michael Dell, number 9, $155.5 billion. It's been a good year for Mr. Dell's wealth, up $32 billion. Pretty solid, good for him. HPE, Hewlett Packard Enterprises.
Hewlett Packard, the shares are about flat now. They've given up those earlier gains from this morning. There's a little bit of mixed news coming from this company. Last night, it announced a cloud contract with the Defense Department, which is technically good news, but it's also announcing a sweeping restructuring plan to eliminate about 10% of its workforce globally as it's using AI to boost efficiency. And this is interesting because first, we talk a lot about the doubts with AI. Are companies seeing value, yes or no? But at the same time, we see people, or companies rather, cutting jobs, and the market is not taking this easily. The first reaction is always to see a stock decline, and then the stock recovers as we realize this is ultimately a margin profit booster. But at the same time, I think it speaks to the question: what do we do when our labor market will be heavily impacted by more AI?
I'm not buying it when people tell me, oh, it's not going to impact the labor. I think it's impacted big time negatively across many industries, if not all industries, this AI thing. That's just me. Maybe I'm just being cynical, but I just think about the skills I had coming out of school now. They can all be done by AI now. Tatiana Darie, thank you so much. Appreciate that. Tatiana Darie, she's a strategist for Markets Live. Joining us live here in our Bloomberg Interactive Brokers studio. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Again, just going back to that Rich Go function, it's a great function. Another way to look at wealth here is who's gained the most wealth this year. Well, that one goes to Larry Page, co-founder at Google, or the kids call it Alphabet. His net worth at $275 billion. That is up about $107 billion just this year. So a good year to own that Google stock. So anyway, there you go. Rich Go. Let's talk retail. Why not? Because people are going to be shopping between now and Christmas. Busiest time of year. We got Black Friday, Cyber Monday, all that kind of stuff. No time to sleep if you're a retail analyst like Poonam Goyal. She's the senior U.S. e-commerce and retail analyst for Bloomberg Intelligence. Poonam, what's the expectation for consumer spending here during this all-important holiday season? Will there be growth, any kind of decent growth? What do you see?
So there will be growth, but it won't be as robust as it was last year. It'll be about low single digits overall, with online outpacing that at mid-single digit growth. That's below last year's level, but consumers are still expected to go out and shop for the holiday season.
Yeah, well, Poonam, we wrote the story with the headline, "Skip the TV, buy the dog food." That's so depressing, though, isn't it? Is that what you're seeing as well on the street? Kind of people gravitating more towards essentials for this Black Friday shopping season rather than, things that are on their wish list?
I think that's part of the reason why the estimates are lower. You, in fact, yes, will have people shopping for essentials, especially things that they can stock up on and that they know will be on sale. But that doesn't mean that they're not buying gifts to put on their tree. They absolutely are. They're still going to be looking. If they need a TV, they're going to try to buy it this Black Friday because they know it'll be on sale. If they want to buy furniture, if they want to buy apparel, that's a big category that's on wish lists for people this year. Just, get a new wardrobe. And we think that there will be gifts under the tree. We think people will look for value retailers to find what they're looking for so they can stretch their dollars. That's what's key.
All right, if I go out to buy the G.I. Joe with the Kung Fu grip, am I going to find that on the shelf? How are inventories?
Inventories are okay. They're in stores. Clearly, retailers haven't piled inventory because tariffs had boosted the cost for them. So they have been slow to pile. They're clean largely across the board. But online, that's where you go buy what you're looking for. You can go online. You can go online tomorrow when stores are closed, in fact, and start shopping. The deals are already there. We are already seeing Black Friday-like deals available online and even in stores this week.
Yeah, it's interesting because I feel like I've been getting Black Friday emails like all week, basically, and actually since last week. But we did have kind of expectations for e-commerce growth to slow a little bit, right? 6.7% growth. That's still going to beat stores. But what does that tell you about some of the shifts in consumer habits? Are you kind of like seeing a bit more foot traffic kind of gaining ground over consumers' preference for online shopping, perhaps?
Yeah, I'd say, look, overall, spending is slowing and so is online, but that's a function of the economy rather than the shift in channel. I think people still prefer to shop online, but I will say we are seeing more people go back to stores, especially the younger shoppers. When I was at the mall last weekend at the release of Wicked, the mall was packed with teenagers. I mean, it was like they were having a party there. So we do expect a lot of kids to be in stores. It's now the trendy hangout spot, and they do drive sales too, especially for the retailers like Abercrombie & Fitch, Hollister, Gap, Old Navy. They do still shop there.
All right. We'll take your word for it. I'm not going anywhere near a mall, dude. Poonam Goyal, Senior U.S. Retail Analyst for Bloomberg Intelligence. She's one of the best. She'll be out there roaming the stores, the malls on Friday, seeing what consumers are doing. Let's get to what is going to be, when it happens, one of the bigger M&A trades in a long, long time. That is Warner Brothers Discovery. It's got an enterprise value of about $90 billion, just to give you a sense of magnitude. And there's 2 or 3 year bidders out there that are looking at this thing. And now Warner Brothers is set to ask bidders to submit a suite of offers, I think by December 1st or something like that. So let's get the latest on what's going on there. We turn to the absolute best on Wall Street. Laura Martin, she's a senior media analyst at Needham & Company. She's based out there in LA with all that craziness. She knows these companies, all these companies backwards and forwards. She knows the management teams well, the shareholders. She knows the whole deal. So, Laura, I guess the question just is one of timing, I guess, at this point. What do you think? How do you think this is going to play out?
Well, they said they want exactly what you said, revised bids by December 1st. They're looking for $30 a share with the hidden threat being, we'll spin into 2 pieces. It's not going to trade. In my opinion, it won't trade at $30 if it is 2 pieces. The whole problem, so it completely restructures Hollywood. If they do the deal, it restructures Hollywood. If they split into 2, it restructures Hollywood. I think the biggest risk is that if Netflix buys the studio, and as you know, Netflix has been a long advocate of not using the window called, theatrical window. I think that could be really bad. I think Hollywood is most worried about that they say they'll continue Warner Brothers' practice of releasing theatricals, but that's like $100 million of marketing for every release. So you can make a lot of streaming content with each marketing budget of a Hollywood, theatrically released film. So I think that might change Hollywood the most. Obviously, if Comcast bought the studio, they don't want the whole thing, they only want the studio. That would put together two huge studios, Warner Brothers and Universal, because Comcast owns Universal Studios. So that would basically shrink the Hollywood business by half. Like they would just lay off one whole staff and keep the best of each position within. So that would really restructure Hollywood also from an employee point of view, probably not from a, like theatrical window point of view. And then Larry Ellison, if he gets it, he wants the whole thing. And the issue is we have an unproven track record. We have a billionaire financing his son. The son's owned Paramount for 30 seconds, and he's unproven. And all he does is spend money on sports so far. That's his big innovation, is spend more money on sports rights and outbid other people. So now he'd be in charge of a $70 billion asset, or like you say, $90 billion if you include the debt. So that puts Hollywood in sort of even bigger risk from not immediately, but because we have a track record of somebody who has no proven ability to actually manage these types of assets.
Yeah, so Laura, as you mentioned, three very different proposals, very different bidders really for this company. Who do you think has the edge here?
My opinion, the edge is with Paramount, because my opinion is that the Washington, D.C. piece, the regulatory piece, is safest with Paramount because Donald Trump is a personal friend of Larry Ellison. They did that TikTok deal together. I think that there is an understanding that the regulatory agencies under the executive branch will not give Paramount a hard time getting this through. I think it'd be a very fast approval from Washington for Paramount to buy the whole thing. So from the point of view of Warner Brothers shareholders, from the point of view of DC regulatory, I think that is the best, most likely deal to close within a year.
So, Laura, how about if it is Paramount Skydance, they're going to need a big chunk of equity. And granted, Mr. Ellison has a lot of wealth, but how else would they finance the equity piece?
I mean, they're talking about the Middle East. I don't know how much America is going to like that, but they're talking about Middle East financiers, sovereign funds. As you know, for a long time, Paul, these studio assets are very glamorous. There are people that are willing to put money behind studio assets and studio buys. And Warner Brothers, has a lot of real estate, has a massive lot here in Hollywood. So you absolutely could get like a real estate bidder to maybe buy the land piece, and then Warner Brothers would sign a long-term lease. So there's creative financings that could come out of other parts of the world, in part because of the glamour and in part because of the actual physical assets that underlie a studio.
So, Laura, what do you think is a good value here for the combined co here? I guess factoring in synergies as well.
So the answer, I would say, this stock was trading at 12.
Yep.
Then Zaslav's deal, he got paid out at 17. So I would have said 20 was a good price for this company. We're at 27, and he says he wants to get to 30. So I think all of that is negotiating skills and creating an auction-ish, even though two only want the studio and only one wants the whole thing. So I think this is, I think they're overpaying for these assets, frankly.
Yep, exactly. Well, it happens often in this business. Laura Martin, thanks so much. Great Thanksgiving to you and your family. Laura Martin, she's a senior analyst out there, and she's in L.A., so she's right at ground zero for all things Hollywood. She knows all the people, and this is a big deal, folks. There's only a handful of big movie studios left in Hollywood, and you might be putting two of them together here. And what that means for the greater Los Angeles community, unfortunately, is going to be lost jobs.
Yeah, that's true.
And that's going to be really challenging.
All of the consolidation, right?
Yep.
Never usually means good things for the employees of these studios.
No, but thankfully the shareholders will make out, including the CEO, Mr. Zaslav, who did renegotiate his contract just a couple of weeks ago, so he can make sure he gets paid no matter what. So good for him. But we'll see. And again, bids are due December 1st. I think they would like to have a deal announced, before Christmas, certainly before year end, that kind of thing. Wrap it up and make it nice and tight. And then let the regulators deal with it. And as Laura Martin was suggesting, from a regulatory perspective, the one that might have the easiest path to approval would be the Paramount Skydance deal as opposed to Comcast or Netflix, both of whom are not necessarily friends of the administration. Got to take that into account these days. S&P up 50 points. That's 0.75%. That's pretty much the high of the day intraday. The Nasdaq's up about 0.8%. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:22 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And we check markets for you all day long here at Bloomberg. Green across the screen. The S&P 500 up 0.8%. NASDAQ up 0.9%. And the Dow up 0.75%. The Russell 2000 Index up 0.8%. The 10-year Treasury yield at 4.01%. The 2-year yield at 3.49%. COMEX gold up about 0.5%, now around $41.98 per ounce. And let's check out Brent crude oil. That is down 0.1%, trading at $62.42 a barrel. NYMEX crude oil is up 0.1%, trading at $58.03 a barrel. Despite elevated borrowing costs, mortgage applications to buy a home surged last week to its highest level since early 2023. The Mortgage Bankers Association data shows the contract rate for a 30-year fixed mortgage rate ticked up to a one-month high. A sustained surge in purchase activity is always welcome in a housing market which has been struggling to gain momentum, but these weekly figures tend to be more volatile around the holidays. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Christina Aquino and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. All right, Christine, there was a time not long ago when like the last person you want to talk to at a cocktail party was a fixed income person. I mean, they had no coupon for you, very pedestrian returns. That is not the case anymore. These people are killing it. They got real coupon for you out there across this, the spectrum. Total returns this year, mid-high single digits. I mean, these guys are doing all right these days. One of them is Jerry Kudzil, generalist portfolio manager, fixed income at TCW. He's out there in LA with the rest of that crowd. Jerry, talk to us about just where you guys are seeing opportunity in fixed income, and after a year so far that's been very, very good for investors.
Yeah, Paul, thanks for having me. Totally agree. I mean, you finally have, bonds doing what bonds should do. They're a ballast in portfolio. You mentioned it. You can finally get some income. There's a lot to choose from in the bond world. And I think if you look at everything from the total return category and ag category, which is, up 7-8%. You have investment grade credit up 7.5%, high yield up 7.5%. Bonds are finally, they're back a little bit. They give you a coupon. There's a little bit of total return, and it's actually performing and doing well. And actually, if you think about where we sit today with yields, even though we expect the Fed to move rates lower over the course of the next 6 to 9 months here, you should continue to be able to generate income in a bond portfolio, and that's a good outlook for fixed income.
Now, Jerry, we've been talking a lot about 60-40 portfolios. Is that dead? Is that not dead? Etc. Looks like this year definitely alive and kicking. But, what are your thoughts now recently about the role of bonds as a diversifier? Are they kind of fulfilling that role perhaps more solidly this year than in previous years?
The answer to your question is 60-40 is not dead. The narratives change all the times. And, when you approach the zero bound, as we did, well, your asymmetry looks really poor, and your return prospects are really informed. Your total return prospects in a lot of categories are informed by your starting price, and your starting yield in bond portfolios, it really informs your kind of prospective return that you're going to get. And as you look at the market, you look at bond portfolios that you're constructing with 5, 6, 7% yields, that's a pretty good indicator of what your forward return should be. And that's what you should expect from your bond portfolio. You should be able to generate income depending upon your risk tolerance of 5, 6, or 7%. And if you could add a little bit of below investment grade or a little bit of exposure in your portfolios, you can get 6 or 7% returns. And that's gonna dovetail and really pair nicely with an equity portfolio that might have some volatility given where valuations are today. So it's not without risk in the market, but we would say, yeah, for sure, bonds can add to a portfolio, be a nice complement to equities, and 60-40 should work.
All right, here, Jerry, I can look at a 2-year Treasury, get 3.5%. That's not a bad way to make a living. Should I be taking credit risk above and beyond that?
It's not a bad way to make a living. We think that the Fed funds rate actually will be moving lower over the course of the next year. We think the Fed will continue to cut rates in December. And as you think about the debate around Fed share and what that'll look like, most likely you'll move into 2026 with a bit of a dovish Fed. And so base case is you'll still have a nice tailwind from a movement toward a more neutral policy. Now, whether or not you should be taking credit risk, given where credit spreads are at all-time tights, there are some accidents kind of peaking up a little bit, cockroaches kind of creeping into the marketplace. What we would say is you shouldn't get too aggressive in your bond portfolio. There's ways to add income in portfolios that we think is a bit more. There's a way to optimize that when you look at securitized parts of the marketplace. So we wouldn't necessarily lean into corporate credit in a material way at this point in time, although we are finding pockets of opportunity. But what we would say is there's definitely a lot of ways to enhance your income in portfolios, and securitized appears to be the way to do that today.
All right, Jerry, thanks so much for joining us. Appreciate it. Jerry Kudzel, Generalist Portfolio Manager in Fixed Income Group at TCW. Some really smart folks there. When people ask me to describe TCW, I do it this way. Button down. These people, equities, fixed income, just button down analysis, and they're very clear in their portfolios, very clear in communicating their portfolios and their strategies. So hats off to those folks out there. In L.A., they wear suits and ties every day, even in L.A. That's how buttoned up they are. So I don't know what's going on.
That's impressive in and of itself.
Yeah, they're solid dudes. Lots of earnings out. One of them is Petco. Some concerns out there. Deanna Rossetto-Pena, she's a consumer staples analyst at Bloomberg Intelligence. Deanna, talk to us about Petco. What did you learn with their earnings, and what's their strategy going forward?
Yes, so they were pretty in line with consensus in terms of phase two. EBITDA was very strong. It grew more than 100 basis points, EBITDA margin. So, phase two of their strategy of creating profitable sales growth seems to be on track. Now, the next phase, which is actually getting comparable sales to grow, that's probably going to be an inflection that we'll probably see in the second half of 2026.
Yeah, so Deanna, very interesting that Petco actually managed to expand their margins, especially in an environment where costs are rising left and right. Talk to us about what sort of strategies they use to be able to achieve that. Is that something that they can sustain moving forward?
Yes, so basically they try to be a little bit smarter with their inventory. They're, displaying better margin items on the shelves. They're relying more on services. They're trying to do a little bit more on the grooming side and on the vet side that generates a lot of income and a lot of profitability for them. So, obviously cost, store closings also helped in the quarter. So that is how they have managed to grow more than 100 basis points margins in the past 3 quarters.
What is the competitive landscape of the pet food business?
So they said that it's stabilized. In the past few quarters, we have seen the likes of Chewy and Petco say that consumers remain a little bit more conservative with their spending, particularly on discretionary items. It seems that has stabilized, and family formation or pet family formation has stabilized as well. We actually think that by 2026, we're probably going to see more pets being adopted, probably at the same pace as historicals, which is usually in the low to mid-single digits.
Yeah, well, I'm certainly not in a market for a new pet at the moment. I don't think my cat would allow for that. But Diana, why don't you talk to us a little bit more about what you mentioned earlier, right? Kind of like diversifying the services they offer. They're focusing on grooming as well. Are you seeing signs that this is translating into sustained traffic, especially into their stores?
Yes, absolutely. We actually run a survey we have been running it for the past 3 years. And actually this year was the first time that we saw that people were a little bit more willing to spend more on discretionary items compared to previous 2 years. So we actually saw that coming earlier this year than, before everybody was saying that was happening. So people seem to be a little bit more, while they're being very cautious in their spending, they're actually willing to, groom and take their pets to the vet, for sure.
All right, so where in your retail space, where do you see some of the best opportunities? When you're talking to clients, what do they want to talk to you about in your names of coverage? Because you cover a lot of the consumer products and packaged goods companies and things like that.
Yes, so on the pet side, definitely there seems to be a little bit more appetite for, those companies that seem to be on the upswing. We have Chewy that they have expanded their their revenue channels beyond merchandise, and they're doing more ads and other, revenues that are going to increase profitability on the long term. You have Petco that is probably going to start growing in the second half of next year. So by that time, it's probably going to be a good name that is probably going to be in the business for a while.
Yeah, well, a lot of disruptors in the space for sure. But, as far as kind of Petco is concerned, it seems like no dividends really, no buybacks are on the table at the moment. Is that something that could turn away investors? Maybe something that could push them towards some of these emerging competitors in the space?
Yes, so that is something that they mentioned last night in the call. Obviously, they did not specify when they're going to start returning to shareholders. They're focusing on the strategy, getting the right inventory on the shelf, as well as getting profitability up there, and getting leverage down to like less than 3 times EBITDA. So once that happens, they might be a little bit more willing to see where that goes. It's something that the new CEO is thinking about, but not necessarily a timeline just yet. So yeah, shareholders might not necessarily get a return similar to other packaged food or other consumer staple companies, but it seems that this is more of like an investment opportunity in terms of the strategy that they're going through.
All right, Diana, thank you so much. We appreciate that. Diana Rosero Peña, consumer staples analyst, Bloomberg Intelligence, joining us there. Red headline crossing the Bloomberg terminal. Blackstone is said to near $4 billion deal for McLean Power Systems. So we'll have more reporting on that going forward here. Coming up, we're going to check in with Matt Britton. He's the CEO of market research firm Suzy. Get his thoughts on holiday shopping trends, how AI may factor in to your shopping this year. Why not? It factors into everything else, it seems. So maybe you can make a shopping list for you and maybe even go out there and do it for you. I don't know how that all works, but we'll break it down. S&P 500 up 55 points, 0.8%, holding on to those gains, as is the NASDAQ up 215 points. That's 0.9%. Yield space right at 4% for your 10-year Treasury yield. That seems to be a little bit of a holding spot. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. Sources tell Bloomberg that Blackstone is nearing an acquisition of McLean Power Systems, a deal that could value the utility parts maker at more than $4 billion. The private equity firm may announce a purchase of McLean from Centerbridge Partners as soon as next week. Shares of Blackstone now 1.5% higher. Campbell's has put an executive on leave and defended its ingredients after a lawsuit alleged that employee criticized its products and made racist remarks. A lawsuit filed by Robert Garza claims that Martin Bally, a vice president of information technology at Campbell's, called the company's products highly processed food for poor people and referred to Indian coworkers as idiots. Campbell's released a statement saying the alleged comments are unacceptable, and they released a fact sheet defending the quality of its ingredients. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.9%. NASDAQ now up more than 1%. The Dow up 0.8%. The 10-year Treasury yield at 4%. The 2-year yield at 3.49%. Deere & Company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in the U.S. farm economy as uncertainty continues to swirl over the impact of tariffs and trade deals. Shares of Deere are more than 5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Now back to Bloomberg Intelligence with Christina Aquino and Paul Sweeney.
Amy Morris, thank you so much. We appreciate that. Christina Aquino, she's sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, so check us out there. I tell you, just in the last year or two, this AI has crept into our vocabulary. I think before it was just big data, and then before that it was just data. I don't know, but it's just everywhere. And I think I'm being told it's also going to be part of our shopping experience as well as we head into the big shopping part of the year. I have no idea how that's going to work. Matt Britton, he does. He's the CEO of market research firm Suzy, and he is the author of a book entitled Generation AI, Why Generation Alpha and the Age of AI Will Change Everything. Okay, that kind of gets at you. Matt, thanks so much for joining us here. AI, shopping, go. What's going to happen?
Well, you know, the internet looks like it's about to have a new front door. For the last 2 decades, if we wanted to find out anything, whether it was for research or we were booking travel or we wanted to buy something, you know, the word Google has become a verb in our culture. But that is starting to shift. In fact, Google reported a 9% year-over-year decline in their classic link search in Q3 of 2025. And at the same time, ChatGPT saw 1.8 billion weekly queries as of October 2025, and over 40% of those queries are search-like in nature. So consumers are sort of acting with their fingers, so to speak, in terms of the sites that they're going to, and they're going to these large language models. Now, it should be stated that Google also has its own large language model called Gemini, which released an incredible version, Gemini 3, just this week. So I'm not saying that Google itself is in trouble, but the notion of going to a traditional search engine to find things at the beginning of your shopping journey, I don't think will ever look the same way again.
Yeah, Matt, I know exactly what you mean, because just yesterday I was searching in my ChatGPT for more affordable dupes of this really expensive skincare product that I'm in the market for. So yes, exactly what you're talking about. But, you know, for mine and Paul's generations, this is something that we're still kind of wrapping our heads around, right? But you were talking about Generation Alpha as the generation that's basically just this is innately something that they do. So talk to us about that sort of generational shift. How is that going to change the landscape of, I guess, kind of like consumer activity now that we do have this generation this is just what they do, use AI for everything?
Absolutely. So I've spent my career, you know, I started my career in the year 2000, and back then the new consumer was the millennial generation, which was the first generation to grow up with the internet and household. And then 10 to 15 years later, the focus was on Gen Z, which of course is now known as the social media and iPhone generation, meaning that they never knew a world without social media and the iPhone. Gen Alpha, currently age 0 to 15 years old, is going to be known as the AI generation. They are never going to know a world without AI, without a technology that you can interact with the same way that you interact with other people. So for them, if you think about it, they never will live through a world where you went to Google. right? And one day they may look at traditional search engines the way you and I look at rotary landlines, right? And for them, it's going to be just de facto behavior to go to a ChatGPT to do research. And what's starting to happen is, whether it's Perplexity or ChatGPT, they are all now integrating commerce functionality into their platforms, where now you can actually buy on these platforms as well.
So are brands ready for this? And I think I know the answer there.
Well, they're not, and they're trying to figure it out. And the reality is, it's just moving so fast.
Yeah.
You know, it's really hard to understand how to behave when you have a new large language model coming out each week. For years, these brands were focused on search engine optimization. How does your brand come up first when someone's searching in your category? Now the big term is GEO, which is essentially optimization for AI models. And brands right now are clamoring to be the first brand that pops up if someone searches for a luxury handbag under $300 for a teenage girl, right? Every brand wants to be the first brand that ChatGPT recommends. And right now, frankly, it's kind of a black box and a mystery of how to get there. But it's going to be, you know, companies that figure that out are going to suddenly find themselves in a very fortunate situation. It's going to create new winners and new losers very quickly.
Yeah, well, Matt, just kind of shifting your convo away a little bit from the AI factor here, and just kind of in general, kind of some of the emerging trends in shopping at the moment. You mentioned live shopping is something that is becoming more of a thing. Certainly for younger generations, that's kind of how they shop now. They shop on TikTok with creators kind of going live and telling them, buy this product. It's kind of like the Home Shopping Network, but for this for the TikTok generation. Exactly.
It's the new QVC. I mean,
exactly.
You know,
so tell us more about that.
So this year, for the first time ever, the average age of a first-time mom in the U.S. is Gen Z, which means the average age of a mom who's head of their household and buying the Tide detergent and, you know, Gillette shaving cream for their home grew up looking at their phone. And when they are looking at their phone, they are not looking at content from traditional media networks, but instead content from creators and influencers, people who have built large followings on these platforms through really compelling social media content. For years, these creators were kind of limited to earning money through awareness and impressions, but now they are moving further down the funnel, and they are engaging in what you adeptly talked about, is live shopping, whether it's on TikTok or an emerging platform called Whatnot, where they can actually use their audience, use their credibility and authenticity in the space to actually sell products. In some instances, it's products that they actually have an equity stake in, or they build on their own. In other instances, they're simply an agent earning commission on products that they sell. But I would expect to see more and more of this over time.
Who is, or what is the alpha buyer?
Well, the alpha buyer is Gen Alpha, and the alpha buyer is really skipping the funnel entirely. You know, they are essentially going down social video. They're focusing on creators' trust. They want instant checkout. You know, they have very low tolerance for any friction in the buying process. So it's a completely new set of expectations that businesses really need to build around.
Yeah, and, you know, I guess when you say that they're kind of skipping the funnel, exactly right. So this could potentially transform how people shop. Like, we may not need websites anymore. People can just go on TikTok or whichever social media. Like,
absolutely.
Are you seeing companies kind of starting to adapt to this?
Think about what's been in the last 10 years. It's like you may hear about something on TV, or maybe you saw an ad on Facebook or Instagram, and then maybe you go on Google and do more research, and you go to Amazon and purchase it. Right, so you're going to a variety of different places, a variety of different media channels, but now you can do your research and you can interact and you can, over time, purchase on maybe just one platform, right? And that's going to change the entire funnel, and it's going to create, you know, the risk there is that you're going to have fewer and fewer companies control more and more of the market, which we've obviously seen with the Mag 7 over time. You know, obviously OpenAI is a new entrant in the space. You have other entrants like Claude, which is a large language model from Anthropic, and of course Perplexity, as I mentioned. So there are some new players, but it's looking more and more like big tech is going to play a huge role in this shift. What does Amazon do? You know, I think that's one of the questions I have, because if you can buy over ChatGPT where it has context, what's going to happen with Amazon?
Matt, fascinating discussion. We'll really appreciate getting a few minutes of your time. Matt Britton, he's the CEO of market research firm Suzy and the author of the book Generation AI, Why Generation Alpha and the Age of AI Will Change Everything. And I think that, just from my limited perspective, that title says a lot, and I don't doubt it. I don't doubt it. And it kind of goes back to Gene Munster, one of the smartest tech analysts out there, kind of said, hey, put AI in the same category as electricity. I said, wow. And that's
that
way
life-changing?
above the importance of the internet. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Christine Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're streaming live on YouTube as well. All right, I'll admit it. On the doors for Teslas, sometimes I have a problem, both from accessing it from the outside, which I think you just push it a little bit, then it pops out. I don't know. The getting out getting the door handle on getting out, that's a tough one for me.
Yeah.
Because I keep opening the window.
Yeah.
Apparently there's a button.
There are two buttons, and they're right next to each other, and they look kind of similar.
All right, it's
very confusing.
Yeah, it's not an old dude thing. Apparently it's a thing. The electric door Tesla made famous is now in danger in other cars. That's the title of a Bloomberg Big Take story here. And you know how much we love the Big Take stories here because they're really interesting topics. Deeply researched, lots of resources go behind these stories, some cool graphics that help out people like me. Craig Trudell, Global Autos Editor at Bloomberg News. He's based in London. Craig, talk to us about what's going on with some of these electric doors on some of these cars, and I guess most notably got some coverage with Tesla.
Yeah, I think Tesla absolutely has popularized this. It's not necessarily the case that they're the first and only, and that's really the sort of big takeaway that you get from today's big take is that they really went in this direction. The customer wasn't really asking for it. I think there's a great quote in the story about this idea that everybody knew how to operate doors before this, and now it is very confusing. We've sort of complicated the an aspect that didn't need to be complicated. But I think what's really sort of telling in today's story is just the degree of complaints just in the last couple of years that we've seen, not only from Tesla consumers, but from all the manufacturers that have sort of copied Tesla's approach to these door designs, where rather than just a sort of more simple latch that we're all used to using from over many years, you now have this sort of complicated approach of trying to get flush handles to be usable, and also this mix of buttons and electrically powered latches from the inside.
Now, Craig, Paul and I were just talking about how it can potentially be confusing, maybe even annoying, but the nature of these complaints suggests there's something more here that could be potentially threatening to people's safety. Talk to us about that.
Yeah, I mean, I think to put it simply, I think this is particularly concerning if you're in an electric vehicle, one, and two, if that electric vehicle has just crashed, right? Because you're sitting on top of a great big high voltage battery, and while it is not necessarily the case that electric vehicles are catching fire left and right, if you are in a crash, in a serious collision, there is a risk of fire. And if your low voltage battery that powers your doors has gone out and you don't have power to your car and are not familiar with how to get out, it can be really dangerous. And that has been something that we've been focused on for months now, is better understanding how people in Teslas in particular have been unable to get out of their vehicle after a crash. And in some cases, there have been fatalities. In other cases, there have been really harrowing stories of people who have just barely survived these incidents.
What has been the response of some of these auto manufacturers?
It's interesting because Tesla's a very sort of adversarial company with the press. I think in the case of this story, we spoke with Robin Denholm, the chair of the company, when a few weeks back in the lead up to this vote on Elon Musk's pay package, and she sort of acknowledged the reporting that Bloomberg has done on this topic, and talked about ways in which engineers at the company are trying to make their doors more intuitive and just safer to use. And so I do think that we can expect to see some changes at Tesla. We've already seen a change at Ford that's been related to a recall in the U.S. And this has become a global story where China is looking at potentially banning flush door handles, and Europe is taking a closer look at this issue as well.
So, Greg, how quickly can we expect regulators to respond to these concerns?
Yeah, I think in the case of NHTSA, you saw, shortly after our initial story on this topic, it just happened to coincide with NHTSA opening a defect investigation into Tesla Model Ys, and in the weeks since that took place, we've seen sort of some correspondence between the agency and Tesla that may suggest that that defect investigation could expand beyond just the Model Y and a select few model years of that vehicle. But in China, I think it's a particularly interesting story where the potential ban that I mentioned is something where the regulator in China solicited feedback from manufacturers, and we do expect to hear in the relatively near future that that policy is moving ahead, and that in the next couple of years you will no longer be able to make your vehicle doors in this way that has been criticized, in part because a major Tesla competitor, Xiaomi, has had two very high-profile fatal incidents involving these doors.
All right, Craig, thanks so much. Appreciate that. Craig Trudell, Global Autos Editor for Bloomberg News, with a big take story. The electric door Tesla made famous is now a danger in other cars. So you can read this story on the Bloomberg terminal and at Bloomberg.com/big take. I tell you, at my age, you have to work. You have to make an effort to stay on top of technology. You really do. It's just not a lot of it's not a part of your daily life, your daily workflow. Yeah. So you really have to make an effort. For me, the one right now is AI. You really got to stay on top of it and engage it and see how the car door thing here. I don't really care. I mean, they can do whatever they want with their car doors. My car, I just touched the handle and it unlocks. So I think that's pretty cool.
Well, yeah, that's pretty cool tech.
All right, for our listeners in the U.S., reminder, you can listen to us via satellite radio and Sirius XM channel 121. Access the world's only global audio business network. Coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Happy Thanksgiving, everyone. All right.
This is CBS News on the Hour, sponsored by Steel.
I'm Jennifer Kuiper. The Georgia prosecutor who is now handling the Georgia election interference case against President Trump and others says he's not going to pursue the case. CBS's Jake Rosen says Pete Skandalakis stepped in to replace Fulton County District Attorney Fonnie Willis after she was disqualified from the case.
He was the head of the Georgia Prosecutors Association. He said he was willing to do it after he couldn't find anybody else to take on this case. And in a memo today, they're saying Skandalakis, this new prosecutor, cites a lack of time and resources to take on this case, and also cites that President Trump, because he's currently sitting in the White House, could not actually be put on trial until at least 2029.
The upper Midwest is getting the brunt of winter weather as millions are under winter storm warnings just as people travel for the Thanksgiving holiday. CBS News Minnesota reporter Jonah Kaplan.
I-94, especially as you get into the northwestern part of the state up towards Fargo, North Dakota. Also, you see so many jackknife trucks, about 25 to 30 of those, we understand from authorities. And there was even a stretch of about 60 miles of I-94 that was closed.
The FAA says Chicago's O'Hare Airport is experiencing ground delays, averaging 68 minutes due to weather. A fire in Hong Kong across 7 high-rise apartment buildings kills over a dozen people, with hundreds potentially missing. BBC's Sean Ewan is there.
It's a huge apartment complex. So we're looking at about 2,000 apartments with about 4,600 residents. And we don't know how many are still trapped there. And thousands have been relocated to adjacent areas.
A Kremlin spokesperson has watered down expectations that a peace deal is close to being struck to end the nearly 4-long-year invasion of Ukraine. Helena Yanchenko, a member of Ukrainian parliament, says the negotiators are leaving Ukraine out of the process.
Ukraine is a democratic country, so you can't force politicians to sign any document if it is not accepted by Ukrainian society. Otherwise, there will be revolutions. Otherwise, there will be a huge, consequences for all negotiators who are taking place.
AI and your job.
An MIT study found that artificial intelligence can already replace 11.7% of the U.S. workforce. According to a labor simulation tool called the Iceberg Index, AI can perform many of the same skills, saving as much as $1.2 trillion in wages. The researchers say the index isn't designed to predict exactly when or where jobs will be lost, but instead meant to give a snapshot of what today's AI systems can already do. Stacey Lynn, CBS News.
Just in time for the holidays, there's a new survey about house guests.
2,000 people were asked how long they're happy to host house guests. The consensus was 6 days. For parents, it's 8 days. For in-laws, it's only 5.
Can I refill your eggnog for you? Get you something to eat?
Drive you out to the middle of nowhere, leave you for dead?
No, I'm doing just fine, Clark. 33% of hosts say when they've had enough of their guests, they drop hints that it's time to leave. 22% say they outright tell their guests to get out. Almost half of those polled say they want to be the house everyone comes to for the holidays. Michael Wallace, CBS News.
A Texas landlord has a case before the U.S. Supreme Court challenging the U.S. Postal Service's exemption from lawsuits over lost or mishandled mail. The landlord alleges her mail was deliberately withheld for 2 years. The Postal Service argues that allowing such lawsuits could lead to a flood of litigation. The High Court's decision could redefine the Postal Service's liability under the Federal Tort Claims Act. Jennifer Kuiper, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
And we slide into the holiday with consumer confidence down by the most in 7 months. Welcome to the Wednesday edition, Thanksgiving Eve. With the latest reading from the Conference Board darkening the picture here a little bit when it comes to the consumer, dialing back spending in a reading on retail sales. We're going to talk about it this hour with Stuart Paul at Bloomberg Economics. And we'll consider the impact on the markets from oil to Bitcoin when we sit down in studio with Mike McGlone from Bloomberg Intelligence. He's with us in the Capitol today. And as President Trump sends his envoy Steve Witkoff to Russia to talk peace in Ukraine, there are new questions about Witkoff's relationship with Moscow. We'll unpack this later this hour with our political panel. And it's all after a look at Wall Street. Let's get to the Wednesday trade right now with Amy Morris here in the nation's capital. Amy, how the market's doing?
Joe, it is green across the screen. Stocks still climbing. Rising expectations for interest rate cuts are carrying traders' optimism right into this Thanksgiving break. We check markets for you all day long here at Bloomberg. S&P 500 up 0.9%. NASDAQ up right at 1%. And the Dow up 0.9%. The 10-year Treasury yield at 4%. The 2-year yield at 3.48%. ByteDance bought more NVIDIA chips than any other Chinese company in 2025. But Chinese regulators blocked it from using NVIDIA chips in new data centers. The Chinese government's goal is to build a fundamentally different AI ecosystem that can withstand future U.S. tech embargoes and could be widely adopted by other countries. Shares of NVIDIA now about 1.5% higher. Applications for U.S. unemployment benefits fell last week to the lowest since mid-April, but continuing claims edged up a bit. That indicates that labor market stress isn't over yet. Bloomberg's Mike McKee.
On a continuing claims basis, 1,960,000 jobless claims, still showing a reasonably strong labor market, if not for getting jobs, at least for not losing them.
Bloomberg's Mike McKee. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, many thanks. Amy Morris spending the day with us here on Balance of Power, has been all week, and great to have Amy Morris with the markets. We'll do that again in about 15 minutes to keep the beat on Wall Street here. Probably light volume through the day, but the vibes are good, and we like that after a lot of volatility lately as we keep an eye on an emptying Washington. It's a ghost town. I think producer James and I might be the only ones here, although we did bump into Mike McGlone. He's coming on the program in just a moment. What else do you need? Maybe a little turkey. Thanks for being with us here on Bloomberg Radio. We're streaming live on YouTube right now. Search Bloomberg Business News Live. Unless you have YouTube TV, if you're cool enough, you can just watch us there. Dial up Bloomberg Originals. And if you're already on the road to Grandma's, your Sirius XM channel 121 will help you get home. The president's at Mar-a-Lago. When I say this town is empty, there's no one around. Lawmakers have been gone for days. J.D. Vance is going to Kentucky today, meeting soldiers at Fort Campbell. Is going to deliver some remarks to the troops here. So it gives us an opportunity to zero in on a couple of important stories, beginning with what we just told you about, consumer confidence, and what that's doing, the state of the economy as we head to the close of the year. Stocks may be up, but boy, it's been a bumpy road the last couple of sessions here with doubts about AI, doubts about interest rates, doubts about tariffs, doubts about crypto. The oil forecast is fascinating to me here as we go into the weekend. What are we at? AAA right now. I'm just checking the average for a gallon of gas. $3.04, depending on where you are. I think I was in the 270s or something like that when I tanked up in Virginia last weekend. Barrel of oil, though, is just barely over $58. And if you listen to Mike McGlone, it could be going a lot lower from here. That's where we start our program with the senior commodity strategist at Bloomberg Intelligence. What a treat to have you in the nation's capital.
Thanks for having me, Joe. I'm impressed. You did all that without a teleprompter. That's impressive.
There's no prompters around here. We don't need no stinking prompters. This is a gift to the consumer, I guess. If we're in a bad mood, at least we can tank up for a little bit less.
What's shocking part about that bad mood is energy prices, certainly gasoline prices, have been declining. That's usually a major thing for mood.
Yes.
And the stock market's going up. Those have been two major issues. Consumer sentiment should be lifted.
Right.
But the bottom line for me is where it's going. We've been bumping on that national average gasoline price for about $3 for years now, and almost always drops towards $2. And the key thing is what stops it. Now, my base case for crude oils, it still goes to 40. That's not profound. It's for the last 20 years, it's bottomed there, and we have a glut. The problem is it's consensus. It still goes there. But one of the key things that's pressured gasoline prices to get below 3 and down to 2, almost every single time we've done it, certainly in the great financial crisis in 2014 or so, the stock market has to back up a little bit, typically. And right now it's very expensive. But the key thing that's leading potentially everything is Bitcoin, unfortunately.
Yeah, wow. And we're going to get to Bitcoin in a moment here. I just was taken by the Goldman Sachs forecast, $52 a barrel in 2026. We saw $57, I think, just yesterday. How does that jive with your forecast?
I'm with it. The problem is it's all consensus. I started making the forecast for $40 a barrel in 2022.
Way before the crowd.
Well, partly because just knowing the trends and how it happens, and just look at example what's changed since then. More than 50% of vehicle sales in China now are EVs, and that's where the demand pools on the world. So the world's shifted. We bring on more with less every day. It's a wonderful thing about technology, but it's the key thing is it's deflationary. So I still think we're going to bottom around 40. That's what we've done for many times. The low for this year is 55. That's about the U.S. break-even cost based on estimates from Bloomberg New Energy Finance. So typically you have to get below that break-even cost to offset these excess.
Does that mean ExxonMobil's losing money below that level? Or?
At some point, typically, yes. And then they find other ways. But typically what they do is bring on more supply. I mean, that's what farmers do. And then I look at the upside. Maybe we get a spike towards 70. I think most traders are just hoping they get some kind of reason to get a spike there. Typically it's short-term so they can sell.
You know, it's an easy headline when we write about Russia, the war in Ukraine, and so forth, that the oil market's keying off of this. Is there enough oil at hand for that to actually move prices?
Well, that's a key thing. We jump on things that don't really curtail supply, like all the hostilities in the Middle East. They don't really hurt supply. Russia, Ukraine actually increased it. It initially pumped up prices, which brought on more. So I don't know what it's going to take. God help us if something goes nuclear. We wake up and hear about fallout. That would boost all commodities. But right now, I don't see it. The key thing, the bottom line is if you're bullish crude oil or things like copper, highly economically sensitive commodities, number one prerequisite, you have to hope the U.S. stock market goes up. But there's a lot of indications that next year might be the third down year since 2008.
In stocks?
In stocks.
Yeah?
It's all kind of leading that way.
Can we start talking to Mike McGlone about the stock market as well? Are you doing forecasts on stocks?
Well, you can't help it. It's a key thing. When you look at these kind of commodities, particularly the ones that are very sensitive to the stock market. So here's a key fact. Crude oil is down about 20% in the year. And the year that the S&P 500 is up almost 20%. So just imagine if the S&P 500 drops 5, 10, 20%. That's a tilt towards deflation. And it typically is unfortunate. We're so correlated now. The stock market's so expensive. In my view, as the answers have changed, you can't really talk about a lot of these commodities without mentioning your view on the stock market.
Boy, really interesting the way this ties together. And then you add crypto to complete the picture here. This has been remarkable, watching Bitcoin specifically fall out of bed. I guess Ether has its own issues here, but this is a broken chart. How is it another crypto winter? Where do you go from here?
I think so. So I think we started a bear market in crypto. It's classic signs of a peak. What happened in 2024 is classic peak sign. First, we had the halving, the ETFs launched, and then Mr. Trump switched from antagonist to zealot. And that helped pump up the market, but we put in pretty specific peaks. Massive pile on NTS to performance. And look what's changed since last year. This time last year, we were bumping around 100,000 Bitcoin. Now we're around 87. But the whole space has shifted over to acknowledging that the Trump administration is very highly involved. I mean, prices going up. If you invest in this space, you're helping Trump administration officials. That's just a fact based on what's been happening. A lot of the OGs, the tech geeks who were from the beginning, liked the fact that cryptos were away from the system. And now they're dependent on it. So it's a key shift. And then key thing, the bottom line for me is unlimited supply. You mentioned Ether, Ethereum. There's now 27 million cryptos listed on coinmarketcap.com. Wow. And the fact is, in 2009, there was one. So when people say Bitcoin is unlimited supply, I like to say, well, not really. Precious metals, there's only 4.
Okay, so what do you make of the sort of narrative now that ETFs broke Bitcoin, that the institutional aspect that the market was longing for was its biggest curse?
Classic signs of a peak. So we launched, we launched a Bloomberg Galaxy Crypto Index in 2019. And the goal was to get to widely disseminated, tracked ETFs, tracking an index and stuff like this in cryptos. We got that. It's not tracking that index, but we got that. So case closed. To me, the next key thing to look forward to is we have to purge some of these millions of cryptos that track nothing and are worth billions of dollars, get those flushed out, and then we can come to a bottom. So that's my base case right now. The key thing is we're so much more correlated and attached to the stock market now. To me, it might bring down the entire system. So I'm really afraid Bitcoin might lead to a Grinch stealing Christmas.
So this is my question here, because the huge sell-off we saw in stocks last week was blamed, at least the real shift in sentiment, on what was happening in the crypto market. Bitcoin led stocks lower. Again, that was not supposed to be the way this decentralized currency or what commodity or whatever you want to call it was supposed to work. If that's the case, how are you factoring in the impact on the stock market, or is that partly why you have a down year in your forecast? It stems from crypto.
Exactly. The key ratio I love watching is the Bitcoin to gold cross. The ounces of gold per 1 Bitcoin has collapsed. It's been a great leading indicator. Right now it's about 21. When Trump got elected, it was about 40. So that's broken down. But the fact in space is it's all tilted downward. I don't know what stops it. And the key thing I like to point out is you have to figure out, okay, has it bottomed? The day that the Fed switched back the expectations for a full cut in December was the day that Bitcoin reached 80 on last Friday. So look at that trend. And so I look at it as you have to watch it. And here's the bottom line is typically Bitcoin needs a rising stock market and low volatility to go up. It's almost been coordinated, but now 120-day volatility on the S&P 500 is the lowest if it's end of the year basis since 2017. So buried stock market volatility means there's only room for it to go up in next year.
So it sounds like you're short Bitcoin. Your gold call was a big one. We're at 41.63. It's up $23 an ounce right now. Is this as high as we're going?
That's the key thing. It was nice to get that one right, but to be honest, Joe, I had to take the pain. I started think it was going above 2,000. Started in 2020. Amazing. And then when Russia invaded Ukraine, I figured it's just a matter of time. But I had to get beat on that forever. Finally, the problem is now I have to switch over from my technical to my fundamental, from my fundamental hat to my risk manager hat. And it's so far stretched versus a 60-month moving average versus most moving averages that in history, getting long gold from these levels is typically not work out well. And it's never bad to say take some profits. So I'm worried when gold takes alpha and it's so expensive that it means the whole system might be having problems. So to me, that's my indicator that we're overdue for down.
And then people start to raid the piggy bank, whether it's gold or Bitcoin, to cover their losses in the stock market, and this loop starts going. James, do we need to sell everything? What did we just learn? Mike McClone. I don't know that you made me feel a lot better. What are you buying in the new year? Anything?
Well, there's never anything wrong with good old U.S. Treasuries. So I'd like to point out that the U.S. 10-year note, right out 4%. In China, it's 1.8%.
All right.
And they have severe deflation. We're heading that way as a risk. And if Bitcoin continues lower into the year end, we just have a little down year in the stock market, we'll probably head towards that yield in China.
Right, we got to post this whole thing on YouTube. That was fantastic. I'm so glad you're here. Mike McClone, happy Thanksgiving and my best to your family. We love the fact that you're part of this program. Bloomberg Intelligence, the senior commodity strategist with us here on Balance of Power. A lot more straight ahead with us on Bloomberg Radio.
It's 12:21 on Wall Street. I'm Amy Morris. Equities are gaining momentum after a strong pullback earlier this month, prompted by worries about possibly overstretched tech valuations. They seem okay now. We check the markets for you all day long here at Bloomberg. The S&P 500 up 0.9%. NASDAQ up 0.9%. The Dow up 0.9%. The 10-year Treasury yield at 4%. The 2-year yield at 3.48%. COMEX gold now 0.6% higher. It's about $42.03 per ounce. Despite elevated borrowing costs, mortgage applications to buy a home surged last week to its highest level since early 2023. The Mortgage Bankers Association data shows the contract rate for a 30-year fixed mortgage rate ticked up to a one-month high. A sustained surge in purchase activity is always welcome in a housing market, especially one that's been struggling to gain momentum. But the weekly figures do tend to be more volatile around the holidays. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy, thank you. We'll have more on the markets with Amy Morris coming up just about 20 minutes from now as we track the Wednesday trade in a pretty good mood, at least so far today on Wall Street. Markets, of course, will be closed tomorrow. Volatility in UK markets earlier today was quite a mess to talk about here as the Chancellor of the Exchequer, Rachel Reeves, announced $34 billion in tax increases, a budget seeking balance. The problem is the rollout. Chaos. After the Office of Budget Responsibility accidentally stole Reeves' thunder by prematurely publishing its analysis of measures she was set to announce. This is not how you do the unveiling. In the weeks preceding November 26, according to a rebuke made by the Deputy Speaker of the House, leaks to the media appeared to have reached an unprecedented high. Bloomberg News sat down with Reeves for a conversation just a short time ago. Lizzie Burden, my colleague in London, with some important questions for the Chancellor of the Exchequer, beginning with what happened this morning. Listen.
Richard Hughes and the OBR have confirmed that they have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
So, leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets. But what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
When you talk about cutting borrowing, the Institute for Fiscal Studies says it's a spend now, pay later budget. What do you say to traders who are still concerned that this fiscal tightening's backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office for Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy. And indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that the OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the forms that we've set out.
Well, no confirmation of no new tax rises,
Well,
Chancellor.
no Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Fair and necessary, says Rachel Reeves, UK Chancellor of the Exchequer, speaking with Bloomberg News a bit earlier. Our thanks to Lizzie Burden for bringing us that conversation and asking some pretty hard questions, framing this as a broken promise when it comes to raising taxes. We should note, after swinging between gains and losses after this release during the budget itself, UK markets were stronger by the time it was done, 30-year yields falling even more sharply than the 10-year after the UK debt office said it would cut sales of such securities this year. The pound up about 0.5% against the dollar. UK stocks rising on this. So let's hear a little more from someone who is in the middle of this. Ellen Milligan, Bloomberg UK political correspondent, joins us now live on Balance of Power. Ellen, it's great to have you. How is this so-called broken promise resonating outside the walls of Parliament?
Well, I'm sat inside Parliament, and I can tell you that Labour MPs who have spent the last few weeks speculating and plotting about whether they can oust the Prime Minister and even the Chancellor, they're pretty happy, especially MPs who sit on the left of the party. So the Chancellor raised several taxes, including introducing a mansion tax on properties over £2 million, a tax on the gambling industry, kinds of taxes that play well with Labour voters and Labour politicians because they hit wealthier people. And simultaneously, she raised a cap on child benefits, which will lift a lot more children out of poverty, and introduce some cost of living measures to bring down the cost of energy bills, for example. So they feel like they can sell this on the doorstep as they're campaigning into local elections next May. Obviously, Labour is doing incredibly badly in the polls at the moment, so that's really important for them. And as you say, markets are relatively happy too. Pound is strengthened, gilt yields are down, she doubled her headroom. So as one MP put to me, this ends the merry-go-round of constant speculation that Reeves will have to increase her headroom to avoid any market vulnerability.
Fascinating. How embarrassing, Ellen, was the rollout, the botched rollout earlier today, and what might this investigation bring?
I can't imagine what the chaos was like on the trading floors around London and other cities today, because even us, I think I was away from my desk when the OBR forecast landed an hour before. Really chaotic. It's unprecedented that something like this would be released. And by the way, the government is furious. Rachel Reeves made clear she was furious, and MPs and government ministers are, privately speculating about Richard Hughes, the chair's role on the OBR at the moment. This was their mess up, not the government's. And I kind of painted a picture about a Labour values-based budget, but actually there are some worries about what Lizzie in her interview with Rachel Reeves was getting at. She's frozen income tax thresholds for 2 more years, which results in more people being sucked into higher tax brackets, and that ultimately is breaking her manifesto to not tax working people. And whether voters will forgive her for that because of these cost of living measures, we are yet to see.
Yeah, what did you make of her answer? No chancellor can write future budgets. I thought was a pretty interesting line. So what's the chancellor in for?
She made the mistake at her budget last year of promising no tax rises to the scale that she made last year. And look, she's come back and had to make those kinds of tax rises again. And so she's trying to avoid that mistake being made again, so that she can come back next year and have room to do that if the markets and the political situation means that she does. But these tax increases mean that the tax burden in the UK is now its highest since records began after World War II. I mean, that is extraordinary. The growth has been downgraded, the welfare bill is rising, living standards are rising more slowly. So although she's introduced these new cost of living measures, living standards are actually disposable incomes are going to rise at a slower pace. So those are the kinds of things she has to answer for as well.
Really great to have you, Ellen. Appreciate it very much. Ellen Milligan joining us live from the UK, Bloomberg's UK political correspondent, following an important interview you can read a lot more about and see the interview as well on the terminal and online. Here at home, the economic picture, as we discussed briefly with Mike Baglone earlier this hour, is not inspiring as we see consumer confidence crumble in the biggest drop in about 7 months here. This is consumer confidence as measured by the Conference Board, not to confuse with UMich. And we're also seeing applications for unemployment benefits falling unexpectedly last week to the lowest since mid-April. So we wanted to put this together with the help of Stuart Paul from Bloomberg Economics. He's with us from World Headquarters in New York. When you look at the consumer confidence numbers, Stuart, add it to the pullback we saw in retail sales, retail spending numbers, and then consider what we did see when it comes to sentiment from the University of Michigan. When's the recession start?
I don't think things are quite that bad. I do think that it's a little bit of a problem, given the fact that we've seen all this data coming out this week pointing to slow economic circumstances, slow economic conditions. For example, the retail sales data that we saw was basically just supported by furniture sales, and that's September data. When we then look at sentiment data, including the University of Michigan's Consumer Sentiment Index survey that you referenced, when we look at buying plans for things like durable household goods in October and November, the one bright spot in September is no longer present, and so we should expect to see some spending slowdown. But to me, it looks like we are getting through the worst of the labor market. That's part of why we saw this decline in seasonally adjusted unemployment insurance claims. It's a little bit of a tricky report as we head into the holiday season, as we head into the Thanksgiving holiday. But right now, if anything, we're seeing basically just steady, cool economic activity.
Interesting. So on Friday morning, when we wake up and you turn on the TV, you see all the local reporters out there, and they've got their parkas on, and they're in front of Best Buy or Target, you know, with the microphone. Are there going to be lines and people beating each other up to get into these stores, or are we getting in for a disappointment when Adobe puts up the numbers for Black Friday sales?
I think that we'll still see lines. What's a little bit tricky is that I expect that we're going to see fewer discounts this holiday shopping season than in those past. We know that firms have been trying their best to stomach the inflation costs and the inflation pressures that come from tariffs. When we do our decomposition of who's bearing the cost of tariffs, it looks like just about 25% of the tariff burden is currently being borne by consumers. Almost all of the rest is being borne by retailers and wholesalers. It is not being borne by foreign producers. So if you are a Best Buy, it's going to be difficult to offer steep discounts this holiday shopping season. But I do expect, given that we saw such soft retail sales in September, folks may have been holding out for this holiday shopping season, and so we can see some exuberance, though I do think that it's going to be relatively cool. I think that we're just likely to see this sort of steady, cool economic landscape.
Does the stock market help? We talk so much about the trade down and how, you know, McDonald's and Walmart are seeing all new faces come in to their businesses recently, but you've got the market essentially at an all-time high. I know Bitcoin fell out of bed, but my God, think of the money people made since President Trump went into office, whether it was Bitcoin, gold stocks, or beyond. This AI trade is still breathing life into someone's spending, right, Stuart?
Wealth effects do matter. The thing that I think matters most is how far out the risk curve we're seeing markets outperforming, right? So if we were to see something like Bitcoin and the Mag 7 just continuing to boom, I would expect that that would support retail far more than, let's say, like an equal weight S&P or like a Russell outperforming the rest of other assets. I think that when we do see when we see folks at the upper end of the income distribution showing up at Walmart and showing up at Target, we see them rotating away from, you know, the LVMH brands and instead doing some of their shopping on staples at lower cost alternative stores. It doesn't exactly inspire a ton of confidence. It just suggests that consumer spending isn't quite falling out of bed. So those wealth effects do matter. It allows the upper end to continue supporting the aggregate measures of economic activity, but it does not speak exactly to a boom.
Good time for a rate cut?
I think we're going to get it no matter what time. I think it is. I think that the FOMC is going to coalesce around the idea for a rate cut in December. I think that as we move into 2026, we're more likely to see a quarterly cadence of cuts. So I expect that we'll get this December cut, probably a skip in January. That'll be very well telegraphed, I expect, by the FOMC, and then a cut later in the first quarter in March. And then again, that quarterly cadence throughout 2026. And look, I think that the market is coming around to that view. Just last week, there was just about a 35% probability of this December rate cut priced in. Now it's looking closer to 90%. And with Kevin Hassett's name floated as a potential potential new Fed chairman starting in May of 2026, I expect there's going to be a generally dovish tilt to monetary policy throughout all of next year.
You wearing a tie up there today, Stuart Paul?
I am.
I can't. I'm just trying to see around that microphone on YouTube here. You know, you could barely get anybody to wear a collared shirt on a day like this in the office if they came in at all. I salute you. I see you and salute you on the eve of
and you know me, like, look, I try to keep it pretty casual, especially around holiday weekends. I'm more of a jeans and a t-shirt guy, but for you, I'll keep it professional wearing a tie here, Joe.
Wow. Wow, amazing. Thank you very much. We're trying to, meet you halfway on that. Stuart Paul, happy Thanksgiving. I hope we all stimulate the economy when we get off on our holiday tomorrow. The great Stuart Paul, Bloomberg Economics U.S. economist. I like the vibe of the show today. This is what producer James had in mind. We're just hanging out the day before Thanksgiving with some very smart people talking about important issues while the president relaxes at Mar-a-Lago. Lawmakers reintroduce themselves to their families. And of course, we track Wall Street. We do have trading today. We won't tomorrow, but Amy Morris is on the case. Before we assembled our panel, let's take a look at stocks, bonds, crypto, and the rest with Amy Morris in Washington. How's it going, Amy?
Everybody's really busy today, believe it or not, Joe. We're checking the markets for you as we do each day here at Bloomberg. S&P 500 up 0.9%. NASDAQ up 1%. The Dow up 0.9%. The Russell 2000 index up 0.8%. We've got green across the screen. The 10-year Treasury yield at 4%. The 2-year yield at 3.48%. Sources tell Bloomberg that Blackstone is nearing an acquisition of McLean Power Systems in a deal that could value the utility parts maker at more than $4 billion. The private equity firm may announce a purchase of McLean from Centerbridge Partners as soon as next week. Shares of Blackstone 1.5% higher. Campbell's has put an executive on leave defending its ingredients after a lawsuit alleged the employee criticized its products and made racist remarks. A lawsuit filed by Robert Garza claims Martin Bally, a vice president of IT at Campbell's, called the company's products highly processed food for poor people and referred to his Indian coworkers as idiots. Campbell's released a statement saying the alleged comments are unacceptable, and they released a fact sheet defending the quality of the ingredients. Deere & Company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in the U.S. farm economy as uncertainty continues to swirl over the impact of tariffs and trade deals. Shares of Deere are about 4.5% lower. And U.S. airlines are preparing for the busiest Thanksgiving travel period on record, with more than 31 million passengers expected between November 21st through December 1st. The travel period will be affected by air traffic controller shortages, winter weather, fuel supply constraints, and tech outages. Those may all cause disruptions and extra stress, because that's exactly what you need the day before Thanksgiving. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you so much. I haven't asked Amy yet if she's cooking, if she's hosting, or if she's visiting others. But I hope that you have a great Thanksgiving plan for tomorrow, and I'm glad that you're with us here today on Thanksgiving Eve. I'm Joe Matthew in Washington, where it is a ghost town right now. If you're going out for Thanksgiving, you'll have your pick, and you'll probably be able to park at the front door. That's actually what makes it one of the great weekends to be here in the nation's capital, because you have the place to yourself. If you're getting out on the roads, maybe you're already driving. Thank you for taking us with you. We'll be right here on Sirius XM channel 121, and of course across Bloomberg Radio. Maybe you've got it on the app. You've got the CarPlay going here with Balance of Power on your way to Grandma's house. If that's the case, we thank you for making us part of your day, and that would be the case just about any old time here. Amy is going to, okay, good for you. Amy's hitting the road tomorrow. See Mom and Dad. I hope that goes great as well. Producer James heading out to see the family. I hope that you're going to see someone you love or like in the next 24 to 48 hours. Big questions about Steve Witkoff. Is he going to Moscow for Thanksgiving, or I guess he's going to wait till after the holiday? Can't seem to stay away recently. So, Yuri, here's what I would do. He says, you saw this Bloomberg story, Steve Witkoff talking to Yuri Ushakov, Vladimir Putin's most senior foreign policy advisor. They got on the horn ahead of this Zelensky visit. He says, Yuri, here's what I would do. Congratulate the president on the achievement of his ceasefire deal in Gaza. Make clear, quote, your respect is a man of peace. I think from that, he says, it's going to be a really good call. telling the man who's then going to tell Vladimir Putin exactly how to get the better of Donald Trump. Kill him with kindness. That's what you do in a negotiation, right? Nobody seems very perplexed about this. Ushakov, when asked about it, said, yeah, like somebody's listening, somebody's taping apparently. Donald Trump was asked about it on Air Force One when reporters brought this up. Let's hear from the president.
That's a standard thing, you know, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. You know, that's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Standard negotiation, says the president at the back of the jet. One more thing, he says. Zelensky's coming to the White House Friday. Ushakov chuckles. I know that, he says. Witkoff says, I think it's possible we have a call with your boss before that Friday meeting. And just like that, it happened, remember? President Trump was on the phone with Vladimir Putin for some time. Then Zelensky showed up. The Tomahawks went back in the case, and the burden went back on Ukraine. So we assembled our political panel for their take on this. It's a doozy of a report. Jeannie Shanzano is with us, Bloomberg Politics contributor, our Democratic analyst, democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Republican strategist Lisa Camuso-Miller, Senior Vice President, Rock Solutions, former RNC spokesperson, host of the Friday Reporter podcast. Happy almost Thanksgiving. Ladies, it's great to see both of you here. Jeannie, this is really something. I'm not sure if I should be more compelled by what was said on this call or the lack of reaction over it. How about you?
The reporting is absolutely incredible. And now, Joe, I can't get the reading you just did with all the whispering and the drama. I can't get it out of my ear. So I wish you would do the whole thing for us and tape it. That was really good.
Trying to report the news here. Thank you.
But you do it very well. You know, it's just incredible reporting to see behind the scenes, so to speak, behind the curtains, to get a glimpse. I think a couple things are pretty troubling about what we see behind that curtain. Number one, as you mentioned at the back end, the timing of this thing. You know, we were sitting together as Vladimir Zelensky came over to ask for those Tomahawk missiles. Little did we know at the time that you had Steve Witkoff setting up this phone call that interceded and, of course, left Ukraine without anything they thought they were going to get. And also the other thing is, to me, the performative nature of this. You know, I'm reading this and listening to your great reading of it, Joe, and thinking, Steve Witkoff sounds like, I don't know, you know, I've been a consultant. He sounds like a consultant to Vladimir Putin. This is how you get it done. This is how you do it. You know, there's nothing surprising there. But what he's lacking is, of course, the substance. And he works for the United States, not for Russia. So, you know, where is the substance of this thing? And I think it helps explain a good deal as to why we've been sort of getting the runaround here with sort of, you know, trying to curry favor with Russia and not much for Ukraine. I think this phone call explains an awful lot of where we are in this process.
I don't know what you make of the reaction from at least some Republicans. Lisa, we heard from a couple of Russia hawks here, and maybe we shouldn't be surprised. Don Bacon, Republican from Nebraska, he says it's clear Witkoff fully favors the Russians. He cannot be trusted to lead these negotiations. Would a Russian paid agent do less than he? He should be fired. We heard as well from Brian Fitzpatrick, Republican from Pennsylvania, called the leak a major problem. One of the many reasons why he says these ridiculous sideshows and secret meetings need to stop. He's calling for Marco Rubio to be handed full control of these negotiations. Lisa, do you agree?
I agree that yes, with all of that, Joe. I mean, let's put someone serious in charge here. I mean, when you're advising the Kremlin on how to sell a plan, that puts us at risk with all of our allies. Our own credibility, U.S. credibility, with our allies is at jeopardy because of the way this is handled. This wasn't a advising. This was telling the Kremlin how to sell. This is message delivery, right? Not mediation. It's just absolutely not the way that we do this kind of work. And for the president to say that is also just flat out malpractice.
Well, it's interesting that you both agree on this, Jeannie. I was waiting for somebody to tell me to grow up or stop clutching pearls or whatever cliche you want to use here, that, hey, look, this is the way business is done, so deal with it. Is there any truth to what the president said on Air Force One?
Flattery is involved when you're doing any kind of negotiation, but to Lisa's very good point, this sounds more like you are advising as a hired gun for the Kremlin to how to message something. I mean, somebody described it, he sounds a bit like a showrunner, and I think that's a fair description here. And what he's lacking again is the substance, and this is a very important moment when the substance should be real. For instance, what came out of this when they said, Ukraine has to be at 600,000 troops and Russia can just have as many as it wants. That is malpractice to the T. This is not a surrender. This is supposed to be a negotiation. You don't tell one of the parties that they have a cap on the number of people they can have in their military going forward. So this is where the substance is lacking. Steve Witkoff doesn't have a background in this. He's a skilled guy. He's been successful in a lot of avenues of life, but he doesn't come with an understanding of the history of Ukraine and Russia to be given this position and then to be handling it this way, I think is a mark of that.
Well, I can't imagine how this meeting between Witkoff and Vladimir Putin is going to go next week. I guess he's going to bring the burner phone with him, Lisa. There's talk of him now reportedly being accompanied by Jared Kushner. What do you make of this? Because it's another member of a negotiating team here that doesn't, in fact, work for the administration.
It's also another member of a person that doesn't have any of the experience that's necessary or reasonable for these kinds of conversations. I'm part of the Republican Party that was once serious about negotiations with our allies and our enemies. And this one is not. They are not our friend at Russia in the Kremlin. And this is what frustrates me so much. Where is the talent? Instead, we have envoys negotiating and giving information about how to assuage and make. If you're Vladimir Putin, you are laughing at the White House. You are laughing at the administration. And that's embarrassing. And that's exactly what Witkoff was counseling him to do, is compliment the president, tell him everything he wants to hear so that you can get what you want too. And that is downright wrong. And it's just, Joe, I mean, Jeannie and I, we often see similar points of view here, but this one, Joe, clutch your pearls. This is a problem.
It's amazing that we heard from Ushakov himself when he was presented this story, Jeannie. He acknowledged that taping and leaking was occurring. Asked where the information came from, he says, quote, "I don't know. Someone's listening in. Someone is leaking information. But it's not us." What's this meeting going to be like next week?
Yeah, if this meeting goes ahead, I hope Bloomberg gets another transcript out of it, but I doubt we will. The president has a huge challenge on his hands. He needs to surround himself with serious people with backgrounds and understanding as to how to achieve the goals in the interest of the United States. The president has egg on his face on this one, and he needs to send a serious contingent over there. We have a Secretary of State. Use him. If I was Marco Rubio, I would be very frustrated by what is unraveled here.
Boy, we've got a lot to consider here, and it's going to certainly inform the way this meeting is framed next week. Jeannie Shanzano and Lisa Camuso-Miller will stay with us for much more in our second hour. We're going to talk to Heather Conley from the AEI about this as well. Thank you both for a great panel. We're thankful as well for our great team, the best in the business that puts this program together every day. I talk a lot about producer James Mahoney. Yeah, he's the captain here. CC Cherendoff with us in New York. Our bookers, Matt Shirley and Amanda Hayes-Rourke. We couldn't do the program without them. And I hope there's a big old turkey waiting for you at the other end of the rainbow. We'll welcome our global television audience coming up next on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew.
Envoy once again to Moscow. Welcome to the Wednesday edition with peace in Ukraine in the balance on this Thanksgiving Eve. And word that President Trump is sending Steve Witkoff back to Russia to sell a peace plan that's been revised over the course of this week. We're going to get the latest ahead from Bloomberg's Eric Martin covering the State Department and the administration. And with new questions about Witkoff's relationship with Russia and his impact on these negotiations, we'll discuss with Heather Conley from the American Enterprise Institute. She's with us in studio coming up. The FBI says it wants to interview the Democratic lawmakers who made that video telling members of the military to reject unlawful orders. We'll get into it with our political panel, and it's all after a look at Wall Street. Latest on the Wednesday trade right now with Amy Morris with me in Washington, D.C. How's it look, Amy?
It looks green still, Joe. Stocks are still climbing on bets that the Fed will cut rates at their next meeting in December. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.9%. NASDAQ just shy of 1% higher, and the Dow up 0.9%. The 10-year Treasury yield right at 4%. It's at 3.999. And the 2-year yield at 3.48%. ByteDance, meanwhile, bought more NVIDIA chips than any other Chinese company in 2025, but Chinese regulators blocked it from using NVIDIA chips in new data centers. The Chinese government's goal is to build a fundamentally different AI ecosystem that can withstand future U.S. tech embargoes and be widely adopted by other countries. Shares of NVIDIA right now about 2% higher. Applications for U.S. unemployment benefits fell last week to the lowest since mid-April, remaining relatively subdued amid economic uncertainty, but continuing claims edged up. That indicates labor market stress isn't quite over. And U.S. airlines preparing for the busiest Thanksgiving travel period on record. We're right in the middle of it. More than 31 million passengers expected to travel through December 1st. The period will be affected by air traffic controller shortages, winter weather, fuel supply constraints, and tech outages. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Back to Balance of Power now with Joe Matthew.
All right, Amy, many thanks as we prepare for our turkeys tomorrow. Markets are in pretty good shape, and glad you're spending part of this Wednesday with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington as we keep our eyes on the potential for a breakthrough, a peace breakthrough in Ukraine. The headline on the terminal, Trump dispatches aides for more Ukraine talks, says no deadline. And that last part is important because we thought tomorrow would be a deadline. The president over the weekend suggesting that Thanksgiving would be the do or die, the drop dead date for Ukraine to either accept or walk away from this 28-point, now 19-point peace plan. The president sending top negotiators, including Steve Witkoff, his special envoy, to Moscow to meet with Vladimir Putin next week. There was talk at one point of President Zelensky being here in Washington this week. Apparently that is not going to happen. The president telling reporters on Air Force One he needs a deal before a meeting. And it's where we start our conversation with Eric Martin, Bloomberg's State Department and foreign policy reporter here in Washington and at the desk. Eric, it's great to see you. It's difficult to underscore how important this moment is for President Zelensky, for this administration, and of course you could say for the Russians as well. Where is the Secretary of State on this now 19-point plan, having traveled to Geneva and put some pretty big changes to the document?
Absolutely, Joe. What we've seen is Secretary Rubio being kind of the bridge between and trying to negotiate and go between the Russian point of view and the Ukrainian point of view. And speaking in Geneva on Sunday, meeting with his counterparts from some European nations, from Ukraine, and he spoke to the press afterwards, and he said that Sunday was one of the most productive days in this entire process since the Trump administration took office, and expressing optimism there and an expectation that there are some important issues still to work through, and that they were going to need additional time, but also signaling that Thursday would not be a final deadline for Ukraine to accept this. Right. We've seen some indication this week that Ukraine is broadly on board with this, but of course, like any negotiation, the devil is in the details, and those territorial concessions and the proposals and the ideas around Donetsk and what happens with territory that Ukraine currently controls, and Ukraine and Ukrainian and European governments very concerned about the idea of ceding that voluntarily to Russia as a concession as part of a peace plan.
Does any of that remain in the plan, or have those ideas been annexed following the meeting in Geneva?
We still don't really know. We know that the number of points has been narrowed, and we know that there's been a lot of discussion around territory and around some of the thornier or more difficult ideas in the proposal, such as certain caps on the Ukrainian army size and a prohibition on any kind of NATO expansion, Ukrainian or otherwise, in terms of new membership in NATO, and that some of these points have been discussed. But we also know that the territory will ultimately be something that is decided at the leader and presidential level. And we've seen Secretary Rubio a couple of weeks ago, when we were on the ground after his meeting with G7 counterparts in Canada, talking about the need to have a final proposal in sight or a landing zone for a final agreement in sight before it would make sense to have another presidential summit with President Trump, not just having meetings for the sake of meetings.
So with these items excised, I should have said not annexed from the plan here, is it now a non-starter for Vladimir Putin? What kind of job does Witkoff have to sell this next week? And are we in a world now where Witkoff and maybe Kushner are working the Russians, Rubio is working the Ukrainians?
That's a great question, Joe. And that's part of the challenge here, is how do you find a landing zone for a peace agreement that is not mutually exclusive? That as you tailor this proposal and incorporate more of the asks of the Ukrainians and the Europeans, that, of course, takes it further away from things that Russia would want. And trying to incorporate Russian ideas and Russian demands takes it further away from what the other side wants. And so you have kind of this ping-ponging phenomenon where you're trying to find something that's agreeable to everyone. But as I spoke about yesterday with former ambassador to Ukraine for the U.S., John Herbst, he was talking about the fact that for Putin, for so long, the main goal has been political control of Ukraine. That's obviously something that Ukraine is never going to cede. And so can you get an agreement, a peace agreement there, unless the Russian objectives change? And a lot of skepticism, especially on the European side, that can be accomplished.
A lot of skepticism about the timeline as well. I mean, we had a Thanksgiving Day deadline that I realize has moved along, but there was talk about this being done by Christmas or by the end of the year. Is that realistic in anyone's view?
I think it really depends on the compromise and the willingness of each side or both sides to engage, and that we really won't know until perhaps days or weeks into the future when we see, is Russia really willing to compromise? Because it's important to remember, Russia invaded Ukraine. Russia was the aggressor here. And so when you talk about compromise on each side, it's clear what the Ukrainians are compromising on. What is Russia compromising on other than giving up its ultimate goal of controlling all of Ukraine? And so that's the question that still needs to be answered.
Well, you frame it beautifully, as always. Eric Martin, Bloomberg State Department reporter, covers foreign policy live from Washington. It's great to see Eric, and thank you for the reporting. There are big questions about Steve Witkoff, the president's special envoy, following exclusive reporting here by Bloomberg. In a conversation that he had with Yuri Ushakov, Vladimir Putin's most senior foreign policy advisor. If you haven't seen the transcript here, it's worth your time. It's a remarkable look, at least behind the curtain, at the way negotiations like these transpire. His critics would find it more horrifying than that, as Witkoff tries to prepare the Russians to have a more favorable meeting with his boss. He says, Yuri, here's what I would do. This is right from the transcript. Congratulate the president on the achievement of his ceasefire deal in Gaza. If you're with us on Bloomberg TV or YouTube, you see the transcript right there. He goes on to say, make clear your respect that he's a man of peace. Witkoff adds, I think from that, it's going to be a really good call. They went on to talk about a meeting with President Zelensky. This is the most recent visit he made to the White House. Witkoff says, hey, just so you know, one more thing. Zelensky's coming to the White House Friday. Ushakov chuckles. He says, I know that. Witkoff says, I think it's possible we have a call with your boss before that Friday meeting. And they did, and it changed the course of this story. Just ask President Zelensky, who was in Washington shortly after and left without the Tomahawk missiles or any sort of pathway to peace. That was before we got to the 28-point plan. Now, is this just the cost of doing business, or is there something more afoot? The president was asked about this reporting, this transcript on Air Force One last evening. Here's what he said.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
A standard form of communication. It's the way deals are made, he says. Let's see what Heather Connolly thinks. With us now in Washington, the non-resident senior fellow at AEI, former Deputy Assistant Secretary of State for the Bureau of European and Eurasian Affairs. Heather, it's great to see you. Welcome to Bloomberg TV and radio. Are we clutching pearls here, or is this not the way to conduct diplomacy?
It is definitely not the way you conduct diplomacy with an adversary who's actively working against U.S. interests around the world. I think what this captures is not, we sort of knew that the last person in the president's ear shapes the president. We know that Mr. Witkoff, since his first trip to Moscow in February and repeated visits, supports the Russian side. We've known that too. But to see it so starkly in this transcript, to understand how buddy-buddy and close the relationship is, it's really, it works so actively against U.S. national interest and national security that it's quite breathtaking.
Yeah, well, gosh, we know that Witkoff has spent a lot of time with Vladimir Putin. They had one meeting, I think, in excess of 6 hours. He says in this transcript, make sure you tell him how much I respect him. So we obviously know that they're getting along pretty well. Is there some strategy here by President Trump to send Witkoff to be good friends with Vladimir Putin? You handle that side. Marco Rubio, as I was just asking Eric Martin, you deal with the Ukrainians. You guys say what you need to say, and I'll meet these players in the middle.
So I think Secretary Rubio played an incredible role in the Geneva meetings when, again, the Europeans completely blindsided by the initial 28-point plan. And that was very important to get something in the 19-point plan to come forward. But I think Army Secretary Driscoll is now the new envoy for Ukraine. He was the first one to deliver it. He's now back. And of course, General Kellogg, who was the special envoy for Ukraine, is retiring in January. He's out of the picture. So I'm not sure where Secretary Rubio is in this moment.
For the Secretary
well,
of State?
As an acting National Security Advisor and Secretary of State, he needs to be part of this conversation. And I attended the Halifax International Security Forum over the weekend when Senator Rounds, Senator Shaheen had a conversation with Secretary Rubio, and it was very clear that the U.S., this was not the U.S. plan, the original 28-point plan, and then he reversed that. So I think it's unclear where Secretary Rubio is on this.
Then you have Jared Kushner parachute in, and we've got a lot of people who are dealing with a lot of different outcomes. Is this messy at this stage of the game, or is this just the way this administration works?
So as much as I applaud the president trying to save lives and secure a peace deal, for the United States, we have to make sure this deal protects U.S. national security interests. And I feel like that's just not even part of the conversation. 80,000 U.S. forces in Europe. We are seeing an intensity of Russian attacks in Europe, Polish railways sabotage, drones going over U.S. installations in Europe. We have the Russians helping Maduro in Venezuela, the Iranians, the North Koreans. This is bigger, and we have to make sure this deal protects the United States, protects our allies. It's not just a deal for the sake of a deal, and particularly a deal that supports Russia's worldview. It's a big deal.
You just connected a lot of dots there. Is Witkoff talking to Putin about Venezuela while he's in the room as well?
See, this is the disconnect of having so many things very narrowly negotiated. This is really about the future of the international system. And do we want countries to be able to invade other countries, create spheres of influences, buffer zones, Or do we believe that sovereignty and territorial integrity is absolutely essential in the future of the international system? That's what this fight's about.
Well, are you getting spooked by the idea of a security guarantee in Article 5 type of security guarantee that would involve U.S. forces, or is that the only way to end this?
Well, and it's interesting, the original 28-point plan really did lean forward about providing Ukraine security guarantees. Big question mark about the U.S. involvement in that. But that is the key to unlocking the peace deal. We have to make Ukraine able to defend itself from future Russian attacks. And quite frankly, if we're thinking about an Article 5-like environment, why aren't we talking about bringing Ukraine into NATO? Because it's the same thing, right?
Kind of a logical extension of the conversation.
Absolutely. And as these attacks continue to go into Poland, into Romania, quite frankly, NATO really needs to step up significantly, not only to defend NATO territory, but increasingly NATO territory is going to start to begin in Ukraine.
Tell us more about Dan Driscoll. This is fascinating to me that this young Army secretary with no diplomatic experience is finding himself on the other side of the table from the Russians. He's been the Ukraine whisperer, apparently. President Trump was very impressed by him. He's got long history and went to school with, I believe, J.D. Vance. Is he the right man for this job?
Well, I think he was the accidental man because the Russians, Kirill Dmitriev, leaked the 28-point plan early. And Secretary Driscoll was in Ukraine, importantly, to talk about drones to help Ukrainian incredible technology to help the United States really improve and adapt its drone technology. And when this thing began to unfold, he was the man in Kyiv. So I think he was just appointed and, going there. So he had to learn what the drill was and the plan was. And now, absolutely, I think he's sort of assumed the role that General Kellogg probably would have. He was in Geneva with Secretary Rubio. He was in Abu Dhabi, where we presented this new 19-point plan to the Russians, and now he'll be going to Kyiv. So he is definitely playing a critical role. He was really, I think, transformative in thinking about how the Army does acquisition and drones, and absolutely considered a thought leader there. The Ukraine portfolio was not in his wheelhouse,
I wonder if he's redefining the role of secretary here. He went from drone guy to diplomat overnight.
I think we're in some ways right people, right time, but you need the experience, and this is who Driscoll is across the table from when he's meeting with the Russians. They have decades of experience, and that tends to run circles around people who are pretty new to the portfolio. It's not that he's not delivering the message, but 30 years of experience dealing with the Russians really helps you across the table.
Fascinating. You saw this incredible transcript where we started our conversation, Steve Witkoff talking to his counterpart in Russia. In our remaining moment, how will that color or inform the meeting with Vladimir Putin next week? Is this an embarrassing moment or just something they consider normal?
So it's a little bit of embarrassment for the Russians. I mean, just to have this conversation, it's if Vladimir Putin doesn't know how to handle his relationship with President Trump. So that's slightly embarrassing. But this message was here, Joe. This was a cry for help to say, I believe that this is now so over the top and against U.S. national security interests. Someone has got to put a stop to this, or at least raise great awareness.
The leaking of this, you mean, was a cry for help.
It feels like it's a strong message here in Washington, not so much to the Kremlin.
Well, I'm really glad that you could join us. Let's keep talking about this. Come back and see us again. That's Heather Connolly, non-resident senior fellow at the American Enterprise Institute. I'm Joe Matthew in Washington. That's a good one for the podcast. Make sure you subscribe at Apple, Spotify, and wherever you get your podcasts. We'll assemble our panel next, right here on Bloomberg.
It's 1:22 on Wall Street. I'm Amy Morris. The Pentagon has concluded Alibaba, Baidu, and BYD should all be added to a list of companies that aid the Chinese military. That according to a letter to Congress sent roughly 3 weeks before Donald Trump and Xi Jinping agreed to a broad trade truce. It is not clear whether those companies have been formally included on the Pentagon's list, which carries no direct legal repercussions but does serve as a major warning for U.S. investors. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.8%, NASDAQ up 0.9%, and the Dow up 0.8%. The Russell 2000 index also up 0.9%. 10-year Treasury yield at 4%, the 2-year yield at 3.49%. Elon Musk says Tesla aims to roughly double the size of its robotaxi fleet in Austin next month after some complained that soaring demand from new users had left the service nearly unusable. Musk posted the comment on X. He told investors last month he wants self-driving taxis on the road in 8 to 10 U.S. metro areas by the end of this year. Shares of Tesla less than 1% higher. Deere & Company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in the U.S. farm economy as uncertainty continues to swirl over the impact of tariffs and trade deals. Shares of Deere about 5% lower now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Back to Balance of Power with Joe Matthew.
We thank Amy Morris once again, and she'll be back with more on the markets coming up in about 20 minutes' time here. Welcome to Balance of Power on Bloomberg TV and radio, the Wednesday edition as we slide into the holiday together. A ghost town here in Washington. The president, first lady at Mar-a-Lago, the vice president, Kentucky, lawmakers back home. And if you're Senator Mark Kelly right now, you're living your best life ever since the president called you out for sedition, suggested you be executed. And the Pentagon launched an investigation into serious, quote, serious allegations of misconduct into the senator, of course, retired Navy fighter pilot and NASA astronaut. No amount of intimidation or harassment will ever stop us from doing our jobs. The line on the joint statement from Mark Kelly and the other 5 Democrats who made this video that got everyone so upset, telling members of the military to reject what they call unlawful orders delivered by this Pentagon and this administration. It's gotten to the point now where Kelly's doing interviews on late-night TV shows. He showed up on Kimmel last evening just to rub a little salt in Donald Trump's wounds. Not his favorite personality. Listen to how this went.
I've been through a lot more challenging things than this, you know, and I am what I'm worried about is the reaction and what this transmits to the military and the public, which is basically shut up and listen to that guy. And that's not the way our system works. We have loyalty. My oath and every oath every member of the military took is loyalty to the Constitution, not to a person.
The FBI is now requesting interviews with the 6 lawmakers, including Kelly, which is pretty unusual since investigations into members are typically handled by the Office of the General Counsel, not to mention the broader DOJ, as opposed to the FBI. But while we consider the alphabet soup involved here and prepare to assemble our panel, look no further than the post on X from the Secretary of Defense. Mark Kelly put a similar post to what he just said there on Kimmel Online. Talks about when he was 22 years old, commissioned in the United States Navy, swore an oath to the Constitution, upheld that oath through flight school, multiple deployments, 39 combat missions, test pilot school. He goes on to write about his space missions. Secretary Hegseth's tweet, he says, the first he heard of these allegations. He also saw the president's post, he says, saying he should be arrested, hanged, and put to death. Hegseth retweets Kelly and writes, so Captain Kelly, in quotation marks, not only did your sedition video intentionally undercut good order and discipline, but you can't even display your uniform correctly. If you're with us on Bloomberg TV, you see the picture that Kelly tweeted of his uniform with his medals and his ribbons. Stripes, if you will. Hegseth writes, your medals are out of order, your rows reversed. When, if you are recalled to active duty, I'll start with a uniform inspection. This to a senator who many people refer to as a war hero. We assembled our panel for more on this and some of the other stories coming out of the administration. Jeannie Shanzano is here, Bloomberg Politics contributor, democracy visiting fellow at Harvard Kennedy School's Ash Center, Republican strategist Lisa Camuso-Miller, Rock Solutions, former RNC spokesperson and host of the Friday Reporter podcast. What's going on here, Lisa? Is that the way to talk to a distinguished member of the military and United States Senate?
No, but Joe, don't lose sight of the fact that this president, sorry, you got me now? This president is the one who insulted John McCain, Senator John McCain from Arizona, who was an extraordinary war hero and an extraordinary leader in the U.S. Senate. This behavior there has been a permission structure put in place to behave like this over and over and over again. It is embarrassing. It is not the way the United States has behaved and should behave. And the fact that this back and forth is happening on Twitter and on Truth Social, shame on them, and shame on them for behaving the way that they are. Because to me, this is absolutely unbecoming. It's just further example of how this administration is not serious. They're not behaving seriously. Unfortunately, though, Joe, the thing that stands out to me is that there are so many important issues that people care about. And instead, we're going back and forth about this. The only way the Democrat Party is going to get traction and get attention in this noisy environment where you have an administration that does non-serious things is to do exactly what Senator Kelly did. And that, to me, tells me that their fire is lit and they're ready to fight.
Fire's lit. I don't know why captain is in quotation marks here, Jeannie, in Pete Hegseth's post when he refers to the sedition video and his medals being out of order, his rows reversed. What should be Mark Kelly's response to this?
You know, what does it say, Joe, that the Secretary of Defense, or War, as he likes to call himself, is most concerned about violations of uniform, while his deputy is overseas negotiating or trying to help negotiate the end of a war? That's what I think we are seeing. Pete Hegseth is very concerned about his job. When Signalgate occurred, it was Dan Driscoll who was talked about as a potential replacement. He is, of course, very close to J.D. Vance. He is overseas doing serious and important work, while the secretary is home on Twitter talking about uniform violations and potentially trying to punish a war hero, an astronaut, a sitting senator for saying that members of the military should do what we know they should all do and what they swore to do, which is to abide by the Constitution. I think it speaks volumes about the secretary and also about FBI Director Kash Patel. It's like those two cannot stumble over themselves fast enough to do the retribution work of Donald Trump. And that's what they are trying to do. And so, Kelly, he's just going on national TV, talking about his incredible background, raising his national and world profile, and raking in contributions. I mean, this has strategically and politically backfired on the White House and Donald Trump.
Well, and of course, you see people raising money on this. It's not what Donald Trump is worried about, by the way. If you actually look at his Truth Social feed from early this morning, he was very concerned about the New York Times. It wasn't a post about Ukraine. It wasn't about any of the stuff that we're discussing. The New York Times out with a story today, and the headline, says it all. It's the first big hit job, as the president would call it, on his age. And I'm sure it will not be the last. As the Times writes, nearly a year into his second term, Americans see Trump less than they used to, according to an analysis of his schedule. Trump has fewer public events. He's traveling domestically much less than he did this point during his first year in office in 2017, although he's taking more foreign trips. They find most public appearances fall between noon and 5 p.m. on average. Remember stories like these about Joe Biden, right? The whole day ended at 4 o'clock or whatever it was. He also is showing signs of wear. His battery as they refer to the Oval Office event that began around noon on November 6th when President Trump dozed off behind the Resolute desk. This is when the guy collapsed, the GLP-1 event. They drilled down on when he's coming into the Oval, when he's going home, his executive time, his official appearances. Lisa, the president didn't like any of it, and he got on Truth Social this morning to call out the Times and the Reporter. They know this is wrong, he says, as is almost everything they write about me, including election results, all purposely negative. This cheap rag is truly an enemy of the people. He talks about the third-rate reporter who is ugly, he says, both inside and out. And goes on to talk about a day when I run low on energy. He says there will be one. It happens to everyone. But with a perfect physical exam and a comprehensive cognitive test just recently taken, it certainly is not now. Seems a little worked up about this. Lisa, is he projecting in this post?
Absolutely, Joe. I mean, he's so thin-skinned, it's embarrassing, right? I mean, this is a guy who should be handling costs of groceries. I mean, we're going into Thanksgiving. Everybody's talking about how expensive those things are. Instead, we're talking about whether or not his virility is what it ought to be. It's embarrassing to me. And it's time for him to either get serious or cut it out. I mean, come on already. This is not what you expect from the White House. Criticizing the New York Times for something like this is precisely what he was screaming about when people were talking about Joe Biden. And the truth is that it's fair. It's all fair.
Well, you know, I just wonder if it's the beginning of something bigger here, Jeannie. You remember when these started to hit the Biden administration, and then it just became a pastime for some reporters to write about his age, whether he was getting up the big boy stairs, whether he was what shoes he had on. Now we're looking at the bruise on the hand for Trump, looking at the ankles, whether he's dozing off or not. I have to be honest with you. I'm not very good outside of the hours of 12 and 5 either, Jeannie, so maybe this is going around. But are we going to start reading more stories like this?
We absolutely will. I mean, when you are the oldest president elected, this is what comes with it. I have to say, the last 10 months, he has been going like wildfire. You've covered him day in, day out, Joe. He is one of the most energetic. It's exhausting to follow him, let alone, I'm sure, to be in. So I cut him a lot of slack on this. But absolutely, this is fair game for any reporter. There's been a lot of discussion about the bruising, about the, potentially sleeping. I have to admit, Joe, I've been in a meeting or two where I have wanted to doze off. Nothing, never with you, Joe, never with you.
No, I know.
So, I give him a little slack. We'll see how he does on the back end. I think the more important thing is what Lisa was talking about, which is the things that people are dealing with, which is affordability, the cost of living, and how difficult it is for people to make ends meet. And if he focuses on that, I think all of the nodding off may be forgiven.
Great panel today with Jeannie Shanzano and Lisa Camuso-Miller. Thank you both for your insights and your humor, and happy Thanksgiving to both of you. Hey, pass the gravy. I need to take my 1:30 nap. We'll be back with more on Balance of Power.
It's 1:40 on Wall Street. I'm Amy Morris. Stocks are higher. U.S. rate cut bets are keeping the Wall Street rally alive. We check the markets for you all day long here at Bloomberg. The S&P 500 up 0.75%, NASDAQ up 0.8%, and the Dow up 0.8%. 10-year Treasury yield at 4%, the 2-year yield at 3.48%. Sources tell Bloomberg Blackstone is nearing an acquisition of McLean Power Systems, a deal that could value the utility parts maker at more than $4 billion. The private equity firm may announce a purchase of McLean from Centerbridge Partners as soon as next week. Shares of Blackstone are 1.5% higher. Campbell's put an executive on leave and defended its ingredients after a lawsuit alleged that employee criticized its products and made racist remarks. A lawsuit filed by Robert Garza claims Martin Bally, a vice president of IT at Campbell's, called the company's products highly processed food for poor people and referred to Indian workers as idiots. Campbell's released a statement saying the alleged comments are unacceptable and also released a fact sheet defending the quality of its ingredients. Deere & Company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in the U.S. farm economy as uncertainty continues to swirl over the impact of tariffs and trade deals. Shares of Deere now nearly 5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris on the markets today, and we'll have much more coming up at the top of the hour here, 2 p.m. Eastern, when Bloomberg Business Week Daily gets underway. We'll be winding things down as we head into the holiday. No trading tomorrow. We'll be back for more here on Friday on Bloomberg, as you would expect. And you know, this weekend, with things emptying out here in Washington, you've got the President of the United States down in Mar-a-Lago with the First Lady. You've got the Vice President, J.D. Vance, today visiting troops in Kentucky. Of course, lawmakers have been home for days already. We're going to be keeping a very close eye on what is happening in the Caribbean, specifically Venezuela, following the massive buildup in military hardware and rhetoric that we have seen over the past couple of weeks here. We know that the largest aircraft carrier in our arsenal and its carrier strike group that comes with it, the USS Gerald Ford, has been steaming around the region for days now, having been diverted from the Mediterranean, adding to a massive armada that was already in place. Now 15,000 American service members are off the coast of Venezuela. Aircraft are in the air. Marines are there. We have every weapon system available, but no real mission here, at least yet, for them to use it all other than picking off drug boats, alleged drug boats that have now topped 20. And there's more going on in the theater. There's been remarkable reporting from Bloomberg, by the way. If you've not seen this story from Bloomberg Industries, GPS interference snarls Venezuela as U.S. warns of hazardous skies. The GPS jamming in that part of the world that preceded the arrival of the Jerry Ford is quite remarkable. The FAA issuing a critical warning to pilots on November 20, citing the heightened interference. And we've got some pretty incredible visuals to go along with this. Data analyzed by Bloomberg show the electronic disruption began surging weeks earlier, coinciding with the naval buildup off Venezuela. The interference has rendered the airspace effectively impassable to standard satellite navigation that countless systems rely on. This is why commercial flights have dwindled to almost none in that region. And it's where we start our conversation with a great guest. The founder and CEO of the SWAS Group, Rodrigo Villegas, joins us now from our Mexico City bureau. And I want to welcome you, Rodrigo, to Bloomberg TV and radio. What is this buildup going to amount to, if nothing less than regime change?
Thank you, Joe. Thank you for having me. Well, I think what we're seeing in Venezuela is it's a mix of different factors, right? It's a perfect mix of regional security, I think economic interests such as oil and minerals, and it's also a realpolitik situation in which the U.S. administration is trying to topple the influence of Russia and China in the region as it has grown over the years. So I think it's a profound situation in which I think the U.S. administration has a very significant interest of de-escalating the situation in terms of dealing with the Venezuelan regime, either for change or force it out.
Well, I'll tell you, the Russian angle on this fascinates me, but is there quiet support in the region at the idea of the U.S. toppling the Maduro regime?
I think, you know, the Latin American region has a history of dealing with the Cold War intervention of the U.S. in the hemisphere, especially in this region. So, you know, where the regimes in Latin America, especially those on the left, you know, have less to say. But I think at the end of the day, the real idea of helping Venezuela comes out from the regimes in Mexico and in Brazil and Colombia, is to be situation to be solved in a peaceful way. You know, President Sheinbaum here in Mexico is a champion of non-intervention, but of course, no one wants the situation to escalate, especially into more hostile events that would destabilize the region. It wouldn't be good for any of the countries that have a particular interest with the U.S. And with other Western countries.
Well, we know, Rodrigo, that Claudia Sheinbaum has a very good relationship with President Trump. Could she be the way out of this?
Well, she has offered to mediate the situation. You know, she's been asked several times in his morning press conference, and she's willing to intercede and to achieve a peaceful resolution. I think you know, by now the tensions are so high. We in Mexico have some political tensions as well on the domestic side, and of course we have the USMCA revision coming up next year. So that puts her in a difficult spot to interfere or mediate the situation. But I think if there's someone with the stature, and I mean this in a regional way, she could be a peaceful voice to consider it. I mean, there's a history of Mexico doing this kind of mediations over the past, especially in Venezuela. We had a couple of meetings in the past years here in Mexico City, brokered down by the Mexico government, and it went well. But I think there's a lot to push forward to really achieve a peaceful resolution, right? Obviously, the deployment of military assets in the Caribbean puts it more difficult. But you know, at the end of the day, it's a diplomatic resolution that can be made, and there's some elements to it. I mean, you know, you've seen and we have heard President Trump's willingness to speak to President Maduro and to come to an agreement. Also, the different diplomatic deployments in Venezuela has also, you know, have certain aspects of positivity in terms of achieving some kind of deal. But this, of course, would be under U.S. terms, and we hope that Venezuela can settle down and agree to some of these terms.
Well, I just wonder to what extent Sheinbaum or any other leaders in the region are concerned that Venezuela is going to be a playbook for how to handle their countries. President Trump has spoken openly in the past about targeting and attacking cartels inside Mexico. How much concern is there that they could be next?
I think the Venezuela situation reverberates in Mexico fairly well. I think that there's always this notion that the playbook on Venezuela could be the first step into a situation like in Mexico. I think that's difficult to consider, given the special U.S.-Mexican relationship, and especially all the assets and that we have as a binational region, right? I think the North American region has benefited a lot from trade, from immigration, from security cooperation, and of course we have a 3,000-kilometer that unites the U.S. and Mexico. So I think the security cooperation has been there. There have been good efforts from the government side, the Mexican government side, to alleviate the escalation of illicit drug trade. And of course, there's also this cooperation going on in terms of information and intelligence, sharing, which is very, promises a lot. And so I think that to actually consider, the U.S. intervention as quote unquote boots on the ground, it's difficult to really grasp, right? But I do think that it's meant to send a message, and And I think not only Mexico, but other countries are, it's a good copy here, I think.
All right, Rodrigo, it's good to have you. Rodrigo Villegas, CEO, founder of the SWAS Group, with us live from Mexico City. We're gearing up for the holiday around here, and as we discussed earlier in the program with Mike McGlone, we've obviously got our attention paid to energy prices here, the remarkable declines that we've seen in the price of oil, to a lesser extent gasoline, and we wanted to spend a minute with Patrick DeHaan before we all headed off to Grandma's. The head of petroleum analysis at Gas Buddy is with us right now on Balance of Power on Bloomberg TV and radio. Patrick, it's great to see you. Welcome back to Bloomberg. The President of the United States has been talking about gas with a two-handle. I pumped up in Virginia for less than $3. I know the national average, though, has been a bit stubborn on that $3 mark. What's your expectation for this Thanksgiving?
Yeah, I think we're finally going to be able to knock that 3 away here in the days ahead. We'll fall to a two-handle. As you mentioned, the price of oil being at multi-year lows, I think a lot of Americans have been scratching their heads saying, well, if oil prices are multi-year lows, why haven't gas prices followed? The good news there is we're about to turn into another chapter. Refinery maintenance season's wrapping up. According to the EIA, the Energy Information Administration, this morning in their weekly report, we saw another week of refinery utilization that's increasing, and this is telling us that refinery maintenance, which usually is happening in fall, is starting to wrap up, and that's going to put downward pressure on gas prices in the weeks ahead. The only reason we really haven't seen that national average slip below that $3 mark is because refinery issues both in the West Coast and a refinery fire about a month ago in the Great Lakes have been holding up the price of gasoline. California up 20 cents from last year. Washington and Oregon up about 18 to 22 cents from last year. So that West Coast region has been dogged by not only refinery maintenance, but unexpected outages. And keep in mind, the Phillips 66 refinery in Los Angeles permanently shut down in October. So I think finally a lot of these roadblocks, refinery outages are going to be getting out of the way. As we go into Thanksgiving, as you mentioned, the national average has now slipped to 3 cents below where we were a year ago. We've been flirting on both sides of this year ago number, both increase and higher than a year ago. Now we've slipped below it. And I do think we're on a trajectory here, maybe even by the 1st of December, to see that national average drop below $3.
Wow, how about that? Well, the declines that we've seen in crude have been noteworthy, and most all forecasts have crude pointing closer to $50 than $60 when we get into the new year. I think Goldman Sachs had crude oil, at least WTI, at $52 a barrel for 2026. I know there's not a direct correlation here. So what does that mean in terms of refining into gasoline when we get into the middle of next year?
Well, middle of next year, summer's going to be a different ballgame. Americans are probably going to enjoy a national average below $3 for probably most of the winter. But to your point, when we get to spring, when Americans start getting out of the cocoon, so to speak, we get cabin fever, gas prices will likely go back up next year. Now, the question is, how high will they go? This year, we've seen a remarkable steady year in terms of the average price of gasoline bottomed out. Well, right now is about the lowest it's been, $3.03. We've been as high as $3.25. That's actually an extremely tight range. And next year, I think we're going to see more months, more days below $3, potentially than above $3. So I think this sets us up for a very good 2026. Now, maybe a little front-end loaded with lower prices in the first half of the year than the second half of the year. And I think you've seen that a lot of the bank forecasts as well. If we do see the market recover, if we see the Fed cutting interest rates, that could lead to more growth next year. And keep in mind, a lot of this OPEC driven. OPEC now is going to pause those production increases January, February, March. That may rebalance the market and could lead to higher prices in the second half of next year when it comes to gasoline. But all in all, I think it's fairly safe to say 2026 is going to be another year of lower prices.
I love your map on Gas Buddy when we're looking at prices here, and I'm scrolling around. I know you have at least the opportunity for $1.99 gas. Is that realized anywhere? Yeah. Where's the cheapest gas in the country?
Yeah, I mean, with a little bit of a caveat, there are sub $2 prices. In fact, in Denver, if you look on the Gas Buddy app, you'll find a station or a couple of them clustered in a bit of a price war at about $1.85 a gallon. So again, a caveat there. It's not really sustainable. Certainly wild for those of you that are out in Denver. There's a lot more stations kind of engaging in that price war. But no, more realistically, below $2 a gallon in areas of Oklahoma City, I think it's called Midwest City, Oklahoma, where they are sustainably below $2 a gallon, meaning that they're actually turning a profit. So this is a trend that you're going to see in low-price states. In fact, You could see a handful of stations in Texas joining that sub $2 club, Oklahoma, Colorado. I mean, look for these prices to pop up here and there in the South. It's certainly going to be more the needle in the haystack, but certainly great news.
Fantastic. Looks like I've got a 3 handle here in the Washington, D.C. area, so we'll have to work on that. Patrick DeHaan, thank you. This guy's in high demand. Happy Thanksgiving and appreciate the forecast. I'll meet you on the late edition of Balance of Power. It starts at 5 p.m. Eastern, only here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. We are across Bloomberg platforms. It is Thanksgiving Eve. It's kind of a Fed Wednesday.
Is it okay to call it that?
Yeah.
Ari, our producer, just got a little mad at me that I said it was Fed Wednesday.
I've been around the block a little bit. It's a Fed
All right,
Wednesday.
if we're getting communications, we're getting the page book.
Well, you know why it's important? Because this typically comes out a couple of weeks before a Fed meeting, which we do get. Was it December 10th?
Yeah, 2 weeks from today. That's a real Fed Wednesday.
So, Ari, 2 votes to 1. We're right. All right. Listen, we're looking for those beige book headlines, so we're going to watch out for them, bring them to you as soon as they cross. Meantime, we've got stocks, for the most part, climbing, rising expectations for interest rate cuts, or maybe it's just people looking forward to tomorrow's turkey and stuffing. If you have not taken my pie survey on X, please do it now.
Okay. I didn't do that.
Yeah. Well, just get
I'm
to
guessing it's about pecan.
Pecan.
Okay.
Yum, yum, yum. But having said that, there's optimism, right, in the markets that we're going to get a rate cut. So we'll see whether or not the beige book gives us any clues. We have a lot going on in the next 60 minutes.
We do. Labor, inflation, tariffs, earnings, Black Friday, and more. Of course, the beige book, our economic roundtable with Bloomberg StartupPal and New Century Advisors, Claudia Sahm. We're going to get cracking at that in just a minute.
So excited about that. Also, our latest CFO briefing with Bobby LeBrock of ACI Worldwide. They have... they see a lot in terms of payments and platforms, so we're going to see what he sees in terms of the U.S. economy. And then we're going to talk a little bit about what's going on between Russia, Ukraine, and what is the U.S. role. And I'm curious about who the U.S. ultimately sees as official allies and maybe other allies.
All that and more coming up over the next 60 minutes right here on Bloomberg Business Week Daily. First up, here's Amy Morris in for Charlie Pellet.
All right, thanks, Tim. ByteDance bought more NVIDIA chips than any other Chinese company in 2025, but Chinese regulators blocked it from using NVIDIA chips in new data centers. The Chinese government's goal is to build a fundamentally different AI ecosystem that can withstand future U.S. tech embargoes and be widely adopted by other countries. Shares of NVIDIA right now more than 1% higher. Trading is muted, but stocks are higher as expectations rise for interest rate cuts next month. We check the markets for you all day long here at Bloomberg. The S&P 500 is up 0.8%. NASDAQ up 0.9%, and the Dow is 0.8% higher. The Russell 2000 index, small caps, that's up 1.1%. The 10-year Treasury yield at 3.99% and the 2-year yield at 3.48%. Applications for U.S. unemployment benefits fell last week to the lowest since mid-April, remaining relatively subdued amid economic uncertainty, but continuing claims, those edged up, and that indicates labor market stress isn't quite over yet. And U.S. airlines getting ready for the busiest Thanksgiving travel time on record. There you go. More than 31 million passengers are expected to travel until December 1st. That travel period is affected by air traffic controller shortages, winter weather, fuel supply constraints, and tech outages. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Amy, I feel your pain. It's just that kind of a day. All right, Amy Morris in there for Charlie Pell. We'll come back to her a little bit later on. Hey, let's get to the Fed Beige Book. It is out. It's a qualitative summary. You know that. What's going on in the economy today based on info across the 12 Fed districts. It comes out approximately 2 weeks before a Fed meeting. And Tim? Yeah, last meeting is December 10th.
Well, we're getting some headlines right now. Economic activity was little changed since the previous report, according to most of the 12 Federal Reserve districts, though 2 districts noted a modest decline and 1 reported modest growth. Overall consumer spending declined further, while higher-end retail spending remained resilient. On the labor markets, employment declined slightly over the current period, with around half of districts noting weaker labor demand. For more, let's bring in Stuart Paul. He's Bloomberg Economics U.S. and Canada economist. He joins us here into the studio. So, Stuart, thanks to you, I was able to go through some of those beige book headlines. But what sticks out to you? The resilient spending among the higher income consumers is notable, and then weaker labor demand, or weaker labor in the market is notable to me too.
Yeah, so when I saw the line about resilience at the upper end of the income distribution, of course, I'm thinking about this K-shaped economy narrative that's so pervasive. But when it comes to policy, we know that FOMC members need to think about the economic aggregates. So then when we scroll down to the labor market, seeing employment declining, I think matters way more than resilience at the upper end of the income distribution. So if we have both spending in the aggregate declining, we have employment in the aggregate declining, and firms feeling as though they can only pass through about 20% of higher input costs, which we saw reported in the Kansas City district, my favorite district in the Beige Book. I think that, again, the balance of risk is skewed towards the Fed needing to undergird the economy, maybe needing to take that additional rate cut in December, and in fact, I think they're going to deliver it.
Does that say to you that the Fed has to cut come December?
I don't think that the Beige Book is a deciding factor, but I think when we see the unemployment rate rising in the September report, when we see employment declining through early November, which is what the Beige Book's survey period includes, when we have those factors front of mind for policymakers, I think that it's enough to get that cut.
Yeah, I'm seeing like things kind of hitting on both the dual mandate that maybe things need to be addressed.
Yeah, it's tricky. The Fed, we know, is not rushing to move into accommodative territory. And when we see the Beige Book citing prices rising moderately during the reporting period, including input cost pressures that are widespread among manufacturers, retailers, and when those are related to tariff-induced increases in input costs, it's no surprise that the Fed is trying to maintain this balance as best as it can.
Claudia Sahm also with us, chief economist for New Century Advisors. She's one of the best-known economists in the world thanks to her research she's done on recessions. We talk about, Tom always talks about it, Tom Keene, the Sahm rule, but we all do here at Bloomberg, and what it tells us about the U.S. economy. She's with us from Washington, D.C. Stuart's going to stay with us. Hey, Claudia, you two have had maybe a few minutes, we hope, to go over the Beige Book. You've been listening also to Stuart Paul. What jumps out for you and what it says about the U.S. economy and where you think we are in the U.S. economy?
Right. Well, I think the Beige Book was going to be an important input to this discussion of like how resilient is demand, right? Because we've seen, we don't have our complete picture numbers. Like they're not going to get a GDP estimate even for the third quarter before they meet in December. So the Beige Book is comprehensive. It's qualitative, but it's structured, and it does give us a flavor across lots of sectors across the country. So I think it is interesting that, there's a highlight of the idea that the resiliency that we're seeing in some of the aggregates is being driven by higher income consumers. That does, the Fed acts on like the country as a whole. Like their mandate is a national kind of an aggregate mandate, but it really is important for them to understand, like if there's broad-based strength, that says a lot more than if it's just, one part of the economy is kind of holding things up. That's a much riskier place, even when you're seeing good demand.
So Claudia, does anything in the Beige Book today change your view or change how the Fed should be looking at its meeting on December 10th?
So there, of all the data that they're going to have in hand, and the Beige Book was certainly something, that goes into that calculus. There's really not anything that's going to settle an argument, right? The employment report was mixed. I mean, you can, and I think in particular for even the people, say, Boston Fed President Susan Collins, who's one that sounds like she's probably not in favor of a cut in December. It's more of this issue. She just doesn't see the urgency. She doesn't see the deterioration. And we do know there is a whole, burst of data that got delayed because of the shutdown that the Fed will get before their January meeting. So I think there is a reasonable case of like, well, why not just wait until January? That's not what I would do if I were them, but I can completely see her perspective. And I would be very hard pressed, I think, to win someone like her over to cutting in December.
Now, Dr. Sahm, I think that you're right. It might be difficult to win over Boston Fed President Susan Collins. I'm glad that you brought her up. One of the most valuable things, of course, about the Beige Book is that we can see economic activity by district. And in this Beige Book, we see economic activity in Boston expanding slightly. Of course, I mentioned earlier in the program, I like to scroll down in the Beige Book right to Kansas City, because that's, of course, home of Kansas City Fed President Jeffrey Schmidt, the dissenter in October, who was in favor of a rate hold during the October meeting. In this Beige Book, we're seeing Kansas City economic activity slowing. We're seeing growth slowing during the survey window with softer labor market conditions. So I'm wondering, when you tally up the votes, where do you end up thinking everything is going to shake out when it comes to December?
So I expect that we'll see a divided Fed come December. I don't think things are a done deal at this point. I suspect there probably will be a cut in December. That may be the last cut that we see from the Powell Fed, right? So just because you get in December doesn't mean we're like opening the gates for a whole set of cuts. But I think we are in all likelihood going to see more dissents 4 dissents, maybe 5 dissents, which has not happened in quite some time with the Fed. I don't think that's a sign of a problem. I think it's a sign of like there legitimately are reasons for the Fed to be conflicted. Inflation is still well above 2%, has been for years. There are still price pressures. The Beige Book talks about those costs that are still out there with businesses that could end up coming to consumers. And we have a labor market that, while it's slow, there's some signs of faltering, it's not going over a cliff at the moment.
Yeah.
Right. So like, I think there's a reason for them to disagree. It's a sign of like, they're really serious about their job and they're thinking hard about a tough problem.
I want to go to trade and tariffs in a moment, but I just want to follow up with you, Claudia. You said this could be the last cut of Fed Chair Jay Powell's tenure. That tenure expires May 2026. I'm looking at 2026 Fed meetings, and we have got 3 meetings, January, March, April. Are you saying that we wouldn't get any more cuts because of the debate or because the economy won't need it?
So inflation is elevated.
Yeah.
Right. And I think it's probably going to be until the middle of the year before we really see inflation kind of turn down, the tariffs work their way through, before we can, really point to data and be like, look, it's going back to 2%. Right. So it's going to take some time for that to work through. And the Fed, when inflation is elevated, they're going to want to be putting some restriction on the economy. Right. So every cut they do takes a little bit more restriction out. And we can argue till the cows come home about what the quote unquote neutral rate is. But if you're cutting, you're getting closer to it. So every cut is going to be harder to negotiate with inflation still elevated. And so I think that's where you could, get to a place where if inflation's still high, unless you see clear deterioration in the labor market, which I very much hope we do not see, because that would be very bad. But that could be a game changer in it. But if we continue this kind of muddle through, they really could do a pause for some time. And, I think, and that could be because again, inflation has been sticky above 2%.
Claudia, you mentioned price pressures and the word tariff in the Beige Book appears 47 times. Most of them, or many of them, in the prices section. Are how far into the economy or into these numbers have tariffs made their way? Have we seen the full effect of them yet? Are we seeing half of the effect of them right now? How can you measure that?
Right. So, there's absolutely a cottage industry out there of different estimates of the pass-through of tariffs. We don't see them on the price tags, right? We can't just measure them. These are all estimates. And frankly, it has been surprising how slowly some of these tariff effects have shown up. It's pretty clear goods price inflation really picked up this year after having, come down quite a bit. So I think we can look at the data and say tariffs are in there. They are moving prices up for consumers, maybe not as much as we'd expected. I think there is this concern that you hear from the hawks, which is a reasonable concern, that, say the economy were to pick up next year, particularly, all the tax refunds come out and maybe, some of the uncertainties wane. If we have, more robust demand, that may be the opportunity businesses have to pass those costs through that they're still sitting on, right? There is this interaction between the demand environment and kind of how the cost pressures show up in inflation. So the fact that they're still kind of sitting with businesses does kind of raise some concerns about, eventually consumers pay these kind of things.
Yeah, there's for so long they'll sit on it. Hey, both of you, Stuart and Claudia, sit tight for a second, because you mentioned we're talking tariffs and trade, and I want to bring in Brooke Sutherland, Bloomberg News Boston Bureau Chief. She is also a writer for the Bloomberg Industrial Strength newsletter, because I want to talk about Deere, which is down almost 5% in today's session. It's the world's biggest farm machinery maker. Weak forecast for the year, and part of that is because of the U.S. farm economy. There's a lot of uncertainty over the impact of tariffs and trade deals. And so we're seeing that play out in Deere. Brooke, what do we need to know specifically, when it comes to Deere, always company-specific info, but also the commentary more broadly about tariffs and trade on an impact on a company like Deere?
Sure. I think the good news is that Deere is calling for a bottom in the large agriculture equipment market next year. But the bad news is that, you're still looking at declines in that business and for the industry overall. And I think that just reflects, while there is some optimism that China resumes agricultural purchases from the U.S. In greater volumes than it has been lately, it's not very clear exactly what that looks like. And, there's a lot of ambiguity around that trade framework that the U.S. and China struck and what that will ultimately mean for U.S. farmers. There's been a lot of talk about an aid package from the Trump administration for U.S. farmers, but it is again not exactly clear what that would amount to, and whether or not it would be enough to really help farmers get through this period, or if it ends up being more sort of a temporary band-aid. And so I think there's just a lot of uncertainty. There's a lot of Deere itself is still working through tariffs, and picking up on what Claudia was saying. I mean, it is difficult to pass on those price increases at a time when you're seeing a period of weak demand for Deere's equipment. And so I think, going into next year, one thing that investors are really going to be watching is Deere's margins and its ability to protect that profitability, even if you don't see a really significant demand resurgence.
Brooke, briefly, is the Deere story idiosyncratic, or can we extrapolate it as some sort of bellwether for industrials or the economy?
I mean, I think if you look at the broader industrial economy, it's really two stories. So you have the companies that are supplying the AI data center boom, and that's things like electrical equipment and certain types of HVAC equipment. And then you have pretty much everything else. And everything else has been in a downturn for really a very extended period. I mean, if you look at the ISM manufacturing index, I mean, I think this is the longest period of weak demand, that we've seen ever. And its tariffs have really prolonged this, where investors were looking for a recovery there this year, and that has not played out, largely just as companies work through these higher costs. But you're seeing a lot of reticence in terms of CapEx spending outside of the AI data center boom, just because companies aren't sure what the ground rules are. They don't know what things cost. They don't know where to spend the money. And so you're really seeing that hesitancy elsewhere in the industrial sector.
All right. Always appreciate it. Our Boston Bureau Chief, Brooke Sutherland, follows the industrial space so well. Brooke, have a good Thanksgiving. I want to wrap up with Stuart and Claudia. Claudia, to you, just listening to what Brooke had to say, I mean, do you feel like there's more clarity about the U.S. economy at this point, or is there still a lot of things, whether it's from the White House or elsewhere, that could come at us? And just got about 45 seconds.
I think broadly there is more clarity than, say, back in April. I think we've really weathered several storms in terms of rapidly changing policy landscape, and yet things are still really uncertain. I mean, you have a Supreme Court that is going to rule on many of those tariffs that we were just talking about. We have a Supreme Court that's going to rule on the ability of the president to remove a Fed governor. So like there are still some major question marks out there that could have big implications for what next year looks like.
And 45 seconds for you too, Stu.
I think that Claudia's right. There's a lot of uncertainty right now out there in the broader economy. I think that the downside risks to the economy are mostly posed by things like tariffs remaining in place. A lot of the policy decisions that we're likely to see, and a lot of the policy outcomes that we're likely to see over the next year or so, actually, I think, skew risks to the upside. So where the uncertainty lies is in whether the current condition can remain. And I think that the actual uncertainty skews risk toward an even larger expansion.
All right, so we'll just take a shot for every time we hear uncertainty this Thanksgiving holiday, because it sounds like that's the watchword. You guys are amazing. Bloomberg Economics U.S. and Canada economist Stuart Paul, Claudia Sahm, thank you, Chief Economist for New Century Advisors. So appreciated. Hey, coming up next, we get a view from the C-suite. We've got the CFO of ACI Worldwide. That from Bloomberg Business Week Daily continues on this Wednesday.
It's 2:21 on Wall Street. I'm Amy Morris. The Beige Book shows economic activity was little changed since the previous report. The Fed says overall consumer spending declined, and some retailers noted that the government shutdown did have a negative impact on consumer purchases. Employment declined slightly over the current period, with half the districts noting weaker labor demand. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.9%. NASDAQ up 0.9%. The Dow up 0.9%. The Russell 2000 Index, small caps, that's up 1.2%. The 10-year Treasury yield at 3.99%. The 2-year yield at 3.48%. Elon Musk says Tesla aims to roughly double the size of its robo-taxi fleet in Austin next month, after some fans complained that soaring demand from new users left the service pretty much unusable. Musk posted that comment on X and told investors last month that he wants self-driving taxis on the road in 8 to 10 U.S. metro areas by the end of the year. Shares of Tesla now more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
I want self-driving taxis too, but I'm just going to weigh in on that. You know I do.
I know. Well, apparently they've been spotted around the New York City area, the Waymos, but they have a person
in it.
You know, they're just getting the lay of the land. They're doing their thing before.
Bring it on.
We'll see. We see if Waymo can take New York.
Yeah, exactly. We'll see if the nation's airlines and trains and planes and automobiles, if they can kind of take all the travel that's coming our way this Thanksgiving. The season is underway. The global e-commerce and payments platform company ACI Worldwide says friendly fraud is expected to increase 25% between Thanksgiving and Cyber Monday. That's according to an analysis of billions of transactions of global e-commerce businesses. That's what they do. They see a lot. Joining us with more is, and kind of on that story as well as their business, in our latest installment of CFO Briefing is Robert Liebrock. He is CFO of the more than $4.8 billion market cap company ACI Worldwide. The stock, by the way, down about 9% year to date. And also with us here in studio is Nina Trentman. She's Bloomberg News senior editor. She writes the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO Briefing. A new one comes out every Sunday. Bobby, welcome. Nice to have you here with all of us. I'm not sure everybody's familiar with what you do. Share with us a bit on what the company does, who are your customers, the type of categories, so that our investing audience has a good picture of what your business is all about.
Yeah, that'd be great. And thank you for having me, Carol. I think, as you described earlier, we're right at a peak season for our company. We're right in the middle of all of the payments that run through the economy, not just here in the U.S., but around the world. And as you think about what ACI does, it's the infrastructure of payments. You know, we know around computing, there's cloud, there's data centers, there's the edge. Around payments, we are the infrastructure that does that across all the banks, all top 10 banks, 60 of the top 100 banks, also across 3,000 customers here in the U.S. that need bill pay technologies. If you paid your U.S. tax bill, you've probably used our platform, your insurance bill. And then a big, this weekend actually is when you talk about friendly fraud and the uptick we're seeing there. We service 80,000 merchants globally or with our technology around payments there. And as you step back, where ACI really comes in is a mission critical layer of software and as a service technology that allows them to scale, provide the reliability, the fraud detection that you need across those. As you think about what we can do across those platforms, it is perfect to come in, on the Wednesday here before Thanksgiving here in the U.S. Like I said, it's a big peak season. As we look at the transactions at this time of the year, they were up more than 25% last year. We're expecting that to happen again this year through our platform. There's lots of fraud that can come along with that. It's one of the areas we're infusing AI into that for these merchant providers. As you think across ACI, you mentioned almost $5 billion market cap, almost $2 billion in revenue, that we have globally with a very healthy performance underneath that, about $500 million in EBITDA. I joined just under 6 months ago, so relatively new to the team here. And think about what we do. It's really a big reason on why I joined. I was excited to come in the middle of a company that's mission critical to everything we do around payments and the ecosystem and the economy. But the other equally important part of why I was excited to come was we're a 50-year-old company that's rapidly transforming. About 2 years ago, we had a new CEO come in, Tom Warsop, and he's really jolted the company, increased our growth about 2x. We grew 10% last year. We're on track to 9 to 10% growth this year. And as you look at that, the other big jolt was innovation. We have a new platform that we're bringing out around cloud native. It's our ACI Kinetic platform. And those were two big things that got me excited to join this team and the transformation we're on.
Thanks, Bobby, for joining us here. Nina here. Just wanted to actually follow up on the data that you have from your business. We earlier talked here on the program about the K-shaped economy and the divergence between sort of affluent spenders in the U.S. and those with lower incomes. Is that something that's reflected in your numbers, and what are the trends telling you for this holiday season?
Yeah, I think good question, and good to see you again, Nina. I think underneath of that, and let me provide the global scale of ACI. We operate in about 90 countries globally, and our banking business is actually about 75% outside the U.S. And as you think on how that's developed, a lot of it has to do with, Nina, how we're servicing economies that are either undercredited or underbanked, and giving them the ability to do digital payments through a debit transaction or other types of electronic payments is really important to our culture and our mission. So as we go do that, we're seeing good demand across Asia, Latin America, for these different payment schemes and real-time payments to provide to those folks. As you think about this season, I mentioned this is a peak season. We think the shift more and more towards digital payments is continuing to happen. We see that through our platform. When we last talked, I mentioned on a year-to-date basis, we're growing 12%. So really nice demand, and that's across both of our businesses here in the U.S. or internationally as well, as you look across our payment software business.
Yeah, just curious, actually, do you see this growth in buy now, pay later transactions that we've seen across platforms is also that's showing in your business?
Yeah, and I will say, I mean, our business is largely agnostic to how you want to pay, but that is a good reason why to use a digital electronic payment versus, let's say, cash. And the ability to do that, it's one of the reasons we're taking good market share within our bill pay business. This is a business that, we've gotten it from lower to mid-single up to market share levels at growing 12%. And to the point of your underlying of your question there, that is providing more payment types is why a lot of customers in this space are choosing to no longer write their own bill pay technology in their app or their website, but come to a leader like ACI to do that for them. That can give them more options around pay later, use credit, use other forms of payments as well.
Well, on that, Bobby, we actually had Tom Warsop on Bloomberg Crypto just about 5 weeks ago, back in the middle of October. He was here in the city to talk a little bit about stable coins, speaking of different types of payments. And I'm wondering how big of a business at this point you see that getting, use of stable coins, especially for cross-border transactions. Do you see it sticking?
Yeah, I think I think he said that, you and him were talking about the death of cash is greatly exaggerated, right, when he saw it. And admittedly, what we were trying to, lean into there was we don't see, any one payment type really going away. And I think that's the reason why there's such a need, as stablecoin sees more adoption, continues to ramp. As you look underneath of that, it's definitely an emerging payment type, provides, faster, cheaper, more transparent ways to transfer money, particularly cross borders, like you mentioned. But it adds a ton of complexity for our customers. To add this as an additional payment type, it's one of the core reasons when we went out and surveyed 200 customers about 2 years ago, we asked them, where should we invest? It was a very customer-oriented product market fit for our new platform, ACI Kinetic. And this is a payments hub. It doesn't bias one payment type, one rail. It can lean across all these payment types. It helps you orchestrate them, because the complexity of adopting stablecoin, you see a lot of banking announcements on either their own stablecoin or their ability for tokenized deposits. It's great optionality, and in ACI, we love the idea of giving consumers and more optionality and choice and flexibility, but that provides a lot of complexity for our customers, which is where they need our help and is right in our sweet spot.
Just wondering, actually, in terms of stablecoin payments, is that consumers using those on your platform? Is it business to business? What is that looking like?
Yeah, I think so as you think of our multiple platforms within our bill pay, our merchant business, we've provided the optionality. We had a strategic partnership with BitPay that we announced last quarter that unlocks the ability to use those across those platforms. If you think of our critical banking business, that's really a mission critical layer that banks are using around the world. Those volumes, we have the capability there. We have the payment infrastructure. We support stablecoins, tokenized deposits as a new payment type, the interoperability. Most of the volumes I see there, Nina, are within the crypto universe themselves. It's going from a highly volatile cryptocurrency. And if you want to get the stability to move that, you'll see a transaction of going from, a Bitcoin over to a stable coin. We don't see a lot of transactions yet, compared to we do billions of transactions every single day with trillions of dollars attached to those transactions. And within those, there's still more across the traditional payment types that we see within our banking data.
Hey, we kicked off, Bobby, our introduction to you talking about the so-called friendly fraud expected this holiday shopping season. And in particular, we're looking at the weekend and all the way through. How much risk is there from this, and especially when customers dispute transactions following a purchase?
Yeah, I think, friendly fraud for, folks is a new term too. This is things like wardrobing, buying something, wearing it for a long time, returning it, or, stolen goods that you try to return to the provider. And they're getting more and more sophisticated. And admittedly, this is, yeah, this is growing upwards of 25%. And if you think of the average return, it was about $150, if I remember last year. It's up to about $200, the average transaction that's going through these types of friendly fraud. We have a platform. So I talked about servicing 80,000 merchants globally, through our product and our software there. We have payment intelligence, and we can get up to 98% prevention within that space. So it's really a big value add there. And we talk about, I'm a believer in, the use cases around AI, and this is one of them that I love talking when I'm meeting with investors, because it shows them a real life example around where our customers are seeing an ROI on reducing this friendly fraud with the capabilities we have on our platform.
Maybe we should all take an ethics lesson. I don't know.
I hadn't heard friendly fraud before.
Right? It's just, oh my gosh.
You know it when you see it.
You know it apparently when you see it. Yeah. Hey, listen, Bobby, thank you so much. We really appreciate it. Happy Thanksgiving. Bobby LeBrock, he is CFO of ACI Worldwide. Nina Trentman, thank you always. Happy holidays. Bloomberg News Senior Editor. She writes the CFO Briefing newsletter. You can find it at Bloomberg.com/CFO Briefing. And for more Bloomberg coverage of CFOs, be sure to check out the latest episode of the Chief Future Officer series. It features the CFO of Standard Chartered Bank, Diego De Giorgi, on his major role in the bank's expansion into digital assets and how AI is changing the job of CFO. You can watch Chief Future Officer right now on Bloomberg.com and, of course, on YouTube. Coming up, we switch gears, geopolitics, Russia-Ukraine war, the role of the U.S. That's next.
It's 2:40 on Wall Street. I'm Amy Morris. Gold and copper advanced on rising expectations of a Fed rate cut. Stocks are higher. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.8%. NASDAQ up 0.9%. The Dow up 0.8%. The Russell 2000 index up 1.25%. 10-year Treasury yield at 3.99%. The 2-year yield at 3.47%. Spot gold up about 0.9%, trading at more than $4,100 per ounce. Copper up now 1.4%, and Bitcoin now up more than 3.3%. American households paying more than ever before for electricity after prices surged the most in almost 2 years. The U.S. Energy Information Administration says the average retail price for electricity jumped 7.4% in September. That is the biggest gain since December of 2023. Power costs are expected to climb even higher in 2026, with transportation and commercial customers seeing similar trends amid rising fuel costs and increased demand. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, Amy, so appreciate it. Well, President Trump dispatched top negotiators, including Special Envoy Steve Witkoff, for additional high-level meetings with both Russia and Ukraine, but said he would only be willing to meet the leaders of those countries if talks yielded a so far elusive pact to end the war. The president telling reporters, Tim, he had no deadline for an agreement.
Yuri Yushakov, an aide to Russian President Putin, said he speaks often with Witkoff, but declined to comment on a Bloomberg News report that U.S. Envoy Witkoff advised the Kremlin aide in an October 14th phone call on how Putin should broach the issue of a peace plan with President Trump. His guidance included suggestions on setting up a Trump-Putin call before Zelensky's White House visit later that week and using a recent Gaza agreement as a way in. The president was asked about the reported conversation between Yuri Yushakov and U.S. Special Envoy Steve Witkoff last night on Air Force One.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
That was President Trump last night on Air Force One.
Well, delighted to have back to talk about all of this, Elise Giuliano. She is Senior Lecturer in Political Science at Columbia University, Director of Graduate Studies at Columbia's Harriman Institute for Russian, Eurasian, and East European Studies, and Director of the Program on U.S.-Russian Relations. She is here in studio. So great to have you back with us, Elise. So I want to ask you, this Bloomberg exclusive reporting on the conversation between Steve Witkoff, Special Envoy here in the U.S. for the president, and Yuri Yushakov, an aide to Russian President Putin. Is this standard form of negotiation? Is this normal diplomacy, especially among non-ally countries?
Mm-hmm. Well, yes, President Trump used the word standard, but usually what's standard is that you talk to your ally when you are trying to negotiate a ceasefire or an end to a war involving your ally. And Ukraine is the U.S. ally. But here what it looks like is that Witkoff actually, in a way, took Russia's side by telling Russia that they should call Trump prior to the meeting with Zelensky in the White House back in October. So that looks like the U.S. is choosing sides and choosing the wrong side, since it's Russia that attacked Ukraine and Russia that has been an adversary state of the U.S. for many years now.
So in your view, how does it affect peace negotiations?
So it can be very dangerous when you have a negotiator who doesn't understand the war or Russia or Ukraine. And Witkoff worked in real estate in New York. And so he, it seems to me, conceptualizes this conflict as a war over land or territory. And that's not necessarily a crazy assumption. There are a lot of wars over land or territory. But in this case, it's wrong. This is not, Russia doesn't need the land or want the land. What they want to do is destroy Ukrainian sovereignty. And this is Putin's goal. It's been his goal since 2022. And he continues, I believe, to seek that goal. So giving a little bit of land, this is what Witkoff suggested, that we can get to a peace agreement by giving up some territory, some land. It's not really what Russia's interested in.
That is an important distinction, because I think even we say it's about Putin expanding a land grab, right? So the difference is going back to the way USSR. What is it about really for President Putin?
Well,
why is it that Ukraine makes him so frustrating that it has its own independent nation?
Right. So this takes a little bit more time to explain than we have.
Sorry.
But I guess I would say
this is a
two
whole
things.
semester, right?
But I would say two things we can sort of summarize is that number one, Putin wants Ukraine to still be in the neighborhood of Russia and a close ally of Russia, and that means an authoritarian kind of oligarchic state. It doesn't mean a member of the EU or NATO or a democracy or an ally of the US. So keeping the West out of Ukraine is the fundamental goal of Russia.
What is Putin so afraid of? Why is that so important?
Having a large, powerful democracy on the border. And then there's this personal element as well, personal oligarchic friends of Putin who were expelled from positions of power in Ukraine over the past few years, as well as this concept that Ukrainians are not a nation, they're not a separate people, and they don't deserve statehood. They are little brother Slavic, little brothers of Russians. So this is why they're kidnapping children and taking Ukrainian children and saying, you're actually Russian.
Does it make you think differently about the U.S. relationship with Russia?
It has worsened the U.S. relationship with Russia. It was already an adversarial relationship, as I mentioned, but now it's much, much worse. We see Americans arrested and used as just pawns in trades that Russia, as political prisoners. We see lack of any kind of diplomacy with regard to other countries in the world or other formerly common interests that the U.S. and Russia shared. So we seem to be entering a kind of deep freeze in relations with Russia, and it doesn't look like a kind of ceasefire or peace agreement is going to change some of those underlying issues.
So, God, here we are in our fourth year on this war. I remember when it broke out. So does it mean that this is a fight to the bitter end? It feels kind of bitter if I look at the devastation in Ukraine, people, places, if you will. So is a peace plan even possible?
So I would say, it's good that the Trump administration is talking.
Yeah.
But the goal of Ukraine and the goal of the U.S. initially was to kind of find a ceasefire agreement and then take the time and the real hard work of diplomacy to reach a peace agreement, a peace treaty. These aren't usually documents or agreements that are reached quickly.
Right.
So a ceasefire agreement would be wonderful. Ukrainians continue to suffer. They continue to die. I was just talking to my Ukrainian friend, and she said that beyond not being able to sleep at night because of the huge number of drone and missile attacks that have increased this summer, she sometimes can't go to the hospital for her medical care because there's no hospitals closed, and you never know when it's open or closed. So there's this, tragic ongoing human element, and there are reasons why both sides might want a ceasefire at the present time, but there's also this kind of intransigent position of Putin, which is again the goal to undercut Ukrainian sovereignty and statehood. And I don't think he's moved off that goal because I think he still believes he can make progress on the battlefield.
Well, if we think back to when this war started, there were many observers who thought it would be over within a week and Ukraine would have to cede to Russia. That did not happen, and we have no idea when it will end. But just in the last 30, 40 seconds we have with you, can you make a prediction on how it could end and when it could actually end?
Well, it's a war of attrition right now, and it's a drone war. And it does look like Russia's slowly making progress, but war is very unpredictable, and Russia's facing a lot of economic problems due to Ukrainian drone attacks on its energy and oil infrastructure. So both sides, like I said, do have an interest maybe in bringing it to a closer end, but I don't see that happening within the next 6 months or year. I could be wrong, things are unpredictable. And I think it's good that the Trump administration is talking to Ukraine and they're making progress on some issues. So they're hammering out what aspects of a peace agreement Ukraine might compromise on, and they likely will have to compromise on some territory. But they cannot compromise on what Russia is asking for right now because Russia could.
I know already we're going to be coming back to you because I feel like I still have a million questions. Elise Giuliano, Senior Lecturer at Columbia.